because of the geopolitical risks and tension right now, there's less foreign money chasing deals in this region, especially China and Hong Kong. That leaves us a lot more opportunity. We are very selective in everything that we do, and one thing is that we're not competing with the big guys, the big funds, the Blackstone of the world, the Oaktree of the world. We are looking at a certain segment where between $25 to $100 million deals, and there are plenty of that around in Hong Kong and in China.
You obviously look at the situation in China with microscope and seeing where the opportunities are. I mentioned a couple of years ago when you talked to us, you saw a 2 to 3 year cycle of great opportunity in distressed debt. Where are we in that cycle right now? Have you seen indications that things will turn?
Turn for you mean the
well, the fundamentals you said in some cases are starting to have cash flow positive, and you're seeing those kind of trends. Are you seeing though that the developers are getting a little bit better, or is there further shakeout to come?
China have gone through a massive correction period, so what that means is that it's stabilized. Developers for new projects are buying land that can generating reasonable margin, and you can't say that about 4 or 5 years ago. Everybody was fighting and borrowing more and more money to be squeezed out. But nowadays everything is more affordable. So we see opportunities where we can go in with potentially one of those developers. But the opportunities right now in China. It's plentiful, but as you said correctly, it's like we got to be very selective in China. But in Hong Kong, we are seeing plenty of that. Remember, a lot of these developers came over to Hong Kong when they have a lot of money to buy asset here.
Right.
Now with that, with the problem they have onshore, they want to sell the asset in Hong Kong, just like what Loretta said a few minutes ago. We see those kind of opportunities, but not from an equity point of view, but more from a private credit angle, which is a lot more interesting.
A final question for you, and I have to qualify the question because this conversation has been about distress. I'm not talking about a distressed asset, but what are you hearing about New World?
New World, well, first of all, they've gone through a few management changes, and it's one of the family owned business in Hong Kong. In Hong Kong, remember, China went through 3-4 years for corrections. Yeah. Now the prices have stabilized. In Hong Kong, are we starting to see the beginning of this? I don't think so. They have a lot more cash in terms of we focus on New World. But in the end of the day, what New World needs to figure out is that they have a lot of bank debt coming due this year. They need to fix that first before they fix the bonds. The bonds maturity is behind the ones that's the bank. Yeah. So now if the creditors need to work out a plan with the banks, what is the families going to do in terms of will they inject money in? Will they put more asset against these capital, against these debt? So the bank's point of view, they have a first dip, right? And then the bonds, you can play it later, whether it's the 26 bond, 27 bonds. But in the end of the day, what New World need to figure out is, and I'm sure they have plenty of resources to get this thing done. But I just think that it's not as bad as what happened in China over the past 3-4 years.
All right, Raymond Chan, Chairman and CIO of the Opportunities Fund at Blue Mountain Bridge Capital. Thanks so much for joining us here in the studio. All right, plenty more ahead on this very busy Monday morning in Asia. This is Bloomberg.
Earnings season is here.
Kicking off earnings season, there's a lot going on.
Bloomberg is first to break the numbers.
Air France KLM.
NatWest well above estimates.
We have further earnings coursing from GSK.
With the smartest insights.
Clearly, the macro and geopolitical front is full of open issues that they come all together at one stage. They can create some dislocation.
Is that why you're cautious about the fourth quarter?
Continuing coverage on Bloomberg. Context changes everything.
I'm David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's emissions.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
And welcome back to the China Show. Here are some of the major political stories we are following. U.S. Secretary of State Marco Rubio has expressed concern about Beijing's, alleged coercive behavior against Taiwan and aggression in the South China Sea. The comments came after his first formal call with Chinese Foreign Minister Wang Yi. Rubio also emphasized the new U.S. administration would pursue a relationship with China that advocates U.S. interests, quote unquote. Well, South Korean prosecutors have charged President Yoon Suk-yeol with insurrection for his attempt to impose martial law last month. Yoon is the first sitting president to be charged while in office and can be detained for up to 6 months while his case is reviewed. The indictment comes just before Yoon was due to be released from detention on Monday. And a new government poll suggests many Thais disapprove of plans to allow investments in casinos and online gambling. The survey found about 59% oppose investments in both casinos and so-called entertainment complexes, and almost 70% of respondents don't want online gambling legalized. Prime Minister Shinawatra has sought to assure citizens the initiative will bring economic benefits. It's a hot-button issue, Dave, in Thailand. They're talking about 2 casinos in Bangkok, one in Pattaya, one in Phuket, and elsewhere.
Yeah, to further that massive tourism engine that they got going already. Well, speaking of casinos, currently the option is, at least for Hong Kong, is a near option, which is in Macau. And based on the reporting here, that there is some strong demand going into this Lunar New Year holidays. Stocks are up, and broadly speaking, of course, Chinese markets are doing very well this Monday. Plenty more ahead. This is Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders. Prudential's reputation as an insurance giant is rock solid, but it's not resting on tradition. CFO Janella Frias is playing a key role as the company resets its strategic priorities.
We've been on a journey to be higher growth, more nimble, and more capital efficient.
Watch Chief Future Officer January 29th on Bloomberg. Bloomberg has the Fed decision under surveillance with the fastest coverage and exclusive analysis, including Powell's press conference. Nobody covers the Fed like Bloomberg.
Right, welcome back. We're looking at, okay, so dollar is stronger against the Mexican peso. Of course, if you missed it, some of the proxies here, the Colombian, U.S. and Colombia and the tariff conversation there. You're getting some weakness also coming through as far as the South African rand is also concerned. Now, separately, Steve, there's the story also on New Zealand easing its visa rules to allow visitors. I'm trying to make out what that actually means based on the headline itself, but it effectively means that allow visitors to work remotely that makes sense now. In New Zealand, I was about to say, like, if you're allowed to work remotely, why even go to New Zealand?
Well, they've been targeting highly skilled people, particularly IT workers from Southeast Asia and the U.S., to attract foreign talent and investment. So they're just easing those rules to allow that to happen.
Yeah, there we go. Come over, chill a little bit.
Work from home.
Yeah, why not?
Right? From the beach.
From
Hobbiton.
And you can use the AI tools at that. Here's the segue to this. And on top of the usual chatbots that you might already be used to, there's one that's really wedged itself into the global conversation. DeepSeek. And it's playing out across these markets. U.S. futures are down 1%, and some of the Chinese plays on the other side of this are actually catching a very, very strong bid, like SenseTime, like Baidu here, Steve.
Yeah, that's right. So this is going to be something we're going to be discussing. But, again, the Chinese markets go dark for a few days now because of the Lunar New Year holiday. Happy New Year of the Snake coming up to our viewers.
Yeah, almost there. I think we have a couple of days left, at least
Wednesday is New Year's Day.
In Hong Kong, right? Oh, well, New Year's Day is Wednesday. That's right.
Yeah, that's right. Yeah. So out goes the dragon, in comes the snake, right?
Yeah. Sure. Right? Isn't it she? Yeah. Okay, there we go. Year of the Snake coming through. Okay, Nasdaq futures down about 1.7%, and the states of this Hong Kong market going into the last hour of trade is looking like this. Hang Seng Index 20,000 and a couple of hundred in. Do we have that in so we can show our viewers? Thank you so much. That's it from us here. Plenty more ahead though on Bloomberg TV.
新年快乐.
To succeed in Wall Street, what skills do you need? You need to be somebody that claws people on the back, people that you have to be tough, you have to be fighting people all the time. What are the skills that really take to succeed in Wall Street?
Great question. Of course, you have to work hard. So I can tell you what I found for me, and it's probably counterintuitive. I had to stick out, which is interesting because I made the decision earlier. Being really the only woman, I already stuck out, and I thought I might as well double down on that. I can't hide. So how did I do that? It was by being a contrarian. And I refused as a research analyst to ever publish research reports that said me too. That said, oh, IBM reported earnings. They came in 2 cents ahead. One of the pennies was currency, the other penny was lower G&A, blah, blah. Forget it. Big calls on big stocks. My very first piece of research I published was very negative at a time nobody did it. I stood the heck out. And when I was right, that elevated me. And David, I've done that as a research analyst, but I did it in business as well. Here's a business strategy. If everything's fine, just keep your head down and execute. Every once in a while, you have a big insight, and you can build an entire business, in fact, an entire industry around it.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
To the minute economic news whenever and wherever it happens. I'm Jennifer Zabasanja in Luanda, Angola, and this is Bloomberg.
Live from Tokyo, this is Insight with me, Sherry-Ann, where we dive deeper into the stories that matter with crucial context and analysis. Nasdaq futures slump while Asian shares see optimism around China's AI progress, shrugging off Donald Trump's imposition of tariffs on Colombia that cut risk appetite elsewhere. Trump rattling global markets by announcing a 25% tariff on all Colombian goods after the country's president refused to allow planes carrying deported migrants to the land. Also ahead, Bloomberg Intelligence sees China becoming the primary contender to U.S. dominance in AI, as models from DeepSeek show how more can be achieved with less. And Indian stocks are no longer the favorite among global money managers, with foreign funds selling shares worth $19 billion in January. The Nifty set for its worst monthly losing run since 2001. Take a look at how broader markets are trading at the moment. We do have thinner liquidity today, given that we have several markets closed, including Australia and South Korea, Taiwan, Vietnam, and Indonesia as well. But we have seen that optimism around AI in China with DeepSeek. But we'll see how long that optimism lasts and the gains in the Chinese stock markets, given that we also got data with China industrial profits dropping for a third year, manufacturing PMI falling into contraction territory. The Nikkei as well has actually turned negative from positive earlier today. Investors selling big Japanese tech stocks. Of course, there are big questions about what happens to the dominance of some of those U.S. tech firms, including NVIDIA, if we do get more progress in Chinese artificial intelligence. And of course, there's also the risk of surrounding tariff threats and actual tariffs and sanctions being announced. President Trump saying that he's implementing tariffs and sanctions on Colombia for refusing to take back deported immigrants. The move is the clearest signal yet of how Trump sees tariffs as an economic weapon to be used against governments who oppose his goals, whether allies or enemies. For more, let's bring in Bloomberg reporter Andrea Jaramillo in Bogota. Andrea, given that President Gustavo Petro has already announced over X that he is going to be deploying his own personal presidential plane in order to get these migrants back, are we seeing a little bit of easing in tensions and the escalation that we could have potentially seen the rest of the week?
Well, we're going to see. I mean, the Colombian government actually a few hours ago said it would speak, and we're still waiting to see if that will happen. Of course, it's already evening in Colombia, and we'll see if we'll hear something from the president today or wait until tomorrow. For now, it has been through social media posts, through X, where he has said, has picked this fight with President Trump.
That's the interesting part about this, right? Because we weren't expecting anything against Colombia, especially given that it has had very warm relations with the United States. What's going on around this?
Right, we weren't expecting this. I mean, we were seeing Mexico, Canada. And of course, we knew that relations between President Trump and Colombian President Gustavo Petro weren't going to be as warm given the different stances they have. Petro is Colombia's first leftist leader, and so we weren't expecting relations to be warm. And as you said, Colombia historically has been a strong ally of the US. And so right now we're really in a position where we haven't seen Colombia versus the US in this position. And we're really trying to watch and see what will come of this if really this fight, social media fight on social media will escalate.
Yeah, especially on how some of those concrete measures are taken, right? Andrea Jaramillo, Bloomberg reporter there, joining us from Bogota late in her evening. And we also want to bring in Claire Reed, senior counsel at Arnold and Porter and former assistant U.S. trade representative, joining us from Washington, D.C. Thank you so much for staying late for us. But continuing that conversation with Andrea, what's the feasibility of these trade actions, tariffs and sanctions being imposed this swiftly this week?
Well, the President of the United States has quite a number of tools at his disposal. The State Department has already announced visa restrictions on what they call the Colombian government officials who are, quote, responsible for this action. We have not seen any formal White House announcements about tariffs, even though we have seen the social media back and forth. I think the problem here for Trump is that he wants to project great strength with regard to his immigration actions, given that they played such a major role in his campaign, both in terms of what he promised and the emotional appeal of these statements about ridding the United States of illegal immigrants who are especially criminals.
Not to mention, of course, his fight against drugs and the flow of fentanyl as well, which has also been targeted against China, right? When it comes to actually applying these tariffs, you talked about the president having really broad powers, but how fast could it be implemented, especially on some of those security concerns that he needs to use and without the public approval period?
Well, the structure of the laws in the United States are such that Congress has passed laws that put tools into the president's hands and allow the president to exercise discretion with regard to how to take these actions. So there are, with regard to tariffs, some practical steps that have to be taken in order for Customs and Border Protection to know which tariffs are being applied to whom. But it will not require a period of public comment or any of those kinds of delays. It can be implemented very quickly.
When it comes to China, have we seen already actions that could eventually lead to that, especially a repeat of what we saw back in 2018 when he implemented tariffs of about $380 billion? Are we setting the process up for that to come as quickly against Beijing?
Well, it's interesting because this past week when President Trump was inaugurated, he issued a number of executive orders, including one on trade. And the one on trade directed a number of government departments to study the ways to impose tariffs and to study the legal mechanisms for imposing them and to make recommendations by April of this year in terms of what he could do, under what laws, and which products should be targeted. So at the moment, that broad-scale effort is underway among the U.S. Department's executive branch. In addition, of course, he could do what he did today with Colombia and make an announcement as an emergency for national security grounds or other national emergency grounds, and not wait to use the other laws, including the law that he used with China in 2018. That law was called Section 301, and that law did require the government to take a number of steps before the tariffs could be imposed.
Yeah, there have been comments that use of existing 301 investigations could actually form perhaps a foundations of just increasing the tariffs on Beijing. But of course, we do also have sort of parallel actions when it comes to tech export controls and trying to rein in Beijing's ambitions on advanced tech. Claire, today we have a rally and optimism around artificial intelligence developed by a Chinese startup. How much has Beijing been reined in when it comes to U.S. actions in order to stop the flow of advanced tech and advanced tech-making capabilities to Beijing?
Well, I am not an AI chip expert, but my understanding is that the last Biden administration export control announcements were quite comprehensive with regard to AI chips and related products. And therefore, my sense is that with regard to the sort of traditional large computing models for creating AI, that there really has been a barrier erected for China to be able to do what the big players are doing in AI. That said, there are alternative Chinese efforts that are underway which are making some headway.
Which is why we're seeing, even here in the Japanese markets, investors selling big tech names like Tokyo Electron, Disco as well. When it comes to these third countries, it's interesting here in Japan as well. Because of a weaker yen, this graphics right now for our viewers showing this huge trade surplus that Japan has against the United States, the 5th highest on record at the moment. How is this likely to trigger President Trump, especially when it comes to future actions that could take place against third countries that are sitting on the sidelines, and the fact that Colombia is an ally and a friend, and Trump is willing to impose these tariffs? How does this preview some of his potential future actions against friends?
I think the reputation that Trump has of being quite how do I put this, of acting very swiftly and on the basis of an impression that he has at the moment creates a lot of unpredictability. And I think that everyone is going to have to be prepared for that fact about him. It's also clear that he likes to try to create leverage where he can then drive a hard bargain that he believes will allow him to come out the winner. The question is always whether there is an appropriate assessment of the costs and benefits of taking a spontaneous or somewhat impulsive action relative to a slower and potentially less dramatic action. sometimes it makes sense to wait and think a bit more, but I think President Trump has a lot of confidence in himself, and so I don't think he's going to take the slow route.
And it seems that the White House has achieved, at least for now, its intended action. The White House has just released a statement saying that Colombia has agreed to President Trump's terms. They're saying that the government of Colombia has agreed to all of President Trump's terms, including the unrestricted acceptance of all illegal aliens from Colombia returned from the United States, including on U.S. military aircraft, which was one of the contentions that President Gustavo Petro put forward without limitation or delay. So some of that flexing when it comes to tariffs, 25% on Colombia, seems to have worked right now. The White House, at least from their side, saying that Colombia has agreed to all of Trump's terms and that visa sanctions for Colombia will remain in effect, though. Claire, when it comes to the sequence of actions coming from the Trump administration, we have seen him talk more about Mexico, more about Canada. Nothing specific about China other than just a broad level of tariffs that could potentially come. Do you get a sense of what the priorities will be for this administration on which countries he targets first?
That's a very good question. I think we have to look at Trump's political agenda and what he promised during the campaign in order to see what his priorities were going to be. So the fentanyl issue is very high on his list, and that implicates China, but it also implicates Mexico. I'm not quite certain how it implicates Canada, but in any event, that is clearly going to be a very high priority for him. In terms of China, though, China is a longer-term challenge, and I think President Trump, while he has expressed great respect for President Xi, also has a strong competitive spirit and is going to want to come out on top in any competition. So I think you will see concerted and potentially long-term and widespread actions against China over the course of this term by President Trump.
Claire Reed, it was really good to have you with us. Thank you so much for your time late in your evening. Arnold and Porter, at Senior Counsel and former Assistant USTR for China Affairs. As we get the latest from the White House right now, that Colombia has agreed to President Trump's terms and saying that based on this agreement, the fully drafted tariffs and sanctions against Colombia will be held in reserve and not signed unless Colombia fails to honor this agreement. Still ahead on Insight, Asian economies were spared from tariffs in President Trump's first week in office, but UBS Wealth Management warns of a bumpy road ahead. More on their market strategies coming up. This is Bloomberg.
What would you say somebody young who's watching this should do if he or she aspires to be like you?
There's one component of our industry that people need to focus on, and it's not technical, and that's communication skills. Focus on being a phenomenal communicator, invest in that. Think about it, we have to convince a company to sell to us. You just don't walk in and buy the stock or tell them, yeah, you're for sale, I'll pay you this price. That takes years of relationship and effort. Why would somebody sell you that billion-dollar software company growing at 20%? Just because? No way. People hang on to these great assets. And then how do you get on the same page with the executive team of that company, even if they're existing or new? It requires just amazing communication.
If you go to a cocktail party and somebody comes up to you and says, I have $100,000 I'd like to invest, what do you would recommend that person do with $100,000? What do you think is a good idea to do with $100,000 today?
Sometimes they do, and I give them the most boring answer ever, S&P 500.
Just buy an index.
Buy the index. You don't have to worry about the quarterly earnings of a company. Did something change? Did somebody change management? You don't have to make this your full-time job. Just buy the index and you're going to be okay.
There is no backwards in recycling, there is no backwards in treating pollutants in the water.
The trends at times of what you talk in the press may be different from one crisis to the next. My job is to go beyond crisis.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
But we're seeing the dollar trimming some of those earlier gains as we saw the White House now saying that Colombia has agreed to President Trump's terms when it comes to deportation of migrants. On the other side of the trade, we're also seeing the Japanese yen strengthen. We had some safe haven flows already throughout the session on those tariff news. And of course, we're also coming off the back of that BOJ rate hike to the highest level since the 2008 global financial crisis. Joining us now is Kei Okamura, portfolio manager at Neuberger Berman, who's still bullish on Japanese equities and thinks Japan will continue to remain a favored destination for foreign businesses and investor capital in 2025. Kei, always great to have you in studio.
Thank you for having me.
Right now, the headlines, and we're trading around potential tariffs. Are tariffs coming? Are tariffs not coming? We're not seeing anything direct against Japan as of yet. But how should investors be watching the Japanese market given the uncertainties globally?
Right. Split this up into near term and mid to long term. Near term, I think Japan, like all other countries, is not exempt from some of these risks, clearly. That being said, on the mid to long term, when you look at Japan's geographical location next to Asia and its historically long alliance with Western nations like the U.S., Europe, that's foundational for international trade and investments. And that's exactly why global businesses have been investing in Japan, especially in the semiconductor value chain over years and billions of dollars. And so we think that over the mid to long term, Japan will remain a strategic partner to the U.S., and that should bode well for Japan's growth going forward.
Short term, though, given, of course, perhaps we could see the yen again performing the safe haven currency role a little bit. I mean, it hasn't done that in the past year or so. But if we do have more yen strength, especially with the BOJ tightening, what are the implications for equities?
Yep. This is something that we're also looking at as well, given that we run concentrated strategies looking at Japan. Our base view is that as the Bank of Japan continues to normalize monetary policy, as we had seen last week, and then concurrently as we see the U.S. Federal Reserve looking to cut interest rates down the line, we think that the narrowing interest rate differentials will lead to the yen to appreciate. What that would also mean is that for domestic-oriented Japanese companies, those that gain most of their revenues from Japan with consumers that are the end demand, for example, in Japan, they would tend to benefit because they'll see lower imported cost inflation, and at the same time, spending would be improved thanks to higher wages, which is obviously a key issue that the Bank of Japan was looking at last week. So that's sort of the area that we're looking at in the Japan equity space.
We heard earlier from Sayuri Shirai, who used to be a former BOJ board member, and she was talking about the fact that the BOJ should just be transparent when it comes to the reasoning behind tightening, which is more to do with the yen than with anything else. Take a listen.
BOJ is, I think, it's not very honest about why they are raising interest rates. So that's why people are really confused. A lot of people who are there, press people at the press conference probably didn't really get it, what they're doing. So in the meanwhile, the governor says this is cost push, yen's depreciation, rice price, etc. And they say underlying inflation is picking up. But to me, I look at various data, but I don't really see a sign that underlying inflation is picking up.
The underlying inflation that Shirai-san is talking about is also, of course, to do with the wage growth that you mentioned earlier. But at the same time, if you're targeting these domestic-focused companies, would a higher rate environment make it tougher on them as well?
We've been discussing with many of our holdings in, say, the consumer staples and consumer discretionary, those exposed to the end demand. At the moment, their concern on rising interest rates is not that high. If anything, right now, their biggest concern is about the labor shortage and also their abilities to continue to pass on rising input costs, which will be critical to protect margins. We think that down the line, though, as Shirai-san mentioned, this issue about whether the Bank of Japan can tackle the weak yen is going to be absolutely vital for the Japan inflation story. Our view is that the Bank of Japan will be able to do so. But I think the important part is that they can't necessarily be too linked to the currency markets. If they become too directly communicating to currency markets, that alone could create volatility, which is akin to what we saw last July and August. So it's a difficult task. I mean, it's like addressing the elephant in the room without actually addressing it. But honestly speaking, I think the Bank of Japan can do so going forward.
Especially given right now, it seems to be the broad consensus that we might see the pace of tightening be around every 6 months or so. Can the stock markets take this?
We think so. I mean, Governor Ueda came into the top spot in April of 2023. Since then, we've seen interest rate hikes 3 times. 4 to 6 month intervals, which is, absolutely gradual, nowhere near the same pace that we saw in U.S. and Europe. I think from our standpoint, that is something that most companies can tackle. And, if you look also that many of these Japanese export companies have said, they expect the yen around 145 or so. This is very, very conservative. So as we go into third quarter earnings next week, and then, of course, full year earnings in April and May, we'll begin to see a better visibility into the earnings outlook for next year. I think most market participants will be surprised at the level of earnings growth we can expect if the yen continues to remain at these current levels.
Kei Okamura, good to have you back in the Tokyo studio. He's portfolio manager at Neuberger Berman. As we continue to check the markets for reaction to the White House now saying that the U.S. has been able to get Colombia to agree on all of those terms when it comes to migration and migrants being deported from the U.S. We're now seeing oil under a little bit of pressure. We had seen those moves given that Colombia is the 4th largest exporter of oil into the U.S. market. We continue to watch the commodity space with a Brent crude above $78 a barrel. This is Bloomberg.
You've released, I think, a Bollywood song, a reggae album, a gospel album. You've done a bunch of different genres. Is there any genre you haven't tried that is, because it feels like this next one you're doing is sort of back in your sweet spot.
I did a jazz album that I haven't released yet. It's more or less like spoken word over jazz music. That was a genre that I've always wanted to go into. Quincy Jones hit me to Mr. Mumbles, Clark Terry, which was his teacher. And we had an opportunity to spend time with Mr. Terry, and we did a record together, and that was a genre that I always wanted to venture into because I felt like I had a jazz voice.
So your role in a jazz album is just your singing?
No, I'm spoken word.
Sorry.
My voice, my conversation, my poetry, you know.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live every trading day. Balance of Power, live around the world only on Bloomberg.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
Welcome back. You're watching Insight. U.S. futures in the red as progress made by a Chinese AI firm seems to be threatening American dominance of the tech industry at a fraction of the cost. That's because AI models from DeepSeek have been scoring impressively on global benchmarks. The free open source large language model was unveiled in December. The lab behind it says it took 2 months and under $6 million to build. That's a fraction of what OpenAI and Google spent to train their models. For more on this potential AI disruptor, Bloomberg Intelligence senior analyst Robert Lee joins us now. Robert, so what exactly is DeepSeek doing, and why is it making such big waves in today's trading session?
Okay, I would say to sort of Asian and Chinese investors, actually DeepSeek's been known for at least 6-7 months or so. There's a good reason why it hasn't made headlines in the US to date, and I'll come on to that in a second. But as I think people are well aware, these US export controls on the semiconductor side have caused a major, or put a major bottleneck in the road for Chinese AI companies. So like any challenge in life, you need to find a way around that, and so Chinese companies have increasingly turned to innovation. So DeepSeek being a prime example of that. So DeepSeek's model, in comparison to both domestic models here in China and with their overseas competitors, is a lot more computationally less intensive, and that means it's more adept at running on locally sourced chips, and also will realize some significant cost advantages. And I think that's what the market, particularly on the US side, has woken up to.
It raises really doubts about how far behind China's AI technology is against the U.S. at this point, right? When it comes to the secret sauce for what makes DeepSeek DeepSeek, what do we know at this stage?
Okay, so DeepSeek has employed what's known as a mixture of experts architecture, and sort of skimming over the technical detail. Again, it's more computationally efficient and therefore more cost-effective than the somewhat brute force approach that is employed by a lot of other AI companies at the moment. So this has allowed them to deliver significant cost savings. There are news reports of the inference costs, for example, costing as low as $6 million, which I must say doesn't sound particularly credible, but I think the evidence is there that their model is highly competitive and probably is substantially cheaper to both develop and run than most of their competition, both in this part of the world and in the US. And that's why this company is making headlines.
Already we had these doubts about how much capex all of these tech giants were using, especially these frothy valuations. So what does this mean for big U.S. tech companies, not to mention Chinese tech firms like Tencent and Alibaba?
Well, again, as I just mentioned, this brute force approach, I think, can't be the way forward. And this is the sort of engineering me speaking. There's been all sorts of speculation even in the US, about restarting nuclear reactors, given the very high energy costs of these models. It just doesn't really make sense. So I think the direction of travel for the industry as a whole, perhaps to some degree innovated and led by some Chinese firms, is to try and be more cost-effective and computationally effective. Smaller models that are cheaper and easier to run has to be the way forward. And the technical barriers to entry on software are substantially lower in comparison to something like semiconductors. China also has some inherent key strengths in software development, with Alibaba and Tencent as key examples of two leading global firms that the Chinese have in the sector. So, China's really good at software innovation, and I think the emergence of a firm like DeepSeek confirms the competitiveness of Chinese companies and the fact that things remain broadly open, and the field remains wide open at this point. So I think China is well positioned, really closely behind the US as the number 2 globally in AI, and I think there is still scope for them to further narrow the gap. So these export controls from the US have actually spurred China on to innovate. And as I said, the fact that DeepSeek is making the headlines, that's a prime example of the progress they're making at the moment.
Bloomberg Intelligence senior analyst Robert Lee, as we continue to watch those tech stocks trading across Asia at the moment. And we also do have an alert on the Bloomberg. We just heard from the Colombian Foreign Affairs Minister Luis Murillo speaking in a webcast saying that Colombia will continue to accept migrants from the U.S. and that the two countries have overcome an impasse. Given, of course, that we had seen President Trump imposing those tariffs and travel bans on Colombia after it refused to accept deported migrants on military planes. We had already heard from Gustavo Petro, the president of Colombia, responding by imposing retaliatory tariffs. But at the moment, we have heard from the White House that Colombia has accepted all of President Trump's terms. And right now, Colombia also confirming those news, saying that they will continue accepting migrants from the U.S. Of course, we saw already the reaction in the markets with the U.S. dollar paring back some of those earlier gains. Avril Hong has been tracking the FX moves around all of these Trump tariff news. Avril.
Yeah, absolutely. Sherry, I mean, you think back to last week, not just about the reaction today. It was, I think, the dollar in focus as a really clear read of markets' expectations and perhaps a recalibration to what they think Trump's approach to tariffs were going to be. And now, last week was a lot about talk and little action. Today, it's about action on Colombia. And given the sort of, overcoming of some of these differences, we've seen the dollar actually paring some of the earlier gains. That being said, it just demonstrates the risks of tariffs for markets. And we're seeing how today the Mexican peso, South African rand, they're leading declines in the EM space among the G10s. Almost all of them are losing ground against the greenback, save for the Japanese yen. And you think back to last week as well, where the dollar capped off its worst week in 14 months. And this was amid the expectations, or rather, the sense, the perception that Trump was taking a softer stance on China. If we can just flip the board and take a look at some of these daily moves on the greenback, and you'll see as well that this week I think is much to do with the Federal Reserve. If we see that pause, it would of course be the first one since September when the rate cutting cycle began. Keep in mind as well that despite the tariff risk, there are some who see bias lower for the US yields, the dollar as well, especially if Powell talks about data dependency and then leaves these rate cut expectations intact. Sherry.
Avril, stay around because we want to bring in our next guest who expects the dollar to rebound and stay strong in the coming months. Tech Lang Tang is APAC FX and macro strategist at UBS Wealth Management. Tech, good to have you with us. Of course, Avril was talking a little bit about the fluctuations that we've already seen on the greenback. But given that we are headed essentially to the FOMC holding rates steady, to the ECB cutting rates, is it inevitable at least for now, that we're going to continue to see strength?
Yeah, I think, Sherry, what we have been looking at in the past week, the worst week for the dollar in recent months, is really just positioning adjustment. Because I think if you think about how much the dollar has already strengthened since Trump won the elections in early November, the dollar index basically strengthened more than 5%. This is despite not having formal trade tariffs being erected, right? So I think there is a lot of front loading of dollar strength, and therefore, when Trump actually appeared to be taking a softer stance to tariff imposition, it is actually pretty natural for the dollar to give up some ground. But I think just on a fundamental basis, we are still heading into a period where US data is still strong. The Fed is actually just going to stay hawkish as compared to the rest of the European central banks. So I think that it should actually be quite predictable. This FOMC should actually be reiterating that there is no hurry in cutting rates. There is 2 rate cuts that we expect as a bank as well, but that is going to be on the second half. Whereas the ECB is almost on autopilot. For every meeting in the first half of this year, they are actually expected to cut rates. So I think over the next 6 months, ECB cuts by 100 basis points.
When it comes to President Trump himself and all of these tariff news, not to mention, of course, the comments around the Federal Reserve, he's not necessarily a stickler for fundamentals, right? He does not necessarily like other currencies to be weaker than the US dollar because he thinks that then they get a competitive edge when it comes to trade. You've pinpointed to the Plaza Accord, and the Plaza Accord version of 2.0 being the biggest risk for currency markets. Explain to us why.
Yeah, I would say that would be totally unexpected because firstly, the historical context of Plaza Accord hasn't really gone down well, particularly with Japan, because it actually led them inevitably into 2 decades of deflation. So I think there is a bit of a historical learning, whether, for example, Japan wants to do it the same way as it did in 1985, whether China wants to follow in that footstep as well. So there is a little bit of a concern with regards to whether they want to worsen deflation, because if the currency strengthens, that is actually deflationary for an economy like China, for example. So I think what the playbook really in the next 6 to 12 months is that there would rather be escalation before de-escalation. And I think we are still bracing for more pain. And when we do get the escalation, the dollar strength can actually persist at least over the next 3 to 6 months.
The pricing in that we've been seeing in FX markets on the greenback strength up until last week, where it took a bit of a breather, do you think that's more tariff risk? Does that also account for retaliatory action from those that might see target from Trump?
Yeah, so actually, so far, it has been playing out very quickly. For example, Mexico, and this time around Colombia, the escalation was very quickly met by very strong words from the opposing leader of the government. But I think just for optics, it is necessary to do that. But of course, behind the scenes, when their ministers work out at the working level, it was very quickly diffused as well. So I think the market is almost adjusting to a new tempo of tariff negotiation. In the first place, it wasn't about tariff, it was about immigration and drugs, right? So until we actually see the USTR coming out with the official report and the tariff escalation actually being announced properly over the next 6 to 12 months, what we are getting near term is actually mostly talk. And that is actually not materially shifting the dollar as it has already.
Do you think Powell this week will give markets enough to look past the tariff risk?
Yeah, I don't think so, because actually Powell did flag what is coming up in terms of tariff as a potential needle mover for inflation, and also the impact on growth as well, right? So I think he will be giving very little away. He is still actually trying to anticipate what is the economic and macro impact from the tariff. And in the meantime, he's really operating with the rear-view mirror approach that unless there is evidence of slowdown in inflation and labor market easing, he would actually just stay hawkish as we expect.
So what are you seeing in the data right now? Because we saw yields really getting pressured after we got inflation cooling down in the U.S. recently for January.
Yeah, as far as the data is concerned, I think if you look at the inflation in the US, still stuck around the 3% mark. Whereas in other parts of the world, China is still struggling with deflation. I think what we are looking at in terms of interest rate futures pricing is actually the correct one. So the market is actually pricing in slightly less than 2 cuts out of the Fed. It is closer to 4 cuts in the ECB. So I think what we really need to see is that inflation data in the US in particular is only likely to ease maybe in the back half of this year. That is barring a shock from the tariff threat. But if you look at the lag impact between the private rents and what is showing up in the owner's equivalent rent translation, actually I think in 6 months' time we could actually be getting signs of inflation decelerating in the US, which actually lays the ground for the Fed to cut rates in the second half by 2 times.
Tech, when it comes to China, you mentioned, of course, the pressure that economy is facing. We saw the data today, industrial profits declining for a 3rd consecutive year, not to mention manufacturing PMI also falling into contraction. Is that why you're also long dollar China renminbi?
Yeah, so I think we are long the US dollar against the Chinese yuan for a variety of reasons. The first is, of course, trade escalation has yet to start. And if 2018-19 is any precedent, the pressure on the Chinese yuan will only continue to rise, right? So what we are getting is really a stabilization of the fixing anchor. But when the pressure from the tariff takes effect, I think 7.5 is almost inevitable if it goes into the direction. The second is being economic fundamental divergence. And if you actually look at the interest rate differential with China 10-year yields having fallen to new lows, actually the dollar CNY should not be trading at 7.2. It should be trading closer to 7.4 and 5. So with that in mind, until they show promising signs that of a stabilization in the property market, unfortunately, the economic dynamics doesn't favor a turnaround in the Chinese yuan at the moment.
You're long Aussie dollar as well. Why? I mean, it's seen as this proxy to the China tariff risk.
Yeah. So in fact, I think that is the common argument against being long the Australian dollar, because it is very sensitive to Chinese yuan weakness. But I think the opportunity here that we see is a very big dislocation where the interest rates are suggesting for the Aussie dollar. It is actually implying that the Aussie is undervalued by about 10%, where interest rate is concerned, it should be trading closer to the 69 cents. And the second big difference is that if you look at 2018, where the Aussie did fall by almost 10%, interest rates back then was suggesting that it was overvalued. So we are getting a complete opposite dynamic in terms of currency valuation. And I think this times the market is already overshot in terms of the pessimistic sentiment.
And Tech, really playing rate differentials, one of the best carry trade strategies for years has been really using the cheap Japanese yen to play against, say, the higher yielding South American currencies like the Brazilian real or the Mexican peso. But given right now the tariff implications against these South American countries, not to mention the tightening of the BOJ, how will this trade work out?
Yeah. In fact, I think the yen carry trade will no longer come back in the same scale and enthusiasm as the past 3 years. Because I think we are at the point where if you look for a favorite funding currency, actually the yen doesn't stand out right now. Policy rate has been increased to 0.25 to 0.5%. That is actually on par with the Swiss National Bank, right? And if you imagine Swiss National Bank making one more cut in March, in fact, that is where the target is, the lowest currency of interest cost. And I think the market is still very fresh from the scarring effect that there was a 20 yen move last year in between July to September, right? So if you are looking for a funding currency, do you necessarily want to use the yen with that kind of 20%, 20 yen move that you might actually get hurt, right? So I do think that yen carry trade is behind us, but having said that, the pace of yen rebound would also take time because the pace of BOJ normalization would actually be gradual. So I think what we are looking for really is, for example, the dollar yen should actually be an orderly process adjusting towards 149 to 145 in 12 to 18 months.
What about using the Indian rupee? I mean, it seems that record lows against the U.S. dollar might be inevitable given the trajectory of the Fed versus the RBI as well?
Yeah, so the market is indeed getting very bearish on the Indian rupee. But I think Indian rupee, the difficulty of the market shorting it on a larger scale is that it is a very high yielding currency, even though they are not willing to be holding on risk going long the rupee for the yield, but they are also finding it very difficult to short. And I think the argument about Indian rupee being overvalued in real exchange rate terms is actually not a very solid one, because I think when it comes to valuations, what really translates to is that whether it is causing big imbalances in the current account dynamic. And if you look at the Indian rupee, in the Indian economy, current account deficit is about 1 to 1.5%. It is not the most terrible level that it has seen over the past 20 years. So I think expecting a big depreciation in the rupee is equally hard as well. We wouldn't be standing in front of the negative sentiment, but at the same time, I think we should be circumspect about whether the currency is going to undergo a more rapid devaluation from here.
Tek Lin Tan, good to have you with us of UBS Wealth Management on everything to do with FX, and of course our very own Avril Hong. Coming up, we actually focus more on India because we're now seeing the stock markets losing their mojo. Thanks a lot to do with the cooling economy and the exodus of foreign investments. And today we're seeing that big drag coming from the tech sector as well. A closer look. This is Bloomberg.
Do you see a future for Monumental as a public company?
Yeah, I think so. I think what we found is the leagues have opened up to new pools of capital. Over the last year or two, both the NBA and NHL have allowed professional investors to come in, not as individual owners, but as funds. So that's a whole new pool of capital that didn't exist before. Sort of shows a whole new asset class opening up for professional sports, not just teams, but professional sports enterprises.
I think the sophisticated analysts will be looking at this industry, and as our revenues start to get in the billions of dollars, yeah, I think that you'll see a wave of companies go public. Whether we will or not, there's a big responsibility when you're a public company. And I tell people, we're a public company already. The scrutiny that you're under in running a sports team is, I think, much higher than a public company CEO has to live with. We'd be prepared to do it, just the market would have to be right. We'd have to emotionally be ready to do something like that. But I think Monumental will be one of the 3, 4, 5 best-in-class organizations that, if that time was there, sure, we could go public.
Things like making sure your account is private, right? When you sign up and you're a teenager, private by default, that you're focused on adding people you already know out in the real world, your real friends, that, our service doesn't have, public likes, these comparison metrics that we know, can make people feel bad about themselves. We moderate the content that we distribute on our platform to try to mitigate, the spread of harmful content. So we've tried to make a lot of choices to, make our service, a healthy and fun place with friends. And we hear that, when we do research, we find that people, rank Snapchat as the happiest platform. They say that it helps them feel closer to their friends. So I think we're really focused on what we can control in terms of improving the product experience. And then we always try to encourage parents, don't let your teenager, use Snapchat unless they're above the age of 13. And there are tools available today on your phone, iOS, Android, that are really easy to use to help limit, what teens can use on their phones.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Bersecci. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
We're scaling up at incredible pace.
This region is growing so rapidly.
The opportunity is really huge.
Every trading day, only on Bloomberg.
Broad downside across markets in India right now. We are seeing the tech sector, one of the big decliners on the Nifty, down about 1% for the overall sector. And of course, a lot to do with that concern about China's DeepSeek AI capabilities and that really taking away from the dominance of U.S. tech firms and their suppliers across Asia. And broadly speaking, we have seen this prolonged rut when it comes to Indian stocks. The benchmark Nifty on track for a fourth straight month of losses. That would be the longest monthly losing streak in more than 2 decades. For more, let's bring in Bloomberg's equity senior reporter Abhishek Vishnoi in Singapore. Abhishek, why are we seeing this broader downside when it comes to Indian equities?
Well, it's largely a call on whether Indian market is expensive, whether the growth outlook is fading a bit. So, what our reporting is suggesting is that the blue sky scenario for India, the top-notch bull case scenario, that is sort of weakening a bit because economic growth has slowed down. I think there is a big enough size and scope on that. And with that, the country's leadership, this time around, Prime Minister Narendra Modi is leading a coalition. So there have been these, small tweaks to India investment thesis. But look, this is only a tweak to the blue sky scenario. The long-term thesis still stays intact. Now, given the valuations where, in India's of Indian assets are, we have seen some pruning of optimism. You yourself said that this is a monthly decline, probably the biggest in a few months. Nifty is down about 12% from a peak in September. A lot of foreign money has gone out. Since the end of September, I think about $19 billion have moved out. That's a huge chunk of money. Now, that really matters at this point because while retail investors are investing, somehow this foreign outflow has overpowered the local money that has been coming in, has started overpowering. So that's a big chunk of money that has gone out. Rupee is trading near record lows, has just made successive record lows. So there is a little bit of tweak to that India investment thesis, and that optimism, that allure is fading a bit.
And we have seen today's session, for example, tech leading the sell-off. It seems to be a broader theme around especially that concern about China's DeepSeek.
Oh, absolutely. DeepSeek has permeated into all sort of risk assets this morning. It started with the tariff news, from Colombia and Trump. But DeepSeek is why NASDAQ futures are down about closer to 2%. And that is just going into all kind of AI stocks. Indian IT companies come way lower in that pedigree because they are yet to join that AI-led boom that the world has seen. But nevertheless, NASDAQ's lead is getting reflected in Indian IT stocks as well. But DeepSeek does put a bid on China stocks, but it's not like a panacea to China's problems. What our reporting is showing is that this definitely may lead, if true, may lead China to skip some steps and be right there in terms of tech supremacy. But it's not a panacea to their problem.
We'll have to leave it there. We're out of time. Abhishek Vishnoi, Bloomberg Equity Senior Reporter, with a look at the broader markets. And of course, for tomorrow at Insight, State Bank of Pakistan Governor Jamil Ahmad joins us for an exclusive interview following the rate decision today. Economy is expecting a cut of at least 100 basis points. Horizons Middle East and Africa is next. This is Bloomberg.
What are your thoughts on fast fashion? It's been transformative. It gives the masses access to fashion, but there's a cost to it, downside to it.
My first notice is too much waste. I think this is also how I grew up, making your own clothes and making something that's well special and well unique. It's like timeless. And now you see that everybody is looking the same, like wear sweatshirts and wear t-shirts. And for me, it's just like, when they wear something that's special, they feel empowered.
Is there a need for fashion to be more mindful of the impact it's having socially, environmentally? Definitely. Is it happening enough?
I think it's happening. It's gradually happening. All the designers are doing, everybody is thinking about this subject at this moment, thinking how to be more sustainable, how to be more environmental friendly.
Do you think the fashion industry is doing enough to ensure that it is sustainable. That's so many targets out there. Are they even realistic in wanting to achieve them?
I think some of them are just like they're using sustainable ideas as a marketing concept only. They're actually not really doing it. I think as a designer, it's really important to really make it happen. Every collection, I think about how to do it and how to tell the customers. I think that is our responsibility to educate our customers.
Wednesday, the Fed decides.
The Federal Reserve has gone from projecting 4 cuts in 2025 to just 2.
The road may be bumpier than folks thought.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
How divorced can you say you are from the global market? How much can you talk about American exceptionalism?
This is not a snooze fest. There's a lot going on here.
Could not agree more.
Tune in to Bloomberg Surveillance, The Fed Decides, starting at 1:30 p.m. Eastern.
In case you missed it, from Bloomberg's coverage at Davos.
Do you think there's one particular thing that you'd like Trump to change in terms of what some people see as the over-regulation of banking in America?
I don't believe, honestly, that we should have a huge amount of deregulation for larger banks. I think that's, you look back at COVID and any crisis, big banks now are strong, are able to step in and being part of resolving issues rather than being the one that creates issues. So I wouldn't really welcome a huge wave of deregulations. What I can see is that, of course, what happened in the US doesn't mean automatically that you will see in Europe or in Switzerland or in Asia deregulation. So the fact is that US banks may become even more competitive internationally through a more benign environment.
Nobody covers Davos like Bloomberg.
It's always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the...
When U.S. jobs numbers are released, Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
This is Horizons Middle East and Africa. Our top stories this morning. Colombia capitulates. The U.S. will hold off on imposing tariffs after the South American nation agrees to all of President Trump's terms. Ceasefires in focus. Israel and Lebanon extend their truce while a dispute over a hostage tests the deal with Hamas. And Rwanda-backed rebels reportedly claim to have captured eastern Congo's largest city, Goma. The DRC government calls the advance a declaration of war. It has just gone past 8 a.m. across the Emirates, 6 a.m. here in South Africa. I'm Jennifer Zabasaja in Johannesburg. Good morning to you at the start of a new week. And it is going to be a busy week if these past few hours are any indication. There is a lot for the markets to pay attention to. There's, of course, eco data. There's geopolitical developments, as we were just mentioning there. There are some monetary policy decisions that we're paying close attention to. And also tech in focus. We have some of the major Magnificent Seven companies reporting this week, which is why some of the news we're getting this morning about a company called DeepSync, very interesting for markets. But if we just take a look at where markets are positioned ahead of the trading day, as you can see there, U.S. equity futures under a bit of pressure. And that is coming after we did hear that news from President Trump about Colombia imposing those tariffs tariffs. Of course, we did just get some news out of the White House that Colombia has agreed to abide by Trump's terms, but we'll have to see where that takes equities for the rest of the days. But investors are also very keenly focused on what is happening with this China's DeepSeek company and potentially the performance of that company and how it could affect a number of the other tech players in the U.S. Right now, we're seeing NASDAQ futures down more than 1.7%, S&P futures down over 0.8%. Also watching emerging market currencies in focus, only marginally down this morning, but they did close last week with their best showing since July of 2023 on those potentially softer than expected tariffs from Trump. The question is, though, can that continue? And especially as we continue to hear more announcements from the U.S. president. And finally, Brent crude down just over 0.5%, trading just over $78 a barrel. And that is, of course, coming off the back of that U.S.-Colombia tariff rhetoric. And still hearing from President Trump asking OPEC Plus to bring the price of oil down while still asking his own U.S. producers to drill more. So we'll have to see how that plays out. But just want to put into context the significance of the U.S.-Colombia relationship. And that brings me to this terminal chart. The U.S. is Colombia's top trading partner, while Colombia is not even on the U.S.'s top list. But right now, as you can see, the U.S. is running a trade surplus with Colombia. So this is significant for both of these countries, potentially why we're seeing some of the action and the news that we're getting just now. But let's check in on how markets in Asia are faring. It is a shorter week over there, but Avra Hong is standing by in our Singapore studio to give us some updates. Avra, what are you watching?
Yeah, shorter week for some markets in the Asia Pacific. What we're watching today is really how that AI fueling optimism of Chinese shares, particularly the tech names. So we're seeing Chinese shares leading the way. You have Tencent, Alibaba helping to boost the likes of the Hang Seng. The region's gauge, although it might not be that accurate a picture given how many markets in the region are shut today, is headed for its sixth winning streak, sixth session of gains. And I say, again, this is AI related. But that DeepSeek narrative is kind of taking the shine of these Japanese tech stocks. So we have the likes of Advantes declining about 8% at the moment. It's the tech stocks in Japan that are getting some of their shine taken off, and the big drags on the Nikkei. Also in Japan, the yen gaining ground today among the G10s. It's the only one to do so. Some of this has been attributed to safe haven demand, but also I think investors are kind of heeding the hawkish signals from the BOJ last Friday.
Thanks so much, Avra Hong in Singapore for us. Let's turn back to the U.S. The White House says the U.S. will not levy threatened tariffs on Colombia after reaching a deal over returning undocumented migrants. Colombia's foreign minister says it's overcome an impasse with the U.S. after earlier refusing to let 2 planes of migrants land. For more, let's bring in Bloomberg Asia senior editor Bill Ferries, who's joining us now. So, Bill, this is a fast-developing story. Talk to us about the latest and really these last lines that we've been getting from the White House.
Yeah, this may end up being one of the shortest major trade disputes of recent years. Within about a 24-hour period, we've gone from President Trump threatening an initial 25% tariff on Colombian imports that he said would rise to 50% within a week, to the whole thing being resolved after Colombia agreed to apparently all of the U.S. terms, which were really focused around accepting some of these undocumented migrants who had been picked up in the U.S. and were being sent back. It seems like Colombia's biggest issue with this was that they were being sent back on a military plane with shackles. It's not clear, at least it seems like that Colombia has probably capitulated even on the military plane aspect. There was always a lot more at risk here, at stake here for Colombia. As you mentioned, its top exports. Its top trading partner is the United States over China, which is unusual for Latin America. The U.S., of course, it was only a minor player in terms of total imports. But a big dispute. I think it really shows the lengths to which President Trump is willing to go, even against a country that's historically been an American ally, if they disagree with his policies on immigration or other issues.
Bill, how much are we seeing the markets reacting to this?
Well, we already knew that the peso was coming under considerable pressure because of that dependence on U.S. trade. You've seen markets last week had been kind of expecting a big wall of tariffs that never came into place, and maybe we're breathing too easy a sigh of relief after President Trump's first few days. I think what he's made clear here is that this is a weapon he will use. In this case, it was against a relatively minor trading partner, but the bigger risk out there is that he decides to move forward with tariffs on China and even some European countries if they don't go along with his priority policies.
Yeah, starting us off there, Bloomberg Asia senior editor Bill Ferries. Bill, thanks so much for your time. Let's turn to the Middle East. Israel and Lebanon have agreed to extend their ceasefire until February 18th to allow Israeli troops more time to withdraw. Meanwhile, in Gaza, another fragile ceasefire is being tested. The office of Israeli Prime Minister Benjamin Netanyahu says a dispute over a civilian Israeli hostage has been resolved with a deal to release another round of hostages on Thursday. Israel now says the blockade that prevented tens of thousands of Palestinians from returning to the northern parts of the enclave will be lifted later today. The developments come as President Trump floated the possibility of moving Palestinians out of Gaza.
I'd like Egypt to take people, and I'd like Jordan to take people. You're talking about probably 1.5 million people, and we just clean out that whole thing. It's over the centuries that's had many conflicts inside, and I don't know. It's something has to happen.
For more on this, let's bring in Stuart Livingston-Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia, joining us from Dubai. So, Stuart, give us a sense of how significant these comments are coming from President Trump, especially just a week into his presidency.
Yeah, I mean, they're significant in that it's the first time we've seen the U.S. administration come out with a comment like this. And, his predecessor had largely been against the idea, not least because of the practicalities of it. You're talking about something between 1.5 and 2 million people. And is it realistic to move them into whole new areas of Jordan and Egypt, even assuming that those two countries would be willing to take them? And so far, all the rhetoric out of those two capitals is they have absolutely no intention of allowing that to happen. And again, it's a logistical question. There is obviously also an underlying issue here with removing people from that area in the first place. That has some deep ethical questions around it as well.
Yeah, and we saw just some of those pictures over the weekend of thousands of people, so I can't imagine how that would actually play out. Stuart, when we talk about Lebanon, there has been a ceasefire that's been extended. What do we know about the threat of Hezbollah across Lebanon's southern border?
I mean, it's certainly diminished. And I think when you listen to the Israeli military about the operations that they've had there over the last several months, they have been eliminating the various infrastructure that's around there. They've been removing weapons, and Hezbollah largely is removed from those areas. However, there are pockets of resistance within there which have not been cleared up. And I think one of the things we saw over the last couple of days is people trying to return to the south, and at least from some of the video images that I've seen, which I have to say aren't necessarily representative of everyone, but as you can see from that image there, there's a Hezbollah flag flying. That obviously gives Israel some pause for thought about the wisdom of pulling out right now. At the same time, we do see an enhanced Lebanese military that could potentially take over and take control, but we're not there yet. And so I think there's some hesitancy there to cede too much ground before there's certainty that the peace can hold once they've withdrawn.
Stuart Livingston-Wallace, Bloomberg's executive editor for Middle East, North Africa, and Russia, joining us in Dubai. Stuart, thanks so much for those updates. Let's get back to the markets. U.S. stock index futures took a hit over concerns that an AI model from China's DeepSeek may disrupt the tech market. The AI model is seen as competitive with OpenAI's technology and could challenge the dominance of U.S. chip companies, including NVIDIA. For more, let's bring in Bloomberg Intelligence senior analyst Robert Lee, who's joining us now. So, Robert, we're seeing quite a bit of reaction when it comes to U.S. equity futures. Talk to us about how we got to this point. I mean, what's the news this morning that's really triggering the markets?
Okay, well, DeepSeek's actually been quite well known to Asian investors, or in this part of the world, for the best part of 6 to 12 months. It's a highly innovative Chinese AI company focused on the development of large language models, and it's developed a very innovative new technique or architecture based on something called mixture of experts. So that's allowed them to develop, highly cost competitive and highly computationally efficient models, which have given domestic competition like Alibaba and Tencent a run for their money. And obviously on the headlines we've seen over the last few days or so, it's making more waves in the US. I would say, in fairness, I don't think that's anything particularly new. This story's just been picked up by a number of news outlets outside ourselves. But as you would expect, Bloomberg Intelligence likes to lead on this. We've been writing about this company for the best part of 7 months.
So you're very aware of the company. Robert, does this actually mark a shift in the AI narrative, especially as we await some of these earnings from some of the big companies later this week?
I think, again, for maybe some people in the US who are less aware of this, it certainly is a bit of a wake-up call. But I would say OpenAI and the others have been, well aware of DeepSeek for some time. But again, it just sort of highlights and confirms the argument that we've been making for the best part of last year, that actually the technical barriers to entry on the AI side, so software side, are not particularly high compared to chips or semiconductors, and that actually China has some key inherent strengths in software development in terms of their engineers. Just as a brief stat, the number of Chinese developers outpaces that by the US by a ratio of about 3 to 1. So numbers are important in this industry, and Chinese companies are highly innovative. The whole sort of short video wave that swept the world really started in China. So China has narrowed the gap progressively, and we expect that to continue over the next year. And they are well positioned really as the global number 2 in AI software behind the US.
Fascinating. We'll have to see how those earnings reports potentially we get some mention of this competition. Bloomberg Intelligence senior analyst Robert Lee. Thanks so much, Robert, for joining us and for your insights. Up next, hear why Bernstein's top pick for 2025 is Japanese stocks as traders digest Trump's order to impose tariffs and sanctions on Colombia. This is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. I'm Sherry-Ann in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the centre of all the action to get you set up with the numbers, news and knowledge you need for the day ahead.
The demand is indeed recovering.
We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Asian shares have made gains to start the week, partly on optimism about AI in China, shrugging off Donald Trump's tariff threats on Colombia that cut risk appetite elsewhere. Let's bring in Rupal Agarwal, Senior Research Analyst and Director of Asia Quantitative Strategy at Bernstein, joining us from Singapore. Rupal, great to get you on this morning, especially as we're seeing quite a bit of moves as it relates to what we're seeing in AI in China. Talk to us about, from an investor perspective, if you think this is an AI narrative shift more broadly.
Thank you so much for having me. I think very quickly, I would just quickly share, what Bernstein's house view is on this deep stake story that got picked up over the weekend, on multiple social media platforms. Honestly, this is not new. It has been ongoing for some time. It's more to do with, in my view, the fact that a lot of these US big tech names were quite fairly priced. And of course, we are getting into the earnings season. And hence, we are seeing a little bit of this overblown reaction in our view. So we don't think, this is completely new and completely miraculous in terms of the models that we are seeing from DeepSeek.
And Rupal, then we are mentioning the markets shrugging off a bit of what we are hearing from Trump. Do you think investors should be focused then more on the potential tariffs to come from Trump? We saw the reversal with Colombia, but when it comes to investing in Asia, should that still be on the minds of investors?
Oh, absolutely. That has been on the mind of investors for quite some time. In fact, if you look at it, since the Trump's win, we have largely seen a broader macro headwind being created for Asian markets in general. We have been dealing with, or I would say Asian investors have been dealing with, a stronger dollar environment, a higher US yield environment, and of course, the uncertainty around tariff risk. So that's always at the back of mind for a lot of, Asian investors. But given the broader uncertainty, is difficult, I would say, to only position with respect to what one can expect. And hence the way that we are recommending, investors to look at in the region this year is to start with this, stocks where you are getting more free cash flow yielding names, you're getting more high dividend yield, because these are the kind of stocks that typically would do well in this broader uncertain environment of, on one day we start seeing a narrative of higher for longer versus the other day, we start seeing a narrative of the rate cut. So it's going to be an uncertain year, the one which is laced with a lot of volatility, especially with respect to Asian markets. And that's something that we would say is at the back of all investors in the region.
Rupal, you're also quite bullish on the yen, and we are seeing some investors move to the yen as a haven when we see this tit for tat going on with Colombia and the U.S. Can you give us your argument there?
Sure. I would actually say that we are more bullish on Japanese equities. And in fact, we've been very, very positive on the market for the last couple of years. The point that we are trying to make this year is that the Japan domestic economy is likely to continue to strengthen, as well as there has been this big pivot, which we saw last year, right? So BOJ moved towards a more normalized policy environment. We also saw, a lot of your reflationary pressures coming back to the market. So I would say that Japan has moved the corner and moved out of deflation. And some of the biggest beneficiaries of this regime shift is essentially the Japan and domestics. The other added advantage is, given all the uncertainty around the tariff, sort of news, I would say that within the region, the better way to play Asian equities would be to focus on strong domestic stories. And that, again, is where Japan domestics stand out. So that's the reason we remain quite positive on Japan domestics. And what is very interesting is that in the last couple of years, if you look at Japan domestics as a basket, it has actually outperformed the exporters, even though yen has continued to weaken. So I think that's the interesting angle, that in the last couple of years, we have seen that the source of returns in Japan has been more about improving corporate governance, improving shareholder returns, rather than, the yen.
How does that play out, though, Rupal, if we do continue to see a stronger dollar and this U.S. exceptionalism continue?
Oh, absolutely. So stronger dollar is always a headwind, I would say, for broader Asian equities. Within Asia, I would say Japan does slightly better in the context of, a stronger dollar, but, it's more about relative to other Asian markets. On an absolute basis, we will, still continue to see pressures if there is a stronger dollar. And hence, that brings back me, to the point that I made earlier. Um, one of the better ways to play Japan or any other Asian market is to look for more domestically oriented companies or sectors, because that is where you would, not be under pressure in terms of the currency.
All right, Rupal Agarwal, Senior Research Analyst and Director of Asia Quantitative Strategy at Bernstein. Great to get you on this morning, Rupal. Thanks so much for your insights. Now, still ahead, we'll discuss Saudi-U.S. relations as Trump asks for more investment and lower crude prices. Stick with us. This is Bloomberg.
One would be generative AI. In the drop-down box there is the amount of capital that we're going to need to deploy in order to support generative AI. Data centers, as an example. Renewable energy or energy transition would be another of a macro trend. In the drop-down box with renewable energy and energy transition is how do we invest in the infrastructure that's going to allow us to remain competitive in energy transition. The other is, this has taken on a different nomenclature dependent upon who's communicating. It's either onshoring, friendshoring, deglobalization, or what I would call reglobalization. And the reglobalization means how do we invest in U.S. manufacturing? Remember, we peaked in U.S. manufacturing in June of 1979, where 1 in 5 Americans worked in a factory in the manufacturing base. Today, that's probably 1 in 20. And much of the dependence that we have in the manufacturing world for all the things that we do are dependent upon supply chain. The other factor that I would look to is the largest growing population that exists in North America is 65 years and older. And so how we drop down box, how do we engage in healthcare for that demographic? How do we manage the transfer of wealth or not? And the last is cybersecurity.
Season is here.
Kicking off earnings season, there's a lot going on.
Bloomberg is first to break the numbers.
Air France KLM.
NatWest well above estimates.
We have further earnings coursing from GSK.
With the smartest insights.
Clearly, the macro and geopolitical front is full of open issues that if they come all together at one stage, they can create dislocation.
Is that why you're cautious about the fourth quarter?
Continuing coverage on Bloomberg. Context changes everything. Wednesday, the Fed decides.
The Federal Reserve has gone from projecting 4 cuts in 2025 to just 2.
The road may be bumpier than folks thought.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
How divorced can you say you are from the global market? How much can you talk about American exceptionalism?
This is not a snooze fest. There's a lot going on here.
Could not agree more.
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Here's a few stories we're following this morning. Pete Hegseth has been confirmed as U.S. Secretary of Defense despite allegations of spousal abuse, excessive drinking, and financial mismanagement, which he denies. Lawmakers voted 51-50 to back the combat veteran and former Fox News commentator, with J.D. Vance casting the tie-breaking vote. It's only the second time ever a vice president's support has been needed to break a deadlock for a cabinet nominee. Bloomberg has learned that Elon Musk has initiated conversations about using blockchain technology at the new Department of Government Efficiency. According to sources, the Tesla CEO has mused about the idea of using a digital ledger as a way to track federal spending, secure data, make payments, and even manage buildings. And the CIA now believes it's more likely that the COVID virus originated from a lab leak rather than a natural source. The new view aligns the CIA with with the FBI and the Department of Energy, which say the virus probably leaked from a lab in Wuhan in central China. The announcement comes after President Trump's new CIA director, John Ratcliffe, declassified existing information. And let's just take a quick check at where your markets are just ahead of the trading day. A bunch of red right now on the screen, especially for U.S. equities as they interpret this news from DeepSeek or just get to learn more about it, as we heard from our reporter Robert Lee. NASDAQ 100 futures down more than 1.8%. Eurostock 50 futures down more than 0.6%. There's also a number of Fed decisions, or excuse me, central bank decisions that are happening this week. Eco data in a big earnings week, so a lot to pay attention to cross asset as well. And that's just a quick check at our treasuries there. But coming up, oil fluctuates as investors react to rapid fire moves on trade by the Trump administration. This is Bloomberg.
In case you missed it on Bloomberg Crypto.
Are you concerned that with this new stablecoin, folks will be less interested in XRP?
We see them as really complementary to one another. So dollars can be a very effective means for payments, and we have seen that demand from within our customer base. XRP is really, it's the native asset to the blockchain, so it's used for things like transaction fees on the blockchain, but then also can be a bridge asset to trading different tokens on the XRP ledger. So we really see the two playing complementary roles.
Some of the biggest exchanges out there are missing from this announcement. So what about a huge platform like Coinbase and others, for example? When does that happen?
You can expect to see more availability, more announcements coming soon.
How soon?
Imminently.
Don't miss Bloomberg Crypto live on Tuesdays.
There had been offers before to take over Greyhound, but then in the midst of the pandemic, 2.5 years ago, we had this fantastic opportunity to buy the brand and the network. When we took on Greyhound onto the Flix tech platform for network management, revenue management, we saw the highest unit economics in more than 100 years of Greyhound history.
My vision is to transform long-distance bus travel in the United States and make it one of the top considerations for anyone planning a long-haul journey.
CEO Kai Boyson imagines even more potential if state and local governments recognise the need to support long-distance bus travel with integrated infrastructure.
We need to think about the infrastructure in the United States holistically and think about the transportation system as one integrated system. And intercity bus needs to be an integral part of that system. One should be able to connect from one mode of transport to another seamlessly, easily. We have great success models in the United States. For example, Los Angeles Union Station, Boston South Station, or New York Port Authority Bus Terminal, or Washington, D.C. Union Station.
Kai and the team, they are doing a fantastic job. They have really improved the product, they have improved technology, they have really made the production more efficient, that at the moment it's also a profitably growing business.
Bloomberg Invest is back. Join me, Shonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
This is Horizons Middle East and Africa. Our top stories this morning. Colombia capitulates. The U.S. will hold off on imposing tariffs after the South American nation agrees to all of President Trump's terms. Ceasefires in focus. Israel and Lebanon extend their truce while a dispute over a hostage tests the deal with Hamas. And Rwanda-backed rebels reportedly claim to have captured eastern Congo's largest city, Goma. The DRC government calls the advance a, quote, declaration declaration of war. It has just gone past 8:30 a.m. across the Emirates, 6:30 a.m. here in South Africa. I'm Jennifer Zabasaja in Johannesburg. Happy Monday to you, and it is a busy week ahead. We are following that geopolitical developments across the Middle East and elsewhere. And of course, we do get some monetary policy decisions. We have the Fed, we have the ECB here in South Africa. We will have the SARB and the Bank of Canada. And then, of course, there is big U.S. tech earnings from some of the Magnificent Seven companies that are going to be in focus. But if we take a look at where markets are positioned today ahead of the trading day, a lot of focus is on what we are hearing from President Trump in regards to Colombia and those potential tariffs that he floated there, apparently walking that back, but putting some pressure on across assets, as we can see right now. U.S. equity futures in the red right now, both S&P and NASDAQ 100 futures. But also folded into some of the price action this morning is China's DeepSeek, which, as we were talking to our reporter Robert Lee earlier, it is not a new story for many investors, but it is getting a lot of pickup and leading to some concerns about AI and the progress on AI, and also the competition between China and the U.S. On a key week for U.S. tech. Also watching closely emerging markets right now, their currencies only down marginally right now. But last week, there was a bit of concern as Trump came into office what this would mean for global EM currencies. But they actually closed last week with their best showing since July of 2023 on those softer than expected tariffs from Trump. And Brent crude also in the firing line right now when it comes to the rhetoric around Colombia, down just about 0.7% trading at $77.97 a barrel. And that is also folded into the Colombia story. And that brings me to this next terminal chart, because it puts into context the significance of this relationship, at least when it comes to Colombia. The U.S. is Colombia's top trading partner, while Colombia is not even on the U.S.'s top 20 list, although there are a lot of factors to be thought about. There's coffee, which is in focus when it comes to Colombia. There's also oil as well. So a lot that we're paying close attention to when it comes to that relationship, and potentially more to come down the road from President Trump. But let's check in on how markets in Asia are faring. Some of the markets over there having a shortened week. Avril Hong, though, is here for us today to give us some updates. Avril, what have you got?
Jen, Chinese shares are being fueled by this AI optimism, so they're the ones that are actually leading the way in Asia Pacific today. And this is coming in the face of a poor batch of manufacturing PMIs, along with industrial profits that are really inspiring no confidence in the recovery of the Chinese economy, as well as the tariff threat that overhang following developments out of Colombia. Today, it's worth highlighting that some of these stocks that are rallying by double digits are those that have links to DeepSeek. This is, of course, the small Chinese AI startup that, despite using less advanced chips because of US curbs, have somehow managed to come up with a product that's impressive to investors and users alike. So part of this is that concern that it'll kind of eclipse the dominance of what we're seeing in the US when it comes to AI, or at least dent a little bit of that. These are some of the firms that have links to the business model. Merit Interactive, for example, disclosed in its annual report that it uses DeepSeek. So something to keep in mind as we watch these moves in the AI space.
Avril Hong in Singapore for us. Avril, thanks so much. We'll check back in with you later. Now, oil has pared losses as the White House withdrew a threat of tariffs and sanctions on Colombia, saying the South American nation has agreed to all of President Trump's terms, including the return of undocumented migrants. But the president's earlier declaration of an energy emergency still allows him to use wartime powers to achieve his priorities. Let's bring in Bloomberg's managing editor for commodities and energy in Asia, Clara Ferreira Marquez, who's joining us from Singapore. So, Clara, this news was very surprising for many people, just how swift Trump did this in his first few days. Talk us through what exactly he was trying to achieve with this energy emergency declaration.
So you're right. Immediately after his inauguration, this is one of the first things he's done. It's sweeping powers, seeking to look through everything from power grids to coal plants. He has his staffers searching through any loophole and searching for little-known authorities that can help him move things along, really pushing national security boundaries. I think we had a really nice comment in one of our weekend stories that talked about it as power politics in an age of power and not rules. Now, there are some difficulties here for Trump. I mean, for one, emergency powers are usually designed to stop something, not to start it. There are limits on what he can do, and the US is already producing quite a lot. But I think at the root of your question, and I think at the root of what he's trying to do, is really an effort to bring prices down. Now, if he did want to do that, if he was completely logical, he would, of course, look to renewables too. That isn't part of the complex that Trump currently prioritizes.
So, Clara, how do we see this continuing to affect the markets? We were mentioning what was happening with the announcement from Colombia earlier today. How do we see this playing out with the energy markets?
I think the Colombian incident this morning has been a really interesting one. So oil prices have been reasonably high pretty much since the latest wave of sanctions from the US, which of course predate President Trump. Those have pushed, raised concerns about supply. It's forced Asian buyers to look elsewhere. It's pushing prices up a little bit. This morning, however, what we saw was prices coming down. And I think that's really because of what it does for uncertainty. It brings up uncertainty in the market, really people raising concerns about demand. It has shown, especially how quickly it all happened this morning, it has shown the extent to which Trump is happy to use tariffs as a tool, especially for countries like Colombia, which, as you mentioned earlier, has a big imbalance with the US. So it's about 1% for the US, but 30% of Colombian exports go to the US. So clearly it has a very, very strong hand. And I think the market is expecting a lot more of this volatility to come.
Fascinating. Monday morning here. Managing editor for Commodities and Energy in Asia, Clara Ferreira-Marquez, joining us from Singapore. Thanks so much, Clara. Let's bring the news back here, though, to the region. South African President Cyril Ramaphosa has signed a new law making it easier for the state to take land in the public interest with fair compensation. The opposition Democratic Alliance Party opposes the legislation and is preparing to challenge it in court. Let's get more with Bloomberg's Ntando Takwana, who is joining me here in studio. So, Ntando, talk to us about what this signing of this bill really means for the country. This has been pending for quite some time, and which is maybe why we're seeing such a reaction that we are seeing.
Sure. Morning, Jen. So essentially, this law repeals the Expropriation Land Act of 1975. It has been in the process since 2017, when the ANC's President Cyril Ramaphosa's party actually initiated the process to try and address racially skewed land ownership rights in the country. And what it means for South Africa is that government can seize land more easier under two circumstances. One, the legal framework allows for the government to seize land for public purposes, which means for government's use, or in the interest of the public, which means that citizens stand to benefit from the seizure. But this has certainly been a contentious issue for quite a long time. And part of the legal terms of this law allows for the governments to actually negotiate with the landowners if they want to expropriate land. But if they reach a dispute or can't, reach a settlement, then the government actually does have allowance to approach the courts.
And Ntando, I was just taking a look at what the RAND was doing. Not too much reaction yet, but the concern is potentially what does this mean for the government of national unity and their ability to get things done. Could we see ruptures starting to happen now?
I mean, certainly this does expose a bigger crack in the GNU. One could argue that this is the biggest hurdle that they are facing since the formation of the Government of National Unity in June last year. And we've seen the party leader of the Democratic Alliance, John Steenhuisen, saying that he's declaring a formal dispute in the GNU and that he will be invoking Clause 19 of the Statement of Intent that they signed, which calls for a resetting of relations in the GNU. And what that does is dampen investor confidence that has been built up since they, formed this Government of of national unity, and that's likely could see the government of national unity slowing down the key reforms that they have been working on, and that spells really bad news for the economy.
Yeah, and we have the SARB this week, the State of the Nation next week,
and the
budget as well. Bloomberg's Ntando Tukwana joining us there with an update. Ntando, thanks so much for joining us. Now, here's a look at some of the other stories we are following in the region. The head of a UN peacekeeping mission says rebels in Democratic Republic of Congo are closing in on a key city aided by the army of neighboring Rwanda. The M23 rebels are about 9 kilometers north of Goma, with electricity and water supplies to the city already damaged. Hundreds of thousands have fled the fighting over the last few weeks, adding to the millions already displaced by conflicts in the eastern part of the DRC. The Associated Press is reporting at least 18 people have died in southern Nigeria after a gasoline tanker explosion. The accident happened along an expressway in the southeastern state of Ngunu after the tanker lost control and rammed into 17 vehicles, bursting into flames. Earlier this month, 98 people were killed in a tanker explosion in north-central Nigeria after individuals attempted to transfer gasoline from a crashed oil tanker using a generator. And Ghana's annual trade surplus reached $5 billion for the first time ever last year as the value of gold exports soared. According to the Bank of Ghana, the excess of goods exports over imports widened from $2.7 billion to the year before. Gold shipments from Africa's top producer increased more than 50%, making up just over half of all exports. And Chevron says its Cabinda Gulf oil operations are running normally after an oil sheen and debris were reported along the coast of Angola. The U.S. company has confirmed a survey of facilities and pipelines is currently underway. Angola's petroleum agency says cleanup operations at beaches in the area are ongoing. Now, coming up, could President Trump's request for $1 trillion in Saudi investment and lower oil prices be an unwelcome distraction for the kingdom's 2030 vision? We'll discuss that next. Stick with us. This is Bloomberg.
How can you have dinner with friends without hinting at what you're thinking about? And do you ever get suggestions from your friends at dinner, this is what you should do? And how do you respond when they kind of say, maybe you should lower interest rates? You just keep eating or what?
You might define the word friend to mean doesn't ask you about interest rates. So, no, people don't do that generally. You know, people I don't know will always say, hey, cut rates. Somebody said that in the elevator this morning.
Did that influence you or no?
I said, thank you, sir. You know, and no, but I mean, you know, people say things, but you know, it's fine.
So in some parts of the society these days, people are making decisions based on something called artificial intelligence, AI. Have you thought about, you know, calling up ChatGPT and saying, you know, here's all the data we have. What do you think about it would be a good idea? Have you ever thought about that, or they're not going to like you to do that?
We haven't done that. I mean, we have done little things like we've asked ChatGPT to generate questions for the press conference. And I'm happy to report for any journalists who are here that the questions were not as good as the ones we get from real journalists. So,
what about my questions? How do they compare to my questions? Okay.
No comment.
Right, so they weren't that great. Okay.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasanja in Johannesburg. Let's turn to the Middle East and relations with the United States. The Saudi Crown Prince faces a tricky balancing act of prioritizing domestic growth with foreign relations. That's as President Trump has taken Mohammed bin Salman's offer of investing $600 billion in the U.S. and pushed it for $1 trillion. Trump has also asked for OPEC Plus to lower crude prices, which again would hamper the kingdom's ambitions. For more, we're joined by Karen Young, a senior research scholar at Columbia University, joining us from Washington. Karen, thanks so much for being with us today on the show. So I think it's interesting, a lot of reporting about how the relationship between Trump and MBS this time around is quite different than what we saw the first time around. How would you assess it right now, just about a week into the Trump presidency?
Well, thank you, Jennifer. I would say that, first of all, Saudi Arabia is a different country than it was in the Trump first administration. It's been 4 years of really more of a laser focus on this domestic growth agenda, solving the dispute between the GCC states, and really focusing more on, calming relations in conflict in the region, particularly vis-a-vis Iran, rather than starting up problems. They also know how to deal with Donald Trump. They know that commitments like this of increasing investment are going to be music to his ears, that he's quite transactional in his view of the region and particularly of the kingdom. And so I think this is going to be a more articulate Saudi Arabia and a foreign policy, at least from the Saudi side, that will be able to play to the desires of what they expect from Trump.
How do they balance that, though, Karen, with their own desires and ambitions domestically?
Well, I mean, all of this kind of rhetoric of, increasing potential conflict in the region and seeing, the use of industrial policy and tariff policy is very worrying, especially across emerging markets, as that will have an effect on oil demand. But it's also, this is going to be another period of unpredictability. So you have to manage those ups and downs, and the kingdom doesn't want to see that. They want to see, as much calm as possible in the region. They want to see a good relationship with the United States, and they want to go towards those objectives that they've been seeking even within the Biden administration, which were some sort of defense pact or security guarantee. They want to move forward with their civilian nuclear program. And they want to have some sort of technology partnership agreement with the United States. So getting the things that the kingdom wants for its own domestic agenda will be front and center. And doing that doesn't work if we see really upheaval and ups and downs or depression in oil markets, or we see this kind of not sure where the Trump administration is going to go, especially vis-a-vis sanctions or maximum pressure campaign on Iran. So they need information and they need some kind of predictability. And the way to do that, which they learned the first time, is through an information flow. And the best way to get information flow with the Trump administration is direct at the top.
Do you see this $1 trillion rounding number from Trump as just a negotiating tactic? I mean, I wonder, too, from the perspective of the Saudis, how you think they view it.
Well, first of all, the number is completely unrealistic. I mean, if we look at, kind of FDI stock from Saudi Arabia into the United States, it's hovering about $10 billion, right? So we're not even on the scale of investment. Now, there's lots of ways to look at that financial relationship. There's traditional FDI, thinking about like greenfield FDI, building manufacturing facilities, things like that. There's also holdings of the Public Investment Fund in, publicly traded stocks in the United States. That's about $26 billion. And then there's reserve assets of SAMA, of the Saudi Central Bank, in U.S. Treasuries, which is about $150 billion. So still, we're nowhere near 600 or getting close to $1 trillion. That would be like the entire PIF plus more being invested only in the United States, which it's not. So, where does this money come from? It'll also be trade agreements. And, the big ticket items that Trump has liked before have been military sales, defense purchases. But, the whole kind of package of foreign military sales that go through the State Department in 2024 to every country were only about $4 billion. Now, of course, other countries can buy privately from U.S. defense manufacturers. But, we are not getting into that range of numbers across all of those kinds of allocations. So what we might see then is just promises, right? Promises of defense purchases and service contracts over a long period of time, 2-3 decades even. I think a big ticket item where Saudi Arabia would be very happy to partner and invest in the United States would be on a civilian nuclear program. And that's probably a wedge into negotiation with the Trump administration to kind of open the door on a dollar term and then get to the materials and the trade items that are most important to the kingdom.
Fascinating. We didn't even get to speak about the Trump Organization's own presence in the kingdom, but perhaps next time. We have to leave it there, though. Karen Young, senior research scholar at Columbia University, joining us with her insights this morning from Washington. Thanks so much, Karen. Now, for more of these stories looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com. Now, coming up, we'll have more on Trump's trade moves rattling markets following the president's threats of tariffs on Colombia. Stick with us for more of those details. This is Bloomberg.
If you look at Reels, Instagram and Facebook Reels, both immensely popular, both growing a lot. Those are really working not because the short form video format is special and new. It's actually been around for a long time. You remember Vine and the early days of short form video. It's because of GPUs, it's because of large models, it's because of advancements in recommendation systems. ByteDance is one of the really great companies at this. We also have made an immense investment in harnessing the power of modern models, large data sets, and modern hardware, NVIDIA's hardware and our own hardware, to build recommendations that make the products better and more engaging. Our advertising system is built on modern AI recommendation technology. So I always think it's interesting when people remark that like AI just arrived. It's actually powering already today a huge amount of the engagement and quality of our products.
I'm David Weston. Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
Done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week.
More than what you need to know, it's what you need to think about.
Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Joanna Versace in Davos, Switzerland, and this is Bloomberg.
The U.S. dollar strengthened against several currencies after President Trump threatened tariffs on Colombia. For more on the market moves that we're seeing over the past few hours, let's bring in Bloomberg executive editor for Asian markets. That's Paul Dobson joining us. So, Paul, just taking a look at what the markets are doing right now, we haven't yet seen a complete reversal since we got this news from the White House about the latest on Colombia. What's happening here? How do you think investors are interpreting this?
Yeah, hi, good morning, Jennifer. So, as you're rightly saying, we saw the currencies that were trading as a proxy for the Colombian peso, the likes of the Mexican peso, for example, and the rand for that matter, weakening right after the markets opened on the back of these tariffs that Trump threatened and then reversed again for Colombia. And I think the reason that the market has stayed weaker despite that not being put into effect is that now we know Trump is prepared to move and press that tariffs button pretty much at the drop of a hat in order to get the things done that he wants to get done. So it's not just a threat, but we've seen his teeth a little bit more. We know that the threat is real now. And so that's going to leave a bigger risk premium hanging on all of the rest of the currencies, friend or foe, that Trump might move to put a tariff on at some point in the future. And so I think that that's why you're seeing the market not really returning to exactly where it was at the end of last week.
Paul, is there any currency that is absolved of some of this sort of friction and volatility?
I think that's a really good question. Right now, we've got a stronger yen, but I feel like that's probably partly because people may be unwinding some carry trades where they've been selling the yen in order to put money into some of those higher yielding emerging market currencies. Plus, we had the Bank of Japan hiking interest rates at the back end of last week as well. I don't think there's really any particularly safe corner in the FX world because Trump has said, you know, we're looking at Canada, we're looking at Mexico, which are close trading partners. We're looking at Europe, which is a pretty big block and area and region that could also be subjected to tariffs. And there's a global threat as well. So people will look to find niches where they might be relatively shielded. But on the whole, you know, if we do get universal tariffs, or if we do get, you know, an escalation of sort of friction in global trade, then that's going to hurt all of the global economy and probably the US least of all, and then everything else relative to that.
Yeah, we'll watch that very closely. Bloomberg's Paul Dobson joining us in Singapore. Paul, thanks so much for joining us and for the update there. Let's take a quick check at where markets are positioned. We've mentioned a few of the headlines that investors are interpreting this morning. That includes those tariffs that the U.S. had initially imposed on Colombia, reversing on that. And then, of course, there's optimism around artificial intelligence in China, potentially what that means for U.S. tech, especially on a big week for mega cap stocks that are reporting earnings today, will be in key focus. But right now, U.S. equities down quite substantially, and the Eurostock 50 futures also down just about 0.5%. And we're going to be paying close attention to all of that in the next hour, so stick with us. We are discussing volatility and investor sentiment as tariff threats roil markets with Aisha Tarek just shortly, and I'll be joined by Lizzie Burden. But stick with us. I'm Jennifer Zabasaja in Johannesburg. This is Bloomberg.
I think most investors are intoxicated by the opportunity in artificial intelligence. $160 billion being spent this year. That's just one data point. Another data point is a $3 trillion market cap for NVIDIA against $80 billion of sales on a trailing 12-month basis. Obviously, a lot of growth is expected for NVIDIA and for other businesses in the space, but that is yet to materialize, and it's impossible to know what the scale will be of an NVIDIA or other players in the artificial intelligence ecosystem. I think investors are just so focused on the opportunity set, on what it can be, and it's a self-fulfilling prophecy. If you bought NVIDIA a year ago or 2 years ago, you're pretty excited about where it is today, and you think that it could go to the moon. As a result, you don't really focus on the risks. You're sort of just too excited about the opportunity.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
What would you say somebody young who's watching this should do if he or she aspires to be like you?
There's one component of our industry that people need to focus on, and it's not technical, and that's communication skills. Focus on being a phenomenal communicator, invest in that. Think about it, we have to convince a company to sell to us. You just don't walk in and buy the stock or tell them, yeah, you're for sale, I'll pay you this price. That takes years of relationship and effort. Why would somebody sell you that billion-dollar software company growing at 20%? Just because? No way. People hang on to these great assets. And then how do you get on the same page with the executive team of that company, even if they're existing or new? It requires just amazing communication.
If you go to a cocktail party and somebody comes up to you and says, I have $100,000 I'd like to invest, what do you would recommend that person do with $100,000? What do you think is a good idea to do with $100,000 today?
Sometimes they do, and I give them the most boring answer ever, S&P 500.
Just buy an index.
Buy the index. You don't have to worry about the quarterly earnings of a company. Did something change? Did somebody change management? You don't have to make this your full-time job. Just buy the index and you're going to be okay.
This is Horizons Middle East and Africa. Our top stories this morning. Colombia capitulates. The U.S. will hold off on imposing tariffs after the South American nation agrees to all of President Trump's terms. Ceasefires in focus. Israel and Lebanon extend their truce while a dispute over a hostage tests the deal with Hamas. And Rwanda-backed rebels reportedly claim to have captured eastern Congo's largest city, Goma. The DRC government calls the advance a, quote, declaration of war. Good morning. It has just gone at 9 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg.
And I'm Lizzie Burden in London, where it's just gone 5 a.m. Welcome to the second hour of Horizons Middle East and Africa. Good to be back with you, Jen, after this weekend. I mean, it was kind of blink and you'd missed it, these Trump tariffs, but the market's still feeling the impact.
Absolutely. And I think we were just speaking to Paul Dobson saying that maybe this is the start of a lot of volatility that we're potentially going to see here. Of course, this week is a big week for monetary policy decisions. We've seen Trump plead with Fed Chair Powell to bring interest rates down. So where does that go? Geopolitical developments, big tech earnings. So a lot for the markets to digest. But let's just take a look at where they are right now, positioned ahead of the trading day, getting some pressure, feeling the pressure, U.S. equity futures, at least right now, and that is coming after we did hear that initial news from the White House about the tariffs against Colombia. Again, as we mentioned just earlier there, reversing that decision, but still U.S. equity futures under pressure, as you can see there. S&P futures down just over 0.9%. NASDAQ 100 futures over 1.8%. And there's also the story about China's DeepSeek performance potentially affecting AI across the board. We do have a big week for the Magnificent Seven. So the question is, will this increase competition for some of these big players? I'm watching closely what's happening with the emerging market index, down just about 0.2%. But last week, we actually saw the index with its best showing since July of 2023 for the week on those softer than expected tariffs from Trump. But if Colombia is any indication, potentially we'll continue to see some more ruptures and announcements there. Brent crude also moving this morning down just about 0.7% on that U.S.-Colombia tariff rhetoric. And that brings me to the relationship between these two countries and just the context that this terminal chart is showing. The U.S. is Colombia's top trading partner, while Colombia, it's not even in the U.S.'s top 20 list, though it is significant for a number of exports, including coffee. There's also, of course, oil. And as our very astute producer, Ernest Tang, told me, it's actually very important for the export of roses on Valentine's Day into the U.S. So it's a significant relationship nonetheless. And so it will be interesting to see how markets potentially continue to digest this news and any other further tariffs that could potentially come from the White House. But let's dig into the markets even more with Aisha Tarek. She's the co-founder at Macrovisor, and she's joining us now. Aisha, always great to speak with you. So talk to us a bit about the past week that was. We were mentioning Trump has made a lot of announcements that the markets are trying to digest. What are you choosing to focus on in terms of your investments?
Hi, Jennifer. Thank you for having me back. It's good to see you again. So yes, a very interesting week, and just as you were saying, a lot of volatility. And I think this is sort of how things are going to be, right? There's never a boring moment in a Trump presidency. I think what we're seeing is something that we kind of expected going into the inauguration, that, President Trump is, after all, a businessman. For him, the stock markets are very important. The performance of the stock markets are very important. And he would sort of dial back a little bit of that tariff rhetoric, right? And that's exactly what he kind of did. He softened his stance a little bit, particularly towards China. And that sort of got the market going, with the idea that maybe things are not going to be as dire as the market thought, right? But at the end of the day, I think we're going to have this, sort of like a sword hanging over our heads. And as we just saw over the weekend, the threats are still there. So we still see that there is inflationary pressure coming out of this. And that's something that we'll be watching, particularly with regard to, the longer term yields moving up.
Aisha, does he have any sway, though, on the Fed? We were mentioning some of the commentary he has made towards Jerome Powell. We have the meeting later this week. How does that play out in your mind?
So I don't think he does, and I don't think he should, right? The Fed is an independent institution, and I think Chair Powell has made this abundantly clear that he's not going to be swayed by any administration. Now, it's easier said than done, because there's always a little bit of, I wouldn't say coercion here, but I would say a little bit of a push, right? But I think the Fed recognizes that they've made a few mistakes in the past. They haven't hiked fast enough when inflation sort of hit. And I don't think they're going to make that mistake again. At least we're all hoping that they don't. They've already cut 100 basis points, which is quite a lot in the context of things. And they've been proven wrong about the labor market. Right. So right now, I think their focus is going to be on inflation and all the inflationary pressures that come with Trump's presidency.
Aisha, Lizzie here in London. I want to ask you about these Colombia tariffs, or the threat of. It seems like that threat is still hanging over global markets this morning. So when you think about FX, where do you find safety when tariff threats like these could come at any moment?
So, Lizzie, I think more than it's the threat of tariffs, I think it's the uncertainty. And that was our theme for the year going in. The markets are roiled by uncertainty. It's not so much a 25% or a 30%, but what may or may not happen. We don't know for sure. And that always brings with it, risk aversion. Right? Now, to your point, I think the best place to hide would be the US dollar. We know the Fed isn't cutting as drastically as they had laid out before, and that will sort of keep the US dollar strong, as well as the inflationary pressures coming in will likely keep the US dollar. That would be my call for the next couple of months at least.
OK, so you're still long dollar. It was interesting as well that you said how conscious Donald Trump is of the stock market performance. That's kind of a scorecard to him. Do you think that that is so much the case he isn't going to go all in when it comes to immigration policy? Because traders don't seem to be pricing in the possibility that he would go all in on immigration policy. Are they underestimating that risk?
I think they are a little bit, and I'll tell you why. Because I think immigration is slightly different from, the tariffs or the taxes, which have a more direct impact on the stock market. The immigration risks are sort of a roundabout risk, right? So they're not a very direct risk. And by the time the immigration risk starts to show up in the numbers for companies, it's going to take a bit of a time. And I still do believe that this is a topic that's pretty close to his heart. If you noticed, some of the first executive orders that he did sign was with regard to immigration and border protection. And so I think he's going to go ahead with those. And that's something that we actually should be looking at as well, because it does create the risk of a wage spiral. and, higher wages across the board for a great many companies.
Aisha, really quickly, you say that it is time to focus on China. We were talking about DeepSeek. It isn't new for a lot of investors, but we are seeing some of the reaction today in the markets. But at the same time, we did get a bit of data earlier today from China. What's the convincing argument for now to invest into China?
So I think where we stand right now, we're at a precipice, let's say. We do still need to see quite a bit of that stimulus come in. We need to see a little bit more in terms of monetary policy cuts, maybe another 50 to 75 basis points. That's where we're looking. But at the same time, I think we're seeing some growth come in. We're seeing the market sort of firm up a little bit. So some of the stimulus measures that were announced last year seem to be working so far. And if we don't have this threat of, a massive amount of tariffs, and there's a friendlier policy between the US and China, we think that would be a good place to invest in. And what we're watching for that would be sort of proxy bets, right? So European luxury, we'd like to look at say Starbucks, Nike. Some of these companies are more proxy bets for how China may be doing.
Aisha, it's always really great to get your insights on the show. Appreciate you joining us. That's Aisha Tariq, co-founder of Macrovisor in Abu Dhabi, for us this morning. Now, coming up, Colombia backs down after President Trump orders tariffs and sanctions in response to the refusal to allow military planes carrying deported migrants to land. Details on that next. This is Bloomberg.
An ever-changing landscape comes with challenges. From our vantage point, we see opportunities. As a top 10 real estate manager, we harness the power of a 360-degree perspective, delivering local insights and global expertise across public and private equity and debt. Our experienced team and vast network uncover compelling opportunities, giving our clients an exclusive advantage. Principal Asset Management, actively invested.
We are in Turkey.
This is our journey.
To see the ancient cities of legends up close
is incredible.
Ruins whisper the stories of the eras.
Civilizations that marked history walked these roads. This is where the story of humanity arose.
We have so many stories to tell.
Slide minutes, slide better. You want to talk business? Meet me in the On-Board Lounge.
It's time to get active. To enhance the core of your portfolio, join the active ETF revolution and boost your global equity allocation with our research-enhanced approach. Search JREG ETF.
Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in London. Now, the White House says the US will not levy threatened tariffs on Colombia after reaching a deal over the returning of undocumented migrants. Colombia's foreign minister says it's overcome an impasse with the US after earlier refusing to let 2 planes of migrants land. For more, let's get into it with Bloomberg's Asia senior editor, Bill Ferries. Bill, I say blink and you'd have missed it. Tariffs were there, now they're not. They've reached a deal. Just talk us through the dispute and what it was really about and where we are right now.
Yeah, certainly one of the shortest trade disputes we've seen, and definitely in recent years. This all unfurled. Yeah, you could have gone to bed last night and not even known that there was something brewing. When Colombia refused to accept two U.S. military planes carrying migrants that the U.S. was deporting, President Trump struck back pretty quickly and pretty hard, announcing 25% tariffs that would go into effect very soon. And he said that those tariffs would rise to 50% within a week if Colombia didn't back down in this fight. Colombia is, the U.S. is Colombia's biggest export trading partner. It had very little leverage in this fight, and it also gave President Donald Trump an opportunity to showcase that his threats were not just bluff, that he will institute tariffs on very short notice for almost whatever reason he deems fit. So this has resolved already within a matter of just hours. The White House announcing that Colombia backed down, and Colombia's president, in fact, reposted the White House press secretary's statement on social media. So a very quick turnaround, but also a warning for other countries out there if they cross this administration.
Well, yeah, and it seems obvious that Trump's picked Colombia, the little guy, you could say, because Colombia would have to capitulate given the weight of their trade balance. If you think of it like that then, Bill, who's the likely next target, the next Colombia when it comes to these tariff threats?
Well, the big question is what happens with Mexico, right? Because they also refuse to have American military planes landing in their territory. They said the fact that they were military planes, whether they're with migrants or not, was the deciding factor. So Mexico, obviously a much more important trade partner with the U.S., a lot more complex of a relationship. So we're waiting to see whether there's a little more diplomacy that takes place between the U.S. and Mexico over this dispute than what we saw with the Colombia case.
Indeed, the Mexican peso is still the collateral damage of this Colombian tariff threat. Bloomberg Asia senior editor Bill Ferries, we thank you.
To the Middle East now. Israel and Lebanon have agreed to extend their ceasefire until February 18th to allow Israeli troops more time to withdraw. Meanwhile, in Gaza, another fragile ceasefire is being tested. Israel says a dispute over a civilian hostage has been resolved with a deal to release another round of hostages on Thursday. It now says the blockade that prevented tens of thousands of Palestinians from returning to northern parts of the enclave will be lifted later today. The developments come as President Trump floated the possibility of moving Palestinians out of Gaza. Donna Kreisch, Bloomberg's UAE bureau chief, is joining us now. So, Donna, President Trump getting a bit of heat from Arab Americans for Trump, many of the people who voted for him in the last election after these comments. How would you assess how significant these are, though, for him and for the current situation?
Good morning. They are very significant. I think this is the first time Arab countries have heard this, very direct and blunt comments to take on more Palestinian refugees. Israel, at the beginning of the war that broke out after October 7, had also tried to convince Egypt to take some Palestinian refugees through the border into the Sinai Desert in Egypt. And we saw Egypt rejecting this outright, saying that Israel should take them to the Negev desert. Now, also, we saw Egypt coming out to say we have an unwavering support firm for the Palestinians to establish a Palestinian state. And Jordan's foreign minister was having a presser also yesterday, Mohammed Safadi, and said that, and I quote, Jordan is for Jordanians and Palestine is for Palestinians, and reiterating that Arab countries and Jordan want to see a Palestinian state as the only solution to this problem that has been roiling the region for decades now. Now, this is very sensitive for a lot of Arab countries, right, because they feel that if they take on more Palestinian refugees, and President Trump was said 1 million or 1.5 million, that means that there is no going back to them. Now, it's not very clear whether this means, you know, it's a post-Gaza plan to empty Gaza, as also the president had signaled, or whether this is part of the reconstruction effort. You know, you move them and then you bring them back. But this is all very uncertain. But for Arab countries, this is definitely concerning and a signal that something might be brewing behind the the scenes, and it remains to see how the Arab League or, a unified Arab stance would be for this. But for now, we've saw Jordan and Egypt, those two who are mainly concerned, saying no and rejecting this outright, despite their close alliance with the U.S.
And Donna, happening at the same time, we mentioned the ceasefire in Lebanon has been extended. Does that mean the threat on Lebanon's southern border is eliminated? There was still some violence over the weekend, so where do things stand?
I wouldn't say completely eliminated, and it's a question of when does Israel think its borders are safe enough to withdraw from the areas that they had occupied in South Lebanon and allow for the Lebanese army to come in. Yesterday, there was a lot of tension on the border with residents, also a lot of them holding Hezbollah flags and roaming around in the streets, whether it be it in Beirut or in southern Lebanon, just wanting to come back to their towns. And we saw a clash, a direct clash. There was like a zero distance between them and the Israeli army. We saw the Lebanese army trying to ease the situation a little bit and the tensions, and accompanying some of these residents back to their towns as the Lebanese army was deploying and taking over. This will remain very tense, I would say, until February 18, which is when the ceasefire should expire and whether we should see another extension. Though it's hard to say whether Hezbollah's threat, arsenal-wise is still there. Israel did destroy, significant portion of that arsenal during the war, the 2 months war. But Hezbollah's political sway and even among residents is still very strong, as we saw many were chanting Hezbollah slogans and heading towards these southern villages. So perhaps arsenal-wise, they have been destroyed, but their influence on the ground in South Lebanon is still very much strong.
Donna Quraish, Bloomberg's UAE bureau chief, joining us there in Dubai. Donna, thanks so much for your time this morning. Now, coming up, emerging markets are in focus after the threat of tariffs roils the markets. That's next. Stick with us. This is Bloomberg.
Let's talk about COVID. What was it like trying to produce a vaccine under such circumstances?
Well, it was unprecedented in every respect. Firstly, we were being watched and questioned every minute of the way. We were in a race to procure raw material that was sanctioned because everyone was clamoring for it. It wasn't just raw material, it was even, equipments and things that we needed to build our facilities. And we couldn't even fly out engineers and equipment at that time, so we were chartering flights to do it because, at the peak of in 2020 and 2021, there were many restrictions on being able to fly and visas and all of that sort of thing. Once we got over that, I think it was just the challenge of rolling out as much production as possible, but also balancing which countries get what and trying to satisfy all stakeholders. So we got through that with a lot of difficulty and lessons that we learned. And that is why we need to have, going forward, like a pandemic accords and strategy that the WHO is working on. And I hope that all the countries sign up to it and adhere to it, because otherwise we'll be in exactly the same situation as we were then.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays only on Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. The U.S. dollar strengthened against several currencies after President Trump threatened tariffs on Colombia. For more on the market moves that we've seen over the past few hours, let's bring in Bloomberg executive editor for Asian markets, Paul Dobson. So, Paul, walk us through some of the moves we're seeing. I was just taking a look at the MSCI Emerging Market Index. It's marginally down, but I mean, how would you interpret how EM is moving? EM currencies are moving in reaction to this news?
Yeah, good morning, Jennifer. So last week we kind of lulled into that sort of false sense of security, maybe that Donald Trump was going to go easy on these tariffs and that markets could continue to flourish as a result. So we had a pretty strong week for emerging markets, along with a lot of the other things, and we saw a much weaker dollar. Now, at the start of this week, we've got that reminder from Trump that tariffs are definitely an option. There's something on the table for him to turn to with relatively, kind of little push. The fact that he was so quick to say that he was going to put those 25% tariffs on Colombia, albeit he reversed them, but the fact that he was able to show that that was a tool that he was going to turn to pretty quickly was enough to shake the markets out of that reverie a little bit, get people a little bit more worried again, make people realize, yes, this is definitely something that he's willing to do and something that is hanging over all of the markets. So as a result of that today, we have that stronger dollar, we have emerging market currencies carrying that little bit more of a risk premium from Mexican peso to rand and across the board, really.
Do you think, Paul, then all of the concern is fully priced in now that we've seen sort of this situation with Colombia and potentially more to come?
I think that the situation is still fraught because you have that sort of Damocles of the tariffs hanging over markets. It was interesting, I saw there was a note from Friday from Goldman Sachs talking about the euro, a developed market currency, but saying that that had a premium priced into it as a risk of tariffs. 2/3 of that premium had come out of the market pricing. So now I wonder whether the market wants to put a little bit more of a risk premium back into things because it's been reminded that, yes, tariffs are possible at any time and certainly not off the agenda from the Trump administration at this point.
All right, we'll leave it there. Thanks so much, Paul Dobson, our executive editor for Asian Markets, joining us from Singapore. Paul, always great to get you on. Thanks so much. Now, let's just take a quick check at where the markets are trading or positioned ahead of the trading day right now. We are still seeing quite a bit of downside for equities, and in particular, NASDAQ futures now down more than 2%, and also S&P futures down now over 1%. And a lot of this is coming off the back of that news about the tariffs between the U.S. and Colombia. But also, it is a big week for mega cap or the Magnificent Seven and key tech stocks in the U.S. So perhaps some investors are interpreting what we're hearing from China's DeepSeek and looking into that and trading on that. But Eurostock 50 futures also down just about 0.7%. As are Dow Jones futures down just about 0.4%. We're also paying close attention to what is happening with Bitcoin. We're seeing Bitcoin now down more than 4% as well. And so potentially our MLive team says that Bitcoin potentially is looking at quite a shaky week coming up. Not great news, though, for President Trump, who has, of course, touted being the crypto president. And let's just finish on oil, of course, because oil is, of course, folded into a lot of the geopolitical developments we've been paying close attention to in the Middle East and also, of course, with Colombia. Brent crude now down almost 0.8%, trading to about $77.89 a barrel. Now, coming up, South Africa's president signs off on a new land expropriation law. We'll unpack what it means for the country's land ownership rights next. This is Bloomberg.
Discover your edge. Trading is constantly overcoming your doubts and fears. Keep pushing forward. Trade like a pro.
Asia is a continent of contrasts. The region is a nexus of rich cultural traditions and a vibrant hub of trailblazing innovation and modernity. How will it push the limits of technology even further?
Going to space should become as easy as, taking a flight.
If NASA is designing a lander, their approach is they're designing a Formula One car. So we take, say, a Jeep approach.
Min-Sung, give us a sense of how you translate Korean architecture for the rest of the world.
We call this madang. In general terms, it's where we can be ourselves, where we belong.
There is an old saying in Korea that says, "거미 불루, 화이 불치." It means simple, but not humble. So it has a tremendous impact on Korean architecture.
People tend to think the robot AI taking the job from them. We want to use the robot as a basic asset, meaning people have an income through the robot.
From space tech in India to robotics in Japan, Asia is driving the future, reshaping industries, societies, and the way we live. Join me as I take you through the bold innovations. Discover Asia's next-gen technologies on Momentum.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big, with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
This is Horizons Middle East and Africa. Our top stories this morning. Colombia capitulates. The US will hold off on imposing tariffs after the South American nation agreed to all of President Trump's terms. Ceasefires in focus. Israel and Lebanon extend their truce while a dispute over a hostage tests the deal with Hamas. And Rwanda-backed rebels reportedly claim to have captured eastern Congo's largest city, Goma. The DRC government calls the advance a declaration of war. A very good morning. It's just gone 5:30 a.m. in London. I'm Lizzie Burden.
And I'm Jennifer Zabasaja in Johannesburg, where it's just gone past 7:30 a.m. Welcome to the second hour of Horizons Middle East and Africa. And quite a busy week we have coming up, Lizzie, with monetary decisions. There's eco data and there's big earnings to pay close attention to.
Yeah, loads on the docket, but even before all of that, Blinken, you'd have missed it. We've had this rupture in the markets over the Colombia tariff threat. Yeah. Then they reached a deal, and yet the spectre of that threat still hanging over these markets, Jen. And really, is that a sign of the volatility to come in 2025? If we look at these markets as they stand, you had the Mexican peso taking a beating this morning, oil getting whacked as well. We already saw its first weekly decline of the year off the back of the sanctions threats on Russia, the tariff threats as well. But there you're seeing Brent currently $77 a barrel, so 0.8% down. US futures pointing lower by 1.1%. But that's also because of these fears that China's DeepSec could disrupt the tech world, which is, of course, not just a fear, it's a hope if you're over in Asia. On the MSCI Asia Pacific Index, though, you're still seeing declines down 0.1%. So really last week, the best start to a presidency in stock market terms since Ronald Reagan. But this morning in markets, very much a reminder that volatility and uncertainty lie ahead. If we just flip the board, though, I want to bring you a terminal chart on Trump's tariff threats on Colombia, because Bill Ferries was alluding to this. If you look, it was very much a David and Goliath situation. So the US actually runs a trade surplus with Colombia. There's very little wonder why Colombia therefore capitulated to his demands. And you can see in this chart the flows in 2023. The US is Colombia's top trading partner, but Colombia's not even in the US's top 20 list. And Jen, I heard you mentioning it before. It's a good job they've sorted it out just in time for Valentine's Day, because, of course, a key Colombian export is flowers. And we wouldn't want anything to get in the way of romance, would we? But let's get back to the oil story, because yes, oil is paring some losses after the White House withdrew the threat of tariffs and sanctions on Colombia. It says that the South American nation has agreed to all of President Trump's terms, including the return of undocumented migrants. But we have to remember the president's earlier declaration of an energy emergency still will allow him to use wartime powers to achieve his energy goals. So let's talk about this now with Bloomberg's Stephen Stapczynski. He's in Singapore. Stephen, good morning. I wonder just how central is energy for the Trump administration, given all the many executive orders he was signing on day one?
Well, a lot of those executive orders were energy related. I mean, I think if you look at this time in the White House versus the previous time, Trump does appear to be using energy quite broadly across the board as a way to really push forward his goals. So there are two approaches, right? There's the domestic and then there's the overseas part of it. Domestically, he wants energy prices to be as low as possible because he understands his base. Gasoline prices are low, great. The price to heat your home lower, fantastic. All of those things, anything that could be deflationary or anything that could curb inflation is what he wants to attack. Now, on the overseas side of it, right, you have this as a potential way to reduce trade deficits with other countries. The U.S. is the world's biggest crude oil producer and the largest exporter of liquefied natural gas. So he wants to use that as a way, potentially get other countries or get blocs. The European Union, for example, he's threatened tariffs against them if they don't buy more U.S. oil and gas. And that's all of this to him is central in, hey, we need to produce more oil and gas at home. We need to increase the pipelines. We got to get power plants online. This is all part of his sort of strategy to, one, reduce the cost of things at home, and then two, get people to do what you want abroad.
But so that's the strategy. It's easy to say drill, baby, drill. But then what about the implementation? What can the White House actually do to produce more fossil fuels or sell more fuel abroad?
Yeah, it is challenging, right? So this the energy emergency that he's implemented could use kind of Cold War era rules to kind of push through certain pieces of infrastructure. For example, oil and gas pipelines. It's been very hard to build more of those in the United States because of all of the ability for states to block them. I'm from New England. I'm from the Boston area. Boston actually imports liquefied natural gas because there's not enough pipeline infrastructure to get cheaper shale gas into that region. That's something that maybe he could push through, but it would be difficult still because there would be so much opposition from local communities. He could also push through building power plants or power purchase agreements or fuel agreements with the Department of Energy. There are different ways he can do that, but again, it is still challenging because the U.S., it's home to a lot of private companies, it's capitalist, it's markets. So if you don't have these private producers boosting production themselves, it's hard for the White House to really encourage more beyond that.
OK. Stephen Stapczynski in Singapore, we thank you for that analysis.
Let's turn to the region now. South African President Cyril Ramaphosa has signed a new law making it easier for the state to take land in the public interest with fair compensation. The opposition Democratic Alliance Party opposes the legislation and is preparing to challenge it in court. Joining us for more on this is Tanveer Jiwa, a lecturer at Stellenbosch University who also lectured on property law. Great to get you on, Tanveer. Thanks so much for joining us. So maybe for the global audience, you can explain how this law differs from what we've seen in the past.
So thank you so much for having me. So it's important to note that the previous legislation was actually 1975 Expropriation Act. So this is what we call the apartheid era legislation, which is the legislation under which a lot of expropriation has already happened. So expropriation is not new in South Africa. It's been here since the Union of South Africa. But the difference is that now we have introduced a certain contentious section in the legislation, which is mostly that there are certain instances under which you can expropriate the land for nil compensation, but it has to be just and equitable, and the factors are actually quite narrow and still has to be decided by a court. But this is quite new, and it's causing a lot of havoc in South Africa at the moment.
What's the effect then, Tanveer, on the economy if we do actually see this pushing through?
Sure. So I think it's a bit of a smoke screen. A lot of people are panicking about the effect of the economy. But if you actually read the legislation, you will realize that the situations under which nil compensation is allowed are quite narrow. What do I mean by that? Just to give you an example, the land can only be expropriated, for example, if it causes a health risk to the people who are living there. And under these circumstances, it's important to know that it wouldn't be your home. For example, it wouldn't be a thriving business that we're posing a risk to the health of the property owners or people who are on there. Another example would be land that has been abandoned for years. And what I mean by abandoned was if the landowner has not paid municipal rates, but also to realize that under the previous law, the 1975 Expropriation Act, the state could already expropriate land for land reform purposes under market value. The state has chosen, however, to very, very sparsely use that power. So it has barely expropriated land for land reform purposes. And even when it has expropriated land, for example, to build a school or a road, it has chosen most of the time to compensate the property owner for more than market value, right? For more than the landowner would have gotten if they had chosen to sell the land. So it's really not the scare or the panic that we should be having about the economy, but more of asking ourselves whether this is just a distraction and a symbolic move for the government and whether it will actually come to fruition in terms of practice.
When you talk about symbolic, Tanvir, many people are talking potentially about this is going to start showing some of the fractures in the government of national unity, right? And the investor confidence could start eroding. What exactly do you mean by it?
So we have already seen the fractures with the government of national unity and before this act as well. But the issue that we're having, for example, you've mentioned that the DA is going to the Constitutional Court or rather to the court to challenge the constitutionality of the act. So mostly what has been happening is that the DA spokesperson has said that this is the president going behind the back of the government of national unity, stabbing them in the back, betraying them, and mostly putting forward law that is against the DA's policy and values and ideology. But it is important to note that this law was actually passed by Parliament on the 19th of March of 2024. So that was before the government of national unity was even passed. And it's important to note that at this stage, when the president has the law in front of him, the bill, the president has two options. Can ask the legal consultants, his legal consultants, for their legal opinion on whether the law is constitutional. And if he finds that it's constitutional, he signs it. And if he is not sure of the constitutionality, he can return the law to the Constitutional Court and ask for the court's opinion. It is only then, if the court finds that it is not constitutional, that the president can refuse to sign the law. The president cannot simply just go and ask opposition parties for their views. And we're talking about back when the government of national unity was not yet passed. So it's important to note that this is not a matter of politics, but we're talking about law and what the president was supposed to do. And he did what he was supposed to.
And Tanvir, just finally, we've talked about how the president is trying to turn South Africa into a construction site, which, again, many investors were looking forward to that potentially. Does this get in the way of that, potential court challenges that we see?
So in essence, for now, the act remains into place until the court has spoken on the constitutionality. And even then, it has to go all the way to the Constitutional Court for the court to say that there's a problem with the law. But we need to remember that this law is very procedural in nature. It is not so different from the 1975 Act, except for the nil compensation section, which is a minor section. And as I said, we haven't seen a lot of political will to even use expropriation for land reform to begin with. So to see it now would be very surprising. So I would very much be surprised to see that it actually causes a dent in either land reform or the economy of South Africa. There's just been a lot of panic around the act. We need to remember why. It's because South Africa has tried to implement changes in its property regime since 2008. And even this particular act has been in Parliament for 5 years, which is extremely long. So since 2008, we have tried to have a new expropriation act simply to replace the Apartheid Expropriation Act. And I think that's a big reason why property owners and other lobbyists are actually taking such huge issue with the fact that this act has come into play.
It will be interesting to see how this plays out, and potentially if we hear the president speak about it at the State of the Nation next week. We're going to leave it there, though. Tanveer Jiwa, lecturer at Stellenbosch University, who also lectures on property law, joining us. Thanks so much, Tanveer. Great to get you on this morning. Now, coming up, Rwanda-backed rebels claim they have captured eastern Congo's largest city of Goma. The details on that next. This is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
We're scaling up at incredible pace.
This region is growing so rapidly. The opportunity is really huge.
Every trading day, only on Bloomberg.
What are your thoughts on fast fashion? It's been transformative. It gives the masses access to fashion, but there's a cost to it, downside to it.
My first notice is too much waste. I think this is also how I grew up, making your own clothes and making something that's well special and well unique. It's like timeless. And now you see that everybody is looking the same, like wear sweatshirts and wear t-shirts. And for me, it's just like, when they wear something that's special, they feel empowered.
Is there a need for fashion to be more mindful of the impact it's having socially, environmentally?
Definitely.
Is it happening enough?
I think it's happening. It's gradually happening. All the designers are doing, everybody is thinking about this subject at this moment, thinking how to be more sustainable, how to be more environmental friendly.
Do you think the fashion industry is doing enough to ensure that it is sustainable? There's so many targets out there. Are they even realistic in wanting to achieve them?
I think some of them are just like they're using sustainable ideas as a marketing concept only. They're actually not really doing it. I think as a designer, it's really important to really make it happen. Every collection, I think about how to do it and how to tell the customers. I think that is our responsibility to educate our customers.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Rwanda-backed M23 rebels claim they have captured eastern Congo's largest city of Goma. The United Nations has described a, quote, mass panic among its 2 million people, and Congo's government says the rebel advance is a, quote, declaration of war. For more on this, let's bring in Bloomberg's Indira Oganga, who is in Kigali for us following the story. So, Indira, walk us through how the situation in eastern Congo has escalated like this in the past few days.
Hi, Jen. This fighting has really taken a different turn in the last couple of days. Let's take a look at the last 24 hours, for example. On the 26th of January, Bloomberg reported that the M23 rebels were just 9 kilometers north of Goma. On the 27th in the morning, we woke up to news that M23 rebels have seized the town of Goma. And they posted on their X saying, "We urge all residents of Goma to remain calm. The liberation of the city has been successfully carried out." Goma is a town near the border of Rwanda, and it's a key trading hub. And this cessation or seizure by M23 rebels could mean that there could be full war prospects that we could be looking at. You also have M23 rebels that have seized control of the airspace in DRC, and they've blocked all movement of people and humanitarian aid in and out of this city. And you have the UN saying that water, electricity infrastructure has been damaged. Humanitarian aid workers are running out of money. Then you have people. Goma was one of the last safe havens in the eastern part of DRC. People are fleeing, not knowing where to go. Their children and whatever belongings they could pack on their bags. The UN says at least 178,000 people have been displaced since January. And from the recent fighting that we've seen, 3 peacekeepers from South Africa and Uruguay have been killed and 11 have been wounded.
And Indira, we were just talking a few days ago about Rwanda and the DRC and potentially Turkey helping to mediate some resolution between the two. What does this latest development then mean for that?
Tension is fast rising between the two countries. You have the government of DRC that accused Rwandan troops of crossing the border, terming it as a declaration of war. You also have Congo, the US, and the UN accusing Rwanda of backing M23 rebels, not only with weapons, but also boots on the ground. The UN also says that Rwanda has been using GPS jamming and spoofing equipment that is blocking relief efforts. And because M23 have now seized Goma, they control the world's largest deposit of tantalum ore that is used in portable electronics. And these minerals are being shipped to Rwanda and then loaded into the global ecosystem, according to DRC. And they're asking an embargo to be placed from gold and coltan that is coming from Rwanda. On the other hand, Rwanda is responding. The ambassador to Rwanda, or rather the ambassador to UN from Rwanda, says Congo's inability to govern itself and control active armed groups is the root cause of problems in that country. The Ministry of Foreign Affairs also in Rwanda has released a statement criticizing the lack of context in the statements that are being put out there. They're saying they're misguided and manipulative. Rwanda is being scapegoated, but all in all, Rwanda remains to a peaceful process and finding peace in DRC.
Concerning pictures out of there, but appreciate your reporting. Bloomberg's Indira Oganga in Kigali, Rwanda, following that story for us. Now, here's a look at some of the other stories we are following this morning. Ghana's annual trade surplus reached $5 billion for the first time ever last year as the value of gold exports soared. According to the Bank of Ghana, the excess of goods exports over imports widened from $2.7 billion the year before. Gold shipments from Africa's top producer increased more than 50%, making up just over half of all exports. And Chevron says its Cabinda Gulf oil operations are running normally after an oil sheen and debris were reported along the coast of Angola. The U.S. company has confirmed a survey of facilities and pipelines is underway. Angola's petroleum agency says cleanup operations at beaches in the area are ongoing. Now, coming up, the world's biggest container carriers are going to their separate ways. The breakup of the Maersk MSC 2M alliance is the focus of our big take today. We have the details on that next. This is Bloomberg.
Why should I want to invest in the pharmaceutical industry? Is it going to continue to grow as it did last year? And what about your own company? Do you think it's going to have good growth prospects over the next couple of years?
I think the reason to invest in the sector is the science. I mean, when you look again, if I go back into the history, for most of the last century, we were only giving people pills and small molecule drugs. Then we discovered that we had this whole world of biologics and we could treat diseases with biologicals. More recently, we've discovered that we can reprogram your cells, we can edit the genome, we can use these RNA therapeutics to completely transform areas of medicine. Those technology areas are at their very nascent stage. And what we're going to find is they're going to open up whole new areas of growth from our business standpoint and a human health impact standpoint. We hope that as we work in our areas like cell therapy and RNA therapeutics, we will also be able to climb to a whole other level of market cap over time.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising chorus conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close, weekdays at 3 p.m. only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute financial and geopolitical news whenever and wherever it happens. I'm Francine Lacroix in Davos, Switzerland, and this is Bloomberg.
Season is here.
Kicking off earnings season, there's a lot going on.
Bloomberg is first to break the numbers.
Air France KLM.
NatWest well above estimates.
We have further earnings coursing from GSK.
With the smartest insights.
Clearly, the macro and geopolitical front is full of open issues that if they come all together at one stage, they can create some dislocation.
Is that why you're cautious about the fourth quarter?
Continuing coverage on Bloomberg. Context changes everything.
Welcome back to Horizons Middle East and Africa. I'm Lizzie Burden in London. Now to our big take, which is all about shipping. The alliance between Maersk and MSC Mediterranean Shipping is coming to an end, with MSC pursuing a traditional solo approach to container shipping. Meanwhile, Maersk is forming a new alliance with Hapag-Lloyd that will be focusing instead on schedule reliability. For more, let's bring in Paul Wallace, who leads Bloomberg's MENA economy and government coverage. Good to see you, Paul. Well, I wonder what led to this breakup. We've been talking about romance on the show. How did we get to this point?
Hi, Lizzie. Well, it's been an alliance. It will break up towards the end of this week, on the end of January. But it has been in place for a long time, for about 10 years. So in some ways, it has been, a success to last for this long. Part of it has been a clash of cultures. MSC is, it's not a listed company, unlike Maersk, and it's known for kind of being very ambitious and pretty hard charging. It likes to think of itself as very nimble and flexible. Maersk, in some ways, is a bit more conservative. There's been this focus on throughout its history on reliability for customers and making sure that ships depart and arrive on time. MSC's culture has been, in some ways, there've been examples of it, delaying ships beyond their departure time until it can get more containers on board, and then allowing it to set sail at that point. So in some ways, there's always a clash of cultures, and probably put those different cultures put under a lot of strain by what the shipping market has gone through, particularly since the COVID pandemic and the massive sort of downswing and then the upswing that the industry involved in then. And now they've got to a point where they think they're better off going their separate ways.
I mean, if we learned anything in the pandemic, it's just how much shipping feeds into inflation concerns. What are likely going to be the ripple effects of this for global shipping and therefore for inflation?
That's a big question. In some ways, there might be a sort of silver lining for customers here and global consumers if the breakup of the 2M alliance leads to lower freight rates, leads to lower rates for container shipping. That might be one result. Or, of course, it's difficult to tell at the moment. Maersk going into this, Maersk is, of course, going into another alliance with Hapag-Lloyd, this Gemini alliance. So it's not, that in and of itself doesn't suggest that it will be a sort of competitive free-for-all between the big container shipping companies. We'll have to see over time, but there is the possibility that this increases competition somewhat and leads to the big shipping companies reducing their rates over time.
All right, Paul Wallace, leading Bloomberg's MENA economy and government coverage. We thank you for bringing us that big take. Do check it out on the terminal. But just in our last few moments here, let's check in on these markets as we head towards the European Open. We've got equity futures pointing lower on both sides of the Atlantic. S&P E-mini futures down 1.2% now, both still recovering from Trump's tariff threat on Colombia, though that has been withdrawn. Also, these fears that China's DeepSeek is going to disrupt the tech world, though that's good news perhaps if you're in Asia. But that does it for the Horizons Middle East and Africa show. I've been Lizzie Burden in London. Jennifer Sabasaja was with me in Johannesburg. Tom Mackenzie will be with you for the next hour. That'll be Daybreak Europe. Plenty to take you through in a busy week, not least for central banks. Thanks for being with us. This is Bloomberg.
In a world of seismic change, will your business shape the future or be shaped by it? How will we capture the imagination of tomorrow's consumers? and overcome operational constraints to focus on future growth. How will we harness technology and AI to shape the way we live our lives? And how will we balance environmental responsibility with economic prosperity? With EY's full spectrum of services across sectors, we're all in to shape the future with confidence.
This is the game changer seat. Look, it even comes with binoculars. I just took a shower above the clouds. You know why? Because this is the Emirates A380.
At JP Morgan, we're taking ETFs to the next level with active equity and fixed income strategies designed for today's dynamic markets. Invest with a leader in active management. Search JP Morgan Active ETFs.
You've released, I think, a Bollywood song, a reggae album, a gospel album. You've done a bunch of different genres. Is there any genre you haven't tried that is, because it feels like this next one you're doing is sort of back in your sweet spot.
I did a jazz album that I haven't released yet. It's more or less like spoken word over jazz music. That was a genre that I've always wanted to go into. Quincy Jones hit me to Mr. Mumbles, Clark Terry, which was his teacher. And we had an opportunity to spend time with Mr. Terry, and we did a record together, and that was a genre that I always wanted to venture into because I felt like I had a jazz voice.
So your role in a jazz album is just your singing?
No, I'm spoken word.
Or sorry.
My voice and my conversation, my poetry, you know.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Nasdaq futures tumble on concerns that a cheaper AI model from China's DeepSeek could threaten US big tech. Asian technology stocks rally on the news. Donald Trump holds off slapping tariffs on Colombia after reaching a deal to send back undocumented migrants. The White House says the South American nation agreed to all of the president's terms. Plus, Ryanair reports earnings in the next few minutes. We're going to speak with the CFO of Europe's biggest low-cost airline. Good Monday morning. I bet you didn't see that one coming. Colombia and DeepSeek, an AI model from China, routing these markets. That is the focus of investor intentions right now as to whether or not the thesis around the AI theme in the US, with a particular lens on the spend around NVIDIA, has been undone by the gains that have come through from this business based in China with now one of the top performing apps. European stock futures are currently pointing lower by around 0.8%, so set for a very challenging day this Monday. FTSE 100 futures pointing lower by 0.3%, S&P futures stateside looking to lose 1.2%. But here's the potential shellacking in store for the Nasdaq 100 futures, that tech-heavy index, on a week, of course, when 5 out of the 7 Mag 7 companies report, currently pointing lower by more than 2%. Focus on NVIDIA pre-market when that pricing comes through. Let's flip the board and look cross-asset then. The dollar is gaining. That is a story and a theme for the session. The 10-year currently at 4.58. Across treasuries, you're seeing a bit of money flowing in. Yields down close to 4 basis points on the benchmark. The Fed decision comes on Wednesday. Will they guide along the pricing that is now in around 40 basis points for this year, or push back on that? Euro dollar currently at 104. Again, dollar strength is the factor at play here. Down 0.3%, the single currency. Brent at 77.83, sensitive to the tariff threat that's come through around Colombia, though that has now been walked back by the Trump administration. And Bitcoin, a reminder that there is some profit taking within the crypto space, closing in on that 100,000 level. Just to the downside, down 4 0.5% so far in the session. Let's cross over to Asia right now. Abraham standing by in Singapore with no doubt a check on how the DeepSeek story is rippling through Asia's markets. Avril.
Yeah, let's dig deep into this DeepSeek story. We're seeing how China shares were more or less leading the gains in the region today. And this is all this AI fueling optimism, a bit of profit taking underway ahead of the long Lunar New Year holiday. So the gauges are pairing some of the earlier gains. But you see how, if you're wondering where did this DeepSeek story come from, and if you're wondering if it's just out of left field, I think one of the catalysts are this local media report that highlighted how it's kind of jumped to the top of the App Store in terms of downloads, both in the US and China. So that's really fueling that concern that it will kind of eclipse the US, the OpenAI, or even Meta kind of in terms of modeling. When it comes to other shares that are in focus, we're seeing the ones in Japan really coming under pressure. Some of these tech names are losing their shine because of what we're seeing in China. And this picture is coming despite dismal showing on PMIs, as well as the concerns surrounding tariffs. If you flip the board, take a closer look at what we're seeing in some of the AI-related names, or those that are linked to DeepSeek. I think one analyst put it best, Vincent Ling of UBP, saying that, it's really remarkable how they come up with this powerful AI model at lower costs, and it demonstrates this possibility of upending the investment case for the entire supply chain. So some of these names linked to DeepSeek, double-digit climbs. For the board again, I just wanted to highlight what we're seeing in the renminbi, because there's a bit of a reversal from last week's recovery. A lot of this came after the data from China. Manufacturing PMI showed contraction. This is the first time we're seeing it since September, and this is despite stimulus. So a very, very worrying picture, not just on manufacturing, non-manufacturing services slowing as well, and underscoring the need for policy support. Tom.
Ava Hong in Singapore with a check on the Asian markets. Thank you very much indeed. Yeah, further weak data out of China, both in terms of manufacturing and services as well. And certainly that is a factor across mainland markets. Let's get you the latest lines in terms of the earnings coming through from Ryanair before we bring you an interview with the CFO of that company, who's sitting on set right now. Ryanair lowering its passenger growth target for fiscal 2026 to 206 million. The impact of Boeing's delivery delays certainly a factor there. That is being cited by Ryanair. The airline's profit after tax for the full year expected to fall to between 1.5 and 1.61 billion euros. That's down from 1.92 billion last year. Again, the impact on the deliveries from Boeing. Let's bring in Neil Sorhan right now, sitting on set with me, bright and early. Ryan, Tom, hi, Ryanair. Neil, thanks for joining us. Look, let's talk about Boeing then and where things stand. That's clearly the main impact in terms of the downgrade, in terms of passenger numbers for 2026. Where are Boeing in meeting those deliveries that you've pushed through, that you demand from them? Are they finally catching up? But to what extent is this going to be a headwind going forward?
Tom, myself and Michael were in Seattle a couple of weeks ago, and that's my third trip in the last 12 months, and I've seen notable improvements on the ground. Things are definitely improving. The quality of the fuselage is coming in from Wichita Spirit, much improved. So I'd have a high level of confidence that the additional 9 aircraft that we need this side of the summer to get to 181 game changers and that to deliver those 206 million passengers will happen. I'd equally have a relatively high level of confidence that the remaining 29 aircraft in our 210 order book will be delivered ahead of next summer, the summer of 2026, which will enable us then to catch up a lot of the growth that we've lost this year to get to 215 million passengers. So I think Boeing have turned the corner. On the production side of things, they fixed their balance sheet last year. The management team are executing on the plan. Of course, we're disappointed that we're going to be left short aircraft again this summer, but we are operating into a capacity constrained market. If you look at the Airbus operators, they're behind on their deliveries. They've got the issues with the Pratt & Whitney engines, so I think capacity is going to be hugely constrained this summer, our own included. We had hoped to carry 210 million passengers. We're now carrying 206, so that potentially I think will be a positive for fares into the summer going forward.
It's the second time that you've lowered the passenger growth target.
It is.
Is that it? Are we done?
Yeah, as I said, I'd have a high level of confidence that those aircraft will come in. I saw a number of them in the factory when I was there. The rest are either on rail carts or manufactured, the hulls in Spirit and Wichita. So they're good to go. We can physically see those 9 fuselages at this point in time. And then it's a case of getting, as I said, the remaining 29 in ahead of the summer of 2026.
Ahead of the summer of 2026, that's the additional 29. But you're getting 9 before the current summer season.
We get another 9 in with 172 game changers out of a fleet of 609 aircraft at the end of December. So we get another 9 aircraft in ahead of peak summer.
What is demand looking like?
Demand is very strong. It's robust at this point in time. People are still as keen as ever to get away, and we've 164 new routes out of 2,600 routes this summer, all booking well. Now it's too early to call where the final pricing will come out, but I'm pleased with what we're seeing so far.
Give us a sense, guide us on pricing and yields through this year. How's it likely to compare to last year?
Look, it's too early to guide on prices. We're only doing our budgets at this point in time, but we will lap the OTA issue that we had last year. If you recall, they boycotted us in November, December of 2023. It took a number of months to integrate the approved OTA partners. So that'll start to lap itself this year. Capacity hugely constrained. Q1 will be good because we have a full Easter in there. There was no Easter in the same quarter last year, but I wouldn't want to call where fares may go at this point in time.
Are you seeing a consumer that's more cautious?
I'm seeing a consumer who wants to get away and get a little bit of sun.
Okay. Talk to us about what you're seeing in terms of the potential plans to expand the airport capacity at Heathrow, Gatwick and Luton. We're hearing that, of course, from Rachel Reeves, the Chancellor. We'll see if that gets confirmed. Would you take advantage of that? Where would you look to add additional slots? Could Heathrow be part of the play for you?
It's always going to be lowest cost wins and operational efficiency. Somewhere like Heathrow would need to be able to turn our aircraft in 25 minutes, which would be a big ask. It's one of the few airports in Europe that we don't fly into. But, we'd be very keen to see more growth, very keen to see more capacity. But I do feel that the plan to add capacity while at the same time putting up air passenger taxes is kind of contradictory. If you really want airlines to grow in the UK, then you need to bring down the taxes on the passengers arriving and leaving from the country. So I would call on the government, first and foremost, reduce APD and then start looking at the CapEx. But, I'd encourage as much competition and as much growth as possible.
OK, yeah, you've pushed back on that tax increase previously, haven't you? So that's the UK government. The US government, do you think Trump in power changes the flying dynamics of European flyers? Do you think there are more domestic flights versus flights to locations like Orlando? Does it change at all?
At the moment, it looks like people are still travelling across the Atlantic in numbers. And equally, I think with the strong dollar, we're going to see an influx of US tourists into Europe this summer, keen to get the good value for the money. And a lot of those will probably end up on Ryanair flights flying around. But it's too early to call really what's going to happen with the new administration. I think, it's probably not unhelpful for Boeing and others with Trump and the White House to move things along.
Do you expect supply disruptions? I mean, the threat of tariffs is clearly there. We got a reminder of that today with Colombia. But longer term, there's a potential threat to airplane parts, aircraft themselves. Do you start to mitigate that?
I think there's less chance. Boeing is fundamentally important to the US economy. I think they will be supported equally. A lot of the US carriers take Airbus aircraft. So I would be hopeful that we don't see aircraft getting caught up in any tariffs that may or may not come to play over time.
OK. Neil Saran, thanks so much for coming into the studio on the back of those earnings. Again, Ryanair cutting its full-year 2026 traffic target to 206 million on Boeing delays. Seeing pretty strong demand, though, through Easter and into the summer. Neil, thank you for the update. The CFO of Ryanair, of course. Coming up, we're going to discuss the latest market moves following President Trump's threats of tariffs on Colombia, a threat that he has now walked back. Details are next. This is Bloomberg.
First time, or got to many times go visit with Steve Jobs to try to get an Apple box to be our box. And we were trying to merge boxes. And of course, they have Apple TV, and we have our box. Never actually happened. And in one of the meetings, he said, well, you should give up because we're going to win that. But you should put Wi-Fi in all your boxes. And that's how you'll win. And you should be the best pipe. And he said the best dumb pipe. So I went home, went to our chief technology officer and said, what's Wi-Fi? And today we have the nation's biggest Wi-Fi network. And we have more customers. And 90% of your cell phone usage, 90% is Wi-Fi.
Right.
And that's because 70% of all the bits going over the internet right now are streaming. And streaming wasn't here 10 years ago. So I sit here and say the most exciting thing about our company is what's coming in the next 10 years that happens in innovation around the world, hopefully here in America, hopefully Silicon Valley, in LA and everywhere else, Philadelphia, and that we're going to continue to have bits per home go up.
Bloomberg Invest is back. Join me, Shonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
Wednesday, the Fed decides.
The Federal Reserve has gone from projecting 4 cuts in 2025 to just 2.
The road may be bumpier than folks thought.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
How divorced can you say you are from the global market? How much can you talk about American exceptionalism?
This is not a snooze fest. There's a lot going on here.
Could not agree more.
Tune in to Bloomberg Surveillance, The Fed Decides, starting at 1:30 p.m. Eastern.
Welcome back. Happy Monday. The White House says the U.S. will hold off threatened tariffs on Colombia after reaching a deal over returning undocumented migrants. Colombia's foreign minister says it has overcome an impasse with the U.S. after earlier refusing to let 2 planes of migrants land in the country. For more, let's bring in Bloomberg's Bill Ferries. Bill, I'm not sure this was top of mind for investors come Friday, that this would be an issue they'd have to grapple with. Walk us through what we know about the relationship between Colombia and the US and whether or not this resolution is going to hold.
Well, right. Historically, Colombia has been a pretty close ally of the U.S., particularly when it comes to the fight against drug trafficking. In this case, you have a leftist president in Colombia and a more conservative leader there in Washington with Donald Trump. Donald Trump, of course, promised in the campaign that he would start deporting migrants who are in the country without documentation immediately. When the Colombian president learned that there were 2 flights on the way on military planes, he objected to that and said did not basically give them permission to land in his country. And Trump struck back very quickly, saying that he was immediately going to put 25% tariffs on Colombia and that those tariffs would go to 50% within a week if the Colombian government didn't back down. They essentially did back down several hours later. We don't know all the details, but the Colombian president reposted a statement from the White House saying that Colombia had agreed to all of President Trump's terms in this dispute. So perhaps one of the fastest, shortest-lived trade disputes in recent history, but I think it is a shot across the bow against countries who think that they're going to push back strongly on this administration.
Yeah, quite a stark warning shot, as you say, for other countries looking to that trading relationship with the US and the demands coming through from this Trump administration. Talking of demands, or at least suggestions, to the Middle East, and we hear comments from President Trump around Egypt, maybe Jordan, taking more Palestinian refugees, as of course the ceasefire between Israel and Hamas holds, but remains under pressure. What is the latest when it comes to the Middle East and the suggestion from Trump that maybe Jordan and Egypt need to do more to assist Palestinians?
Yeah, President Trump taking a number of steps on the Middle East over the weekend. He said he was going to release a hold on the delivery of 2,000-pound bombs to the Israel Defense Forces. And then he made those comments following calls with King Abdullah of Jordan and with Egyptian President al-Sisi. He said he wants both those countries to take in a lot more Palestinians. He thanked the Jordanian king for having basically taken in Palestinians for decades, but said they need to do more. Said he used a phrase about wanting to clean up Gaza after this conflict. Both those countries rejecting those entreaties and pushing back on the White House. So not really sure where that leaves the U.S. and President Trump's demands, but certainly trying to make an impact very quickly in what is still his first week back in the job.
Yeah, when 1 week feels like 6 months. Bloomberg's Bill Ferris, thank you very much indeed. The updates in terms of the standoff with Colombia that seems to have been resolved, and of course the tensions that continue within the Middle East and Trump's suggestions to Egypt and Jordan. Now, the US dollar strengthened, then paired gains as Donald Trump rescinded those tariff threats on Colombia. The Bloomberg Dollar Index is currently up about 0.3%. For more on the latest market moves, let's bring in Bloomberg's executive editor for Asian markets, Paul Dobson. Paul, just walk us through the market reaction then to this standoff between Colombia and the White House. Again, seems to have been sidelined for now. We're still seeing pricing to the upside when it comes to the greenback.
Yeah, hey, good morning, Tom. So I think as Bill was saying, that mini trade tiff between Colombia and the US may have blown over very quickly, but it's still left an indelible mark on the markets. And I think what we're seeing here is that last week we had gotten so comfortable with the idea that we were having a nicer, kind of softer approach to tariffs from the US president. This week, right at the start of the week, we've got a reminder that yes, those tariffs are definitely a tool that he's willing to deploy pretty much at the drop of a hat, and that people need to be on their toes and watch out for that. So with that sort of Damocles hanging over markets again, you have a higher risk premium coming back into the market, and that's why you're seeing currencies like the Mexican peso, South African rand still lower on the day despite the swift resolution of the Colombia crisis itself.
And we know it's uncertainty around tariffs that is factoring into Fed decision-making as well. We have the Fed decision on Wednesday. What are we expecting? Are we expecting to hear anything from Jay Powell and co. around how they are starting to factor in the threat of tariffs?
It's going to be unavoidable for them to at least take some questions on it. I think that this is going to be really key for the outlook for the Fed and for US markets over the course of the year, right? At the moment, the market is still pricing, and analysts are still expecting the Fed to continue to ease interest rates this year, albeit at a much slower pace than what we've seen at the start of the easing cycle, at the start of the cutting cycle. And yeah, if there's an intimation that the US will be on hold or the Fed will be on hold for longer, as it waits and sees, or if there's any suggestion at all that, if we get these inflationary policies, they may need to consider hiking again, then the market will not like that very much. Given the big run-up in bond yields that we saw in the lead-up to Trump taking over control in the US, that's the sort of risk factor that people will be watching for very carefully during the Fed meeting this week.
OK, Bloomberg's executive editor for Asian markets, Paul Dobson, on what to watch for from the Fed at that decision and that meeting later this week. Wednesday, of course, this week. Paul, thank you. Coming up, we're going to discuss the outlook for the global EV market against the backdrop of President Trump's rolling back of US electric vehicle targets. How is that roiling the sector? We'll get the analysis and the details. It's coming up next. This is Bloomberg.
We see an incredible amount of potential benefit from this technology, right? Something that Dario and I talk about a lot, together with the company, with our co-founders, is just the potential for this technology to transform sectors like, healthcare, right? Or even science. I think some customers that have worked with us, Pfizer, the Dana-Farber Cancer Institute, right? The type of work that they're doing is truly amazing, and we're proud to be able to support businesses like that. I also think we have felt very strongly that there are some lessons to be learned from kind of prior, technological waves or innovation. And this is not that, we're so incredibly prescient. We've just had, several decades now of time to kind of look back on things like social media and say, wow, there was a lot of good that came out of this, but there were also a lot of harms that were kind of caused by this technology. Whether or not you could have anticipated those in advance, hard to say. But I think we are trying to be the most responsible actors that we can be. and think about what are the potential externalities that could be caused kind of accidentally by this tech. And we really try and take a very broad approach to how we think about that. Of course, we don't have all the answers. We try to be humble, but we've tried very, very hard to sort of think about what are the areas where something kind of could go wrong.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
Shorting a stock purely because you think it's expensive is a death wish.
These are companies that are growing their market.
Get the inside track on what's buzzing in markets
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Earnings season is here.
Kicking off earnings season, there's a lot going on.
Bloomberg is first to break the numbers.
Air France KLM.
NatWest well above estimates.
We have further earnings coursing from GSK.
With the smartest insights.
Clearly, the macro and geopolitical front is full of open issues that if they come all together at one stage, they can create dislocation.
Is that why you're cautious about the fourth quarter?
Continuing coverage on Bloomberg. Context changes everything.
Welcome back to Bloomberg Daybreak Europe. Nissan may slow a planned ramp-up of US-made electric vehicles on uncertainty around President Trump's energy and trade policies. The company says production plans in Mississippi will depend on whether the $7,500 tax credit for EVs is actually scrapped, as of course threatened. A Japanese media report at the weekend said Nissan is planning up to 2,000 job cuts in the US this year. And 2025 is looking like another record year for global sales of electric vehicles, despite some of those challenges. The pace of sales will differ around the globe as Europe rolls out new policies and the Trump administration changes, of course, as we were mentioning, US government policy, particularly some of that support for the EV sector. Ryan Fisher from Bloomberg NEF's Clean Transport team is here to explain the year ahead and factor in some of these changes. Ryan, thanks for joining us around the step. Give us an update in terms of some of the main changes happening within the EV markets this year and how much of that is coming from the Trump administration.
Yeah, sure. So we do a 10 things to watch each year, and of course the EV market is a big one within clean transport. We think it's going to keep rising, so about 22 million EV sales. All of the headlines around EV sales going down actually still been growing. We think Europe is a good place to start just because it's growing, then I'll come to the US. So about 33% growth we think this year because the fuel economy standards are getting stricter.
Is that cars and trucks?
So that's just cars. I'm focusing on trucks is also
That's 33% growth this year?
33% growth in EV sales.
Yeah.
That's anything with a plug. And that's because the fuel economy legislations are getting stricter. So these automakers face fines. This can be multi-billions of fines, which means they have to put more EVs on the road. The other thing they can actually look at doing is selling less internal combustion engine vehicles or putting the HEVs out there. So Toyota, very popular with the hybrid vehicles, that lowers the emissions. We've seen people like Polestar come out recently say hundreds of millions they could actually make in revenue from selling the credits because they're largely an EV company. Volkswagen looking like it's got one of the hardest tracks to tread to meet this target. And then you've got the US, so less pressure on the automakers because Trump's saying he wants to repeal some of this fuel economy legislation. So obviously very important for what's going on there.
Do we have clarity in terms of how much of that is going to impact sales and production of EVs in the US? I mean, we're still trying to get to grips with exactly how and to what extent this is going to be implemented.
Yeah, and I think on the intro you gave a great thing there. Nissan saying about jobs, saying about the EV tax credit.
That's not what Trump wants to see.
That's exactly not what he wants to see. So how much of this is just talk and how much is actually going to be put into action? So there's two sides, obviously, to what's coming out. There's the 7,500. Well, even if he does get rid of that, I'd expect to see a bump in sales this year because what often happens is consumers realise the tax credit is going to go and then they start buying these vehicles. Also, what you can see with the manufacturing tax credits is people saying, I'm going to put billions of dollars into manufacturing facilities, largely in Republican states. So how this is going to roll out, I think is going to be an interesting year.
OK, so you may get some Republican lawmakers pushing back on some of that, given that a lot of the spend is in their states, potentially.
Yes, definitely.
Talk to us about the charging infrastructure, where things stand on that front. I mean, China's leading on a number of different fronts when it comes to the EV sector. Where does China stand in terms of charging infrastructure? Where does the rest of the world, how much of a catch-up is there?
Yeah, so China is about 25% of EV sales last year, just to give you a sense of how many of these things are going.
Global sales, 25%.
25% in the market, yeah. So a real big growth still expected. This year they've got a scrappage scheme for the vehicles, and that means you need lots of chargers, and they're really ahead. So even the fast chargers, these are the ones you could, in theory, go in and get a charge 15 to half an hour. They've got 1 million of these. The oil and gas majors are significantly behind, though. So I think what you'll see is them going from sort of 70% of the fuel sales in the market for companies like Sinopec, PetroChina, and they'll this year have to be a bit more aggressive on their charging infrastructure rollout.
Okay.
If you put into perspective China versus the rest of the world, similar trends really, where the oil and gas majors talk a good game, some of the biggest targets on rolling out charging infrastructure. However, actually, they're behind. In rolling this out.
We've run short of time, but smart analysis and very timely. Thank you very much indeed. Ryan Fisher, analyst in Bloomberg NES Clean Transport Team. Lots more coming up, including a focus on DeepSeek. This is Bloomberg.
In case you missed it on Bloomberg Crypto.
Are you concerned that with this new stablecoin, folks will be less interested in XRP?
We see them as really complementary to one another. So dollars can be a very effective means for payments, and we have seen that demand from within our customer base. XRP is really, it's the native asset to the blockchain, so it's used for things like transaction fees on the blockchain, but then also can be a bridge asset to trading different tokens on the XRP ledger. So we really see the two playing complementary roles.
Some of the biggest exchanges out there are missing from this announcement. So what about a huge platform like Coinbase and others, for example? When does that happen?
You can expect to see more availability, more announcements coming soon.
How soon?
Imminently.
Don't miss Bloomberg Crypto live on Tuesdays.
New York, I'm Menace Credit.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. NASDAQ futures tumble on concerns that a cheaper AI model from China's DeepSeek could threaten US big tech. Asian technology stocks rally, though, on the news. Donald Trump holds off slapping tariffs on Colombia after reaching a deal to send back undocumented migrants. The White House says the South American nation agreed to all of the president's terms. Plus, Qatar is reported to confirm a deal to release an Israeli hostage and allow Palestinians to return to northern Gaza. President Trump calls for Egypt and Jordan to take in 1.5 million people displaced from Gaza. Let's check in on the markets then. And the focal point of investor angst is an AI model out of China, DeepSeek, and one of now the best performing apps on the Apple App Store. It's an open source model, and it is causing anxiety for investors now questioning the thesis that the spend, the capex spend, particularly on companies for NVIDIA, their GPUs, is going to hold up as a thesis around the support for this AI revolution that we're seeing. European stocks now taking a hammering in terms of the futures setup, at least, looking to lose around a full percentage point as things stand, pointing to losses of 52 points. FTSE 100 futures here in the UK pointing to losses around 0.5%. S&P futures stateside then looking to lose around 79 points. NASDAQ 100 futures with that tech-heavy focus, of course, currently pointing to losses eye-watering of around 500 points, pointing lower by 2.3% on a big week, of course, for tech earnings as well, with some of the big members of the Mag 7, 5 of the 7 reporting later this week, including Meta, who, of course, caused concerns in the market on Friday, but talking about that CapEx spend themselves. Let's flip the board and have a look cross-asset, focus on dollar strength. You're seeing yields coming down across the Treasury curve, leading up, of course, to the Fed meeting on Wednesday. 4.58 on the benchmark 10-year, yields down a close to 4 basis points. Euro-dollar at 104. The single currency is down 0.3%. Brent's taking a bit of a knock as well. That's linked to the tariff threats, seemingly, against Colombia. Even if a deal has been reached, down 0.8%. And Bitcoin back below 100,000. There you go. Profit taking on the cryptocurrency, down 4.5% in today's session at 99,818. Let's get to the DeepSeek story then, because Chinese AI startup DeepSeek has rocked global technology stocks, as I mentioned, raising questions, of course, over America's tech dominance. Buzz grew over the weekend about the company's latest AI model being cost-effective while running on reduced capability chips, and that's what's essential in this story. Let's get more in terms of the analysis and details with Robert Lee from Bloomberg Intelligence. Rob, you've been doing your research into this company well before all this buzz kicked off. You know this business inside out. Talk to us about who DeepSeek are and how the firm has managed to kind of rock the tech world, at least for the moment.
Okay, well, they're an innovative Chinese startup whose history only goes back 18 months or so. They have, as you mentioned, been on our radar for at least the last 7 months or so. And in fact, I think from an investor perspective in Asia, they are a well-known company. Although, you know, the flurry of news stories we've seen over the last 3-4 days has brought them to more prominence in European and US investors. But the fundamental reason why they're doing relatively well at the moment is the earlier chip exports, because like any barrier or any potential challenge in life, particularly from an engineering perspective, you need to find ways around it, don't you? So that has spurred Chinese companies on to focus more on innovation, and that's exactly what DeepSeek have done. They have really been at the forehead of developing a very novel architecture, something referred to as mixture of experts, which is more computationally efficient and therefore significantly cheaper to both develop and train these models. So I think it's a bit of a wake-up call, particularly to our colleagues in the US, or I should say investors in the US, that really this is a bit of a two-horse race, or increasingly a two-horse race between the US and China, and that actually China has some inherent strengths in software development. As you've heard me say before on previous interviews we've done, the technical barriers to entry in software are significantly lower, compare and contrast with semiconductors. So again, it's not to trivialize the challenge ahead of the Chinese companies, but they have traded on their inherent strengths and are increasingly breathing down the necks of these big US tech titans.
So, Rob, what does it mean? I mean, in terms of that competitive threat then, I mean, does it derail the kind of AI thesis that had held up until this weekend? And where is the pain point? Is it NVIDIA with the GPU chips, given that DeepSeek managed to create this model and build this model with some of the lower end and not the most cutting-edge GPUs? Or is it competitors like OpenAI and their partners at Microsoft? Where is the pain point, and to what extent does the US see its competitive lead be eroded?
Okay, I guess from a market point of view, again, as we've said many times, you know, when stocks are priced to perfection on very punchy multiples, then they're very sensitive to negative headlines like this. So I think that explains the market reaction we've initially seen. Whether that is a more sustained, issue, both in terms of markets or in terms of the real businesses of these US tech platforms, remains to be seen. But, you know, tech never stands still. Companies are always innovating. And the Chinese, I think this, you know, hammers home the point that Chinese companies, particularly in software, are highly innovative and are rapidly narrowing the gap on the software side. So as to whether that leads to a change in strategy from the big tech platforms in the US, we'll have to wait and see. But I think in terms of hardware and semiconductor supply, you know, there's no one else out there to challenge NVIDIA at the moment. So I would imagine the longer term impact on sentiment towards NVIDIA is unlikely to change, because if you don't take supply from NVIDIA, who else are you going to get these chips from? But I think this is a bit of a wake-up call. I think we can say that at least. There's no room for complacency in this market, particularly with the valuations that stocks have been trading on.
Yeah, a wake-up call for these markets. A wake-up call for anyone who's not reading Rob Lee's analysis on Bloomberg Intelligence. He's been writing about this company for 7 months. Rob Lee from Bloomberg Intelligence, thank you for the analysis and context. Let's get you to a setup in terms of the earnings story in Europe then. We've been talking about the Mag 7 stateside, but it's a massive week for the earnings of Europe, of course, in terms of banks, tech, pharma, luxury in focus as well. Just some of the names there on the board. LVMH, ASML and SAP among the companies reporting. Let's bring in Bloomberg's EMEA earnings specialist, Maggie Schilter, for a preview then. Maggie, thanks for joining us bright and early this morning. Let's set things up with the luxury story, which seems to be turning around. Is LVMH going to build out that picture of a slightly more positive backdrop for luxury?
Yeah, it's starting to look that way. So it's definitely going to be in the spotlight this week. It recently regained its crown as Europe's most valuable company again. We've already seen investor sentiment in the sector start to improve off the back of some of those better than expected earnings, notably from Richemont, Burberry, and that's really up the ante for tomorrow's report from LVMH. Now, we're expecting in the fourth quarter its organic revenue decline to start to slow in its key fashion and leather goods segment, with a lot of that demand starting to come through from the US. This year, most of the growth is expected to come from the US, while we're expecting China to remain weak this year, going further into the year. And given that LVMH is one of the most exposed to North America of the whole sector, it's really well positioned to benefit from some of that rebound we see in that region.
OK, so talking of the US bank earnings performed top line very well. How much of there is a mirror effect in terms of European bank earnings? We have the likes of Deutsche Bank reporting this week, Nordea, SEB. Can we expect a positive picture when it comes to European banks?
Exactly. So I think 2025 is gearing up to be quite a pivotal year for European banks. Obviously, we've seen their share rally of over 75% in the past 2.5 years. And so far, that's obviously defied monetary easing. But going forward, we are starting to see a few more estimate cuts to the year ahead, which is threatening to derail a bit of that progress. However, having said that, obviously some top results from US banks so far suggest positive momentum, particularly for Deutsche Bank this week. We've seen both Morgan Stanley and Goldman Sachs see positive gains in their fixed income revenue trading. And in the fourth quarter, we're expecting Deutsche Bank to see a 17% increase, which compared to a lot of its peers is really at the top end of that. Now, when it comes to the Nordic banks this week, the Swedish contingent there is expected to come under the most pressure, obviously, given rate cuts and how those are going to impact net interest income. However, having said that, we saw already results from Swedbank last week, which came in better than expected, which does suggest that the fall there is potentially going to be less than anticipated, and we can expect to see potentially a bit more resilience there than previously thought.
What about chip makers in Europe? ASML, ST Micro?
Yeah, I mean, that's a bit more up in the air. The outlook is looking slightly up in the air. However, numbers-wise, ASML is not looking too bad at the moment. We obviously saw its shares take a bit of a knock last week on reports of potential of more US curbs. Export curbs. There's still a lot of uncertainty over the spending plans of some of its key partners, particularly Intel and Samsung. However, on the plus side, we did see pretty bullish capital expenditure guidance from its main client, TSMC, which in the near term is expected to be a real upside and may actually make up for some of that weakness elsewhere. Numbers-wise, as I mentioned, for the fourth quarter at least, consensus is pointing to a 25% surge in sales, and order bookings as well in the fourth quarter are expected to rise sequentially, which obviously compared to a very weak third quarter it saw is very positive. Now, moving on to ST Micro, which also reports on Thursday, not quite as rosy there. The recovery there, as expected, could be delayed even further, as we're still expecting to see some weakness in the industrial and automotive segments. We've had a bit of an unfavourable outlook from a few of its peers already, Microchip and Texas Instruments, which is making that recovery look a little bit more questionable. OK, it's a bit of a mixed picture when it comes to the chip space. But yeah, the CapEx spend from TSMC could provide that support for ASML then, and its lithography machines and the demand for that kit. Thank you very much indeed, Maggie, for a fantastic setup in terms of the earnings story for Europe that will unfold, of course, through this week. Now, 4 weeks before Germany's snap election, and the political temperature is rising. Tens of thousands of people marched in German cities over the weekend in protest against the far-right AfD party. Meanwhile, Elon Musk, who has been a vocal supporter of the AfD, made a surprise virtual appearance at the party's campaign launch on Saturday. Let's get the details with Bloomberg's Oliver Crook, who is in Berlin for us. Ollie, what did Musk say at the rally? His support has been there for the AfD. Now he appears at a rally virtually. What exactly did he say, and is it moving? Is it changing the momentum for this far-right grouping?
Yeah, listen, Tom, I think it's an interesting question about whether it's changing the sort of momentum. I think it's very interesting that he's wading in at all. I mean, I think this took everybody from surprise from the very beginning in sort of December when he began to wade into German politics. But really, this has now been his sort of consistent rallying cry, really very, very supportive of the AfD. He did that interview with Alice Weidel, and then again, sort of appearing before the crowds. And what's interesting is that when he sort of has these conversations, it begins sort of on a sort of basic sort of economic policy levels. And let's listen to kind of where he sort of began the conversation. Have a listen.
I think you want more self-determination for Germany and for the countries in Europe, and less from Brussels. That's my opinion. I think there's too much bureaucracy from Brussels, too much control from sort of global elite. There should be more determination by individual countries. So I very much hope that the AfD does well, and that Alice Weidel does become chancellor. I think that would be very good for Germany.
And it sort of begins there because, you know, the AfD policy tends to be much more libertarian, much more sort of cutting back regulations, and that is something obviously Elon Musk is very much in favor of. But then the conversation sort of progresses and it becomes clear it's not just that, right? It's against this idea that multiculturalism is diluting societies. I'm saying that basically the AfD is going to sort of turn that back. And again, this is a very, very fraught issue in Germany in particular. This is not the United States. And he went on to say that basically he thinks that there's too much focus on past guilt and that we need to move beyond that children should not be guilty for the sins of their parents, let alone their parents' parents, i.e. their great-grandparents. And that is in the context of course, what we saw in Germany in the Second World War. And when you talk about the AfD, this is a party that has within its ranks people that are designated by the German government as extremists, people who are strongly suspected to have sort of Nazi sympathies. So when you have somebody coming out, and you had that weird digression in the conversation with Alice Weidel and Elon Musk, when they were talking about how Hitler was actually from the far left and not a far right, all of these sorts of things come in the sum as to really shock the German establishment. And again, just behind me in front of the Brandenburg Gate, you saw it sort of in full prominence this weekend, tens of thousands of people protesting. And today, Olaf Scholz in Poland with Donald Tusk to sort of to note the sort of liberation of Auschwitz. And again, these leaders coming out and talking about how concerning this is. As far as how much this is moving the dial, the polls are really more or less unchanged. The CDU is still leading with about 30%, but it's certainly an interesting development for the German political establishment, and one that, frankly, the German political establishment does not really know what to do with.
Yeah, and his comments about too much control from the global elite, coming from Elon Musk, too much control from the global elite. Talk to us all about the there's a political firewall traditionally, of course, blocking the AfD, even if they're polling around 20%, from actually gaining real power, significant power. Is that firewall holding up?
So listen, I think so far it's holding up. What has been interesting is that even in the lead up to this election, there were sort of moments where Merz, you know, not even just sort of in the last few months, but over the last couple of years, sort of seeming to sort of test the waters and saying, oh, maybe the CDU could team up with the AfD on some local policy issues. And again, he got a huge backlash from the political establishment in Germany. And there seemed to have been a little bit of a door opening for that on this issue of immigration and some legislation that the CDU wants to put forward that would basically sort of impose border controls more permanently in Germany, that would expedite sort of deportations. And he was saying basically we're agnostic as to who is going to vote with us. We just want to get this sort of done. Again, massive backlash there. He's now changed the legislation in order to put sort of language in there that would make it very hard for the AfD to support. But again, Tom, this doesn't resolve the issue. And this is something that you're starting to see everywhere in Germany, whether it's in Europe, whether it's in France, whether it's in the United Kingdom. Basically, the political establishment not realizing, not understanding how to deal with this approach. And this is something that Alice Weidel said to me a couple of weeks ago when I spoke to her, basically that the Germans feel that they don't have a choice on the sort of conservative right, because in any sort of government there's going to be a coalition between the right and the left.
Okay. Ollie, thank you very much indeed. Oliver Crook on the ground for us in Berlin with the latest in terms, of course, of Musk's support for the AfD and the SPD Chancellor Olaf Scholz concerns being voiced there around the CDU and how it's thinking about potentially on some issues working with the AfD. That remains, of course, to be questioned. Coming up, we are joined by the CEO of global carbon ratings agency B0 Carbon as it seeks to expand its coverage after a big successful funding round. That's coming up next. This is Bloomberg.
For the fourth consecutive year, Interactive Brokers is one of the fastest growing prime brokers and is now number 5 in Preqin's ranking of top prime brokers. Interactive Brokers serves both organizations and individual investors. To get better results, get a better platform. The best informed investors choose Interactive Brokers.
After each day, do you look at how they're doing each day, or do you look at them each week, and how much time do you give them before you say, you know, you're not doing so well?
I mean, we look all the time. So, you know, I have screens on my desk that, you know, I'm staring at all day long. But it's not exactly like that. I think one of the things people don't fully appreciate in this model is you're really building businesses. So we look at every strategy as a business. So you have the long-short equity business, or macro business, commodities business, quantitative business. And you have business plans for that strategy. How do you become world-class in that strategy, which is, you know, multi-year, multi-decade, you know, undertaking. And you want to get better and better every year. And so then you go down to the team level. What team do you need to have this particular exposure? What is their edge? How are they going to get better year to year, month to month, right? And so then you go to the hiring of the team, the analysts, the infrastructure, the risk management, and you're constantly trying to improve the process and the people in each of those facets all the time. And so you're always looking at them on an absolute basis, how are they doing, and on a relative basis to other people in that strategy. And you're evaluating it, you know, every quarter, every year. But to answer your question, we usually look for a couple years of performance to make people decisions, unless something is really off.
Welcome back. Global carbon ratings agency B0 Carbon has raised $32 million. $32 million in a Series C funding round. The London-based company will use the new funds to expand its ratings coverage and boost its international presence. With me now, very pleased to say, is B0's CEO and co-founder, Tommy Ricketts. So, Tommy, we touched there on the raise and how you're going to deploy that capital. I just wonder what it signals. So $32 million, maybe I'll get a question to you on valuation later, but what does that, it's not insignificant, it's a decent size amount of money, $32 million US dollars. What does it signal, do you think, at a time when we're seeing a Trump administration and some others kind of walking back on attempts to get to net zero?
Yeah, I think to put into context, it was been obviously a difficult funding environment for the climate movement.
Yeah.
Obviously, rates going up and the climate incentives going down has made it harder. So I think the quantum might not be huge, and certainly in software, it's smaller than hardware. But it's a very good incentive that people are saying, look, we care about the carbon market, we care about climate change. And from Singapore particularly, they're saying that's a really national objective for them, to make Singapore the home of carbon markets in Asia.
And they're one of your key investors, is a venture fund backed by Temasek, the sovereign wealth fund of Singapore. Is Singapore an outlier, though? I mean, do you worry about the kind of cold chill, the cold winds that are coming through as governments, not just in the US, kind of reassess the commitment around ESG, the commitment around the transition, the commitment around net zero? How much of a headwind could that be for your business?
I actually think maybe the other way around. We're actually seeing a lot of governments taking carbon markets much more seriously, looking at market-based solutions for how to pay for their climate transitions. And so if you remove the US potentially from the equation, although corporate America is active, you're looking at a number of different countries looking to use Article 6 markets, which is the UN mechanism, to actually kind of embrace this trend.
How are you putting the funding to play?
So you mentioned it, looking to expand globally. We already have an office in Singapore and in the US, but I think we're looking to be more active in Asia particularly. And then another one, as would be common, is to embrace AI and see how it can change our business.
And your presence in the US, does it change at all? Is that still an important market for you?
Yeah, about 40% of our revenues in the US.
Yeah.
I think the key thing there is corporates. Large corporates are buying, and they're buying for the long term, and so they're looking through any sort of short-term politics.
What is revenue growth looking like for the business right now? And what is a kind of evaluation that you might be looking at?
Revenue growth, we're trying to double. You know, early stage company.
Double from last year?
Yeah, trying to, you double. That's the stage for the first few years. And then valuation, I mean, obviously, it depends on what the buyer's willing to hold, but ultimately we've got an up round, which I think is also very good for a Series C at this stage.
Yeah, an up round at a time when plenty out there are doing down rounds, being forced to do down rounds. Not the case for you guys. Is the UK government doing enough? I mean, you're in the business of giving ratings. How would you rate this UK government in terms of its support for the tech sector and the kind of work that you guys are doing?
So I think in the narrow definition, what we want from the UK government is to be very active on defining the use of carbon credits in net zero strategies. So saying to corporates, saying to the economy, you should be buying them. You can buy high quality ones, and that would be a huge demand signal to still a major polluter, 1% of global emissions. On the broader scale, look, what do you want from a tech founder? You want good tax regime, you want good employment and rights, you want good immigration rules.
Are you getting that?
And you want good skilled labour. I mean, we're definitely getting very good skilled labour. The UK is a home to science and finance hubs. I think the rest of it, we'd like to see more progress.
And you want to see regulation as well?
Yeah, we want to see regulation. Regulation is very important for us because we're kind of like a financial service, but that's unregulated. So a lot of our customers are banks, they're financial services, they're big commodity players. They want to use ratings as a risk instrument. And if we're unregulated, it's difficult to take it to an investment committee and say, oh, I trust the opinion of this third party. They say, are they regulated? They say, no, well, I can't trust them then. So that's very important for us in terms of the credibility.
Are the Treasury I want to fold two questions into one because we're running out of time. Are the Treasury listening to that? And what is the potential market value of this sector?
The Treasury are listening to it. I think our call there would be there's something called the ESG regulations. And I think our call would be carbon and ESG are cousins. They're not necessarily the same thing. But hopefully they're listening. It's just about, grasping the nettle on the broad impact. So we did an analysis which said science-based target aligned companies, Scope 3 emissions, that's the ones that they don't create, about 6 billion tonnes, 15% of global emissions. If everyone paid around $15, $16, $100 billion market overnight, employing about 1.5 times the size of the oil and gas industry. So potentially, with the UK as a hub for that, you can have a huge impact on jobs and growth.
OK, the potential's there. The UK has to get it right, and you're playing your part. Tommy, thank you very much indeed for coming in. Tommy Ricketts, the CEO and co-founder of B0 on the back of that $32 million raise for that London-based global business. There's lots more coming up. Stay with us. This is Bloomberg.
In case you missed it, from Bloomberg's coverage at Davos.
Do you think there's one particular thing that you'd like Trump to change in terms of what some people see as the over-regulation of banking in America?
I don't believe, honestly, that we should have a huge amount of deregulation for larger banks. I think that's, you look back at COVID and any crisis, big banks now are strong, are able to step in and being part of resolving issues rather than being the one that creates issues. So I wouldn't really welcome a huge wave of deregulations. What I can see is that, of course, what happened in the US doesn't mean automatically that you will see in Europe or in Switzerland or in Asia deregulation. So the fact is that US banks may become even more competitive internationally through a more benign environment.
Nobody covers Davos like Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays only on Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern, only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Romaine Bostick in Detroit, and this is Bloomberg.
Welcome back. Happy Monday. Big week, of course, in terms of the earnings. We have some big earnings coming through from Europe. We had Ryanair earlier today, and then, of course, you have the banks and the luxury space in Europe. But the focus as well, stateside, will be on the 4 out of 7 Mag 7 companies reporting, including Apple, Meta, and Microsoft. And the question, of course, continuing around the valuations of whether earnings and the data that comes through from these companies can really justify the stretched valuations, particularly at a time, of course, when you have that competitive threat now coming out of China with DeepSeek. So this is the view, forward 12-month forward profit margin estimates for the Mag 7 companies. And you can see that gap, the kind of crocodile mouth shape versus the equal weighted forward 12-month margin estimates coming through from the S&P 500. So that gap is there, and that leads to question marks, at least for some. Let's flip the board and have a look at the DeepSeek story then. This is founded by a hedge fund guy, an owner in China. It's a kind of scrappy startup, but what they've managed to do is create a model, open source, interestingly, that is creating the efficiencies with older, more legacy GPUs. And that is raising, of course, question marks as to whether or not that competitive challenge is going to be facing the US companies and whether or not, in fact, that thesis is going to hold up. Here's how people have been looking into this company. The searches have just been shooting up. Volatility is easing across the bond space and the equity space, but for how long? The Fed, of course, that decision coming on Wednesday. Does Jay Powell keep in play 43 basis points that traders are expecting in terms of rate cuts for this year? There's plenty more coming up. Stay with us. The opening trade is next. This is Bloomberg.
If you look at private equity just as one piece of the institutional equity market, there are 3 times as many dollars invested than uninvested, right? So you have about $3.5 trillion in the ground that needs to get resolved versus about $1.5 trillion that's wanting to be invested. So if you're a private equity manager, you're trying to decide, do I take my capital and put it into my existing portfolio to either defend what I own or to try to grow it and create more value? Or do I use some, to your point, some creative financing to extend the duration or the runway of what I own and then try to put the capital into the new market environment? And everyone's taking a different approach. It's a function of where you are in your life cycle. Everyone is dealing with that. Even the highest performing PE firms, you're seeing slower fundraising. And in this deal environment, you have to start thinking creatively about how to get liquidity back to your investors.
To build the electric vehicle of the future, you need partners, mining partners, technology partners, education, supply chain, energy. What if one partner could do it all? That partner is Ontario, Canada. With all the critical minerals to make electric vehicle batteries, 65,000 STEM graduates per year, industry-leading IT clusters, a fully integrated supply chain powered mostly by cutting-edge low-carbon energy sources. Ontario, your innovation partner.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
One of the very critical things is that a lot of young entrepreneurs don't realize is that when you start as an entrepreneur, you're not just building your business, which of course you are, but you're also building your organization. And most people don't realize that. And building an organization is not just about hiring people. It's about the culture, it's about the systems, the values, the mission. You know, it's about how you operate, how you do things, how you retain people, how you keep them motivated. So it's all of those things put together. And over time, you realize that, you know, a lot of effort has to go into it. And then eventually you have an organization that has a life of its own. It's, you know, and it's sometimes you look at it and you marvel and you think about, you know, how was this created? And was I the person that was behind getting this thing done?
Good morning from London. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. We're an hour away from the opening trade. Here's what you need to know. Nasdaq futures tumble on concerns that a cheaper AI model from Chinese startup DeepSeek could threaten US big tech. President Trump holds off hitting Colombia with sweeping tariffs after reaching a deal on the return of deported migrants. Plus, markets brace for a big week from central banks, with the Fed and ECB both set to deliver rate decisions.
In the meantime, a quick check on these markets. We are kicking off this week and this Monday with a very gloomy mood. Eurostoxx 50 futures down over 1%. The FTSE 100 right on its heels, down about 0.7%. But the real pain is concentrated over in the U.S., specifically in those Nasdaq 100 futures, down about 2.4%. We're going to dive into those details. At the same time, we have one eye on Russian sanctions, another eye on tariffs coming out of the States, and of course the volatility around the commodity space. We're going to break that down as well. Brent crude at a 77 handle, down 0.7%. The countdown to the opening trade starts right now.
Monday morning, good morning, or is it? It feels like we are firmly risk off right now. The reason for that, tech's going to be a big theme this week. We've just been talking about what's happening with DeepSeek, but also the tariff agenda absolutely front and centre. What is that going to mean for markets? Also fold in the immigration angle, and it all gets pretty interesting when it comes to risk assets, particularly over in the United States. So that's kind of the setup this morning. DeepSeek. Where did this one come from? It's been around for a while, but nobody saw it coming.
Yeah, absolutely. And Tom was just showing a chart at the end of the last hour of the new searches for DeepSeek have really taken off in the last month or so. Even though the team at Bloomberg Intelligence, have been writing about this for up to a year. So this is not a secret, this business. But the fact that it's performing so well on the Apple App Store does seem to be something that's really interested a lot of people. This, of course, a large language model could rival what we've seen from OpenAI and Meta. And so the logic goes, if they can do it really cheaply, if they can do it with chips that aren't so advanced, and if they can do it in a specific way that means that the training and the inference is done a lot more cheaply, then why do you need to spend so much money on all of the NVIDIA chips and all of that supply chain around this hyperscalers? Does that come into question? And so US futures trade down. The trouble is we don't really know a lot about DeepSeek. There are a lot of questions still out there.
Well, the barriers of entry have just collapsed, basically, haven't they? Wasn't the big point of why Apple, Microsoft, Amazon, etc., were able to have such an edge in this is because they're sitting on trillions of cash that they can then deploy into this. If you don't need those trillions of cash anymore, can anyone do this?
It does. That movie is the takeaway. So Richard Windsor, who's going to join us a little bit later on in the day, in the morning, has got some really interesting takes on this. A, why now? Why are the Chinese announcing this now? This is interesting in as much as we're in the first week of the Trump presidency. And are they really doing this with kind of really basic chips, or have they got their hands on some hoppers and actually that's the reality of the situation?
And is it really as cheap as it would present? And we've had our own team at Bloomberg Intelligence saying, look, we have to treat these numbers, the reports of how cheap it is, with a great deal of caution. And Richard Windsor echoing that, saying, actually, what is exactly the role of the Chinese state in this, for example? Just one of the questions he raises.
Yeah, and we should mention that in the last, I think, couple of weeks as well, the PBOC has also come out and said maybe we need to start budgeting for how we invest in AI, which is something maybe sounds very eerily similar to what you're hearing out of the U.S. government as well, which takes us perfectly to the drama of the last 48 hours when it comes to the U.S. government. Tariffs on Colombia tied to the immigration policy, having a ripple effect in things like oil, coffee, cut flowers, in case you were worried about what Valentine's Day coming up. Exactly. All that getting kind of expensive. It looks like the deal has come through. We still don't know the specifics of the deal negotiated between Colombia and the United States, but it comes back to this idea that this tariff saber rattling has already started, and the Achilles heel of this strategy is the effect on inflation for everyday customers.
Yes, exactly. And this is with quite low risk for the US when it comes to Colombia, because they don't import very much from Colombia. Colombia, as you say, much more reliant on exporting things to the US in terms of the scale of its economy. But this does tell us, away from the specifics of Colombia, it tells us quite a bit about the way that Trump is prepared to use these tariffs to get what he wants. And it tells us, as you say, Chrissy, about how we're going to see this reflected in markets, FX reacting, for example, and the way that he'll just announce things on social media seemingly out of nowhere. And that's just the volatility we get used to.
So two takeaways from this from my point of view. One of which is, to your point, that Trump is prepared to use tariffs. The market has come to the end of the first week assuming that he actually, his bark is worse than his bite. That's interesting. Also, that immigration is important. And we haven't talked a lot about immigration over the last few days, but actually, if you think about it, with the Fed coming, that labour market story is going to be really important. And if the labour market tightens, that's going to ripple through the service sector into other areas of the economy. That's going to be inflationary. That is something that the Fed is going to have to pay attention to. Torsten Slocks just posted a note from Apollo saying the Bank of Canada's run simulations, and if the 25% tariffs are imposed, that's a 6% decline in Canadian GDP, which is enormous. And the impact of that will be rippled around the world as well.
And we're going into Fed week, ECB week, and all of these central bankers are going to be under pressure to comment or not comment. But that's interesting on immigration. Do we have enough information that now the Fed has to start factoring all of this into its analysis? Or does Jerome Powell still get to sort of rest behind that barrier and say, no, well, we haven't seen the policy yet, so therefore I can't factor it in?
In some ways, this week should be a non-event. We don't know enough to be able to talk at this point kind of properly about what impact this is all going to have. Clearly, Powell's going to face questions about whether or not the White House knows more about monetary policy than he does. Because that's what Trump has implied this week. But I think the ECB is going to be interesting as well. And I think that'll be fascinating because that's going to be more about the macroeconomics than maybe the politics.
Let me argue the opposite here, which is that maybe this is actually a big deal this week, and that even though maybe we don't know the ins and outs of the tariff policy, but maybe that's why you take a dovish stance. If we're looking at the kind of roadmap here from March of 2019, when the first era of these kind of Trump tariffs came in the first administration, Jay Powell was quite quick to say we need an insurance rate cut because we don't know what the ripple effect is.
We didn't have the inflation risk then. That was a completely different ball game. We were in a very low inflationary environment.
Yeah.
And as a result of it, he could play that card because he didn't have that risk of inflation sitting here.
But how much policy do you need to see to give you that inflation risk? Is it enough to have the executive orders and the planes flying around and the headlines across news networks talking about immigrants being returned? Is that enough? Or do they need to see other, retrospective data around the number of people who have left the country and what that does to migration?
But how much of the inflationary effect is actually extra people coming into the country? Hasn't that been kind of a tailwind for the growth in the States, in Spain, in Canada, et cetera?
That's been a huge driver, you could argue, of US outperformance economically, has simply just been a demographics factor that is hard to quantify and difficult to kind of determine once you plug it into the models, kind of what exactly you are seeing. We're going to discuss all of this. There's so much to discuss this Monday morning. It is definitely risk off. How is that going to ripple through various asset classes? We are going to find out over the next couple of hours. Klaus Hesberger is going to be joining us from JP Morgan, Vice Chair of Global Strategic Investors and Financial Sponsors Coverage. We'll reduce that title a little bit when we get to it and figure out exactly what's going on there. Beata Manthi, Citi's Head of European Equity Strategy, is going to be joining us. Richard Windsor, longtime tech watcher, a little bit cynical this morning, judging by the notes I've read on what is happening with this DeepSeek model. And Kevin Daly, Goldman Sachs, co-head of CEEMEE. Economics. We got the titles going today. There's certainly in title inflation, maybe in the reads that I've just read.
That must be a fun business card to hand out. Speaking of, we also have plenty of things going on this week. We talked a little bit about central banking palooza. We've got the Fed, we've got the ECB, we've got plenty of emerging market kind of central banks as well. Brazil, for example, is reporting this week among a slew of others, alongside tech earnings as well. So you have ASML, you have Meta, you have Microsoft, you have Apple. That'll all come up. And then in case your plate wasn't full, plenty of economic data sprinkled throughout the week. We have the German IFO business climate data coming out today. And then we end the week with some PCE data over in the States and CPI numbers coming out in Europe.
Those tech earnings will be really interesting. What can ASML add to our understanding about the types of chips that DeepSeek has access to and has been using, the effectiveness of those US blocks, supposedly, on sending that kind of technology over to China? And then in terms of the hyperscalers, we'll get Microsoft, we'll hear from Meta. How worried are they about DeepSeek? Does this question that huge investment that we've seen from those hyperscalers or not?
Meta's was out last week talking about the kind of, these are eye-watering numbers that these companies have been talking about spending. Do they need to do that? And even if DeepSeek's doing this with Hopper, do you need to spend this much money on Blackwell? Does it just slightly... Where does the pain get felt? Is it in NVIDIA or is it in the hyperscalers?
You're going to get plenty of other kind of pieces of earnings as well. We've got the oil earnings coming out this week. You've got Deutsche Bank earnings coming out this week as well. In addition to, of course, tech and central banks. Perhaps those some sectors and clues on the broader economy as well.
It's quite the week we've got coming up. Let's set you up with some other news that you need to know as well this Monday morning. Talking of China, factory activity there has unexpectedly slowed. This ahead, of course, of the Lunar New Year holiday. Today's official manufacturing PMI falling to the lowest level since August. The service sector has also weakened, with the non-manufacturing gauge effectively flatlining at 50.2. Now, while factory activity does typically fall in this holiday period, economists are warning that this slowdown this month a little bit more severe than usual. Over in the Middle East, Israel and Lebanon have agreed to extend their ceasefire until February the 18th to allow Israeli troops more time to withdraw. Meanwhile, in Gaza, Israel says a dispute over civilian hostages has now been resolved with a deal to release another round of hostages Thursday. The developments have come against this backdrop, with President Trump controversially calling over the weekend on Egypt and Jordan to accept more Palestinian refugees in what could be a significant shift in US policy. The president said Saturday that this resettlement could either be temporary or longer term. Let's turn our attention to what's happening in Germany. There The snap election just 4 weeks away, and the political temperature is certainly rising. Tens of thousands of people marching in German cities over the weekend. You can see the pictures in protests over the far-right AfD party. Meanwhile, Elon Musk, who has been a vocal supporter of the AfD, made a surprise virtual appearance at the party's campaign launch on Saturday.
I think you want more self-determination for Germany and for the countries in Europe, and less from Brussels. That's my opinion. I think there's too much bureaucracy from Brussels, too much control from sort of global elite. There should be more determination by individual countries. So I very much hope that the AfD does well, and that Alice Weidel does become chancellor. I think that would be very good for Germany.
The polls don't point in that direction. What is he having a positive effect or a negative effect on the AfD? Significant protests over the weekend against the AfD. Does he change the equation? Does he change the numbers?
Go ahead.
No, I was going to come at it from a slightly different angle. Yeah. Yes, we've seen a lot of support on the ground for the AfD, but within the politics of Germany right now, there do seem to be lots of people raising questions about whether the firewall that keeps the AfD out of mainstream politics will sustain. We've asked the same in France about that cordon sanitaire that keeps the National Rally out of mainstream politics. And certainly Olaf Scholz raising an eyebrow at what the CDU under Friedrich Merz are doing right now, proposing some immigration legislation that looks as if it tax into AfD territory and saying you're going to be relying on AfD votes here. Is this the end of the firewall? So asking some really big questions.
So tacitly, the idea is there that by changing the policy mix, rather than dealing direct, you could rely on the AfD.
And we've kind of seen that in other geographies, haven't we? We've seen certainly centre-right politics tacking right to try and capture some of the electoral support for the right.
It just feels like a surprising policy move. And although where maybe you have a little bit more cushion on the immigration front and the kind of effect on an economic front, say, in the States and Canada, et cetera, I don't think Germany has that same cushion that the U.S. and Canada does when it comes to immigration, and maybe does need to kind of pinch a few pennies here when it comes to the cost that it may take with some of these deportation measures.
We will certainly keep an eye on this. We'll get Oliver Crook up on the programme a little bit later on to explain some of the nuance behind this German story for us. 7:13 here in London. We'll get back to some of the corporate earnings stories this morning as well. Coming up, Ryanair cuts its passenger growth target for a second time in 3 months as Boeing struggles to deliver aircraft. We will bring you some of our interview with the CFO, Neil Sorahan. Plus, we'll take a closer look at the role Elon Musk is playing ahead of Germany's federal election next month. Up next, we will be talking about fixed income. Lauren Van Biljon joins us, fixed income portfolio manager at Allspring Global Investments. What does Trump week 1 term 2 meant for global bond markets? What have we learned? If you have any questions, if you want to get involved in any of these guest conversations, IB plus BBTV Go is the function to use this Monday morning and every morning here on Bloomberg. This is Bloomberg.
This market update is brought to you by Crypto.com. This market update is brought to you by Crypto.com.
Slide your minutes, slide better. You want to talk business? Meet me in the On-Board Lounge.
It's time to get active. To enhance the core of your portfolio, join the active ETF revolution and boost your global equity allocation with our research-enhanced approach. Search JREG ETF.
Markets never sleep, and neither does Interactive Brokers. Discover more opportunities with CME futures across equity indices, interest rates, FX, energy, agriculture, and metals. CME futures offer around-the-clock access, deep liquidity, and capital-efficient margins, helping you seize opportunities whenever they happen. The best-informed investors choose Interactive Brokers.
There is no going backwards in recycling. There is no going backwards in treating pollutants in your water. The trends at times of what you talk in the press may be different from one crisis to the next. My job is to go beyond crisis, to anticipate. That's why innovation. We knew we could do recycling of plastics. For years, nobody was really interested in that. And suddenly, it takes off. But we found a solution in the meantime. So in a way, my job as a chief exec is to deal with the short term and to be able to deliver essential services even in time of crisis, as well as to see the long term and deliver good result, of course, for my shareholders. Because in a way, delivering good results now is a way to afford the future and to afford to innovate and to see the long term as well.
Wednesday, the Fed decides.
The Federal Reserve has gone from projecting 4 cuts in 2025 to just 2.
The road may be bumpier than folks thought.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
How divorced can you say you are from the global market? How much can you talk about American exceptionalism?
This is not a snooze fest. There's a lot going on here.
Could not agree more.
Tune in to Bloomberg Surveillance, The Fed Decides, starting at 1:30 p.m. Eastern.
Monday morning, good morning. 42 minutes to the equity market open here in Europe. We are firmly risk off. The tech trade is being represented quite strongly, more so in the States than here in Europe, but nevertheless we are lower, plus also the tariff narrative. Other assets, let's find out what's going on there. What's caught Critty's eye this morning?
Well, Guy, you talked about the tariff story, and it automatically usually translates to dollar strength. That's exactly what you're seeing this morning, not even just against Colombia, for example, or Colombian assets, but all EM currency, specifically over in China. Remember, China's been trying to get a little bit more of that trade volume with Colombia, and still you are seeing weakness in the Chinese yuan this morning. You are seeing weakness in the Mexican peso, the most liquid EM currency that we have our eye on as well, but strength perhaps in the Japanese yen. That's where that risk-off mood really shows up this morning. 155.82 on dollar yen this morning, and even a slight bid earlier in the session into the Swiss franc as well. But where you're not perhaps seeing that kind of volatility is in the bond market. I think that's really important because if you look at a roadmap from Donald Trump's first administration, you did see that show up in the bond volatility. I'm going to take you back in time, back to 2019, that first year where we had those tariff spikes. You can see how the volatility really increased and then decreased as you got trade deals with China. This is really the COVID pandemic. We're going to fast forward here to the banking crisis with Silicon Valley Bank, and then now fast forwarding here to Donald Trump's election. Note that volatility is actually coming down in the bond market, not necessarily going up. Is that a dislocation that we're going to see? Or maybe we're waiting to hear from some of the central banks around the world. We're going to get plenty of that, of course, this week as well, not just from the Federal Reserve this week, but plenty of EM banks as well. Brazil, Chile, then you have Canada, Sweden, and of course the ECB. I'm sure tariffs will be on their mind across the board, Guy.
Absolutely, but do they have enough information to be able to act at this point in a clear-sighted way? Let's try and find out what the answer to that question is. Lauren Van Bion, fixed income portfolio manager at Allspring Global Investments, sitting next to us around the table this morning. Good morning, Lauren.
Good morning.
Does the Fed have enough information to give us a directional trade this week?
I don't think it does, no. I think we saw that in the December meeting. We've seen that in statements since. But all central banks can really do right now is flag potential risks compared to current data, and really it leaves them pretty much on hold.
So we have to wait for Donald Trump and whether or not he's serious about tariffs. Is that the story?
I believe so, yes. In fact, we might not see any clarity there until really the second quarter, because we know that's when Trump's trade policy report is due from the deputies in Congress.
Yeah, the difficulty with that, though, Lauren, it seems, good morning, is that we will never know the full story on tariffs. The whole time that Trump is in the White House, he will have the power to impose a tariff wherever and whenever he wants to. So if the Fed is waiting for clarity on the extent of tariffs, that might never come. So, but then we do have some clarity gradually coming through on other things, executive orders around immigration, for example, which could also be inflationary. I mean, what is the process for the Fed actually dealing with some of this? Because it can't just ignore it for 4 or 5 years.
No, they can't ignore it, but they also can't preempt it, right? If it's not showing up in the current data, which we're not seeing.
So they're just destined to be behind the curve because they're going to have to wait for the data, backward-looking data, to show them what people expect will come.
And I think you're seeing this across the whole wide market, right? We all know that there's so much policy uncertainty into this year, into next year, into the year after, and it's going to be a huge driver of not just US growth, but global growth and inflation. But markets can't react to it yet, or don't know quite how to price it yet. I think it's why we're seeing this sort of really myopic, hyper-short-termism of markets currently.
Yeah, is that how would you characterise what we've seen in January? Because all the way through the early part of January, we saw, yields on the rise and people playing steepeners because they were worried about what Trump would mean for inflation.
Yeah.
And then we get to week one of his presidency, second time around, and actually things calmed down a little bit, didn't they? I mean, how long do we remain in that calm place?
I mean, if we think back to where we were a year ago and think about how much was being priced into interest rates, right, it was a huge dislocation compared to the actual realities. Currently, I mean, current pricing, and not just on the Fed, but out of the ECB, on the Bank of Japan, it looks about right given current information. So I think there's a lot less panic there that the market has to adjust on interest rate expectations. So that's let the market sort of, again, find some sort of equilibrium, at least for yields.
Well, the consensus going into the U.S. election was that, as Anna pointed out, that Donald Trump equals inflation. Is the fear of inflation making the bond markets complacent?
Well, that's an interesting question, because usually we'd think about bond markets being the watchdogs on inflation. We've got a 10-year at over 4.5%. Which is not outrageous, given where, say, a five-year forward on inflation expectations might be. But I think the market is really struggling to price the go-forward future into next year, into the end of this year. So I think it's trading, right now, far more on the short-term releases, right, and their inflation has been okay.
What is driving, then, the 10-year? I mean, I think it's so much of it is tied to, of course, the Fed policy, maybe as a response to the fiscal policy. But is there an argument to be made that perhaps break-evens or inflation expectations from consumers, even the amount of funds in the market, in the front, kind of money market funds, for example, the front end of the curve, is maybe driving the belly and the long end? Is that plausible?
I mean, certainly. I mean, it's been really difficult to get money market or short-term money to move further out the curve. I think that the idea that duration is at least a kind of even risk reward has been out there for a while. We haven't actually seen the flows. So I think that Betty longer, steepening still seems like the easiest trade from where we are right now. But the 10-year at 4.5, it's not super cheap. I don't think it's super expensive. It's really right in the middle of that range.
There's a rumor that there's an ECB meeting as well this week. I know the Fed's probably going to be more important.
Does it matter?
Does Europe need cheaper money right now? Is that something that Europe actually needs, or does it need stability in things like its relationship with Trump, the United States? Is there an argument that says, actually, it would be better to have a stronger currency than a weaker currency, particularly if you want to buy stuff from America? Is there a danger that the ECB cuts too hard, drives the euro lower, interest rate differentials, and actually that turns out to be something that isn't necessarily a good thing for our economic trajectory over here?
I think if you offered Europe a chance between geopolitical stability and easier money, they'd take the former. But that's not in their power to have, right? All they can control is the latter. So here come rates lower in Europe.
But you could make the argument that you could say, actually, we'll keep the currency relatively strong, then we can buy cheaper. We can buy more gas from America. We can buy more stuff from America, and it's going to cost us less, and that will solve part of our problem.
I mean, the one thing I do wonder on the euro is maybe we've already seen the worst, right? We got down to pretty much parity on the dollar.
102.
There's absolute disaster priced into the euro, and there has been for a significant period of time. There's a huge underweight the market has built up. There's a hugely consensus position coming into this year. I mean, at Allspring, we had it on, right? Short euro. It worked beautifully in Q4. But if you see even just people stopping to sell the euro, even just taking a pause, that could rebound.
Is that the message that we got from all those PMI readings at the end of the week, which did seem to reprice expectations just a little bit for how much cutting we were going to get from the ECB? You know, maybe we won't get quite so much because there's a little bit of stability, dare we say it, creeping into the German data, for example.
That might be all the euro needs. I mean, maybe that's the big trade for this year. It's not so much about these sort of big directionalities, but it's finding positions that are very consensus and where that risk-reward or that asymmetry is creeping in.
All right. Lauren Van Beon, you've given us a lot to think about on Central Bank Palooza Week. We thank you so much. Fixed income portfolio manager over at Allspring Global Investments joining us on this Monday morning. Coming up, we're going to talk about how that rate pricing basically affects the world of private equity and the deal-making story as you start to see some of that deal glut loosen. The IPO market picking up on both sides of the Atlantic. We're going to be discussing the outlook for that alternative asset class with JP Morgan's Klaus Hesberger and really talking a little bit about the regulation story as well. Stick with us for that conversation. In the meantime, risk sentiment continuing to worsen. You are seeing Euro Stoxx 50 futures down about 1.2%. The FTSE 100 down 0.6%. Some of the pain isolated, maybe concentrated is a better word, into the German index. DAX futures down 0.9%. Stick with us. This is Bloomberg.
There had been offers before to take over Greyhound, but then in the midst of the pandemic 2.5 years ago, we had this fantastic opportunity to buy the brand and the network. When we took on Greyhound onto the Flix tech platform for network management, revenue management, we saw the highest unit economics in more than 100 years of Greyhound history.
My vision is to transform long-distance bus travel in the United States and make it one of the top considerations for anyone planning a long-haul journey.
CEO Kai Boyson imagines even more potential if state and local governments recognise the need to support long-distance bus travel with integrated infrastructure.
We need to think about the infrastructure in the United States holistically and think about the transportation system as one integrated system. And intercity bus needs to be an integral part of that system. One should be able to connect from one mode of transport to another seamlessly, easily. We have great success models in the United States. For example, Los Angeles Union Station, Boston South Station, or New York Port Authority Bus Terminal, or Washington, D.C. Union Stations.
Kai and the team, they are doing a fantastic job. They have really improved the product, they have improved technology, they have really made the production more efficient, that at the moment it's also a profitably growing business.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Why should I want to invest in the pharmaceutical industry? Is it going to continue to grow as it did last year? And what about your own company? Do you think it's going to have good growth prospects over the next couple of years?
I think the reason to invest in the sector is the science. I mean, when you look again, if I go back into the history, for most of the last century, we were only giving people pills and small molecule drugs. Then we discovered that we had this whole world of biologics and we could treat diseases with biologicals. More recently, we've discovered that we can reprogram your cells, we can edit the genome, we can use these RNA therapeutics to completely transform areas of medicine. Those technology areas are at their very nascent stage. And what we're going to find is they're going to open up whole new areas of growth from our business standpoint and a human health impact standpoint. We hope that as we work in our areas like cell therapy and RNA therapeutics, we will also be able to climb to a whole other level of market cap over time.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Welcome back, everybody. 30 minutes from the start of European equity trading. And the futures picture, let's have a look at where we are positioned for European stocks. Looking a little bit weaker this morning, down by 1.3% on Euro Stocks 50 futures. S&P futures down 1.5% and Nasdaq futures down by 2.6%. Worth, making that point because of all the focus that we've put on the Chinese competition on the large language model front, which is certainly ramping up at pace. And we'll certainly get further coverage of that story. In terms of bond markets, we're risk off because of that Chinese tech story, also because of the tariff story around what we've seen from President Trump in the last 48 hours and his handling of Colombia. So generally speaking, we're a bit risk off. We're seeing yields coming down a little bit just this morning. So those are the things that are dominating market thinking as we go into Monday, the 27th of January, week 2 for the Trump administration, second time around. Now, last year saw a rebound in private equity deal making in Europe, but with the US continuing to outperform and President Trump promising more deregulation. So what does all of this mean for 2025? Here to discuss is Klaus Hesberger, Vice Chair of Global Financial Sponsors Group at JP Morgan. And he's recently been taking the temperature, the appetite from global investors for all things PE. So very nice to speak to you, Klaus. Good to have you with us. What does the outlook for private equity look like? Does it look like finally we get some of those exits that we've been promised, some of that activity, capital markets activity, delivering those exits for sponsors? What's the big theme of 2025?
No, good morning, first of all. Good, thanks to be here again. No, I'm actually very positive on private equity for 2025 because you have actually 3 areas. Number 1, as you say, we're expecting more activity on the exit side. Number 2, as we also just talked in the briefing, valuations are cheap in Europe, so there's more public to privates. And number 3, the activists, and you guys talked also about it last week, I listened to some reports, the activists have been very active, and they're actually driving all the deals both on the public to private side, also on the carve-out side.
And there's a lot of focus on that theme in the UK, a lot of the activism and the cheapness of the assets and private equity interested as a result. Is that a wider European theme, though?
Yes, actually they're going, as our head of activist advisory is saying, activists are going global. They're everywhere across Europe. You see them in Germany, you see them in France, so in every situation. And probably what our team is expecting, differently to last year, they're probably trying also to partner more with the private equity teams and the corporates to actually get deals done. While last year there were a lot of campaigns, at the end not so many assets traded. Probably one lesson learned for them, they actually want to make some deal flow also happen.
How much of that European PE bull case, though, is tied to the success or the strength of some of the fiscal policy in France and Germany, or even in the periphery as well, just given that infrastructure deals right now are the hottest deals you can make in PE?
I would say Europe is probably underselling itself a bit because I don't know if you saw our team has just published something. Actually, number 1, you see patent growth in Europe is still pretty strong. Number 2, actually, we still have generate a large part of the GDP of the global mix. And number 3, actually, the rate environment for Europe is not so bad. So I'm actually a bit more positive than we Europeans always describe ourselves.
Does size matter in this? Do you have to be a big PE player to really execute some of these deals, given that, to your point, some of the capital markets have opened up, but maybe not to the extent that they have in the past? Do you have to basically have the cushions of the Apollos and the KKRs to succeed in this environment?
I would say private equity funds have differentiated themselves. So you see, of course, the large cap players like the Apollos, the Blackstones, the KKRs of the world, who go for larger deals, go global, and have multi-asset funds. But we see also quite successful activity by the mid-cap players, who sometimes more specialized. They're quite active in sectors like the tech space or software or services. And with them, where they sometimes are better than the large cap, they're much more local. So you see lots of them, French funds, German funds, Italian funds, and also in the US, in the Midwest. And they're quite active. They know the local assets. And that's why they're sometimes even more successful than the big players to convince families to sell to them than to the big guys.
Klaus, European politicians seem to have learnt a new word, and that's growth. Rachel Reeves is going to make a big speech this week. She was in Davos, you were in Davos, talking about that. Other European politicians are realising in a Trump world that actually growth is really important. If Europe can deliver a bit of growth, and the PMIs last week were pretty ugly, what does that mean for private equity in Europe? How coiled a spring could that be?
I would say you're right that the growth in Europe is less than in the US. But if you drill in, and that's what the private equity funds are doing, if they go into each of their subsectors, a lot of the assets actually are set up global. Most of the assets have actually exposure to the US, so benefit some of this growth across Europe. It's not a German company, it's not only active in Germany. So what the private equity guys are doing is they try probably to pick some of the assets which are undervalued and of course viewed by less growthy, sell some of the assets which are not so growing, and buy additional assets in the US or somewhere else to buy some additional growth.
Is the objective, there's a number of questions that come off that, is the objective there, so you would partner a European asset with a US asset, is that what you're saying? Would that mean that it would be more logical to list that asset in the United States?
Yeah, if the valuation gap between Europe and US, at the moment the gap is around 10 turns. If I go back 2000 when I started in banking, the gap was only 3 terms. Of course, various PE firms are trying, okay, I delist something in Europe, list it in the US. That's a trend we're seeing.
You mentioned the tech story as well. You mentioned that tech investments may be easier to make if you're a mid-cap fund or a mid-cap player at the moment. Northvolt kind of shook that thesis to its core, I want to say, when it filed for bankruptcy, when so many of the big PE players were quite positive on getting into that new technology. What's the lesson learned for the PE industry when it comes to investing with such enthusiasm of Northvolt and then maybe getting burnt?
Yeah, lesson learned is always when you have new technologies coming in, some work out, some don't work so well out. Of course, what the mid-cap guys are doing, I don't think they would, first of all, that diversifies their portfolio. And number two, where I see them much more active is in channel software where the risks are not so big. But you have a founder who started a software company, and does he want to be part of a big PE shop, or does he want to partner with a tech specialist? You often see there's a tech specialist succeeding, they build the business, and then he goes to the big PE shops.
Well, let's talk about another sector, which is defense as well, which is a really popular space right now. Satellite companies and, of course, something that's getting a lot of support from governments across Europe. There's also an ESG hesitation, specifically in Europe, around that defense sector. What are you hearing from the folks you work with in terms of appetite to invest in defense right now?
We have, as you might have seen before Christmas, we sold 4 Chital for Carlyle in a very hotly contested auction to actually another private equity fund. Or in the US, we had the Standard Aero sell side, where PE competed with IPO market and then it listed. I would say the interest, as you say, given the attractive valuations, has materially increased in the sector, and that's why various of the other assets will probably be well received.
Klaus, and this is a very broad question, I appreciate, but what's the attitude within PEs, do you think, for investing for the long term? And I ask this because for a long time there might have been this allegation that PEs weren't focused enough on investing for the long term and it was much more short-term returns focused. And then we held a conference at the end of last year here in London, and we talked to a number of people who were saying, actually, the public markets don't have the appetite to allow businesses to spend a lot on capex that's required. So either on data centers, big tech themes, or around greening infrastructure. And actually, those businesses might be better off with PE. How is thinking around investment in those companies that are operated by PE, how is that evolving?
Yeah, Anna, that's a great question, because if PE is not private equity, PE is not PE, because most of the funds, how they react, they raise more long-term funds. So both infra-like funds, which you mentioned before, but also funds where they can park assets longer. And they're going to use for those assets where actually you can probably operate an asset in longer and private. The other trend we're seeing is, of course, the continuation funds, where we're actively partnering with the Campbell Lutyens people, where especially on trophy assets or strong assets, which you can develop longer, LPs are happy to roll over. But number two, also you find a lot of minority investors who want to be part of it, so they don't have to go private. They can keep them for longer. So that's a trend where we're seeing a lot of activity.
All right. JP Morgan's Klaus Hesberger, pleasure to have you on the program. And of course, we're going to continue the private markets conversation throughout the week. I'm headed to Cannes tomorrow after the show. We're going to have broadcast live from the EPEM conference there, speaking with some of the big heavyweights. We were just speaking to Klaus about KKR, Apollo, Eurazeo, and Ardian, among others. I believe TKO will be joining me as well, really talking about not just how accessible it is for institutional investors to get in the private markets and the wealth space, but also maybe how it is for everyday investors to get involved in a very lucrative asset class at the moment.
Looking forward to all of that coverage coming up a little bit later this week from the south of France. Let's talk about Monday morning. NASDAQ futures under a little pressure this morning. Chinese startup DeepSeek raising questions on the future of US tech dominance. We're going to talk about that next. 19 minutes to go until equity trading starts here in Europe. This is Bloomberg.
The world has seen spectacular progress over the last century. And the pace of change is getting faster and faster. That's why, as long-term investors, we focus on the companies that are not only changing the world today, but are also shaping the future. The Scottish Mortgage Investment Trust. Invest in progress.
This is the game changer seat. Look, it even comes with binoculars. I just took a shower above the clouds. You know why? Because this is the Emirates A380.
Asia is a continent of contrast. The region is a nexus of rich cultural traditions and a vibrant hub of trailblazing innovation and modernity. How will it push the limits of technology even further?
Going to space should become as easy as, taking a flight.
If NASA is designing a lander, their approach is they're designing a Formula One car. So we take, say, a Jeep approach.
Min-Seok, give us a sense of how you translate Korean architecture for the rest of the world.
We call this madang. In general terms, it's where we can be ourselves, where we belong.
There is an old saying in Korea that says, "거미 불루, 화이 불치." It means simple but not humble. So it has a tremendous impact on Korean architecture.
People tend to think the robot AI taking the job from them. We want to use the robot as a basic asset, meaning people have an income through the robot.
From space tech in India to robotics in Japan, Asia is driving the future, reshaping industries, societies, and the way we live. Join me as I take you through the bold innovations. Discover Asia's next-gen technologies on Momentum.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. Prudential's reputation as an insurance giant is rock solid, but it's not resting on tradition. CFO Janella Frias is playing a key role as the company resets its strategic priorities.
We've been on a journey to be higher growth, more nimble, and more capital efficient.
Watch Chief Future Officer Wednesday on Bloomberg.
We're a little over 15 minutes away from the opening trade, and risk sentiment is worsening across the board. Just take a look at the futures picture. Your stock 50 futures down about 1%. The FTSE 100 maybe not selling off to the extent as some of the other parts of the world are, down about 0.4%, but still very much a risk-off kind of day. A lot of the selling concentrated over in the DAX. You're already getting some pre-market indications where maybe some of the chip makers that are part of that index are going to feel some pressure. We're going to walk you through all of that. And, of course, NASDAQ futures over in the States taking the brunt of the pain this morning, down over 2%, almost 3% if you want to round up. This, of course, coming off concerns that an AI model from China's DeepSeek could disrupt the tech market altogether. The AI model seen as competitive with OpenAI's technology and could challenge the dominance of U.S. chip companies, including NVIDIA. Let's bring in someone who's been following the story very, very closely and, of course, writing about it in some depth. Bloomberg Intelligence senior analyst Robert Lee joins the program. Robert, at the end of the day, this is a cost story. To what extent did the DeepSeek developments awaken the world's eyes to the fact that maybe AI doesn't have to be as cost intensive as we thought it did?
Well, no, that's exactly right. I think one of the things we've consistently said at Bloomberg Intelligence
is the technical barrier to entry on the software side of the AI equation is, again, not to trivialize it, but it's certainly nowhere near as hard to develop a large language model as it is a bleeding edge semiconductor chip, the likes of NVIDIA or TSMC. So whilst, again, it's still a difficult task, I think China has inherent strengths in software. They've got a very large base of software developers. It's home to two of the largest software companies globally, Tencent and Alibaba. And because of the US export controls being a potential roadblock for the Chinese companies, that has spurred them on to focus more on innovation and work their way around the problem. And that's exactly what DeepSeek has done. So they have developed a smaller, more nimble, more cost-efficient model, which is more adept at running on the locally supplied chips. And in performance terms, as you've seen, and more importantly, in cost terms, it's hyper-competitive. So I think this is a bit of a wake-up call to some people out there in the market. Having said that, from an Asian point of view, this company has been known about for, best part of a year or so, and we've been writing on it here in Hong Kong for a similar period.
Does make you wonder, therefore, why it's become so important right now. Interesting that it happens in the first week of the Trump administration. Robert, let's assume that they are doing what they are doing at DeepSeek with the significantly lower-end chips that is being suggested in much of the writing I'm reading this morning. What does it mean for NVIDIA? What does it mean for the competitors? What does it mean for Tencent? What does it mean for Baba? What does it mean for Microsoft, etc., the kind of companies they're going to see reporting this week?
That's a long list of what did it mean. I guess from a chip point of view, as the Chinese companies increase their domestic supply, it makes them less reliant on the likes of NVIDIA. But again, I think that's well understood and well known in the market. So that's, the news today sort of confirms that, and that's a trend we expect to continue. I think from the domestic point of view, the Tencents and Alibabas, it's a really cutthroat, hyper-competitive market here in China. The barriers to entry are low, as I've mentioned. The level of differentiation, although DeepSeek is obviously a strong technology innovator, still the differentiation between these different models in China is not that high. I would argue that the sector has some commodity-like tech characteristics. That makes it very difficult for companies to charge for these models. Their pricing power is relatively limited. What does it mean for the US companies? Well, really, there aren't many Chinese companies competing directly with the US. But again, I think it's a wake-up call to some within the US industry and the US investor base that, China is hyper-competitive here, and they are rapidly narrowing the gap on the software side and really are well-placed as a global number 2 in terms of the software side of the AI equation. But I think from an NVIDIA point of view, ultimately, they are an effective monopoly in terms of what they do. There are very few companies outside or globally that can really touch them at the moment. So I think fundamentally, their story remains on track. But again, this is a wake-up call to people not to be complacent, and that, one thing we do know about the technology sector is that it's always, change is the only constant, I guess. So there's no room for complacency here.
Robert, thank you very much. Bloomberg Intelligence senior analyst Robert Lee with the lessons that we learn from DeepSeek. Joining us now with what the market is taking away from this story, our Markets Live editor, Mark Cudmore, joins us now. Mark, so we've heard there this sort of analyst view on what this means. And for analysts in the Asia region, certainly this company is not a surprise. It's not a new name. It's been around for quite a while, but it seems to be getting more global name recognition for sure right now over the weekend and into this trading week. And so what are you taking away? NASDAQ futures down 2.6% at time of, as I'm looking at them right now. What are you taking away from a market's perspective about this wake-up call?
I think it's really massive, and I think it's massive for two main points. It's not just about the challenge to US hegemony in the space. It's not about the disruption potential there. That's a kind of a side story. And I think Robert Lee's analysed it perfectly there and summarised kind of the sector challenges there absolutely perfectly. And that doesn't change the fact that NVIDIA still got a monopoly in the space, and many of the big names do as well. The reason this is such a game changer is that A, it's about cost. It undermines the immense amount of money that's been spent on hardware by the US mega cap tech stocks. Sure, they want a dominant position, but it now looks tenuous that they're going to get a return on that investment. That was always difficult. But now, and this is the second aspect, now that this is open source, it really makes it very unlikely that they're going to be able to justify the return on investment, given that there's a much more cheaper alternative out there for the world to use. So ultimately, this is good for global growth. It is good for global productivity. It is positive for global stocks, but it deeply undermines the massive premium that we pay for US mega cap stocks, that exorbitant privilege that we've got. And therefore, I think this is the catalyst that people are looking for. Combined with it is a perfect timing of Trump really kind of putting an extra cost on US trade. I think it is the catalyst to end 15 years of US stock market exceptionalism.
That's quite a big call. Let's talk about the ripple effect that comes off that. Talk to me about the most correlated assets to that story. It's interesting, Bitcoin is down this morning. That obviously is being maybe a reflection of what we're seeing in NASDAQ futures. How far do the ripples spread and how quickly do they go?
So I think, first of all, this is about a relative performance idea. It's about undermining US exceptionalism. It's not. So it's saying that US stocks will fall further in bad times and rise less, kind of in the good times going forward. But you're right. In the short term, while we're focused on US tech negativity, which may last for the week, then crypto is really suffering. Now, crypto seems to be suffering from a few aspects. One is I think there's disappointment that the Bitcoin reserve hasn't been announced, and people are getting wondering whether it will even be a Bitcoin reserve or some other crypto reserve. And then you've got the CEO of Coinbase coming over the weekend saying, look, there's 1 million new cryptocurrencies being created every week, and I think this kind of undermines the sector. I saw a piece out there, I've not checked it, verified it, but there's apparently 36 million tokens out there, which shows kind of the competition in the space for kind of these arbitrary lines in a data spreadsheet. So I think that overall, crypto is going through a tough period. It is not helped by the losses in US tech. There is definitely an overlapping investment sector. There's an overlapping kind of idea that US has leadership under Trump in both crypto and tech, and those ideas are being undermined. So I expect that US tech outperformance is now over, and I expect crypto's at least got a briefly tough period ahead.
Mark Cudmore there, saved by the bell, just as I was about to ask him about the impact of fresh cut flowers from the tariffs, potential tariffs on Colombia. Bloomberg Markets Live Executive Editor Mark Cudmore, we thank you so much. Yet a more up-to-date analysis from him and the team. MLIV Go is the function on your Bloomberg terminals. Go from the macro to the micro and get our stocks to watch with Joe Easton. Joe.
Morning, Chrissy. So we've got a bit of a mixed update from Ryanair today. The airline actually beating expectations on some of its revenue numbers with a decent gain for the quarter. But actually its profits declining around 12%, given some weakness in the fares. And they've also downgraded their passenger target for the years ahead, given those delays in production that we've seen at Boeing, one of their key suppliers. So it's going to be interesting to see which element of those takes most attention today. We can see the stock did have a bit of a drop in the last quarter of last year. That was mostly due to the weakness on fares that the company has warned of. So we'll wait to see how that opens in Dublin today. Then in terms of M&A, we've got the collapse of one of the big testing deals of the last few years, the industrial testing firm Veritas and SGS, so they're no longer talking about a combination. Now, that was going to be around $30 billion worth of combined market cap, so it was a big deal. We've seen SGS coming off, the stock selling on those talks, whereas Veritas was the one rising. So we'll see if that reverses in the opening of trading today. Then back in the UK, we've got news on WH Smith, the company potentially looking to offload its high street retail store unit. That's got around 500 shops, so it is a big part of the business, but the company is looking to focus more on the travel business in airports and train stations. We can see if we look longer term, the stock never really recovered from the pandemic drop, given the closures that they saw around there. 10 buys on that, very much a favoured stock on the street. Then a couple of analyst ratings to bring you. Firstly, the big one, LVMH, that is upgraded at Morgan Stanley, an overweight on that one, and SocGen is an overweight on the Barclays radar as well. BAT, meanwhile, up at UBS today.
OK, lots to watch then in terms of those analyst ratings. Thank you very much, Joe. We'll keep an eye on BASF as well. They said late on Friday they expect to miss analyst expectations of full-year net income. That doesn't usually result in the stock going higher, so we'll watch that one with interest. Diageo denying that they are looking to spin off Guinness and also one of their stake in Moët Hennessy, so we'll also watch that one, Guy. And tech, of course, in focus.
Yeah, you look over the last year, SAP's gone from 160 to 260. You think about where some of the tech fallout could come in Europe. Germany does seem to be maybe the epicenter of that story, so SAP could be interesting to watch this morning. Plus also ASML, some of these chip stocks certainly on the back of this DeepSeek story could be under pressure. That's the European picture this morning. The US picture, even more negative. Nasdaq futures down sharply. 5 minutes to the open. This is Bloomberg.
Bringing you up-to-the-minute financial and geopolitical news whenever and wherever it happens. I'm Francine Lacroix in Davos, Switzerland, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close, weekdays at 3 p.m., only on Bloomberg Television. Context changes everything.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
In case you missed it on Bloomberg Crypto.
Are you concerned that with this new stablecoin, folks will be less interested in XRP?
We see them as really complementary to one another. So dollars can be a very effective means for payments, and we have seen that demand from within our customer base. XRP is really, it's the native asset to the blockchain, so it's used for things like transaction fees on the blockchain, but then also can be a bridge asset to trading different tokens on the XRP ledger. So we really see the two playing complementary roles.
Some of the biggest exchanges out there are missing from this announcement. So what about a huge platform like Coinbase and others, for example? When does that happen?
You can expect to see more availability, more announcements coming soon.
How soon?
Imminently.
Don't miss Bloomberg Crypto live on Tuesdays.
Bloomberg Invest is back. Join me, Shonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
Good morning from our world headquarters in New York. I'm Manus Krennic.
And I'm Danny Berger. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Monday morning, a lot has happened over the weekend. This chart is completely irrelevant. This is the white line being Europe, the blue line being the United States. That's the Friday session. But we've got the DeepSeek news that we need to fold in. We've got the tariff story that we need to fold in. We're going into this week, it feels, with slightly different news than we ended last week. So, Kriti, what are futures telling us?
Well, it feels like the selling off and the risk sentiment from last week is continuing into today, in addition to the idea that we had, of course, the bad news coming from both the tariff story and the DeepSeek story is showing up like this. 1.4% decline in the stock 50 futures. A lot of that is concentrated in the German index. Remember, the chip makers are going to be a key piece. That Anna's going to walk us through that in a moment. A lot of the pain, though, over in the States. Those NASDAQ 100 futures down almost 3%. We'll see if we get a little bit of maybe buying into the U.S. Open or certainly into the European Open. Anna.
Yeah, absolutely. So we'll keep keep an eye on the tech sector. Any read across from DeepSeek and the way that this has become much more of a globally known business over the weekend and into the weekend, of course. So we'll keep an eye on that. The tech sector in Europe, anywhere that's spending a lot of money, really, on AI infrastructure, we'll keep an eye on that. Ryanair also in focus. We had an update from that particular business. They've lowered their passenger growth target for 2026. They're citing Boeing's delivery delays once again. And we're also keeping an eye on WH Smith, the retailer, of course. They've confirmed they're exploring the potential sale of their high street business. They get most of their profits, in fact, not from the high street business, but from the travel-related businesses, and so looking to hold on to those and perhaps to offload the high street ones. So we'll certainly keep an eye on that one, as well as all of the tech names then, Guy.
Tech and tariffs, that's the narrative this morning. That's what you want to focus on. We're about to get the European equity market open. Monday morning expected to deliver some downside. It is definitely risk off. How that kind of breaks across Europe, let's find out. It's time for the opening trade. So the FTSE 100, not much tech, as a result of which you may see some relative outperformance out of London today, which is going to be interesting to watch. So in some ways, that's not where the story is this morning. The story is going to be elsewhere. The IBEX is already down by 0.8%. The 600 is down by 0.1%. We'll get some more numbers coming through, I suspect, out of Germany, maybe a little bit out of Switzerland as well. But it's the chip story. The Dutch market is also going to be fascinating to watch. Let's see what happens with the AEX this morning. It's not on this board, but the German market is thick with names like SAP, which have had a great run recently, and in some ways could be a casualty of what we're seeing in Nasdaq futures right now. So we don't have a trade there yet. The FTSE's down by 0.2%. I think you'd probably expect these other main markets in Europe maybe to be down by a little bit more, but it could take a while for them to get open. So what are we seeing below the surface, Anna? Critty, single stocks, what's happening there?
Well, we are, of course, as you said, waiting for a lot of the German names to actually wake up and start kind of trading. So perhaps we're going to see a little bit more of a sell-off than we're getting right now. But off the get-go, I know we're focusing a lot on the tech story, and I'm seeing a lot of underperformance in the oil space as well. So you are seeing the likes of Shell, Rio Tinto, for example, among others, really taking a beating. And I almost feel like there's a little bit of a read-through here, maybe more in the early seconds of trading from maybe the tariff conversation than the tech conversation, as we're, of course, we're waiting for those trades to open up, because I'm seeing a lot of the EM-exposed companies facing the biggest weights.
Well, we've mentioned tariffs, we've mentioned tech. We haven't perhaps mentioned as much as we should have done in the last 20 minutes or so, the Chinese data, because that Chinese data was really quite weak, wasn't it, on the manufacturing side, despite all of the effort that the government had seemingly put into boosting activity towards the end of the year. That didn't deliver, and we saw disappointing news when it comes to Chinese PMIs. And so basic resources is the worst performing sector today, down by over 1%, and some of those names that are attached to the property sector, and it was construction and consumption in the services side that was not giving us a positive news story overnight from China. So lest we forget about the China data flow, that is also something that's having an impact, aside from some of the tech stories. We're still waiting for the CAC and the DAX to open, though, this morning.
No trade on SAP, no trade on Infineon. We need to see those numbers, but I think before we get a good gauge on what is really happening here. LVMH is up a little bit, so you've got an upgrade this morning from Morgan Stanley, but you've also got relatively weak China data, to Anna's point as well, which could ripple into the luxury sector too. But I think we need to wait and see what SAP does. Infineon's just opened. Infineon is down by 2.5%, now dropping 3%. So the chip sector story is beginning to manifest itself. Yeah, we're down by 3% on Infineon.
And we mentioned the chip sector. ASML still facing a volatility halt at the open, so perhaps some extra pain in that name that we're going to keep an eye on. It is a market sell-off, I think it's fair to say. Let's bring in a true expert in terms of how to navigate it. Beata Manthi, head of European equity strategy over at Citigroup, joins the program this morning. You picked a great day to join us. Happy Monday.
Good morning. What a Monday to pick, right?
Absolutely. You timed this beautifully. I mean, we're talking a lot about this theme of tech valuations. It feels like really kind of this cost-intensiveness, for lack of a better term, in the AI space has kind of been undermined, at least in theory, by this Chinese AI named DeepSeek. How much of that is a isolated tech story as opposed to maybe popping the bubble that has been tech valuations?
So popping the bubble is a big word still, but it has been part of our story, of our view towards the end of the year, when we've been arguing that this very one-way positioning into mega cap tech in the US is becoming very risky, right? And for us, the best diversifier away from it has been Europe within the rest of the world bucket, because every other region has its own problems. So, of course, if futures are right and Nasdaq will be down as it suggests, European tech will be down as well, right?
Yep.
But for me, more than geopolitical risks in the near future, it's all about earnings now and earnings delivery. All eyes will be on this tech results, especially in the US. The market is priced for perfection, right? It needs to deliver perfection.
There's some really big numbers at the bottom. Can I just flag, just in terms of some of the numbers I'm looking at on the screen at the moment, Siemens Energy is down. I just need to check whether that's an ex-dividend story or what is going on there, because Siemens Energy is down really hard. But names like Schneider are also down really hard as well. Like Schneider, which is a data center story, you could argue. We heard from the company. That stock's down by 6-7% at the moment on the screen that I'm watching. ASMI is down by 6-7% as well.
ASML's now open and
Schneider's
down 8%.
Schneider's down by 5.5%. These are quite big numbers. So in some ways, Europe is immune to the tech. In theory, doesn't have that tech story, but in reality, actually, some of the heavy lifting recently has been done by European tech.
Yeah, I mean, we'll build on that because we're talking about the valuation story. Hasn't that valuation story in tech been mostly the U.S.? Why are you seeing these numbers that Guy pointed out?
These are all very correlated trades, right? But you could argue over medium term, not very short term today, when you have a knee-jerk reaction for this first very liquid trades that are opening today, that the fact that European tech has done pretty badly last year gives it more opportunity over medium term, right? So you don't have these crazy valuation pressures I would have out of the US. But it's not cheap, because it has re-rated.
What's the beta on Europe to US tech? If US tech falls out of bed, you get a big drop. What is the read across to Europe?
Define fall out of bed.
Okay,
right?
so you go down by 5% on US tech.
Yeah.
Do you go down by 2% on Europe, or do you go down by 10% on Europe? I keep asking this question because it's really unclear at this point.
So the US, so the growth sector in the US is around 50% of the entire index.
Yeah.
In the US, it's 15. But not only talking tech, it's growth, right? So in theory, you have smaller direct impact, but it's going to be impacted, no doubt about that. The valuations can shield you a bit, but in a proper risk-off environment, Europe is going to be at risk. But probably, according to our models, it's going to be a buying opportunity. Because at the end of the day, it is about the global growth prospects, right?
Mark Cudmore was postulating earlier that this could be the end of US exceptionalism. What does the end of US exceptionalism look like?
So for us, from the equity market perspective, last 2 years have been all about mega cap tech. Why? And all the gains out of S&P have been driven by this very few number of stocks. Why? Because growth was scarce, right?
Yep.
If growth is scarce, you buy it at wherever you can at any cost. Now, the view for this year, and that's to do with this global growth prospects from the economic perspective. Of course, we are coming from very low levels for many parts of the world, so you can assume some positive deltas. US growth is holding up okay for now. So our view for this year is that you could see broadening of EPS across sectors and regions. So if you see the right conditions to buy the rest of the S&P index, these have been calls from some, right? So by equally weighted versus the MAC 7. If you see the macroeconomic conditions to go for this trade, European index offers you a very similar growth profile to the rest of the S&P at substantial lower cost. You don't need to pay up for it. And the rest of S&P is very expensive as well, as expensive as MAC 7, right?
OK, so if we see that broadening trade in the US, that could play out well for European stocks.
Correct.
And so as we look at these themes that we're playing with this morning, then, Beata, and they're sort of coming at us thick and fast, there's the questions around AI in the United States and whether big hyperscalers have been spending too much money to provide that service to others. Too much capex there. And then there's the theme of tariffs and what we've learned from the way that the new Trump administration will use those tariffs, as we saw with Colombia. So from a European stock perspective, what makes you more nervous of those two things? Are you more worried about the tariff story and what we're seeing from the Trump administration? Or are you more worried about US tech and how vulnerable that is? Which has more read across into Europe, do you think?
For the European index, probably tariffs if they go full on, right? Which is not our view, and from what has happened overnight, looks like it is a negotiating tool for now. And on the top of things, the European market has priced in a lot of these tariff risk in a very undifferentiated way towards the end of the year. Now, if indeed there's a huge pressure, if we come to the reporting season of Mark 7 and they come in line or disappoint, the market will be down, right? But over medium term, it's not as bad for the European market as full-on tariffs would be, as coming back with the rhetoric of punishing the rest of the world.
And what about the rate story and the way that links into your view then, Beata? Because we, of course, saw rates globally, the US in particular, but globally rising through early January and then sort of moderating a little bit, stabilising a little bit. I mean, obviously, it depends why rates rise, whether it's a growth driver or inflation fears, as to how that reads across then into stocks. Is that the base case?
Absolutely. So we've had a super strong sell-off in global bonds, really starting in September. And we've looked what happens when these sell-offs abate to equities going forward. And actually, you have a very wide range of outcomes. European equities could be up substantially with cyclicals leading, or they could be down. And the differentiated factors, the factors in common, and we looked across many factors within the macro world. Is inflation stable or falling? And are PMIs stable or growing? So to do with the point I mentioned at the beginning, what is going to happen to global economic growth? So rates at these levels, in theory, well, they will be a problem for very leveraged parts of the market. So, for example, late last year, we've downgraded utilities, right? So it's a rates call or infrastructure plays would be at risk. But overall, if rates are high because growth is strong and there are signs that inflation is in control around the world, over the medium term, not today, it could be a bullish call for continuation of the cyclical trade catch-up that we've been seeing in Europe.
Okay. That's the longer, more medium term.
Correct.
More medium term picture.
Correct.
Beata, great to see you. Thanks for stopping by to see us. Beata Manthi, head of European Equity Strategy, joining us from Citi. Let's talk about today, because today we're certainly seeing some fairly big moves. Take a look at what is happening with the Core 6. Anything related to the AI story is under pressure this morning. ASML is down. Look at what's happening with Schneider. All these companies that have been bid up recently around the data center story under significant pressure this morning. Remember, private equity is also in on that trade too, so let's pay attention to that too. But what you are certainly seeing is tech under significant pressure. The market is seeking safety elsewhere. Look at Nestle. It's up this morning. Some of the pharma stocks are also doing relatively well. Joe's got more details. Over to you.
So just wanted to check in on some of these other capital goods stocks, guys, because they're absolutely slammed at the moment. You mentioned there Schneider Electric. We're seeing Siemens Energy, another one you flagged, down 16%. Also seeing ABB in Switzerland, Legrand, all of these companies, anyone with exposure to the chip space getting hit on this DeepSeek news that is really taking the market by surprise at the moment. So massive drops in there, particularly Siemens Energy. Meanwhile, Ryanair gaining. Now, that was mixed. We did see a decline in their profit and also some of their passenger numbers, but the quarterly sales actually better than expected. So that does seem to be the boost on that one. Then in terms of the M&A, lots going on today. We did see that news that Veritas and SGS no longer going to be merging, and therefore we're seeing a retracement of the move. So SGS coming back up. That was the one doing the buying. Therefore, it had been hit. Veritas coming down at the moment. Over in the London market, WH Smith, that one was looking higher in the pre-market indications. There it is, up 6%, potentially going to be selling all of their high street retail units, according to the firm. Universal Music, meanwhile, they've got a deal with Spotify on redistribution rights and compensation for artists being taken well this morning. And then just finally on the rating change that I wanted to flag again, BAT, that was one of the best performers across Europe at the open of trading. UBS likes it due to the buyback outlook, and the stock is gaining at 4% on the London market this morning.
Joe, thank you, Joe Easton. From our equities team with some of the read across that we're seeing from the DeepSeek story. We'll return to that shortly. Coming up, more on Ryanair as it cuts its passenger growth target once again. We'll get to that. We'll continue to focus on tech, of course, as well. This is Bloomberg.
Are you ready to connect to a perfect journey with Turkish Airlines? to feel welcomed and to feel refreshed, to discover unforgettable flavors, to reach new heights of happiness, to connect to a journey that's perfect because of you.
At JP Morgan, we're taking ETFs to the next level with active equity and fixed income strategies designed for today's dynamic markets. Invest with a leader in active management. Search JP Morgan Active ETFs.
Interactive Brokers pays up to 3.83% on instantly available US dollars in your brokerage account. How much interest can your bank or broker pay? Interactive Brokers' conservative and prudent risk management uniquely positions us to pay up to 3.83% on uninvested, instantly available US dollars in your brokerage account. The best informed investors choose Interactive Brokers.
What are your thoughts on fast fashion? It's been transformative. It gives the masses access to fashion, but there's a cost to it, downside to it.
My first notice is too much waste. I think this is also how I grew up, making your own clothes and making something that's very special and very unique. It's like timeless. And now you see that everybody is looking the same, like wear sweatshirts and wear t-shirts. And for me, it's just like when they wear something very special, they feel empowered.
Is there a need for fashion to be more mindful of the impact it's having? Socially, environmentally?
Definitely.
Is it happening enough?
I think it's happening. It's gradually happening. All the designers are doing, everybody is thinking about this subject at this moment, thinking how to be more sustainable, how to be more environmental friendly.
Do you think the fashion industry is doing enough to ensure that it is sustainable? There's so many targets out there. Are they even realistic in wanting to achieve them?
I think some of them are just like they're using sustainable ideas as a marketing concept only. They're actually not really doing it. I think as a designer, it's really important to really make it happen. Every collection, I think about how to do it and how to tell the customers. I think that is our responsibility to educate our customers.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live every weeknight. Balance of Power, weeknights at 10 p.m. London time, only on Bloomberg.
Welcome back to the opening trade, 8:16, 8:17 here in London. So just into our session here in Europe, and we are seeing a read across from the news around DeepSeek, this Chinese large language model that does seem to have taken some by surprise, many in the Chinese market, of course, following this story for a while. But it's having an impact on European tech names today. We see that evident in some of the markets we're following, and certainly on US futures. Nasdaq futures down by 3.1% right now, and so that is certainly something that wakes us up and makes us take notice. Let us get some analysis now from Richard Windsor, founder of the independent research business Radio Free Mobile. Richard, really good to get your thoughts on this, because I suppose the question that is being raised and what we're seeing reflected in Nasdaq futures today is, does this undermine the business strategy that has seen so many big tech names in the United States spend so much money on AI infrastructure, AI technology? Is it undermined by how cheaply the Chinese seem to be doing this?
The short answer is don't know. And the reason for that is that if you cast your mind back to the Huawei SMIC thing about making super advanced chips, there was a lot of propaganda around that. The question is the main thing is that it's impossible to tell at this point in time. So the good news is that DeepSeek appear to have made enough information available that someone can go off and replicate it. And if they can replicate it with that level of performance, which I would say is probably definitely real, with that level of cost that they're claiming, then we're taking a whole step forward in terms of artificial intelligence efficiency.
In terms of the compute that is required to do what this company is doing, though, is it possible with anything below Hopper? Is that something that we can look at and understand, or is it just impossible to tell?
No, the answer is it is possible. The big question is that if you trained it on the chips that we know for sure that DeepSeek has, which is an array of A100s, which is a 3 or 4 generations ago version of NVIDIA, yes, they could have done it, but it would have taken a really, really long time and cost a fortune in terms of electricity. The consensus in the market is that they had access to an array of H100s. But that's not really what's being questioned here, because everyone has access to the H100. The question is that the techniques that they used, have they really been able to achieve and manage to train it to that level of performance by spending just $6 million?
But does that actually apply to maybe the roadmap or the barriers of entry for some of the U.S. tech that they are being compared to, the likes of NVIDIA or Amazon or even Microsoft, for example?
Yeah, I mean, the question here is, so if you look at it, I mean, the reason why everyone's getting nervous is that if you say that in the future demand for AI is going to be X and you need Y amount of capacity to train it, and if we assume that DeepSeek's training method is correct and it works and can be replicated, then suddenly, if demand for AI doesn't increase by 30 times, the amount of data centers that we need just dropped by 90% or more. That's what's going on right now. And the answer to that question is, I'm afraid, there's no way to tell until someone's tried to replicate exactly what DeepSeek has done.
Right. So, Richard, then the question is, to answer that then, to get to that, so we replicate it, we try and train the model, and we try and do some inference and see if other people can do it for such low cost. Does that mean that... how long does that take? How long do we have to wait for that? Is that later today, or is that a week? Is that a year?
No, I think a couple of months, I would have thought. The training time for a model typically seems to be around about 30 days, seems to be that. So a month or two, I said we would get an indication one way or the other. The other way to look at it, of course, which is not quite so negative, is if the cost of AI falls by more than 90%, then you would argue that demand for it would increase even more because it comes so much cheaper and so much more economically viable to use it in so many more different industries and use cases. So that's another way to look at it.
I'm looking at anybody associated with a data center this morning under significant pressure. The stocks are down. I mean, imagine NVIDIA is going to be down pretty sharply. Richard, walk me through kind of the concentric circles of how this ripples out from this story. Which stocks get hit hardest? How long does that last? What am I looking at here? If it's a 90% drop, how do you price that into some of these stocks?
That's a great question. The answer is, I think the way to look at this is look at how much these things have run up. Look at how much above their historical price earnings ratio or EV to sales ratios these things are on the AI hype. And that, your bottom end, your worst case scenario should be all of that froth and all of that valuation comes out and these things basically return to mean. That's your worst case scenario. I think that's unlikely to occur because if you look at artificial intelligence, there are a lot of use cases for it. Demand for it is going to continue. And even though DeepSeek may have cut the price to train massively, there's still this colossal arms race going on between China and the United States and the West, which means I don't think that even in the light of this, the spending is going to come back anytime soon, simply because of this, the geopolitical environment and in terms of what's going on in terms of a race to get to advanced artificial intelligence.
Richard, always appreciate the context and your thoughts. Thank you very much indeed for joining us this morning on the back of this breaking story. Breaking, maybe that's the wrong phrase. This story seems to have been developing certainly over the last few days and weeks. Today, it's certainly having an impact. Richard Windsor, founder of Radio Free Mobile, thank you very much indeed. Ryanair stock up this morning. The stock is up by 2.2%, as you can see on the screen. The company, though, downgrading some of its forward numbers because it's simply not getting the aircraft that it wanted from Boeing due to the manufacturing constraints that company is under. CFO Neil Sorahan told us a little bit earlier about the fact that he's starting to see, and he's just been in Seattle at the Boeing facility, he's starting to see some light at the end of the tunnel.
The remaining 29 aircraft in our 210 order book will be delivered ahead of next summer, the summer of 2026, which will enable us then to catch up a lot of the growth that we've lost this year to get to 215 million passengers. So I think Boeing have turned the corner. on the production side of things. They fixed their balance sheet last year. The management team are executing on the plan. Of course, we're disappointed that we're going to be left short aircraft again this summer.
Bloomberg's aviation lead, Benedict Campbell, joining us on the story. Benny, how held back is Ryanair at the moment because they can't get the aircraft?
Well, to some degree they are still held back, but the downgrade isn't as significant as you might think. They went from 210 to 206 million, but still, that's in the space of less than 3 months, so things haven't improved. At the same time, if you look at the stock, investors are clearly looking at it sort of in a half-glass-full sort of way, and they're looking at the profit numbers, the outlook. They are probably latching onto the comment that we heard just now that Boeing has turned the corner. So there is some degree of optimism built into this that they have really hit the bottom now, and it's sort of upward from here. The other thing is anyone looking for something good in the stock will latch onto this. It flatlined last year, so they have some room to recover. So this is a stock that clearly has room to move, and that's what we're seeing this morning.
Yeah, so they're really bucking the negative trend and moving higher this morning, Benny. I mean, we heard from Neil Sorahan an interesting phrase. He talked about the capacity being hugely constrained, this all to do with Boeing and its ability to supply aircraft, I guess. What does that mean, though, for Ryanair?
So it's actually good news for Ryanair in some twisted sort of way, because the demand is there. Travellers are still going on trips. They want to travel. That's very clear. The Easter bookings are looking good. The summer bookings are starting to look good, even though that's still fairly far out. But the demand is there. It's the supply side that's constrained. And it's not just Boeing and Ryanair. It's also every carrier that's using Airbus aircraft, on those short-haul aircraft, the A320 on the Airbus side. That also has issues. We heard from Wizz Air continuously that they have a lot of aircraft on the ground. So all of that means that the capacity is constrained in what is still a hot market. And as a result, that means that these carriers can command higher prices because people, as I said, still want to travel. So in some slightly weird way, the fact that the demand is there helps them on the pricing side.
Certainly something we're going to be keeping a very close eye on. Bloomberg's Benedict Campbell joining us out of Berlin on those Ryanair earnings. Note that they are one of the few stocks that are higher in today's session, higher by about 2% off of that earnings report. We thank you so much. Coming up on the program, we're going to continue the conversation, maybe the other thing driving the risk sentiment in the markets. That is as Colombia U-turns after being threatened with a 25% tariff by the United States. We're going to look at the risks for other countries as well. Kevin Daly from Goldman Sachs joins us around the table. We're going to talk a little bit about the EM risk, the risk sentiment, and how well you really need to be pricing in some of this tariff story out of the Trump administration. In the meantime, European indices are pointing lower. Stick with us. This is Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Romaine Bostick in Detroit, and this is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern. Only on Bloomberg. Context changes everything.
From Bloomberg's coverage at Davos.
Do you think there's one particular thing that you'd like Trump to change in terms of what some people see as the over-regulation of banking in America?
I don't believe, honestly, that we should have a huge amount of deregulation for larger banks. I think that's, you look back at COVID and any crisis, big banks now are strong, are able to step in and being part of resolving issues rather than being the one that creates issues. So I wouldn't really welcome a huge wave of the regulations. What I can see is that, of course, what happened in the US doesn't mean automatically that you will see in Europe or in Switzerland or in Asia deregulation. So the fact is that US banks may become even more competitive in internationally through a more benign environment.
Nobody covers Davos like Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
This is the opening trade. We're at 30 minutes into today's session. Seeing red across the screen, but perhaps the selling paring back just a touch. We are seeing the stock 600 down by 0.8%. The DAX is where a lot of the pain is concentrated, down about 1.2% as well, as is the French index, down about 0.9%. Maybe insulated, perhaps, is the FTSE, only down 0.3%, but certainly suffering from the risk-off narrative around the world. Part of that is going to be the tech story. The other part, maybe a little bit of the tariff conversation over the weekend. Let's dive into that aspect of the markets this morning. The U.S. is going to hold off on imposing tariffs on imported goods from Colombia after the nation agreed to accept the return of deported migrants. Now, the White House says it had announced 25% tariffs on Colombian exports after it refused to allow 2 military planes to land. Let's get some more details here and bring in Bloomberg senior editor Bill Ferries on the subject. Bill, walk us through this kind of U-turn, this 180 from the Trump administration. Walk us through the details.
Well, as you know, Donald Trump campaigned on this idea that he was going to round up undocumented migrants and send them back to the countries they came from. He had a very active first week, and this was a part of that. Apparently, he had 2 military planes loaded with Colombian migrants that was headed back towards Colombia, and the government there refused to give them the airspace or landing rights to come down. Now, if this is the kind of policy that had spread to other countries with more migrants, it really would have put a damper on, I think, one of President Trump's signature policies. So he hit back very hard, announcing 25% tariffs. He said those would go up to 50% after a week if Colombia didn't back down. And in the end, they did back down after just several hours, basically deciding to accept those migrants. We don't know if there's been any other caveats or policies with it. But President Petro's government in Colombia basically deciding to it was going to be too costly to go forward with a fight over this policy.
Yeah. Bill, the takeaway at the end of last week was that Trump tariffs were unlikely to be delivered at the kind of worst case level that the market had feared. This weekend may be changing that a little bit. What do we now know Monday morning about the new White House reaction function around tariffs and how they're going to be used?
Well, certainly if you are a smaller economy and the U.S. president thinks he can get away if the U.S. seems to have a lot of leverage in the relationship, as it did with Colombia, tariffs are a legitimate weapon that will be invoked on very short notice if you're not in line with the Trump administration's policies. It could be a little different, we don't know, but it seems like it's a little different with larger countries, larger economies like Mexico, which also refuse to have U.S. military planes deliver migrants back. So will Mexico face tariffs as a result? We don't know. We did see some weakening in the Mexican peso as part of this, general strengthening of the dollar. But those bigger fights are the ones that I think the markets and analysts are most closely watching going forward.
Bill, thank you very much. Bloomberg's Bill Ferry's joining us there with the latest on this tariff story. Let's bring in Kevin Daly, co-head of CEEMEA Economics at Goldman Sachs. It's more complicated than emerging markets, but maybe that's a useful shorthand for us in the moment, Kevin. Thank you very much for joining us. So let's pick up where we just left off there with Bill. So what we've learnt then from this is that smaller countries are maybe going to be whipsawed by this tariff policy and have some policies forced upon them by the Trump administration. Is that what we learned from this Colombia episode?
I mean, obviously the news initially on Inauguration Day was more benign at the margin than had been anticipated. There were fears that a blanket tariff might be introduced immediately. We didn't have that, and on the back of that, our US economists have lowered the probabilities of some of the tariffs. But, you know, tariff risk clearly hasn't gone away, and it's going to be with us for a while now. We still expect as a central case quite a substantial 20 percentage point increase in effective tariffs on China. We still have a 40% chance of, 25% chance of more general tariffs across a number of economies. And it's clear that these are going to be used by bargaining tools in all manner of negotiations going forward. So this is a significant shadow that will be cast over the global economy and across EMs in particular.
Yes, and Kevin, for how long is an interesting thing to think about, isn't it? Because it seems from right now that for as long as President Trump is in the White House, this is a risk. So even if countries manage to avoid tariffs over a large period of time, tariffs could still come. You know, it's not as if he's going to tell us. He's not going to play all of his cards right now, is he?
Absolutely, and I do think it's going to be there as a risk for, I mean, perhaps, you know, for most of the next 4 years. But I think over time we will get a sense of how proactively he is going to use those. You know, there are costs for the US, bear in mind, from tariffs. I mean, there are considerations that, you know, he will be factoring in the possibility of higher inflation. He's been very clear he wants lower interest rates in the US. He will have been advised that the imposition of, you know, broad-scale tariffs will raise US inflation and lower the chances of interest rate cuts going forward. So, you know, that risk, I think, will be ever present, or at least over the next 4 years. But I think over time we're likely to get a better sense of, you know, how proactive they will be used and how nervous we should be about their imposition.
There was an argument a couple years ago that in Davos was almost rescinded by the likes of the IMF and the World Bank, and that EM was where a lot of these global structural cracks were going to show up. And they've proved to be far more resilient than a lot of people expected a couple years ago. Are tariffs as impactful on that narrative, given that resilience? No,
I mean, you raise a great point, is that, you know, EMs are actually performing pretty well at the moment. If you look at 2024, they grew in aggregate around 4%. You know, and heading into this year, that the start of 2025, actually momentum, you know, was pretty strong. And our, you know, high-frequency indicators across EM suggest that EM growth was accelerating to around 5% year on year, so above potential. Growth is pretty broad-based across regions, so across Asia, across LATAM, across CEMEA, growth is accelerating. And also the drag that they faced from very tight monetary policy in 2022, that drag is now easing. So actually left to their own devices, I think the outlook is pretty positive. It's one of the features that we have, you know, highlighted in our reports, is that, you know, there is a calm before the tariffs, is that EMs are performing relatively well. You know, but, you know, if it wasn't for the risk of tariffs, I think we would be much more constructive on EM assets going forward. But that, you know, that tariff risk is maybe slightly less than we feared it would be immediately before inauguration, but that risk is still very clearly there.
So if you're talking about maybe this insulation aspect to some of these EM currencies from the tariff story, FX markets aren't really feeling that. Like, take a look at the peso, take a look at the Brazilian real. Is the reaction function from some of these emerging markets on the fiscal front and the monetary policy front really more to address the currency? Is that the strategy they have to use?
It is. I mean, actually, it's interesting. So EM assets have been performing relatively poorly against the dollar. But if you look at against other DM currencies, so strip out the dollar, actually EM assets have performed relatively well. Now, going forward, we have a stronger dollar for longer within our forecast. We expect, you know, because of tariff risk, because of the policies being implemented by the new US administration, we think the dollar will remain strong, will actually strengthen further. So one needs to be pretty selective about EM assets going forward. But we think that against a number of other currencies, EM assets will perform relatively well. We like high-yielding EM currencies in particular. We like some of these, actually, you mentioned the peso, but we like LATAM high yielders in particular because, they are very cheap now and also they have a relatively high carry. So there are definitely pockets of value within EM, but one needs to be selective.
If US tech sells off, how does EM perform?
I mean, it's if global tech sells off and global equities sell off, then EM won't be entirely insulated from that.
I sell Taiwan, I sell India to a certain extent maybe. Where do you see the biggest effect? Nasdaq's down, futures are down 3%. Where does that show up in your universe?
I think you're absolutely right. So Taiwan, but I mean, I would say more generally, EM equity markets provide a degree of insulation.
But the beta is less than 1.
It is, but also EM equity markets are very cheap. I mean, EM equity markets are very underpriced relative to the US, relative to tech stocks in particular, and so it is. We think there are value. We think we quite like China, but I agree. Taiwan is the obvious is the obvious example which would be affected by a tech sell-off.
Beata Matthew was here from Citi a little bit earlier on, and she was making the argument that if you see a broadening out in the United States away from tech, then actually the way to play it is by buying Europe, because Europe in some ways has the characteristics of the rest of the S&P, but is on a much cheaper valuation. Does that same argument apply to EM?
Actually, I would argue if you look at the valuations of EM equities, they are remarkably similar to Europe. And yet, the growth prospects for EM, as we talked about, is that, they're growing 4%, accelerated to above 4% at the start of this year, versus Europe, struggling to grow at 1%. So, I think there is a case for diversification outside of the US, potentially into Europe, but certainly I wouldn't overlook EM equities in that regard. We like, there are a lot of EM equity markets that are particularly cheap at the moment, which, given the growth prospects they present, we think represents an opportunity.
Well, where do you stand on China then, Kevin? Because we had the PMI data out this morning that looked pretty disappointing, actually, and some have said this is a government that was really trying to stimulate the economy at the end of last year. Others saying, no, we haven't seen that yet. They're not going to do that until we see the full policy from the Trump administration, so we wait till spring maybe for that. How do you feel about Chinese stocks?
So, I mean, Chinese stocks are the main proposition there. We like them, is the short answer. We like them because we are overweight them, because primarily on valuation. I mean, they are particularly cheap. I mean, China has...
And is that enough? Do you see, in a world with Trump in the White House, valuation is enough? You don't need a sort of calmer geopolitical backdrop?
I mean, certainly there are challenges there for China. And we think that growth will slow this year from about 5% last year to around 4.5% this year. But that's, still decent growth, and the reason why we expect growth to hold up relatively well is because we do think there will be significant further measures introduced. As you say, is that I think the Chinese authorities are holding off on those until they see they want to respond to the imposition of tariffs and not before that. So they won't show their hand until the tariffs are imposed, if they are imposed. But we think that Chinese growth will moderate this year, but won't fall dramatically. And in that environment, with given the valuation that the Chinese equity market is on, we are overweight that the Chinese equities.
Kevin, great to see you. Thanks for stopping by to see us around the table this morning. Kevin Daly, co-head of CEEMEA Economics at Goldman Sachs. CEMEA. It's probably an easier way to say it, isn't it?
Thank you for putting us out of that misery.
We've just been reading it as it appears on the screen. CEMEA. Going to go with that next time. Kevin, thank you very much indeed. OK, coming up, a 10-year-old vessel-sharing deal between two of the world's largest shipping companies comes to an end this week. Are we about to see a price war? Are we heading for a shipping showdown? Probably need to fold in what is happening in the Red Sea to this discussion as well. We'll do all of that next. It's our big take today. That's next. This is Bloomberg.
How can you have dinner with friends without hinting at what you're thinking about? And do you ever get suggestions from your friends at dinner, this is what you should do? And how do you respond when they kind of say, maybe you should lower interest rates? You just keep eating or what?
You might define the word friend to mean doesn't ask you about interest rates. So, no, people don't do that generally. You know, people I don't know will always say, hey, cut rates. Somebody said that in the elevator this morning.
Did that influence you or no?
I said, thank you, sir. You know, and no, but I mean, you know, people say things, but you know, it's fine.
So in some parts of the society these days, people are making decisions based on something called artificial intelligence, AI. Have you thought about, you know, calling up ChatGPT and saying, you know, here's all the data we have. What do you think about it would be a good idea? Have you ever thought about that, or they're not going to likely do that?
We haven't done that. I mean, we have done little things like we've asked ChatGPT to generate questions for the press conference. And I'm happy to report for any journalists who are here that the questions were not as good as the ones we get from real journalists. So,
what about my questions? How do they compare to my questions? Okay.
No comment.
Right, so they weren't that great. Okay.
If you look at private equity just as one piece of the institutional equity market, there are 3 times as many dollars invested than uninvested, right? So you have about $3.5 trillion in the ground that needs to get resolved versus about $1.5 trillion that's wanting to be invested. So if you're a private equity manager, you're trying to decide, do I take my capital and put it into my existing portfolio to either defend what I own or to try to grow it and create more value? Or do I use some, to your point, some creative financing to extend the duration or the runway of what I own and then try to put the capital into the new market environment? And everyone's taking a different approach. It's a function of where you are in your life cycle. Everyone is dealing with that. Even the highest performing PE firms, you're seeing slower fundraising. And in this deal environment, you have to start thinking creatively about how to get liquidity back to your investors.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
"46 minutes into an equity session that looks pretty ugly, certainly from a top-down point of view. There are some big names that are sharply lower. Siemens Energy is down circa 19% right now. Munster's cooling company down pretty sharply as well. So the DAX is under pressure. It's down by 1.21%. But Europe pales into insignificance compared with the drops potentially we could see on the Nasdaq this morning. It is down over 3%. You're going to see some sharp drops potentially in some AI-related companies this morning, Anna.
Yeah, absolutely. So tech story front and centre for us. We need to keep an eye on what's going on with global trade, though, of course, such a big theme under the next this Trump administration. Let's talk about a slightly different angle on that is covered in our big take story this morning. The decade-long vessel-sharing partnership between Maersk and MSC is disbanding this week. Today's big take focuses on the world's shipping giants heading for a showdown, is the way it's worded, with analysts saying it could lead to price wars and customer poaching. Let's bring in Bloomberg's Brendan Murray, who leads the global trade coverage here at Bloomberg. A really fascinating big take story, and so we'll get into some of the detail here then, Brendan. So Maersk and MSC have had this sort of relationship, this cooperation agreement in place for a while. It hasn't always been happy, so it's not much of a surprise at this point that this deal comes to an end.
Exactly. They've been rivals and partners at the same time, and now this partnership is breaking up. To put this in perspective, both of these companies, if you combine them, they are like what Saudi Arabia is to OPEC. So they're huge. They're about a third of global container capacity. And they're going to basically go on separate, they're going after the same customers, essentially, with different strategies. MSC wants to make a bunch of stops on the east-west trade routes at different ports. Maersk is with its new ocean partner Hapag-Lloyd is going to make fewer stops, but feed those others with what the airline industry would call puddle jumpers, transshipping at shorter distances. So the idea that through what this alliance hopes to accomplish, they call it Gemini, will be on-time arrival. Something shipping has been trying to sort out for decades. About half of ships arrive on time.
And that's Maersk and Hapag-Lloyd. That's Gemini. That's
exactly.
the new one. Yeah.
Right.
Does shipping rates go up or down?
So shipping rates are going to depend in large part over the next 3 months on what happens in the Red Sea.
Yep.
If the Red Sea reopens to commercial vessels, then there's going to be a lot of capacity freed up. They're not going to go that long route anymore around southern Africa, and we will see shipping rates, spot rates come down quite significantly. Some folks say they could come down 20% to 50%, but they will. So it's in this environment that MSC and Maersk will be going at it for competing for market share.
Well, we're talking about the shipping rates. The last time we see those spikes has a lot to do with, of course, the conflict in the Red Sea. And I think we were just showing some images of that as well. Since Donald Trump has come into office, he's redesignated the Houthis as the terrorist organization. That opens up a lot of military funding for that region at a time when I felt like the Red Sea was almost somewhere where the U.S. military was starting to pull out of. How does this affect the shipping environment in that area?
Well, it will hopefully have something to do with the confidence of the container shipping lines. If they see the fact that that ships can be protected, that insurance rates can come down, then we should see traffic flow through there more regularly.
Just in terms of thinking about the Red Sea, I'm sure you guys talk to shippers all the time and trying to understand what the thinking is. What's their degree of confidence? The Gaza picture obviously seems to be improving. Is that something that they have faith will continue? Cody brings up Trump. Trump's obviously pushing pretty hard on Iran as well. The Houthis are backed by Iran. If there's a problem in Iran, does that show up with the Houthis again, maybe making shipping more difficult? It's a very complicated picture.
Exactly. Yeah. The statements that we've got from the container carriers is that they sound cautiously optimistic that they could start sailing through there again this year. But there's a big caveat there that, as you suggested, a ceasefire could end without anyone being able to predict the timing of it. If you have suddenly rerouted hundreds of ships back through there, that's going to cause huge congestion problems at destination ports. And so the shipping companies want to see 100% certainty that they're not going to get attacked by a rocket or a drone.
Great coverage, really enjoyable big take this morning. Brendan, thanks to you and the team. Bloomberg's Brendan Murray.
We'll stick with another geopolitical story we're keeping an eye on. 4 weeks before Germany's snap election, and the political temperature is rising, to say the least. Tens of thousands of people marched in German cities over the weekend in protest against the far-right AfD party. Meanwhile, Elon Musk, who has been a vocal supporter of the AfD, made a surprise virtual appearance at the party's campaign launch on Saturday. Let's get more on the story with Bloomberg's Oliver Crook joining us out of Berlin. Ollie, walk us through what Elon Musk said at the rally and how important it is to the party.
Yeah, Kriti, I mean, it sort of began with a lot of the sort of refrains that we've heard from Elon Musk over the last sort of few years, generally speaking, but also specifically towards the AfD, which is basically this idea that this sort of large government is what is sort of crushing Europe, where there's a lot of Brussels bashing, and really wanting to sort of embrace the more libertarian side of economic policy that the AfD is putting forward. And that is sort of the thing that he wanted to highlight at the beginning of the speech. Have a listen to him there.
I think you want more self-determination for Germany and for the countries in Europe, and less from Brussels. That's my opinion. I think there's too much bureaucracy from Brussels, too much control from sort of global elite. There should be more determination by individual countries. So I very much hope that the AfD does well, and that Alice Weidel does become chancellor. I think that would be very good for Germany.
And so that's sort of the standard Brussels bashing. Where things get a little bit more interesting is where he gets into sort of more of these sort of more political ideologies in there, basically saying that, you know, multiculturalism is a sort of a failure and that basically Germans should really retain more Germanness. And of course, some of these things, when they're taken all in aggregate, you know, some of these lines really stand out, particularly saying that basically there's frankly too much focus on past guilt, that they need to move beyond that children should not be guilty for the sins of their parents and their great-grandparents. Of course, this all sort of speaking in a veiled way about the sort of atrocities of the Second World War, coming at a time when you have had him just very recently speaking with Alice Weidel, when they go into these strange sort of digressions where they talk about Hitler basically being on the far left, not being a sort of far-right political figure, and all of these very strange things on a day where you saw, and which is why you see tens of thousands of people. They were just here over the weekend right by the Brandenburg Gate to protest what's going on here, and particularly, again, where you have Olaf Scholz in Poland right now to mark the anniversary of the liberation of Auschwitz. All of these things creating a lot of tension within the German political establishment, and frankly a German political establishment that doesn't really know how to deal with it. As far as how it's affecting the polls, more or less the same, 30% over at the CDU and the AfD following behind. But again, this is something that this establishment is not braced for. This is not something that German politics has had to deal with in the past.
Yes, yes, and all of those established parties have for some time operated this firewall against the far right then, Ollie, kept the AfD away from the levers of power. Now, though, the CDU, the centre-right, being accused by the left of cozying up to the AfD. What do you make of these allegations against Friedrich Merz and his immigration policies?
Yeah, so listen, there's a degree to which this, the AfD, even if they're not going to get into power here, and I don't think that that firewall will be broken this election cycle, but it has moved the entire political discussion within Germany, even with the SPD, on the issue of immigration further to the right. What the Merz is trying to do and the CDU is trying to do is now introduce legislation that goes much harder on immigration, and he basically floated this idea that he doesn't really care who gets behind it because they're sort of agnostic. They're really focused on the policy outcome, not who sort of backs it. Of course, this got a lot of backlash from the political establishment, and he moved back and he changed some of that legislation they're trying to propose in order to make it very, very unpalatable for the AfD to get behind it, because they basically got language in there that would criticize the AfD, you know, very, very directly. So this is something that they don't really know how to deal with, and there's a degree to which Alice Weidel has certainly been playing on this, that they don't feel that there is a choice for the right, because even if the CDU wins, it's going to have to go into coalition with the left.
Thanks, Ollie. Bloomberg's Oliver Crook there with the latest on German politics. So that's the German politics, which, of course, with the month ahead, we mustn't lose sight of. Here and now, the tech theme really writ large across these markets, Chrissy.
Yeah, so let's get a quick check on those, because NASDAQ futures are really feeling the pain here, down a whopping 3% when you look at the futures picture over in the States. U.S. futures right on their heels, down about 2% as well. If you look at the chips picture, though, that's where a lot of the kind of read-through is right here in Europe. We're going to get into some of those individual names, but you can see it across the European sector there. ASML down a whopping 8%. Some names as much as 12%, we'll call it there as well. And the industrial names as well, also taking a beating.
It's fascinating. So it's the data center names that are actually in some ways taking some of the biggest hits here. So Siemens Energy's in the SOX 600 has taken the biggest hit, but it's names like Munters Group, which does cooling for data centers. That is where the hit is coming through this morning. It's fascinating to see Schneider down by 7.3%.
Yeah.
So it's not just limited to tech this morning.
Yeah.
It's the ripple into the rest of the economy, the kind of the data center story, and then further. That is interesting.
Really fascinating to get clarity then on just how cheaply are the Chinese able to do this inference and the training and the inference, as Richard Windsor was saying, and we will have to wait a little while until we get that clarity. And then if it is cheaper, how much demand does that create? So it feels as if this is not the end of the story, even if the direction of travel right now is downwards.
It creates a really interesting correlation, though, all of a sudden with some of the commodity costs that are inputted into it and some of the tech space costs as well, which isn't a correlation that's really showed up yet in these markets.
Is electricity, if you do more of it, you use more electricity, but if it's cheaper to do it, then maybe use less electricity. The energy story absolutely front and centre. EFO data about to break. We'll get some analysis on that. That's next. This is Blue.
Slightly minutes, slightly better. You want to talk business? Meet me in the On-Board Lounge.
we see an incredible amount of potential benefit from this technology, right? Something that Dario and I talk about a lot, together with the company, with our co-founders, is just the potential for this technology to transform sectors like, healthcare, right? Or even science. I think some customers that have worked with us, Pfizer, the Dana-Farber Cancer Institute, right? The type of work that they're doing is truly amazing, and we're proud to be able to support businesses like that. I also think we have felt very strongly that there are some lessons to be learned from kind of prior, technological waves or innovation. And this is not that, we're so incredibly prescient. We've just had several decades now of time to kind of look back on things like social media and say, wow, there was a lot of good that came out of this, but there were also a lot of harms that were kind of caused by this technology. Whether or not you could have anticipated those in advance, hard to say, but I think we are trying to be the most responsible actors that we can be and think about what are the, potential externalities that could be caused kind of accidentally by this tech. And we really try and take a very broad approach to how we think about that. Of course, we don't have all the answers. We try to be humble, but we've tried very, very hard to sort of think about what are the areas where something kind of could go wrong.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
It's just because we're behind the scenes, but it's big, with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
Nasdaq futures and global tech stocks extend their losses on fears the AI race may no longer be America's to lose. Chinese upstart DeepSeek unveils a cost-effective model that runs on less advanced chips. While President Donald Trump announced sweeping tariffs on Colombia before abruptly pulling the threat after reaching a deal on the return of deported migrants. Plus, Bitcoin dips below 100,000 as traders take profits just days after President Trump's executive order for the crypto industry. So let's really delve into the markets. They tell the story of the AI supremacy in the U.S. being challenged by China and DeepSeek, as there's been more and more a concern over the weekend that they were doing it faster and cheaper. This is a picture overall for Nasdaq futures. You can see down 3%. We'll look at NVIDIA stock also pre-market, and a couple of really big things that we need to keep an eye on. European stocks down 0.7%. Look, cross asset, I'd watch out for dollar, but also Bitcoin. So a couple of things that have been happening over the weekend is also after Donald Trump last week, of course, putting Bitcoin at the start, or an executive order putting it really in the middle of his presidency. We're now seeing it below 100,000, 99,000 there for Bitcoin. The U.S. 10-year yield 4.5404, and of course, dollar above all because of the concern over trade. Now, Chinese AI startup DeepSeek, again, rocking global tech stocks, raising questions over America's technological dominance. So you can see it really playing across the board with B Semiconductor down 11%, ASM International, and then ASML, the big one here in Europe, down 8% as well. This, I guess, challenges NVIDIA. NVIDIA pre-market also down 8%, so we'll have a very big roundup of exactly what this means for the AI race being maybe more kickstarted. Remember, just a couple of days ago, we thought that China was far behind what the U.S. could do. Not so, according to reports over the weekend. We also look ahead to the German election. That's February 23rd. We speak to Clemens Fust of IFO, that German January IFO business conference coming in at 85.1. Pretty much in line with estimates. So Clemens Fust is coming on shortly. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone. Happy Monday and welcome to The Pulse. I'm Francine Lacqua here in London. Now, President Donald Trump has called for boosting U.S. dominance in AI with an executive order scrapping former President Joe Biden's approach to the emerging technology. However, Chinese AI startup DeepSeek has rocked global technology stocks, really raising questions over America's tech dominance. Buzz grew over the weekend about the company's latest AI model being cost-effective while running on reduced capability chips. Now, for more on all of this, let's bring in Bloomberg's EMEA News Director Ross Matheson, also with us to talk markets for the next 15 minutes. Emmanuel Ko, Head of European Equity Strategy at Barclays. So thank you both for joining us. Ross, what a way to get started on a Monday. I mean, this company, if you're in the know, you knew that this company had something to offer. You knew that this challenges the U.S. Can Donald Trump do anything about it?
Well, it's interesting, as you say, it feels like this company came out of nowhere, but in a way it shouldn't be that surprising that it has, because China's made very clear as part of its priorities with tech, it's really pushing self-sufficiency, and that's a really aggressive approach to AI, not just chips, but AI. And you can see that they've been working very hard on this. So in a way, this is not that surprising. But obviously, the reviews are very positive on it so far for this company, for its product, and putting into question the very high valuations of some of the tech companies around the world. And really a message to Donald Trump out of this is we are pushing hard on self-sufficiency. Whatever we're doing to realign global supply chains, to squeeze China out, to reroute some of our supply chains, China is still there and still being very busy and very much making this a national priority. So where does that leave Donald Trump? What does he do with AI companies in the US? How does he support them? I mean, he's already saying he's going to unshackle regulation and they should just go for it. But separately, what does that look like? So really quite a startling development when it comes to the US-China relationship in the tech space.
And I want to come to the markets in a second, but Roz, I feel like the news cycle will really be dominated by AI and Donald Trump on the geopolitics. So, we saw Donald Trump impose then rescind tariffs on Colombia because he got what he wanted. Is this going to be, are we going to see countries after country do the same?
Very much a reminder of how he's going to dominate. I mean, it was quite a dizzying turn of events over, 12 hours or so, where he said he was going to impose tariffs and sanctions, and then in a way he stepped back, sort of reversed on that as Colombia reversed. And the point of contention there was really not so much about sending people back, but the way they were being sent back, putting them in shackles and chains. And obviously they reached some kind of understanding on that. But just how quickly Donald Trump was ready to say, fine, I don't like what you're doing, so I'm going to put tariffs on. Here we go. And immediately. And maybe you can do that with Colombia, a country like Colombia, and you can negotiate your way out of it. But what happens if he tries to do that very quickly, almost on a whim in a way, because he doesn't like what another country has said or done? If he does that to Germany or France or Canada or Australia or the UK, how those countries might react, or China, could be very different. And so when you're doing stuff on the fly in a way which is really significant for the global, supply chain, for trade, for economies, for politics, and making those decisions very, very quickly. I mean, interesting to see he was willing to roll it back again very quickly. He does like to change his mind, but that's just going to keep everybody on their toes going forward.
Emmanuel, what does this mean all for the markets? Again, with your AI lens and technology lens, if you're in the know, that we knew that this would have put a race between China and the U.S., but stocks in Europe are getting slammed if you're tech-related today.
Indeed, but I think tech has been very central to the U.S. exceptionalism. And I think this moment had to happen, right? We know that at some point, new entrants, cheaper entrants will challenge the dominance of some of the big tech companies in the U.S. So I think this is a reality check. This is going to force investors to see tech not as a one-way trade anymore. I think it could end up a great buying opportunity because it's very early to say whether DeepSeek is going to be completely changing the model or not. We still don't know how much we need to power DeepSeek, etc. But I think for the time being, it gives a chance to the non-tech heavy equity market, and Europe is shining today. Europe is down a little compared to the US. So as long as big tech in the US is being challenged, I think we can see a little bit of catch-up for non-tech in heavy markets. And again, this is putting diversification back at the center of the investment process. People forgot about diversification, and people will think about having non-tech exposure as well in their portfolio.
But ASML is also getting slammed today, right? I know it's a smaller percentage than what the Magnificent Seven are for the U.S., but do you assume that all tech stocks now are priced to perfection, and so we could see a lot of volatility if they get challenged?
Yeah, I think the valuation gives very little cushion to the space, so you are left with earnings to do the heavy lifting. It's a very busy week for tech earnings. We've got ASML on Wednesday, SAP tomorrow, big tech in the US later this week. So I will not get carried away. There's a bit of sell first, think later type of market behavior today. Again, positioning is very heavy on the space, but I think the earnings story for AI is still not over in my view, right?
I mean, Europe will probably at some point have to confront Donald Trump with extra tariffs or very harsh words. Actually, it was incredible to see Donald Trump and Keir Starmer get along over the weekend, right, in this phone call since he entered the White House. How do you play that?
Well, we think Trump is kind of unpredictable, but transactional. He wants to use trade tariff leverage to bargain to get something from Europe, whether it's more buying of energy, LNG, more defense spending. So our assumption for this year is that Trumponomics won't be as aggressive as what Trump has been talking about. So the implementation will be softer than what has been threatened by Trump. But look, this is going to create volatility along the way. But I think week one was a little bit of relief with tariff not being implemented. And as we saw with Colombia yesterday, there is still some room for negotiation here.
Roz, I mean, we heard, the Gulf of Mexico now being called the Gulf of America. I know Elon Musk also tweeted about the channel, the channel, the sea, being called, I think, the George Washington Sea. I mean, is that just noise?
In a way it is. I mean, some of this is stuff that you can say you want to do, but can you actually do it? Or can you get tied up in a whole lot of red tape and legalities to get something done? I mean, it obviously plays very well to your voting base to be saying these things. I mean, someone was calling for Trump to already be chiseled into Mount Rushmore, I saw on the weekend. And again, the ongoing stuff about Greenland. I mean, we saw fresh noise on that. I mean, that actually is a very tricky relationship that Denmark's going to have to manage in this, and we can see that Trump's not going to let that one go because he's been told by somebody about how big it is and it's full of minerals and so on, and so he wants to see what the US can leverage out of that, to the point that man was just making about leverage with Trump. It's all about that. And so that is something that's very real. I mean, all jokes aside about Greenland and Trump and so on, he's definitely got an agenda there.
I mean, it doesn't matter to earnings, or does it? So we have fourth quarter earnings. Do we start seeing chief executives worrying about the geopolitics, or is this going to be a straight earnings season?
Look, I think there is no reward for CEOs to commit too much to a very strong guidance for this year. I think there's a lot of uncertainty, a lot to pay for. But look, I think the macro backdrop is pretty decent, right? For the time being, rates have gone up, but they're quite stable now. Trump seems to be a bit more willing to negotiate. We see some green shot in European data. There is clearly some animal spirit in the US. We see business expectation really picking up. So, of course, there is uncertainty. There is always uncertainty. But I think the private sector should still be pretty confident about their look, even though, maybe not all of them will commit to very strong guidance and forecast for this year.
Okay, thanks so much, Emmanuel. We'll come back to you, and we'll also talk a little bit more about your play on cyclicals. Emmanuel Coder from Barclays stays with us, and thank you to Bloomberg's EMEA News Director, Roz Matheson. As you've heard, plenty more to come, and this is Bloomberg.
An ever-changing landscape comes with challenges. From our vantage point, we see opportunities. As a top 10 real estate manager, we harness the power of a 360-degree perspective, delivering local insights and global expertise across public and private equity and debt. Our experienced team and vast network uncover compelling opportunities, giving our clients an exclusive advantage. Principal Asset Management, actively invested.
The sun rises brilliantly here. History was written here. Culture became glorious here. Eastern Anatolia, the timeless journey.
It's time to get active.
To enhance the core of your portfolio, join the active ETF revolution and boost your global equity allocation with our research-enhanced approach. Search JREG ETF.
When the sun is rising in the east, night falls in the west. Stay on the lookout because markets never sleep. FX Pro, trade like a pro.
It's always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the...
In case you missed it, from Bloomberg's coverage at Davos.
Could it spell disaster if there's fear in the markets? Or again, are there catalysts that you're watching out for?
It doesn't have to spell disaster, but what it probably will mean is that you have important trade-offs on the policy side, uncertainty and volatility in financial markets. But rates have gone up. We have $10 trillion in money market funds waiting to be deployed. So I think these things, create opportunities as well.
Nobody covers Davos like Bloomberg.
We talk a lot about tech today because of the surprise by DeepSeek in China really putting in question the supremacy of the U.S. in AI for much longer. And so maybe this is oversold, or not oversold, but maybe oversold. NVIDIA down 6.8%. So we'll have to see, of course, pre-market how that adjusts. Still with us, Emmanuel Ko, head of European equity strategy at Barclays. Emmanuel, it's very clear we're dominated by AI, and there's one show in town, and that's Donald Trump. Yeah, look, on equities, you were very clear that Europe could maybe benefit from some of the air taken out of the U.S. But what's your take on what Trump does in terms of tariffs, what it means for the Fed and inflation?
So we said at the beginning of the year there are three keywords for 2025, Trump, AI, and rates. So here we are. We are not disappointed so far. Look, I think our base case for Trump is that action will be softer than words. Whatever that means, it might take time to find out what he will be doing, but we don't see mass deportation. We see less tariff than what was planned initially, and we don't see new tax cuts, right? So Trump inherited a very high equity market. Rates are very high. Dollar is very high. So this U.S. exceptionalism is quite fragile, and I think there is very little margin for error for Trump, right? So if something goes wrong, he can easily take the market down or push up interest rate. So he told us last week in Davos he wants rates to go down. Well, a lot of his policies are inflationary. So I think it would have to be balanced by disinflationary policies, right, for example. So, look, I think it's very early to say, but our view that pragmatism will prevail, and ultimately U.S. exceptionalism cannot go too much at the expense of the rest of the world. And for Trump to really strengthen the U.S. economy, he will probably have to compromise on trade, tariff, or some of the global policies.
This is a big worry, right, that it's really winner takes all. And I've even heard, some calling the U.S. like a predator right now. So what that means for Europe. Where do you see deals in Europe?
Look, I think there is willingness for Europe to compromise, whether it's on more defense spending, more energy import from the US. I think this is going to force Europe to take care of itself. I think deregulation is going to be the new theme for this year. Obviously, Europe may have to follow the lead from the US. And look, no one will talk about the Draghi report. It came out 3 months ago, and I think the Draghi report will be back on the table. It's full of very interesting, pragmatic proposals, which are not necessarily very costly to implement. And I think Europe will need to come together to, fight against the US. And look, I think the German election in this regard could be a catalyst, because if you see a shift toward a bit more pro-growth, pro-reform change in Germany, I think that might open the door to a stronger European leadership, which can basically negotiate or bargain with Trump.
Is the money there? So the Draghi reports talk about competitive also in finding money. Do you see, money in companies but not being spent because of the questions they have?
Yeah, I think there is a lot of uncertainty forcing companies to focus on capital preservation and cost management. But look, like what we're seeing in banks, for example, we start to see M&A cross-border deals. So I think the private sector is in very good shape in Europe. Governments less so, but corporates have the ability to get stronger, right? So I think there is money in the private sector. There is money in Germany. Germany has fiscal capacities. They can spend more to grow their economy. And again, a lot of Draghi's proposals are not necessarily expensive to implement. Deregulation can be a very cost-effective way to boost your economy. It's going to take time, but I think we need to get there if you want to compete with the US.
We had, I guess, a glimpse of, for example, the resurgence of luxury stocks last week. That was due partly in China, but also millennial spending. I know you're also focused on cyclicals. You know, how much does it really depend on what sector you're at or what kind of a strong company you have?
Sure. I mean, we want to own cyclicality in this environment. You know, we think the U.S. will export strength to the global economy. We see some green shoots in Europe. Disinflation should help the consumer. So we like the consumer as a global team. We like the top-end consumer in the U.S., which is why we went back to luxury at the end of last year. We like the low-end consumer in Europe. It's very much a play on lower interest rate and disinflation. Look, I still believe some of the secular growth team in electrification tech are still there. But of course, you know, they are very consensus, very expensive. So you have to diversify away from that. That's why we like financials very much. We think financials are back in the game, whether it's insurance, diversified financials, banks.
European ones?
Yes, European ones, absolutely. You know, they benefit from a broad reflationary impulse, but I think the price to pay is not very high in Europe, and you have this corporate activity, self-help potential, whether it's buybacks or M&A, as a bit of an addition to the macro drivers behind it.
But, Emmanuel, is this basically taking advantage of like collateral benefits of what's happening in the U.S.? Because regulation here will, if not loosen, certainly, I guess, take a pause.
Look, that's obviously a call on that. I think a lot of banks in Europe might benefit from looser deregulation in the US. You know, the boom in capital market activity, M&A, but also I think, and again, coming back to this M&A team in Europe, banks, I think that's something that might open the door to more sector-friendly type of policy environment.
Mm-hmm. But what's the one thing that you worry about for this year?
Look, AI is very central to the structure of the market. We like the long-term growth aspect of the team, but the positioning and the valuation are quite expensive. And obviously, there is a lot of money packed in this part of the market, right? So if something goes wrong, if this is basically a bubble, then you can see a bit of a domino effect on market. That's why you need to be diversified. And I can see some merit being in Europe in particular, as a way to hedge this big tech dominance in the US. So that's something to watch. As I said, Trump, number 2, and rates, number 3. We've got the Fed meeting on Wednesday, ECB on Thursday. Look, our assumption that inflation will be down, so we are in the disinflation trade, but it's not linear, it's not smooth, and obviously rates are close to 5%, which might become an issue. If rates break above the 5% threshold, I think that's going to start to hit the equity market again, so something to watch.
Emmanuel, thank you so much. Emmanuel Koder, head of European equity strategy at Barclays. Now, coming up, German companies unexpectedly became more pessimistic at the start of the year. That's according to data from the IFO Institute. So we'll discuss all of this with Clement Fust, the IFO Institute president, next, and this is Bloomberg.
In 2015, I was not optimistic because nobody was working on the hard problems. The energy R&D budgets had gone down. The venture investing in climate had gone down. It was completely out of fashion. So I don't know what people were optimistic about then. The fact is, we built essentially from scratch, you know, with lots of supporters, a really mind-blowing level of innovation against emissions. And, you know, in the last 9 years, that's gone better than I would have expected. So only now could you even, you know, plausibly be optimistic about the path of emissions. And someone who said, hey, nobody's ever scaled things up like the speed that we knew to before, they're welcome to say, hey, I'll believe this when I see it. You know, in the meantime, some people who care about this issue are really out, you know, trying to think, do we need permitting reform? You know, do we find, what new ideas haven't we found yet? You know, how do we fund people with those new ideas? How do we get the costs of these things down? How do we collaborate on a global basis? So we're still not at the point where it's guaranteed or even that it'll be easy, but at least there's a theory of change.
What about artificial intelligence. Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
So German companies unexpectedly became more pessimistic at the start of the year, with the IFO's Institute Expectation Index falling to 84.2. So let's get straight to Clemens Fuß, the IFO Institute president. Mr. Fuß, as always, thank you so much for joining us. Look, in his first few days in office, Donald Trump has clearly again threatened Europe with tariffs. How bad could the consequences for Germany be?
The consequences could be very bad. Germany is an export-oriented economy. At the same time, currently exports are struggling. We see in today's IFO index that companies are reporting a further decline in incoming orders. So the German export industry, which used to be very competitive, is struggling currently. So tariffs on top of that would be very bad news indeed.
The German economy already shrank for a second consecutive year in 2024. How big is the risk of another contraction in 2025?
The risk is clearly there, and whether that happens will depend, among other things, on what Donald Trump does and how the Europeans react. We currently expect a small growth rate, a small amount of positive growth, but there's a lot of uncertainty around, so it's not clear that's happening. I think the overall picture is that the German economy is stagnating. So it's, the growth rates have been negative but very small. It's more of a stagnation, and of course it would be very important to get out of that. But with Trump increasing uncertainty, with political uncertainty in Germany due to the elections ahead, companies wait before they invest. So it will be another difficult year.
What should the top priorities be for the next government?
The top priority is to come up with an economic reform program that addresses some structural issues: energy prices, high taxes, regulation, bureaucracy. These things need to be addressed so that investors get more confidence and are more confident to invest in Germany. We need a consistent economic reform program. This is needed more than short-term stimulus.
Thank you so much for joining us. Clemens Fuß, president of the IFO Institute, with, of course, a lot going on looking ahead to that election in Germany, February 23rd. Now, coming up, global tech stocks extend losses as Chinese AI startup DeepSeek sparks fears over American dominance of the industry. That story's next, and this is Bloomberg.
On a $100,000 margin loan, Interactive Brokers charges just 5.83%. Do you know how much your broker charges? Fidelity and Schwab charge over 1.5 times as much. E-Trade is even higher. Move your account to Interactive Brokers and save at least $5,200, or much more if you're trading big bucks.
Because I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. NASDAQ futures and global tech stocks extend their losses on fears the AI race may no longer be America's to lose. Now, Chinese upstart DeepSeek unveils a cost-effective model that runs on less advanced chips. While President Donald Trump announced sweeping tariffs on Colombia before abruptly pulling the threat after reaching a deal on the return of deported migrants. Plus, Bitcoin dips below 100,000 as traders take profits just days after President Trump's executive order for the crypto industry. So back to our top story, and ASML shares have tanked along with global tech stocks. NVIDIA leading falls in U.S. pre-market. Now it comes amid concern that AI models from DeepSeek would disrupt U.S. technological leadership. Let's get more with Tom McKenzie, our Daybreak Europe anchor. So, Tom, this feels like a big deal because actually the people in the know knew that there was fierce competition from China and that they could come up with something like this, but it seems the market was oblivious.
Yeah, as our team at Bloomberg Intelligence have been saying, they've been looking into this company for 7 months. But they have come out with this new model. It is open source, so you can see all of their less than secret source in there. They are opening it up. It poses some really important questions, and that's what the markets are grappling with today. One question it doesn't pose is whether or not AI innovation is going to continue. That question has been answered. AI innovation will continue. It may even accelerate as a result of this. The questions it poses are, does NVIDIA still, with the market valuation that it has, still command that role as the chief supplier of these AI accelerators? Is it still that essential company? Because if DeepSeek is showing, and the data suggests it is, that it can build a model that has the same capabilities of OpenAI and Anthropic and DeepMind with chips that are older, using systems engineers, so they've built a model, very sophisticated, at their research lab, that has the same capabilities but uses cheaper and older chips, then what does that say about NVIDIA and its Blackwell AI accelerators, the most cutting-edge AI accelerators? Are those needed if you can build capabilities on cheaper legacy chips that seemingly DeepSeek has done? So that is a question it raises. And then again, it raises the question around the competitive challenge and the gap between the US and China. And that seems to be what the markets are grappling with right now. But the primacy is the focus on NVIDIA and the hyperscalers who have committed to spending around $80 billion. And only on Friday, Zuckerberg came out and said Meta is going to be ramping up its capex higher than analysts had expected.
Tom, thank you so much. Tom McKenzie there with the very latest on DeepSeek. Now, my next guest says AI was a massive driver of returns last year, but the real test going forward will be on productivity. Is AI helping businesses control costs, increase output, or both? Well, joining us now, Piers Hillier, Chief Investment Officer at Royal London Asset Management. Piers, thank you so much for joining us. It feels like the price to perfection, and some say, look, it's about time that the Magnificent Seven got a bit of a shaking from China, because it would also put Europe on a better footing. But where are you on AI right now?
Look, I think it's a really important breakthrough. If I think in our own company, we're using tools actually to enable us to make better decisions, to operate faster, but it's still, I think, very much at the sort of early stage in its application. So the challenge this morning, in some ways, is there a threat to the sort of the hegemony that everyone has assumed to date, driven by NVIDIA, etc. And look, you've got most of the major players reporting in the next week, which will give you a sense of where capex is, and that's been the real driver driver of NVIDIA. And fundamentally, that company, the underlying earnings have grown 11-fold, shares are up 7-fold. So it's not as though you've gone through sort of a big re-rating. And a lot of people say to me, are we at a sort of dot-com bubble type scenario? And there are scenarios of that. There are a couple of companies that have those kind of 100-plus earnings multiples. But when it comes back to looking at AI, our view is that, yes, everyone's now understood that it's going to be really important, but it's trying to understand, now that that's a sort of well-known and well-trodden path, and we'll continue to monitor growth there, and we still do play in that space. It's more just a question of how do we and you and others in industry use this? Is it effectively a cost-controlling function? Does it enable additional innovation? So one of the things we found really interesting talking to healthcare companies is actually the speed of throughput through phase 1, phase 2, phase 3 in terms of productivity. Those gains can be really, really significant in terms of the cost of drugs and drug delivery, as an example.
Yeah, and this is like about the protein folding, and for example, they do AlphaFold. There's a large language models, there's generative AI. Are we bundling everything together without? There will be winners and losers, and so unless you have a clear blueprint of what the future in AI looks like, it can get messy along the way.
Yeah, I use the analogy sort of if you go back to sort of 2000, and everyone just assumed that the use of the internet actually has not. I mean, yes, there've been the technology companies that have been winners of that, but actually the biggest winners are probably you and I in terms of how much more efficient our lives are. The telephone in your hand, in terms of the things you do with it and its productivity. The same scenario in some ways plays out with AI in terms of enabling you to make better, quicker, faster decisions. So to me, that's the iteration from here. Now, have I really seen something that's wows me? And I look at so you've got an iPhone, I've got one too, right? But if I look at sort of AI in the iPhone, is it a real breakthrough? I want to go and buy the iPhone 16. Is it that convincing to me? And my best barometer actually are my children, who are probably better users of these things. Yes, it's interesting for them at this stage, but is it a real breakthrough in terms of, do I see something them show me go, wow, that's a real transformational piece? No, I've not seen that in the consumer space yet. Where I am seeing it, though, is actually in business applications. So a lot of the classic sort of control functions, a lot of the sort of, where we've had task-based activity, those things being automated, and actually the security of record keeping as well has been another step forward. We've been using something around how do we evidence our ability to engage with companies, and how do we show that to clients? And we can look at across all of the asset classes, so how we interact with businesses, whether we rent a building to them, whether we're actually investing in their equity, or whether we lend money to them. We can see our interaction with that company. We can talk to clients about how we're engaging, how we're delivering better outcomes. And that's really quite fun when you get all of your team. It's our ops team, it's our distribution team, it's our front office investors coming together, and we use something called the hackathon to do this. And to me, we're still at that early foothills of innovation.
Piers, when you look at a lot of inflation concerns surrounding the second term of President Trump, I mean, is this really what it's all about? So what happens to dollar, what happens to tariffs, and whether the Fed can even cut this year?
Well, I think you make a really good point there, because actually the state of the US economy is pretty good. And I think this is the problem that Donald has, is the reality that actually, Powell has got a really fine balance to tread between an inflationary backdrop that's actually still strong, wage inflation. It's stronger here actually in the UK than it is in the US, but it's still pretty strong. Japan has got the same problem. Why are they raising rates? Because actually wage inflation is going up. That's the structural piece. Why we've talked about higher for longer in terms of interest rates has been this nervousness that we haven't really solved that problem yet. So I think we're much more of expectation that the Fed waits to see a little bit more about what happens. Now, on the tariff side of things, I think it's a classic thing that you put these threats in. It's the art of the negotiation. It brings you to the table. How can we strike a deal? Now, look, I mean, the Columbia one last night was nothing to do with tariffs.
Is it the blueprint?
But it is a sense of how do I bring you to the table to have a sensible conversation? And I think, look, what was an interesting change last week, having really been quite scathing of the Starmer government, actually a much more positive tone, and possibly being the first visit outside the United States to come to the UK, says something about who are the people we want to do business with. And I think, Keir Starmer and as you heard in Davos last week from Rachel Reeves, they want to try and evidence the UK being open for business. And I think that message to say, look, we'd like to do more trade with you. Actually, you've got a trade surplus with us, not the other way around. It's quite an important start.
It's an important start, but it must be very difficult to separate the noise from the fundamentals when you make business decisions, right, when you're investing in the market.
It is, but if anything, it probably is more likely links to that onshoring piece that we talked about for a long period of time. And I think there is still, even with the AI breakthrough in China today, there will be a degree of concern and nervousness behind behind that in terms of the monitoring that takes place. So the message around bringing it back to the United States remains. I think Europe has to lean in and think about how do we do more with the United States? How do we tackle this issue? And if Trump manages to convince Ukraine and Russia to come together in the way that he's achieved in the Middle East, Europe needs to make sure it's been part of that narrative. And that will really help us in terms of more trade with the United States, not less, the tariffs being smaller rather than larger.
What are you expecting dollar to do in this? And again, if you get dollar right, probably you get 95% of your investment strategy right.
I think that's right. I mean, the dollar's been pretty strong for a reason, because actually you don't really need to cut rates. I mean, we're teetering here in the UK as to whether we should cut or not. Europe clearly should be cutting, right? And so that's why you've had dollar strength. For me, the thing that changes away from dollar strength will be either because Japan has to keep raising rates, and so you get a degree of yen strength for the first time in 3 years, or actually economic growth starts to improve in other parts of the world, and we've not seen that yet.
Are you expecting that, or is it,
I think so.
The US takes all?
Yeah, I mean, yes, the wage inflation bit, it's always the last domino to fall, but it's been stubbornly strong. I mean, here in the UK, when we put through, minimum wage increase of over 6%, that feeds through to the lower levels, and then you tack on, national insurance increases. It does make it difficult for businesses to continue to invest when that inflationary backdrop is real.
Piers, what's your take on the UK? John Micklethwaite spoke to, of course, the business secretary and the chancellor in Davos. I mean, it was a market-moving interview, because we also got her thoughts on, non-DOMs and the fact that she's a bit more flexible maybe than people thought.
Look, I thought it was a great interview. It was probably, it was a standout from last week. It really, in terms of giving an insight, a total change of narrative. So ever since the budget, the consumer confidence data, business confidence data, all been negative because of the costs associated with the budget. There's steps that had to be taken. We always knew it's going to be painful in year one of a new government. It's the kind of thing you do, and then you ease the pain as you get close to the next election. But this is really important this week in terms of what they talk about growth. How do you show an evidence that the UK is open for business? And for us, as Royal London, a critical part for us is we help people save for the long term. Pension reform is really, really crucial. If we can increase the pension contribution rates, and incentivise investment into the UK, actually the UK economy could grow very quickly from here.
Okay, Piers, so good to speak to you. Thank you so much for coming on today. There was Piers Hillier, Chief Investment Officer at Royal London Asset Management. Coming up, Ryanair shares jump after a stronger than expected performance in the third quarter. We'll have plenty more on that next, and this is Bloomberg.
Them every morning.
So you keep up with them?
Oh, yes. Oh, yeah. There is no way, as an Army guy, there's no way I'm letting Navy smoke me. No way.
In case you missed it on Bloomberg Crypto.
We still see Bitcoin higher by about 40% since election day. So what is priced in, and where is there still room to run higher?
Now, everyone at the institution level is ready to adopt Bitcoin. It's not some random country which is saying, hey, let me have it on Treasury, or some mid-level funds trying to keep it. It's like every top banks around the world is now thinking about, okay, I need to get custody for it, I need to understand it, I need to own it, I need to provide it as a private wealth service to our clients. So it is just a whole run of things. So I feel like as we are looking towards 2025, it's definitely going to be the year of Bitcoin, not only as an asset value, storage value, but also I feel like technology-wise, so much projects are coming on top of Bitcoin that the whole decentralized financial industry has somewhere shifted into Bitcoin.
Don't miss Bloomberg Crypto live on Tuesdays.
Bringing you up to the minute economic news whenever and wherever it happens. I'm Jennifer Zabasanja in Luanda, Angola, and this is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders. Prudential's reputation as an insurance giant is rock solid, but it's not resting on tradition. CFO Janella Frias is playing a key role as the company resets its strategic priorities.
We've been on a journey to be higher growth, more nimble, and more capital efficient.
Watch Chief Future Officer Wednesday on Bloomberg. Wednesday, The Fed decides.
The Federal Reserve has gone from projecting 4 cuts in 2025 to just 2.
The road may be bumpier than folks thought.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
How divorced can you say you are from the global market? How much can you talk about American exceptionalism?
This is not a snooze fest. There's a lot going on here.
Could not agree more.
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
I've seen notable improvements on the ground. Things are definitely improving. The quality of the fuselage is coming in from Wichita Spirit, much improved. So I'd have a high level of confidence that the additional 9 aircraft that we need this side of the summer to get to 181 game changers and that to deliver those 206 million passengers will happen. I'd equally have a relatively high level of confidence that the remaining 29 aircraft in our 210 order book will be delivered ahead of next summer, the summer of 2026, which will enable us then to catch up a lot of the growth that we've lost this year to get to 215 million passengers. So I think Boeing have turned the corner. On the production side of things, they fixed their balance sheet last year. The management team are executing on the plan. Of course, we're disappointed that we're going to be left short aircraft again this summer, but we are operating into a capacity-constrained market. If you look at the Airbus operators, they're behind on their deliveries. They've got the issues with the Pratt & Whitney engines. So I think capacity is going to be hugely constrained this summer, our own included. We had hoped to carry 210 million passengers. We're now carrying 206. So that potentially, I think, will be a positive for fares into the summer going forward.
It's the second time that you've lowered the passenger growth target.
It is.
Is that it? Are we done?
Yeah, as I said, I'd have a high level of confidence that those aircraft will come in. I saw a number of them in the factory when I was there. The rest are either on rail carts or manufactured, the hulls in Spirit and Wichita. So they're good to go. We can physically see those 9 fuselages at this point in time. And then it's a case of getting, as I said, the remaining 29 in ahead of the summer of 2026.
Ahead of the summer of 2026, that's the additional 29. But you're getting 9 before the current summer season.
We get another 9 in with 172 game changers out of a fleet of 609 aircraft at the end of December. So we get another 9 aircraft in ahead of peak summer.
What is demand looking like?
Demand is very strong. It's robust at this point in time. People are still as keen as ever to get away, and we have 164 new routes out of 2,600 routes this summer, all booking well. Now it's too early to call where the final pricing will come out, but I'm pleased with what we're seeing so far.
Neil Sorahan there, Chief Financial Officer of Ryanair, speaking to Tom this morning. Now, the airline also revealed it's cutting its passenger growth target for a second time in 3 months amid Boeing delays. Well, meanwhile, the UK Chancellor Rachel Reeves has hinted she's preparing to greenlight a 3rd runway at Heathrow Airport despite cabinet splits. Well, Bloomberg's global lead, Benedict Camel, joins us now. Benny, thank you for joining us. So Ryanair's share price ticking higher this morning. Why is that?
Well, if you listen to what the CFO just said this morning to us, there's a lot of confidence coming from him. He said he's confident about the outlook. The demand is robust. People are still traveling. With regards to Boeing, that's their sole aircraft provider. He said they've turned the corner. He was recently up there on the West Coast in Seattle, checking out the progress, and he said, I'm liking what I'm seeing. The company has improved overall. So really a very positive picture coming out of the airline. Yes, they have cut their growth target for passengers, but it's not their fault. It's because they're not getting the aircraft. And if you turn that on its head, it means that the demand is there, the capacity isn't, and that means they can probably command higher prices. So again, investors are choosing to look at this as a glass half full kind of situation, and you see it in the stock price this morning.
Benny, remind us of the issues facing Boeing and their effect on airlines.
Well, Boeing's been through a very tough year, and they had the strike towards the end of the year. That really pretty much stopped production for the entire quarter. And Ryanair is they only buy Boeing aircraft. They don't have any Airbus, so they are really dependent on Boeing delivering these aircraft, and that didn't happen last year. It had been slow before even that strike, but that really exacerbated things. So as we heard this morning, they're not getting the number of aircraft they need. That means that they have to take some routes out of the network, they have to reallocate some aircraft, and as a result, they can't really serve all the routes that they wanted to. But again, the constraints are everywhere. It's not just Boeing, it's also with Airbus. They've had issues getting the aircraft to the customers. This remains a very hot market. People want to travel. People want to go on these short getaways. You're seeing it in the numbers, and the capacity isn't there. The aircraft aren't there. But for the airlines, that means that they can command higher prices, and that's why people are fairly upbeat about the stock price this morning.
Benny, meanwhile, UK Chancellor Rachel Reeves also hinted at building a third runway at Heathrow. What obstacles is she facing?
Well, this is a long-running saga, really, the Heathrow expansion. I mean, I've been covering this industry for more than a decade, and for all that time, there's been talk of a third runway. There's been talk of actually building a new airport elsewhere, you know, Boris Island it was called at some point. So, you know, I'll believe it when I see it. This is a complicated thing to do. You know, there's a lot of regulation, there's political opposition. This is a very densely populated area in South London. A lot of people don't want more aircraft noise overhead. So she will run into all sorts of issues here on the political front, on the financial front, on the actual planning front. This is not Istanbul or Dubai or Doha where you can sort of say, I want a new runway, and it happens very quickly. So these things take a lot of time. I thought it was interesting hearing from her in Davos last week where she sort of tried to put a brave face on it and say, we can't always say no. We need growth. This country needs growth. And airports are one key trajectory towards that kind of growth. So whether she gets her way, that's another matter. But certainly Heathrow is a crown jewel with everything that has to do with growth in the UK. And the UK will be keen to protect that.
Benny, thanks so much. Bloomberg's Benny Camel there on everything aviation. Now, returning to our top story this morning, Chinese AI startup DeepSeek is rocking global tech stocks and raising questions over America's technological dominance. You can see quite a lot of pressure intraday for ASML, for example, down 10%, but also ASM International down 14%. U.S. tech pre-market, NVIDIA not having a great day either, and so many questions about what this means for their more sophisticated chips. Longer term, NVIDIA pre-market down 9.7%. Coming up 4 weeks before Germany's snap election, and the political temperature is rising as tens of thousands marched across the country over the weekend to protest against the AfD. More on that next, and this is Bloomberg.
Bloomberg Invest is back. Join me, Shonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, I can't say that in Bloomberg.
Maybe moxie.
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're the asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. No, nobody does that. They say, let's talk about the team.
And so many more.
Do you need a clap?
No, anywhere.
We'll do it for fun.
Ready? Go.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 5 p.m. London time, right here on Bloomberg. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays at 3 p.m. Only on Bloomberg Television. Context changes everything.
Well, tens of thousands of people marched in German cities over the weekend in protest against the far-right AfD party. Meanwhile, Elon Musk, who has been a vocal supporter of the AfD, made a surprise virtual appearance at the party's campaign launch on Saturday. Now, for more on this, Bloomberg's Christoph Rauwald joins us. Christoph, good morning. So Elon Musk weighed in on the German elections again over the weekend. What were the reactions on the ground?
Yeah, good morning, Francine. This was actually, he made some remarks that again caused quite a few waves. As you mentioned, he addressed via video stream a party gathering of the AfD that was happening over the weekend in the eastern German city of Halle. He essentially reiterated his support for the AfD and for their chancellor candidate Alice Weidel, who is basically at the moment second in the polls behind the conservative leader Friedrich Merz. And the comments from Merz that actually ruffled some feathers were some comments that he made after he reiterating his support. And those basically made a point that German citizens or German people should maybe not worry so much about historic responsibility and what happened in the past in German history, but also essentially look more ahead. And that, of course, has been a highly controversial statement given that political leaders this week meet in Poland to commemorate the 80th anniversary or the ceremony to basically commemorate the liberation of the Nazi death camp in Auschwitz. So the timing and the context of these stories, of the comments that Elon Musk made in Eastern Germany were highly complicated, I would say.
Christoph, the German opposition leader Friedrich Merz has also caused headlines with proposals to fight illegal immigration. What are the main points?
Well, his main point is essentially that he wants to crack down much tougher than what has Germany done so far in terms of stopping illegal immigration into Germany. That includes one filing which he plans to push forward to a vote in Parliament this week, and it means that Germany would be able to send back sort of undocumented illegal immigrants, basically people who come to Germany and don't have the documents that shows that they have a right to stay in Germany, to send these people back. And that has also stoked the internal debate, the public discourse here, and also triggered quite a bit of a backlash from his political opponents, particularly Chancellor Olaf Scholz, who essentially criticized him for watering down the so-called firewall to the AfD.
Yeah. Christoph, thanks so much. As always, Christoph Rauwald there with the very latest on Germany. U.S. futures, especially NASDAQ, really lower on the back of DeepSeek from China. Up next, Bloomberg Brief, Danny Berger, Dat Manus Cranny in New York, and this is Bloomberg.
This market update is brought to you by Crypto.com. This market update is brought to you by Crypto.com.
Are you ready to connect to a perfect journey with Turkish Airlines? To feel welcomed and to feel refreshed? To discover unforgettable flavors? to reach new heights of happiness, to connect to a journey that's perfect because of you.
For the fourth consecutive year, Interactive Brokers is one of the fastest growing prime brokers and is now number 5 in Preqin's ranking of top prime brokers. Interactive Brokers serves both organizations and individual investors. To get better results, get a better platform. The best informed investors choose Interactive Brokers.
At JP Morgan, we're taking ETFs to the next level with active equity and fixed income strategies designed for today's dynamic markets. Invest with a leader in active management. Search JP Morgan Active ETFs.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
Good morning from our global headquarters in New York. I'm Manus Cranny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set that agenda.
A global risk sell-off. NASDAQ futures fall more than 3%. Bonds rally. The 2025 optimism for markets gets a challenge from tariffs and tech. U.S. tech exceptionalism threatened by Chinese AI startup DeepSeek with a cost-effective solution for AI. And a compromise agreed in the standoff between President Trump and Colombia on the threat of sweeping tariffs. Good morning, Manus.
Danny, good morning. The first grey swan of 2025 afflicting NVIDIA and the global tech market. We're now down 10%. $300 billion worth of market cap has been wiped off NVIDIA and counting. There's one word, DeepSeek. Go Google it. Chinese startup, more effective AI, cost effective, less power. Roll it over and have a look at the effect on equity markets. NASDAQ down 3.4%. We've now almost wiped out the gains of 2025. Last week, we talked about Goldilocks on steroids. Is that challenged? We've only seen drops of 3%, 3 times in 2024. Ground zero, as equities come under pressure in this grey swan moment, you go straight to the bond market. We are seeing yields fall. The question is the scale of the existential angst from the equity market as yields drop by 8 basis points, Danny, in the bond market.
Yeah, if you thought you were going to get a quiet start to what otherwise will be a busy week, you've been sorely mistaken this morning.
Mistaken.
There are also some other stocks, a lot of stocks that have been selling off with the DeepSeek concern that's been coming through. ASML is one of them. Let's just get the pre-market check on that, Manus. Those shares are off 10.7%.
Other stocks, I mean, the question is this about the moat around US exceptionalism of NVIDIA and therefore the moat around all the other majors in the tech sector. Broadcom also falling again on these AI concerns as a result of, you got it, DeepSeek.
And just all those big spenders also falling, Microsoft being one of them. Any of the ones that have been spending a lot of AI falling, Microsoft off nearly 5% in the pre-market session.
Also coming up, we'll catch up with Ella Hodja of Newton Investment Management. Amy Wu-Silverman, if you want to understand volatility, join in at 5:30. RBC Capital Markets 101. That's a 101 for vol.
One of my favorite things that anyone has written about this is James Van Gielen of Citrini Research saying picks and shovels to dig your own grave.
Exactly.
That's what we're seeing, the questioning of the picks and shovels trade, which had been so popular, not even just that, but of tech in general, of the heavy valuations. We had said that valuations are high. Once they come off, it will be painful. Is this the thing? Mark Andreessen calling it the Sputnik moment for AI. Someone else saying that this is Silicon Valley Bank for AI. It is finally, as you put it, a gray swan that's going to be forcing a sell-off.
The question is, does it metastasize into something much more aggressive and a competitive threat to the landscape of US? That moat, everybody talks about the moat around NVIDIA. That has had a fissure. The question is whether that fissure turns into the moment of a dike that actually blows apart. You just think of, I love what one of the notes came through, said, this is the Texas Hold'em moment for US tech. In other words, throwing everything at the wall, from Stargate announcement to Meta, doubling its AI expenditure last week. Well, if you suddenly got a competitor that can produce at much less cost, and it's open source, and this is what you and I talked about this morning. So there's a whole host of issues that can build the story for DeepSeek.
Well, this is the thing. I think today is just kind of sell everything, sell all tech as you try to understand this. But as we try to understand this, are things going to merge that say maybe this isn't bad news for Meta? Maybe this isn't bad news for these companies that have been plowing so much money into capital expenditures? This is cheaper. This is more efficient. Hey, maybe this changes from, again, not picks and shovel anymore, but to the commodification of AI, that other companies now have access to AI. And if you can figure out how to implement it and use it cheaply because of DeepSeek, maybe it's a boon to your bottom line.
Okay, well, let's talk about it a little bit more. It is the top story. It is the Chinese AI startup. If you want to go off and Google it now, if you don't know about them, DeepSeek is the name. It's rocking global technology markets, raising questions over that American dominance, the moat. The buzz grew over the weekend that the company's latest AI model poses a threat to the US industry, as we've been saying, to NVIDIA. Tom McKenzie is tracking this story. So, Tom, I put it out there that this is a gray swan moment. This story has been bubbling. Just put in context, what is DeepSeek offering to the world? Let's just put a framework around it.
I mean, look, I think the grey swan is a really nice framing of this, and you have both touched on some key points around this story. This is a company, it's a model, it's a research lab set up in the early 2020s by a hedge fund guy, done very well. He's built AI into his hedge fund for a long time down in Hangzhou, and then he used some of that funding to build out a research lab. And they dropped this latest model on the 20th of January. And to your point, it's about cost and it's about efficiency and about capabilities. And they claim that they spent just about $6 million, and they did it in 2 months. 2 months, $6 million. And that, of course, compares to the $80 billion number that we're hearing from in terms of Microsoft, in terms of how they plan to spend around CapEx to build on some of their models around AI. So it's the cost, it's the efficiency, and it's the capabilities. And on many metrics, DeepSeek is meeting, if not surpassing, the metrics of OpenAI, Anthropic, and Meta's Llama models as well. Does the innovation around AI stop here? No, it could well be accelerated, to Danny's point, but it does raise serious questions about the supply chain supporting that AI innovation.
Well, it certainly is this idea, Tom, that you're working under constraints, and something about that is the mother of all invention, that you do this with much less money. Tom, there's reporting from the information over the weekend that Meta has set up at least 4 war rooms to try to analyze what is going on. What are the consequences? You could kind of understand for NVIDIA that maybe this is bad, not as many people need their most expensive chips, but what about for tech as a whole? What about the Mag 7?
Well, we already know that Silicon Valley and many builders, app developers and product developers out there are using and have been using DeepSeek's models. It is being dispersed through the ecosystem in Silicon Valley and more broadly as well. So you could get apps and systems and services produced more quickly, more efficiently, and that could be beneficiary, of course, a benefit to those who are buying them and producing them. But it does pose a key question around whether or not that demand, and this comes back to the valuation story for NVIDIA, trading at 33 times, whether or not that demand for the high-end GPUs, the Blackwells, is going to be there if you can build models with these kind of capabilities on more quote-unquote legacy chips. As you say, China has been forced with its back to the wall and has had to innovate. They've brought on these systems engineers at DeepSeek, and they have managed to build out a system, it seems, if you trust the data and what is out there on the open source building blocks of this model, that they have managed to do that with chips that are far less sophisticated than the AI accelerated GPUs that NVIDIA sells.
It's just a great example of when your back is against the wall, you really do, you know, the mother of all invention is oppression. What are the geopolitical issues here? We've seen the eruption over TikTok, but the difference, as Danny and I were chatting about this morning when we came in, this is open source. This is a structurally different product. For the world, relative to perhaps the national security interests around TikTok.
Yeah, what does it mean around the spend for the lithography machines that ASML makes? And that's what's being questioned in the markets right now. What does it mean for the supply of GPUs from NVIDIA? What does it mean about the energy spend as well with those companies like Microsoft who are spending on nuclear power going forward years and have made those commitments already? Those are the question marks. And then on the geopolitics, we saw how the Biden administration responded when Bloomberg discovered through its own reporting that Huawei had developed a very sophisticated chip using SMIC and equipment in mainland China. They responded with further restrictions. Does the Trump administration to look to that as the playbook? Are we looking at further restrictions to try and clamp off even more of this technology? How far and how broad does the Trump administration go in response to this?
Tom, I think your first point is such a good one. Everyone's been clamoring on about how the trades du jour are picks and shovels, infrastructure, data centers. Does all of that now get questioned? Tom McKenzie, excellent reporting. Thank you so much for joining us. We'll catch up with you later on the show as well. Tom McKenzie there of Bloomberg. Okay, let's get you now some other top stories that are trending on the terminal this morning. China's economic activity surprisingly faltered at the start of the year. Factory activity shrank in January. Chinese industrial firms also reported the third straight quarter of declining profits. That underscored the risk that the world's #2 economy might be stalling again.
Bitcoin dipping below $100,000 on Friday, President Trump ordered the creation of a working group to advise the White House on crypto policy. A long-awaited executive action, the order stopped short of confirming that the U.S. would establish a Bitcoin reserve, something Trump had vowed to do on the campaign trail.
And Elon Musk's Department of Government Efficiency is now officially online. A government job site to recruit full-time software engineers and other tech staffers is up. Applicants must be U.S. citizens, and apart from a resume and a commitment to working in the office, they're asked to list up to 3 items that, quote, show exceptional ability.
Coming up in the show, Ella Hodger of Newton Investment Management on why we may not find the U.S. is in as strong a position as it was last year.
Business are on Bloomberg.
We are in the midst of the largest wealth transfer in history right at this very moment. So $100 trillion of wealth is going to next-gen and millennial clients over the next decade. So that has some pretty significant implications. But in addition to that, women are controlling more and more global wealth. Today, they control 1/3 of global wealth, but in the next 5 years, $30 trillion is going to pass in the hands of women, and they're going to control over 50% of the global wealth market out there today. Women care deeply about investing with purpose, investing to make an impact, doing good with their investments. So you're going to see some significant opportunities for us as we lean in and have been leaning in to capturing more of the female wallet globally.
Nobody covers business like Bloomberg. Context changes everything. Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. Prudential's reputation as an insurance giant is rock solid, but it's not resting on tradition. CFO Janella Frias is playing a key role as the company resets its strategic priorities.
We've been on a journey to be higher growth, more nimble, and more capital efficient.
Watch Chief Future Officer Wednesday on Bloomberg.
It's your Bloomberg Brief. Danny Berger and Manish Krani in New York as tech gets a big shake from over the weekend. People analyzing the new open source model coming from a Chinese hedge fund, DeepSeek. Let's take a look at tech this morning, Manish. NVIDIA selling off quite dramatically, some 10% it's down. This also calls into question all of the other tech players too. The information reporting that Meta has set up 4 war rooms to dissect the model and what insights it can apply to AI. Is this the moat being questioned? Is this the amount of tech capex being questioned? Is it essentially all the popular bets we've had of the 2 past years being questioned?
Well, it's going to be a heck of a week because you've got multiple, mega tech reporting this week. This is a question there around the capex, Danny. If DeepSeek can deliver on the AI front a robust and faster ChatGPT model, for example, that's out there at the moment at a cheaper price, what's it going to do to the capex? You got $224 billion spent last year. You're looking at something like, $280 billion this year. Meta just upped their capex by 50%. So this, again, challenges all the precedents that we have in capex energy capacity for this space.
And again, they spent $6 million building this model. I mean, they could have spent more hiring engineers and scientists for all we know, but $6 million versus the many, many billions that you had to have poured in to build things like ChatGPT. Bonds also, as we saw, they are rallying this morning. It's that kind of textbook risk off where you're finally buying bonds again. Yields down by nearly 9 basis points for your 10-year yield. Ella Hoja writing this morning, bonds offer value, especially versus equities, but could be under further pressure here. We do not have the all clear yet to own max duration. Joining us now is Ella. She is the head of fixed income of Newton Investment Management. Ella, do bonds finally work again? Just evidenced by what's happening today with all of risk selling off and people buying bonds. Are we back to some semblance of normal?
Well, I think for the prior 2 Januaries, we did say, I think in financial markets, I guess the mantra was bonds are back, and you haven't heard that this year, I guess. So probably you should start thinking maybe they are back indeed. But look, I think in terms of value, when you look at yields, and certainly when we're getting close to these 5% levels, there's some value to be had. Having said that, as you said in my quote earlier, there are still some risks to clear, and I would say they're probably more on the fiscal side. We need to hear more from the new administration in the U.S. in terms of what's coming fiscally, particularly on the tax side and on the spending side, right? And that's probably the biggest risk that bond markets are concerned about, as well as tariffs, of course.
Ella, good morning to you. We're describing this tech event as being the first sort of major gray swan, which the markets are trying to grapple with. If I was to say to you, the bigger gray swan for the bond market is the deportation prospect, taking us back to a 2020 level, 3 million people would be taken out of this economy. It's a supply side risk rather than the tariff risk, which is the bigger gray swan.
It's possible, yes. That's why I say fiscal is probably most imperative for bonds. I think markets will obviously pay attention to the Fed, but that's less of a risk right now because we've repriced. But when it comes to this balance between inflation, certainly, and potentially bigger spending, that's why I say the risk is not all clear for bonds here. Of course, what's happened over the course of the last week with tech matters because there's a high level of concentration in equity markets on certain stocks, as we know, unprecedented in nature. So that could pose some market-driven risk, and that would support bonds for now. But as far as policy goes, to have a bit more conviction over the next 2 quarters, I think you need to clear a little bit more on the policy side. We need some more clarity.
But Ella, this is the thing. It has been information overload over the past week. I mean, forget this week where you have this tech news, you have tech earnings, you have an ECB and a Fed decision. Last week, just on the fiscal policy side, on its own, it was a fire hose coming from Donald Trump of basically touching every single asset class from oil to where he thinks interest rates should be. How do you pick and choose what's important, what's noise, and what's actually tradable information when you just have such a vast quantity of things flying at you?
Absolutely. I think this is where the value framework comes in, right? So that's, when you say there's value in rates, for example, there's value in certain currency pairs. I think this is the important crux, and diversifying some of your bets. You can't place all the bets, for example, as the market had coming into this year, that everything's going to be tickety-boo and growth will fly and everything else, all other equities and bond markets are dire. So I think you need to have a bit of a contrarian mindset. That's probably the first tip that comes to mind. And second, have a deep value framework, because that will allow you to not get into trouble, at least not into the major trouble spots. And so that's kind of how we're approaching it. On your last point, how do you simplify it? Just go back to the basics, the 80-20 rule. Like, so if you just take what's happened with tech news, right? In that vector, what's the thing that matters the most is that we were priced for perfection. So we didn't know where the news was going to come from. It happens to come from DeepSeek. Obviously has implications for risk and for assets. And so take the simplest explanation to that. It's high level of concentration. So will some people be forced to sell? Yes. So take that explanation as your basis, I guess.
Well, okay, we're having this sort of massive reevaluation in equity markets, the biggest drop since 2022 on the NASDAQ. This, to me, presents, you're going to hear the moment, buy the dip in these equity markets. But what does it mean for the broader credit bond situation? Because the growth story here in the United States of America is still very, very strong. So on these disruptive moments, what are the opportunities?
Well, we would probably say that credit spreads remain very tight. I don't think that's revolutionary. I think the market knows that. It's entered this year with that view. So nothing new there. But I guess credit is the glue that holds equities together. So certainly worth watching. If credit spreads start to widen on these concerns, I'm not predicting that. We're certainly not betting in any major way to that effect. But I think there is a risk here of some correlation to that effect. Then clearly it can feed through into equity markets. But the biggest risk has been from rates pricing higher. And that's one of the ways we saw potentially rates markets feed into broad equity weakness. But it seems like we might get the reverse for now. It might be equities that feed into credit and certainly give some support to core bonds. You have to be open to that scenario right now.
Okay, Ella, thank you very much. Ella Hodja there of Newton Investment Management on Bloomberg this Monday morning, setting the agenda. Context Matters from New York.
It's time to get active. To enhance the core of your portfolio, join the active ETF revolution and boost your global equity allocation with our research-enhanced approach. Search JREG ETF.
Create your own destiny in a world of chaos. Seize opportunities on thousands of instruments. Trade like a pro.
DraftKings hit a milestone in the second quarter of 2024. For the first time as a public company, it turned a profit.
Is this a new era for DraftKings?
There's an inflection from when you're cash flow negative and you're operating off of equity raises from the past to when you're self-funded and you're cash flow positive and able to control your destiny a lot more.
You've had your first quarters of profitability now. Does that take pressure off? Does it increase pressure?
I think it increases pressure. I mean, once you start making profits, people expect you to make more, and all of a sudden you're valued on a multiple of those profits as opposed to the theoretical what could be. So very important, I think.
When you're cash flow negative, you've sold a vision of what the company should be working on, and you're very focused on working on that and delivering against that. When you've pivoted to profitability, the world of what you can work on is a little bit open, and there's a lot of different ideas, and it requires more focus than ever to make sure that you are prioritizing on the most important things that are going to deliver the most value.
DraftKings' solid standing in a booming sector gives them the luxury to play the long game. They're not under pressure to cut costs.
When you have really strong revenue growth, you don't need that. If you look at where we are today and where we want to be and where we believe we will be, the vast majority of the incremental EBITDA is not coming from any cost reduction. It's coming from increased revenue.
We don't feel like we need to cut costs because we're growing our revenue so much. We want to grow our revenue into our existing cost structure. And there's no need to reduce the cost as long as we're being efficient with what we allow our cost growth to look like.
So a number of people, I think from Homeland Security and or the CIA or NSA, have gone to Capitol Hill and said that TikTok is a danger to our national security. But the public hasn't been given that much detailed information about what the threat is. How much of a threat to our national security is TikTok?
The
People's Republic of China acts adversely to the interests of the United States in different ways. One of those ways is through the dissemination of disinformation, the intentional communication of false statements. And TikTok is an extraordinary avenue through which to disseminate disinformation to millions and millions of people.
It is a rupture in global tech that we're monitoring this morning. Is it a Silicon Valley Bank moment, whereas in one area the market experiences pain, everywhere else feels it too? Let's check out the yen this morning, strengthening versus the dollar by more than 1.25%, Manus. It's again that connection between carry and tech we're seeing play out.
Yeah, the question is, how much more does it explode? It's nothing like the volatility moment that we had last August when the carry trade was taken out, but it certainly is going to add to that momentum in strengthening yen overall.
Let's look at some of the other front page news that we are tracking this morning away from tech. First off on the Wall Street Journal, leading with activist investor Ancora Holding. They're preparing to wage a proxy battle at U.S. Steel. They intend to rally shareholders around a plan to oust the CEO and not salvage the Nippon merger. The firm isn't interested in pursuing a sale of U.S. Steel to another party.
Next up, New York Times leads with the Philadelphia Eagles and the Kansas City Chiefs are heading to the Super Bowl. Why do I get the sport? Why do I get the sports stories? Go to the Super Bowl. It was a big weekend over the weekend for sport. It is the third consecutive Super Bowl for the Chiefs, and it'll be the second time that the two have faced each other in the big game in a rematch of Super Bowl.
But you already knew all that.
I knew all of that. All I know is Kelsey's going out with Taylor Swift, and that's really all we got to know about buying the merch.
That's all you need to know.
That's really all you need to know. That's just downgraded football aggressively.
That's okay. They're not watching yet this morning. Yeah, okay, they're still out celebrating. And on the Bloomberg, President Trump announcing sweeping tariffs on Colombia before abruptly pulling the threat after reaching a deal on the return of deported migrants. The White House claimed victory late on Sunday, saying Colombia had agreed to all of President Trump's terms without delay. For more on this story, we are joined by EMEA News Director Roz Matheson. Roz, it was a blink and you miss it moment on tariffs. Is this the new blueprint for tariffs in the Trump administration?
Well, certainly it tells us a couple of things. For starters, it tells us that Trump indeed will use tariffs as a political tool for leverage with other countries, not an economic-only tool, but very much for political purposes. And he did this very quickly in response to Colombia saying we're not going to let these military planes carrying deportees land in our country. In a flash, Trump said, fine, I'll put tariffs on you. And we can see that he's going to be very reactive then on the tariffs front. But equally, the third part of this is that he's willing to negotiate. And as quickly as he was going to put them on, he said, fine, I'll take them off again. He is leaving some restrictions on Colombia. Obviously, he wants to see how this plays out. But he is willing to use tariffs very quickly to play hardball and then see what he can get in response. So very much tariffs are going to be that game of leverage, whether it be Colombia or be it with bigger economies, again, like China, Canada, and obviously countries in Europe.
I think it depends on the size of the trade that you have with the country, and that allows you to immediately capitulate and turn around. The raids have started, the very poignant raids on immigration in Chicago. Tell us a little bit more about the momentum there.
Well, obviously, we saw these kind of the first official raids under the Trump administration. And it's not as though these raids weren't already happening. The difference is they were done across very much a multi-agency approach this time and very, very publicly, televised in a way. So very much the Trump administration wanting to demonstrate that it's doing something, sweeping up these people in quite dramatic circumstances. And again, the question is, where does this begin and where is this going to end? You can see cities like Chicago, some states saying, hang on, we're going to try and put up as many defensive measures against this as possible. We're not going to work very directly with ICE, as the immigration agency is known on this. We're not going to cooperate. You want to do this, you're on your own. So it's going to be very, very tense going forward.
Roz, thank you very much. Roz Matheson there on the latest political moves over the weekend. Amy Wu-Silverman joins us from RBC Capital Markets. We'll discuss volatility as NVIDIA is down over 10.5%. Are you ready for this volatility in equity markets?
Bloomberg Invest is back. Join me, Shonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
Bloomberg brings you breaking news 24 hours a day, powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything. The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now. We have Take-Two numbers.
Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
From our global headquarters in New York, welcome to Bloomberg Brief. Danny Berger and Manish Krani here. Let's set your agenda.
A global risk sell-off. NASDAQ futures fall more than 3%. Bonds rally. The 2025 optimism for markets is challenged from tariffs and tech. That U.S. tech exceptionalism threatened by the Chinese AI startup DeepSeek with a cost-effective solution for AI. A compromise agreed in the standoff between President Trump and Colombia on the threat of sweeping tariffs. Danny, good morning. This is what you call a volatility shock in the making.
It's a margin call kind of day, and this might be what's causing it. NVIDIA down more or nearly 11.33%. Is this the moment? Everyone had said that tech was overvalued. It was looking bubbly, but without anything to disrupt it, what would pop it? Is this the event of the U.S. moat around chips and tech being questioned? Is the picks and shovel trade now dead? Is the data center trade now dead? You see across markets, NASDAQ futures now off almost 4%. We've had roughly 200,000 NASDAQ 100 futures contracts change hands by before 5 a.m. That is 4 times more than the 30-day average for this time of day. By the way, if NVIDIA ends the day down more than 8%, it will be the biggest erasure in market cap in history of any individual stock. S&P futures down 2.33%, and maybe the havens are acting as they should. Bonds are rallying this morning. They are up a decent chunk of basis points, nearly 10 when it comes to the U.S. 10-year yield. Other assets like the yen also rallying this morning. So, man, as this goes beyond tech at this moment, it is having worldwide and global market repercussions.
And I think where you are, this is the kind of VAR shock that nobody was pricing for. We were pricing for a Goldilocks scenario. So what you have are margin calls, then you have a self-fulfilling prophecy, which is you've got to sell perhaps your most treasured assets to meet your margin calls. And I think, Danny, as you said said earlier, you think about this company, DeepSeek, they spent, what, $6 million relative to OpenAI. They spent $5 billion. Now, the question is, what is the product and can it really stack up on every front, on power, on capacity, and in terms of a real challenge to OpenAI and to Microsoft and to NVIDIA?
Citrini Research puts this really well, that this necessarily has to question all of the companies that got their profit from the immense amount of CapEx that was being spent on AI. But on the other hand, I think might be more interesting, once the dust settles of this crazy sell-off, what benefits from this? Again, they call this the commodification of AI. All of a sudden, it becomes much easier and much cheaper for basically every company to start to implement AI, and maybe the winners will be people who can do that in really interesting and productive ways.
I think Jordan Rochester summed it up beautifully for me. And this week is a huge reporting week, and some of the biggest companies are going to have to go on calls. This was a Texas Hold'em moment for the chip industry. They are, you know, you just think Stargate announcing $500 billion, Meta upping their CapEx last week. The calls that they were going to have this week are, what are you going to do, and how are you going to beat and stand up to DeepSeek?
And they usually unleash their 2025 guidance in these earning calls. I mean, is all of that upended?
Indeed. Let's get a little bit more on the story. We've got Tom McKenzie standing by to answer some of these questions. Tom, good morning. Good to see you. I've called it a grey swan moment for global markets and for technology. Create the framework. What is DeepSeek? What do they do? And what are they going to offer that's so much more competitive relative to the US technology sector?
Yeah, wouldn't you love to hear from Jensen Huang at this point, or indeed the CEO of DeepSeek? Look, he's a former hedge fund boss. He still oversees a hedge fund in Guangzhou, in the innovative capital of China, and in 2023 started this research lab. They launched January the 20th. That's when the new model came through, the R1 from DeepSeek. And it was picked up by experts and by tech bros and others in Silicon Valley. They started to build on it. They started to stress test it. You heard from Andreessen Horowitz saying this is a potential Sputnik moment. He released that comment on the 26th. So already Silicon Valley, their heads were being turned by this. It was trained in about 2 months, that's the claim. Cost about $6 million to train it. That compares, as you say, to OpenAI's spend on training their models, but also Meta spent about $60 to $70 million training their most recent model. So that compares 6 million to 60 to 70 million. The capabilities of the model, they match, apparently, on many metrics, match those capabilities of OpenAI, Anthropic, and Meta. It's the capabilities, it's the efficiency, and it's the pricing. To your point, Danny, around pricing, the costs are about on some metrics, about 5% of the pricing that OpenAI charges. And that's already led in the domestic Chinese market to price cutting, price wars from the model makers. Tencent, Alibaba, Baidu, they've all had to cut prices already on the back of the models that come through from DeepSeek. So if you're building the AI products, you're going to be under pressure. If you're buying them, maybe it's good news.
I was going to ask you exactly about that, Tom, because to Manas's point, we're going to have Meta, Microsoft, Apple, and Tesla, for what it's worth, reporting this week, where they're all going to be asked to outlay their 2025 outlooks. What does it mean for these players who've been spending so much on CapEx? We know from the information that Meta has already developed 4 different war rooms where people just have their heads down analyzing what this could mean for their Llama model. Is it a good thing or a bad thing for them?
Well, you would have thought it's a challenge for the likes of Meta, maybe longer term in terms of the cost of incorporating AI into their own business around advertising. That will prove a benefit. For the near term, it does raise a huge question over that commitment to spend $65 billion this year from Meta, $80 billion from Microsoft. Can they get the systems engineers that DeepSeek have to create the kind of efficiencies? Look, JP Morgan have raised the question, did DeepSeek lean on the 50,000 or so Hopper GPUs that the hedge fund that the boss, the owner of DeepSeek, also has? That remains a question mark. Some of the data is being scrutinized as well. But if we take this at face value, then it certainly raises a pivotal question around the need to spend on the most sophisticated, most expensive GPUs, the likes of the Blackwell from NVIDIA, and what it means for those CapEx projects, also the energy commitment as well. And we know that these companies are partnering with energy providers and spending a huge amount on that as well to ensure that they have the energy flow into the data centers. But if you can create models that are this capable as their US competitors, but a fraction of the price and a fraction of the energy use and a fraction of the GPU use, then that raises major questions before we even get onto the geopolitics of this.
Tom, thank you very much. Tom McKenzie there, closing off with the geopolitics, critically important. Let's talk about volatility. This is the performance in the VIX over the past year. Let's see how it stretches out today. Amy Wu-Silverman is the head of derivatives strategy over at RBC. Amy, I'm looking at the chart. This is the carry trade was the last most exuberant moment in volatility and the December Fed meeting. When you walk in this morning, you thought you were going to have a paddling duck kind of market for the year. Here we are. Goldilocks is challenged. You're talking to clients. What are you saying to them about volatility and how to take advantage of this moment or how to protect yourself? Where do you come down on the scales of risk?
Good morning. Well, it's possible this paddling duck might have just paddled over a waterfall we're about to see. I think we're a little early. I think there's going to be a lot of digestion today, but there's no question that this could be a potential game changer. Because one thing we've talked about this entire time is, you know, even as investors are wishing for breadth widening trades this year, tech has to be okay simply because it's such a large weight in the market. And if tech is not okay, the entire market goes. That's what we're seeing today. You know, I'd certainly expect a spike up in VIX, and I'd certainly expect a correlation across the board to rise. And obviously, correlation is a massive component into volatility across all asset classes.
Amy, so many people had kind of called for a moment like this. Not exactly. I think Manus has been spot on when he's called this a gray swan. But all of those calls out there saying tech looks bubbly, valuations are too high. And the retort to that would be, well, American tech has a moat around it. And you can continue to navigate and get those higher valuations because of that very fact. Amy, if that's being called into question, is this the moment that whether or not we're in a bubble can, again, be questioned, but something is popping here, and we could see a really ugly sell-off continue for multiple days?
Yeah, totally. And I'd say, you know, for a lot of folks, if you actually look back in time, I feel a little empathy. I kind of get where they're coming from, because if you look at other market drawdowns, the flight to safety has actually been to tech. If there was a growth scare, right? If you see a change in the rate story, it's actually mega cap tech that folks have actually flocked to in the past. So it's a really interesting shift in narrative. And I do think, Danny, that, you know, it takes some sort of exogenous shock to potentially change that narrative. And then, you know, look, if you have that, if it's a massive weight in the market, and that sells off, there's no breadth widening trade at that point that can save you, because correlations across the board have just picked up.
Is this an exogenous shock or just a reality check, Amy? It's early days, I know.
Yeah, for sure. You know, look, I think a lot of people, when they talk about the richness and valuation, they certainly didn't expect the differential numbers that your colleague brought up, you know, 5 billion versus 6 million in terms of spend, and then obviously the lead-on effects to all the other sectors. And what's interesting is, even coming into 2025, we actually had seen a pickup in skews, so meaning we did see a pickup in demand for hedging. You know, my take on that had been that it wasn't particularly ominous. It was actually just a function of folks being long. But, you know, a little bit of the danger here is the fact that people are more fully positioned than they were a few years ago, where all we could talk about with people buying the right tail, people buying mega cap tech because they had to participate. You know, everyone has jumped in the pool. So that change in positioning, Manus, is also going to make things a little bit more painful on the other side.
Right, and there's just these buildup of products around it too. I mean, there are multiple leveraged NVIDIA ETFs you can buy if you want to get 2 times the upside in this morning, 2 times the downside. Amy, what does that buildup mean in terms of margin calls, in terms of wider VAR shock? Do we seem to be anywhere close to that sort of snowball type event?
Yeah, I have to be honest, when I read news like this, that's actually the first place my mind goes to, because, you know, when you're a derivative strategist, you think about that exacerbation. And I'll just give you a few dates, right? When you look at August 5th of last year, when you saw that volatility spike, you know, what happened there was related to the yen carry unwind. When you look back to February 2018, when you look at Volmageddon, what happened there? Yes, it was spurred by rate and growth worries, but what actually happened was there's too much massive notional in short-levered ETF products, and that causes not only an unwind, but that unwind to be very explosive. Now, I'll say a couple things related to that. Obviously, you have to watch these inverse products, but the notional size of a lot of the short VIX products is a lot lower now than they were a few years ago. So you do have that going for you in terms of what we could see in the follow-on for the days to come.
when you see moments like this, Amy, I'm looking at dollar yen. I mean, this is the consensus trades, as Tim Graff, I'm chatting to him on the IB, this is the consensus trades being taken to the woodshed. When you see rally in dollar and a rally in yen and a rally in bonds, that signals to me that we're at some kind of a different moment in the reaction function by markets. This is more than a soupçon of fear.
Yeah, I would agree with that. And you know, this is one of those things, Manus, where that like I just have to say time and time again, you can't count on traditional correlations to stay the same. You know, bond equity correlation, I'd say being the #1 worst offender, right? Like so many models were built off the fact that we were expecting this inverse correlation. And then you get areas like COVID when it just doesn't work anymore and everything becomes positively correlated. I think the same thing has happened within the market between mega cap tech and the rest of the market as it relates to correlation. And if we get that correlation all going in one direction again, you better expect just formulaically that volatility is going to pick up. You know, you're going to see that threshold rise, and it's going to rise not only in equity volatility, but across cross-asset volatility too.
So Amy, just to put a finer point on this, is this the kind of dip then that you do not want to be buying, at least for now?
I would say, look, it's a difficult question because it's early and I'm by no means an expert within AI specifically. You know, this is something where today I'm going to go back to the folks who actually cover these stocks, who actually, you know, look at Microsoft and Meta, et cetera, and the semiconductors and say, you know, how big a deal is this? Because certainly from a hedging perspective, it's something people want to do anyway. So perhaps it's not necessarily buy the dip because remember, everyone's quite long, but perhaps it's we still hedge even though it's very expensive.
Well, we're going to hear from them themselves this week. We're going to get Meta, Microsoft, Apple, and Tesla all reporting. And by the way, a Fed and an ECB decision. If you were concerned we'd have a quiet rest of the week. Amy, thank you so much for joining us. Pray for that poor little ducky off the waterfall. Amy Wu Silverman of RBC Capital Markets. Let's get you some other stories now that are trending on the terminal this morning. China's economic activity surprisingly faltered at the start of the year. Factory activity shrank in January. Chinese industrial firms also reported the third straight year of declining profits. That underscores the risk of the world's #2 economy that it might be stalling yet again.
Bitcoin dipping below $100,000 as we have this risk-off narrative across global markets, despite President Trump ordering the creation of a working group to advise the White House on crypto policy. A long-awaited executive action. The order stopped short of confirming that the U.S. would establish that Bitcoin reserve, something that Trump had vowed to do on the campaign trail.
And Elon Musk's Department of Government Efficiency is officially online. A government job site to recruit full-time software engineers and other tech staffers is up. Applicants must be U.S. citizens, and apart from a resume and a commitment to working in the office, they're also asked to list up to 3 items that show, quote, exceptional ability.
Off to rewrite the CV.
You gonna apply, Manus?
I'm not an American citizen.
Oh, of course.
I'm discounted.
So sad.
On the outside. Coming up, President Trump whiplashed markets by first announcing sweeping tariffs on Colombia before suddenly reversing them. We'll discuss the context in just a moment.
Interactive Brokers pays up to 3.83% on instantly available U.S. dollars in your brokerage account. How much interest can your bank or broker pay? Interactive Brokers' conservative and prudent risk management uniquely positions us to pay up to 3.83% on uninvested, instantly available U.S. dollars in your brokerage account. The best informed investors choose Interactive Brokers.
In 2000, post-Napster, generally everybody wrote off the recorded music industry, including the investment community. And I didn't mind that chapter because then I got left alone. And actually, I think out of that period, we started to create better art because the pressure wasn't on from the technology to be the most powerful chapter. And then iTunes came in, and iTunes, to Apple's credit, did have a boutique taste mentality about the store, which meant that I think they understood. I can tell you from that period that the artists that came through were of a very high quality because it was encouraged to be boutique. Now, ironically, this chapter has made us more money times 5 than the iTunes chapter and the post-Napster chapter. But an algorithm tells you what you want, not what you might like. And there's a difference between what you want, but with streaming, the downside is you have incredible penetration, and we have hundreds of millions of people around the world. And so that has been very lucrative as a business.
Bringing you up-to-the-minute technology news whenever and wherever you are. I'm Ed Ludlow at CES in Las Vegas, and this is Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, Tuesdays, only on Bloomberg.
It's your brief on a day that looks a whole heck of a lot like a margin call day. Let's get straight into what tech is doing, selling off across the board. NVIDIA plunging more than 12%. Microsoft down 6 1/3%. Meta down 5%. Manis, you've mentioned this. Meta has earnings on Wednesday. Is this the moment that Mark Zuckerberg is going to have to ditch the T-shirt and gold chain for a suit to try to explain what their 2025 outlook is now going to look like?
Well, listen, everybody was cheering on Friday when it was announced that they're upping their capex to 60 to 65 billion. I think one of the best lines is, and this is about the threat from DeepSeek. They spent $6 million. OpenAI spent billions, $5-6 billion. So it's what are you able to produce, and how competitive is that, and what is the real scale of threat? Because it is open source. It's 100% open source. So everybody that's talking about geopolitics maybe just needs to recalibrate their thinking around that.
It underscores this idea that picks and shovels, aka NVIDIA, is not AI. It is just the picks and shovels, and maybe we go into a pure AI trade. And Manis, this morning having global ramifications across assets too.
They are indeed. Ground zero for where the money's flowing. It's flowing into bonds, but also dollar yen. Have a look at this. This is not as explosive a volatility moment as you had with the unwinding of the yen carry trades in August last year, but it can certainly grow a little bit more aggressively. Yen up by over 1.3%. As Amy Wee Silverman said, it's a paddling duck that's just gone over a waterfall.
Poor little ducky. Well, it is an information fire hose, both last week and this week, between tech, between central bank decisions, and what we're getting out of the White House. Man, as President Trump announcing sweeping tariffs on Colombia due to a dispute over deported migrants, the U.S. and then Colombia reached a deal, and Trump called the tariffs off. You blinked and you miss it. For more, we're joined by Bloomberg Government Congress reporter Jonathan Tamari. Jonathan, great to speak with you this morning. It was a fast-paced deal being reached. Is this the new blueprint for tariffs in the Trump administration?
It is, and it just shows the president, is feeling that he has a mandate and he has the power to influence things, not just in the United States, but with the region, around the region here. And he's willing to both throw the U.S. economic weight around in order to get what he wants. And you're combining two of his, biggest priorities, both immigration and tariffs, are two things he talks about more than anything else. And so I think we should expect a lot more of this kind of muscular approach and probably a lot more whiplash in the early days of his administration.
Perhaps the most poignant images are of the national emergency. National emergency at the border, we know that. National emergency is the reason why these deportations and raids are taking place in Chicago. Multiple agencies involved. We think nearly 1,000 arrests is the reporting on Sunday. Just give us a sense of the scale. We're looking at the images, obviously, of those people being boarded onto military aircraft, and this is the point of angst with Brazil and Colombia.
Yeah, the scale is unusual. I mean, obviously these raids have taken place, but the multiple agencies being involved, the media being brought along for the ride, the incoming director of Homeland Security joining some of these raids. It's all, again, a show of force and a kind of a major symbol of Trump saying that he's delivering on what he wants and probably trying to stoke fear among undocumented immigrants that they might be getting a knock on their door. He really has always said that tough enforcement will discourage people and maybe even encourage people to leave. He's trying to follow through on that here.
Finally, the other information fire hose piece we'll be getting this week are more congressional confirmations. Jonathan, who's on the docket and what confirmations might be particularly difficult for this administration?
Yeah, we saw them get one of their top, most controversial nominations through Friday night, Pete Hegseth for Department of Defense. This week, we have hearings for Robert F. Kennedy for Health Secretary, Tulsi Gabbard for Director of National Intelligence, Kash Patel for FBI Director. These are three of the most controversial nominees Trump has made. Their hearings are going to be really closely watched. Republicans felt after Hegseth navigated his hearing that he would be okay. He was in the end, just barely. So these three events, they want to see these three nominees, handle the questions that they're going to get, and those hearings could go a long way to determining whether they all get through or whether one or two of them end up being blocked.
Jonathan, thank you very much. Our Bloomberg government reporter there, Jonathan Tamari, on the very latest. It's a busy week for you. We just want to show you what's going on with U.S. equities. We are at session lows now. New York is coming in and beginning to really punch the docket here. The NASDAQ futures are down almost 5%, Danny.
Yeah, it's really painful. NVIDIA continues to sell off, too. Let us not forget, we have tech earnings coming up this week, and we will bring you that coming up shortly on your brief.
To succeed in Wall Street, what skills do you need? You need to be somebody that claws people on the back, people that you have to be tough, you have to be fighting people all the time. What are the skills that really take to succeed in Wall Street?
Great question. Of course, you have to work hard. So I can tell you what I found for me, and it's probably counterintuitive. I had to stick out, which is interesting because I made the decision earlier. Being really the only woman, I already stuck out, and I thought I might as well double down on that. I can't hide. So how did I do that? It was by being a contrarian. And I refused as a research analyst to ever publish research reports that said me too. That said, oh, IBM reported earnings. They came in 2 cents ahead. One of the pennies was currency, the other penny was lower G&A, blah, blah. Forget it. Big calls on big stocks. My very first piece of research I published was very negative at a time nobody did it. I stood the heck out. And when I was right, that elevated me. And David, I've done that as a research analyst, but I did it in business as well. Here's a business strategy. If everything's fine, just keep your head down and execute. Every once in a while, you have a big insight, and you can build an entire business, in fact, an entire industry around it.
In case you missed it on Bloomberg Crypto.
We still see Bitcoin higher by about 40% since election day. So what is priced in, and where is there still room to run higher?
Now, everyone at the institution level is ready to adopt Bitcoin. It's not some random country which is saying, hey, let me have it on Treasury, or some mid-level funds trying to keep it. It's like every top banks around the world is now thinking about, okay, I need to get custody for it, I need to understand it, I need to own it, I need to provide it as a private wealth service to our clients. So it is just a whole run of things. So I feel like as we are looking towards 2025, it's definitely going to be the year of Bitcoin, not only as an asset value, storage value, but also I feel like technology-wise, so much projects are coming on top of Bitcoin that the whole decentralized financial industry has somewhere shifted into Bitcoin.
Don't miss Bloomberg Crypto live on Tuesdays.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Welcome back to your brief. If you were hoping for a quiet start to your week, you are sorely mistaken, and it is a busy week coming up. A marathon of tech earnings begin Wednesday. We're going to have Microsoft, Meta, and Tesla, plus the Fed's first rate decision of the year also on Wednesday. Then it's the ECB's turn for a rate decision on Thursday. We're going to get PCE data in the U.S. on Friday. And Manus, before all of that, NASDAQ futures now falling 5%.
Yeah, we're halfway on the way to those exuberant corrections that Julian Emmanuel talked about. One story, DeepSeek, what AI can they deliver? and what are the chips that they're going to use. And that's why you're seeing NVIDIA down 13%. If we continue in this trajectory, this is going to be the toughest, the worst close in the history of markets. Broadcom down 12.44%. Again, the contagion right the way across here, Danny. Likewise on Meta, they upped their game in terms of the actual capex they were going to deliver. That was announced on Friday. So this is a VAR shock. This is about a real margin call shock to the markets this morning.
Because it is a question of the picks and shovels and the data centers and the infrastructure spend behind them. Also looking at Siemens Energy in Germany, falling more than 20%. Their shares had more than quadrupled with the expectation that the AI boom would feed energy spend.
Well, this week it's going to be huge. You've got Apple, Microsoft, Meta, and Amazon all reporting. There you go. NASDAQ down 5% and change. If we continue on this trajectory, there's a lot to justify on those calls this week.
Well, that's it for us. Surveillance takes the reins from here.
Discover your edge. Trading is constantly overcoming your doubts and fears. Keep pushing forward. Trade like a pro.
That's all being driven by the media content increasing and these becoming entertainment businesses and not local event businesses. And I don't really, I would expect that to continue. When you see, if the rumors about the NBA are true and it's going to double over the next, 8, 9, 10 years, obviously you can do the math. That's 10 to 15% growth rate TV. There's a little bit of leverage there. So you kind of you can pencil out. When we put together this group and the commanders, we had to make our case, and you kind of pencil out low to mid-teens, right? And it's not a private equity return, but I really like it as part of my own portfolio because it's correlated. It doesn't really go up and down with the economy. A lot of it's driven by the growth in the streaming content and technology. It's a growth equity business almost. And then it goes, it's generally trending up. There's a scarcity value. Sports teams are obviously operating businesses and they generate cash flow. Some of them don't, a lot of them do, but then it's also kind of a piece of art, right? There's only 30 or 20, depending on the league, or 32 of these franchises, and people want them, right? So at the end of the day, it's like, it's worth whatever someone will pay for it, right? So there's an element of a little bit of a Basquiat there or beachfront real estate. So you got to kind of think about all that, but all of it really says to me that it's going to go up.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live every weeknight. Balance of Power, weeknights at 10 p.m. London time, only on Bloomberg.
I am positive because it is definitely a change in tone.
There is a lot of optimism everywhere about what the U.S. could do.
There is reason for optimism. There are green shoots that people are able to point to.
The U.S. is at the epicenter of all discussions.
As America goes, so goes the world.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg surveillance starts right now. Coming into Monday with a huge shake-up in global tech. Check out equity futures down across the board. The pressure concentrated on the Nasdaq. Moments ago, the Nasdaq 100 was down by close to 5%, now negative by 4.7. Nvidia down double digits plus. Nvidia in the pre-market negative by 13%. Unlucky for them. DeepSeek, a Chinese AI lab demonstrating they can do more with less and raising huge questions about the whole CapEx narrative and the beneficiaries of it.
The disruptors are becoming disrupted, and that is basically the theory and the fear with some of what DeepSeek promises, which is, as you say, to do more with less. They don't need the $100 million investment. They need a $5 million investment. They don't need the huge data centers and the same types of energy. They just need a little bit, and it makes it something accessible for a lot of different companies, if it is actually true. The key question is, though, how much does this demonstrate how lopsided this game has been in the market, with a couple of names really taking all of the momentum?
So as Lisa suggested, it's not just Nvidia that's getting hammered, the big spenders, Microsoft and Meta down in the pre-market as well. The buzz around this over the weekend was absolutely massive. Do you remember the buzz around the utility players over the last 12 months as well? Check out Siemens Energy over in Europe. The biggest decliner on the DAX this morning. We're down by 20.6%. That one's getting absolutely nailed as well. I think we've got to ask a question as to whether this is really real, Lisa. So let's get into that. Mizuho this morning putting out a note and asking if it's a synthetic scare and raising questions about whether this was subsidized by the state in China. Those questions will be asked repeatedly throughout this morning.
It's an important question. It's an important point. Essentially, is there something behind the scenes that isn't as efficient, that isn't as using just so many fewer GPUs, so many fewer chips from NVIDIA? It raises a lot of questions at a time when potentially this is a fragile U.S. market that is really concentrated in a couple of big tech names. And if they could be disrupted, could that remove some of the U.S. exceptionalism story that potentially could hurt China?
If they have done this, they've done this with serious limitations to chip access.
Well, that's the whole, really, what's ironic about this. The U.S. was trying to avoid this. They had export controls on the most advanced chips, so China, DeepSeek, was able to develop this AI model without that. In an interview last year, this is what the founder said, quote, "The problem we are facing has never been funding, but the export control on advanced chips." And it seems they were able to get to this pretty incredible point, potentially without that access.
What a time for this shake-up to happen. Earnings season this week. Check out the calendar. Wednesday, Microsoft, Meta. We'll hear from Tesla as well. Thursday, Apple. Then next week, you're going to hear from a whole lot more, including the likes of Microsoft and Amazon.
What's fascinating to me here is the spend that a lot of these companies are making towards some of the investments in chips, et cetera, data centers. Will they be punished for those investments? We heard about Meta being some $50 to $60 billion of investments. Will that become a liability for them at a time? But there is a real question about whether those types of investments are needed.
Which is why this is such a painful moment. Jordan Rochester, in that note you were mentioning, Jonathan, talked about this is happening after we just saw what he calls a Texas Hold'em all-in push on chips that's coming not just from Meta and NVIDIA, but also this White House when it comes to Stargate, pushing millions and millions, billions of dollars towards AI and all-inclusive of what that means, data centers, chips, and the likes.
Futures negative then, down across the board. We're down by 2.5% on the S&P and down a whole lot more on the Nasdaq 100. Coming up this hour, we'll catch up with Steve Chevron of Federated on the latest sell-off in equities, Rob Casey of Signum as President Trump walks back tariff threats against Colombia, and Neela Richardson of ADP ahead of the Fed decision on Wednesday. We begin this hour with stocks falling as Chinese AI startup DeepSeek demonstrates it can do more with less, raising questions over the future of Americans' tech dominance. Steve Chevron of Federated joins us now for more. Steve, it's good to see you, sir.
Good morning.
What's your initial reaction to this? So it's obvious that for the chip players, if this is real, not great news for NVIDIA. For the energy providers, the likes of Siemens Energy, not great news for them either. What does it mean for the big spenders of the last 12 months, the Microsofts, the Metas?
Yeah, I'm not built well for panicking, so I know that there's a lot of excitement and panic this morning, and I'm sure it'll be an ugly day in the market. I think there's three key points here. The first one is it real? Right? Is it real, or is there some spending that's not being accounted for? Let's take a breath and find out. if it is real, I'm not sure it's as universally bad as everybody wants to make it out to be. It certainly is for the chip makers. It certainly is for the kind of infrastructure build-out play here. But in terms of AI implementation, in terms of the AI build-out, if you're telling me that companies like Meta, Google, you pick the company, if they can implement effective AI without the CapEx, meaning that there's more cash flow that can be returned to shareholders or can be invested in other areas, that's not a bad thing. Now, it's not great from a geopolitical perspective, but from an efficiency perspective, what we may be at here is we've just crossed that Cisco moment where it's all about the modem, but now it becomes about building out the internet, using the internet, and creating new business models around that. And then I think the third point, and this is one that always bears repeating that no one's wanted to hear the last couple of years. This is why you build a diversified portfolio. It's not great to have the entirety of your capital in 7 names because things like this can happen. Disruption happens. And if you look today, yes, there's carnage across the market, but the value stocks look a heck of a lot better, and the small caps look a heck of a lot better, and you only need a roof when it's raining, John.
Right now, it's raining, so let's talk about that. Yeah. The decline that we're seeing in the likes of Microsoft and Meta, I know traditionally we don't do single names with you. Do you think there is an opportunity to get into those names now, or would you wait to see things settle down?
I think there will be. I mean, I think you're going to see a few days here of rethinking, right? You're going to have some algos hitting sell today. You're going to have people asking questions about what's the right valuation. It'll be very interesting to see what the earnings reports are going to be like this week. Can company management pivot to talking about, hey, this is real or it's not, and if it is real, here's some savings we may be able to achieve on CapEx. That might be early to do that, within the next week or so, and so I'm sure these names will be under some pressure. But again, I look out and I say, right, the story wasn't about, the AI story is not about who can spend the most money developing AI. That was never what it was about. It was about who can utilize AI and monetize it to make their company or their moat that much better, who could deliver that solution. And if this allows them to deliver that solution quicker or cheaper without the bottlenecks of energy or chips, so much the better over the long run.
Does it undermine the U.S. exceptionalism story?
No, I don't think the U.S. exceptionalism story was built just on ChatGPT. I mean, I think it's built on this idea that, A, we are the greatest innovator in the world. Yes, you may have found a cheaper way to do this, but...
In China.
In China, yeah. No, I mean, look, this is not a country that isn't, competing hard. But when you look at the U.S., you have kind of a population growth advantage over the rest of the world. As bad as our demographics look compared to our past, we don't have the 10, 20, 30% working age population declines that you do have in China and Japan and Europe. And then also, okay, great, you took a technology, you made it more efficient, but let's not forget that the Magnificent Seven are magnificent for a reason. One of them owns social media, the other one owns smartphones, the other one, I mean, you can keep on going down the list. So yes, does this mean that there are other companies in other countries that will compete and challenge that dominance? Sure, but that world existed last Friday as well.
In the middle of last week, I was looking at the calendar ahead, and I was looking to what was coming up the pike today and this week. It was the Fed decision, it was core PCE, it was the earnings for some of these tech players, and then of course there's the overlay of all of the policies. And I'm thinking, wow, what a maelstrom of information. Yeah. Now none of it matters, right? It seems like basically the Fed and the government are basically off sides and the technological advancement is in the front seat. How much is that the reality? Is that really what's going to suck all the oxygen out of the room at a time where there's a lot of noise elsewhere?
I think that's why you buy. I think that's why you buy if you see weakness here, because there's a lot of positives that are out there otherwise, right? Again, yes, there's going to be some disruption. Maybe the Mag 7 aren't as dominant as they have been. I don't know that that's a bad thing, right? I think if you see a market broaden out, if the beneficiaries of AI start to play out here, companies that can use and implement this technology to become more efficient, if that's cheaper, then that broadens out that opportunity set. But you've got a lot of positives going on, right? You've got inflation that's come down from 9 to 3. We think it's going to 2.5. You have a Fed that, despite what they say, they're going to cut a couple times this year. I think the data's going to push them there. You've got tax rates that are likely to become lower. And so this actually enhances a theme that we've been talking about a lot over the last couple of weeks, where if you look at what's a pretty constructive outlook for us for this year, and you try to figure out what are the downside risks and the upside risks, all the downside risks are shorter term, right? It's concern that inflation won't come down, or the Fed in this kind of little stubborn period, or the sausage making over policy, or now, this concern that we've got to work through. On the other side of it, though, is inflation that is coming down and rates that are going to come down and policy that is going to get made. And I think what you'll see is that, maybe Cisco has had its moment, maybe if NVIDIA is this generation's Cisco, but now there's opportunities potentially for a whole host of companies, if this is real, to implement AI much cheaper, much more effectively, and that's going to be the real value here.
If this is real, you mentioned geopolitical concerns. Do you expect more policies like export controls or tariffs because of this?
I think it's incredible, Anne-Marie, that, we had the Colombia episode yesterday with the, we're not letting you in, then we're going to tariff you, and now we're letting you in thing. And we didn't even talk about that today. I mean, in any other week, that would have been like 90% of this discussion. I don't know. Look, I think that this president is certainly going to use tariffs as a negotiating tool. We saw that very well on display this weekend. And I think, generally speaking, there's bipartisan support to make sure that the United States remains the leader in emerging technologies. And I don't think that changes today. Remember this, when Sputnik was launched, it was a shocking moment to the United States. We still got to the moon first. And I think you may end up seeing the same thing happen.
So do you think that maybe this is a wake-up call and then we can see even a bigger push from this administration when it comes to things like AI? I don't know how much bigger you get than Stargate.
Well, I think if it's real, it is, because it tells you that you just can't throw money at it. You've got to innovate. You've got to let the engineers lead, as opposed to just think that, that's a story about throwing money. So we'll see. Again, it may not be real, but if it is, maybe you've got to think more holistically about how you support those companies and not just throw chips. And by the way, here's another interesting tidbit here. Does this make Taiwan less important? And does that lower geopolitical tensions? Because if you can advance an AI without invading Taiwan, well, that's a lot cheaper, isn't it?
Right now, we're selling first and asking questions later. Steve, it's good to see you, sir. Thank you. Steve Chevron there of Federated Hermes. Futures down across the board here on the Nasdaq 100, down by more than 4%. Brahma, looking at NVIDIA in the pre-market, down by close to 12.
I love what Steve said about the Cisco moment. We've been talking about this for a long time, and Michael Wilson over at Morgan Stanley talking about how there's going to be a shift from the infrastructure, the chips, to the application. Is this that moment, regardless of the truth, the veracity of exactly what's happening here?
Certainly feels like a big moment. Let's get you an update on stories elsewhere this morning with your Bloomberg brief. Here's Danny Berger. Hey, Danny.
Hey, John, just to emphasize the hype, DeepSeek, that Chinese AI startup you've been talking about, is now top of the iPhone download charts. Buzz grew over the weekend about their latest model being cost-effective, as you've been talking about, while running on less advanced chips. NASDAQ futures, just another check on those, tumbling down 4 1/3%. Elsewhere in this market, Ryanair shares are rising 3.5% in the London trade. The European low-cost carrier posted stronger than expected third-quarter earnings driven by holiday bookings. It also cut its passenger growth target for the second time in 3 months due to Boeing's delivery delays. But Ryanair said the constrained market for aircrafts will also help them command higher prices. Now let's get the latest on the wildfires in Los Angeles. The region is getting its first rainfall in months, but that's posing a new risk of landslides. Right now, a flood watch is in effect for Los Angeles County, and several roads are closed due to mud flows. The Palisades fire, that's more than 23,000 acres, is now 90% contained, while the Eaton fire that destroyed much of Altadena is 98% under control. And that's your brief. John.
Hey, Danny, thank you. More from Danny in about 30 minutes' time. Up next on the program, the tariff threat in action.
To me, the most beautiful word in the dictionary is tariff. And it's my favorite word.
The tariff system made so much money. It was when we were the richest.
A conversation just around the corner, live from New York City this morning. Good morning.
When the sun is rising in the east, night falls in the west. Stay on the lookout because markets never sleep. FX Pro, trade like a pro.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Stocks down and down hard. We are negative by 2.4% on the S&P 500, down by more than 4 on the Nasdaq 100. In the bond market, it receives a bid. Yields are lower. We're down by 12 basis points. The 10-year now back to 450. The single name price action is pretty crazy out there this morning. Nvidia's down by more than 10%. Losses for the likes of Microsoft and Meta. I mentioned some of the utility names. Utilities were up by close to 20% on the S&P last year. Just bear that in mind when you look at the likes of Siemens Energy over in Europe, down by something like 20%.
This challenges the entire theory that a lot of people have been talking about with artificial intelligence, where you would need that much more energy and that essentially you need to keep buying chips until the cows come home, and essentially you don't need to buy that many chips according to this new rubric, and you don't need that much energy. This raises a question about whether chip exports have just made China truly more innovative to do more with less, and that is really what people are grappling with this morning.
Rob Casey of Signum Global Advisors alongside us. So Rob, I'm going to bring you into the conversation a little bit earlier than I typically would, and we're not going to start on tariffs. We're going to start on this. How spooked do you think Washington D.C. will be, given what maybe is coming out of China in the past week?
Well, I think pretty spooked, right? I mean, the concern has always been that as we send chips over to China, they will outcompete us. The Biden administration has put on a lot of different chip export restrictions, right? We saw that towards the last week, the last couple of days of Biden's administration. The Trump administration hasn't pulled any of that off. I expect they'll keep it on. They may add to it.
They may add to it. It's been a week already. Trump's in office. Do you think Biden was too slow? Or did this last administration drag their feet when it came to combating China?
Well, I think, I mean, honestly, the truth of the matter is, if we're looking at D.C. to be really quick when it comes to tech, right, when it comes to innovation, if it comes to AI, chips, I mean, frankly, social media, if we're looking for them to be really fast, I'm not sure that they've ever really followed through on that promise, right? The issue, the bug, or maybe the benefit of democracy is it just moves really, really slowly.
The fact that we have this now, and we know that Trump likes to use tariffs as a threat, potentially, he said, we could get tariffs as soon as February 1st. That's this weekend. Does a story like this make that situation more likely?
Well, we'll have to see how Donald Trump responds to the news around DeepSeek, et cetera. Do I think that it makes tariffs more likely on China? Perhaps at the margins, yes. But when it comes to February 1st, we're really looking more closely at the tariffs on Mexico and Canada. Honestly, I'm not expecting tariffs on China on February 1st, because the bottom line is, as we've seen really since and before the inauguration, Trump wants to at least speak with Xi, right? The odds of them getting to a Mar-a-Lago Accord, Trump deal 2.0, maybe not, but he wants to give it a chance.
Bear with me, and we're going to get to Canada, and we're going to get to Mexico, because those things are important, and of course Colombia, which we would be talking about. But this reminds me of The Mask of the Red Death, which is a great story by Edgar Allan Poe. People should read it if they haven't. This idea of a group of people trying to keep things out, and it comes in anyway. And it raises this question about the open source nature of DeepSeek, and the idea that maybe keeping something a secret right now when things are developing this quickly is not the most effective way to do things. How much is that changing the discussion around isolationism in politics?
I don't think it's going to change the discussion in the Republican Party and in the Trump administration in particular. I think DeepSeek and China more generally is a threat to the United States, right? China is a competitor and not a collaborator when it comes to, I mean, frankly, it was Trump 1.0 that really defined that agenda. Biden saw it through. Trump will continue to. So I don't think think that this news is all of a sudden going to make Donald Trump a free trader, right? I think we will still be talking about tariffs and sanctions and restrictions, I mean, from here into the next 4 years.
Okay, so we can talk about tariffs and restrictions in Mexico and Canada. So I want to start talking about what the signal is from Colombia. This idea that initially they were shipping immigrants from the United States to Colombia, deportations, and then one of the military planes was stopped, and Donald Trump said, we're going to put 25% tariffs on you unless you open up. They open up and the tariffs are removed. Does this indicate the tariffs are a negotiating tool, or does this indicate that they are for real? Which is it?
Well, I mean, I think both is the short answer. We've talked here about, our view, and it's really Andrew Bishop's view, our head of research at Signum, that there will be some tariffs that are ideological, right? When we're talking about decoupling from China in key sectors, when we're talking about punishing Europe and maybe even punishing Canada, those are ideological tariffs. They're not going to come off before they're even put on. But everything else, I think, the tariffs are meant for negotiation, right? Donald Trump sees tariffs, as a way to enact pain, as a way to raise revenue, and as a way to negotiate. Now, are all of those things, mutually exclusive? Maybe to a certain extent. But I think outside of China, outside of Europe, and maybe outside of Canada, which we can get to, I think tariffs are aimed at negotiation, right? But it's those ideological ones that I would be most concerned about, because when they're promised and when they're put on, they're not coming off.
Look, when it comes to Mexico, I think we can all understand what's going on here. There's an issue over the southern border. That applies to a lot of Latin America as well, particularly Central America. When it comes to China, reciprocity, national security, I understand all of that. With the Europeans, there's been questions about the protectionism of the European bloc for decades. But when it comes to Canada, I'm confused. I was confused last week. I asked plenty of people questions about this. I'm still confused. Can you make sense of it for us?
Well, I'm not sure I can make sense of it, but I can give you a couple of theories. The first is, right, that Justin Trudeau and his Liberal government are down, right? So if you're Donald Trump, maybe kicking them when they're down is reason enough to apply to a 25% tariff. Honestly, 25% would be pretty painful. That doesn't really pass muster for me as the exclusive reason. The second is this. There are a number of trade disputes that are outstanding, right? If we're talking about softwood, if we're talking about access to the Canadian dairy market, right? It's a similar situation, U.S. Canada and U.S. Europe, and that is the trade relationship. Even though the defense relationship is incredibly collaborative and positive, the trade relationship is not always positive, right? And it's not always neutral. Sometimes it is negative, and under USMCA, frankly, Canada has won more than it has lost when it comes to trade disputes with the U.S. And that leads me to the final point, which is we've done some looking at the timeline around USMCA revision and potential renewal. And honestly, our thinking at this point is that these tariffs may be an opportunity, or given a desire to pull forward USMCA review by it would be earlier than it should be by about 6 months.
Don't you think Canada has a lot of leverage here? If you strip out energy, you've got the US running a trade surplus with Canada. If you include energy, which America needs to include because there's a type of crude that comes out of Canada that the refiners need, this is something that ultimately Canada has over the United States right now, isn't it? Isn't this a real position of leverage? I can't say the same thing for other nations at this point, but for Canada, don't they have some leverage?
Totally, 100%. And I think energy, in particular crude oil, is the best leverage that they have. It's one of the reasons that we expect, should we see tariffs on Canada, they will exclude, crude oil, so, and additionally maybe some electricity. So, I mean, then we're talking about a 25% tariff, universal, except for the most important import, right? And maybe it's a 10% tariff, universal, except for the most important import. So the bottom line is, it's true that these tariffs may have, less bite than bark, but we do think that Canada is in the crosshairs. And I'll just say one thing, in relation to Mexico, right? Donald Trump has made very specific demands when it comes to what he wants to see from the Sheinbaum administration to avoid tariffs. And I think the truth is that when it comes to Canada, there just aren't those same very explicit targets, right, that they can meet to, like, Petro and Colombia yesterday, to say, okay, we've accepted your demands, now please don't tariff us. For Canada, those demands are pretty vague.
But isn't Trump just in full-on negotiating mode? Because as you said, Canada is on its back politically. He doesn't even really know who he's going to be negotiating a new USMCA with. So in the end, he kind of has the upper hand at this moment.
Yeah, I think that's true. And honestly, it's a really good point as to the future of Canadian politics. And I'm not a Canadian politics expert, but we're going to get an election, right? And so I think that if we're going to add to the list of why might Trump tariff Canada, one of them is to ensure that the Liberal Party does not somehow make an extraordinary comeback and get reelected, right? So it could be Trump sort of putting his hand on the scales to ensure that he's negotiating with a more conservative, collaborator / competitor when the USMCA review does come up.
I guarantee we'll all be experts in the next few months. Rob, it's good to see you.
Good to
Rob
see you.
Casey there of Signum Global Advisors. If you are just joining us, a big shake-up in the equity market worldwide. On the S&P, we're negative by 2.4%. At one point this morning, the Nasdaq 100 was down by more than 5 full percentage points. Nvidia getting hammered.
It highlights two things. First of all, how much the entire American exceptional story has so far been leveraged off of the chip sector, in particular, one name, Nvidia, and some of the other big tech players. And then the second thing is how concentrated this equity gain really has been in just a few names at a time where we're going to get earnings and maybe some disruption.
If it's real, it threatens the whole ecosystem. Think about what we heard last week. US dominance, build out data centers, we need the energy. All of those stories just unraveling just a little bit. And I think it really captures the fact that this was all very one-sided. Everyone was on the one side of the boat. I don't know if this is real or not, but it doesn't take much to disrupt things when things are that one-sided.
When you actually look at what's behind DeepSeek, it's actually really elegant. And I think a lot of people are looking at this. That's the reason why Mark Anderson said this is a Sputnik moment. It's solving things in a different way. And that, I think, is what's getting people excited.
Up next on the program, the latest with Bloomberg's Tom McKenzie as DeepSeek rattles global tech stocks. Live from New York, you're watching Bloomberg TV.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, but I can't say that in Bloomberg.
Maybe moxie?
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're the asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. No, nobody does that. They say, let's talk about the team.
And so many more.
Do you need a clap?
No, I think we're ready. Ready? Go.
Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders. Prudential's reputation as an insurance giant is rock solid, but it's not resting on tradition. CFO Janella Frias is playing a key role as the company resets its strategic priorities.
We've been on a journey to be higher growth, more nimble, and more capital efficient.
Watch Chief Future Officer Wednesday on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
The top names in business are on Bloomberg.
We are in the midst of the largest wealth transfer in history right at this very moment. So $100 trillion of wealth is going to next-gen and millennial clients over the next decade. So that has some pretty significant implications. But in addition to that, women are controlling more and more global wealth. Today, they control a third of global wealth, but in the next 5 years, $30 trillion is going to pass in the hands of women, and they're going to control over 50% of the global wealth market out there today. Women care deeply about investing with purpose, investing to make an impact, doing good with their investments. So you're going to see some significant opportunities for us as we lean in and have been leaning in to capturing more of the female wallet globally.
Nobody covers business like Bloomberg. Context changes everything.
Bloomberg Invest is back. Join me, Shonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
This is quite a start to the trading week. On the S&P 500 down by 2.5%. Check out the Nasdaq 100 down by more than 4%. A Chinese AI lab, DeepSeek, demonstrating they can do more with less. Less of what? Less of Nvidia, apparently. We're down by more than 11%. Less energy too, apparently. Siemens Energy down by something like 20%. Maybe less of everything. Over in Davos, Switzerland, guess what we were talking about last week? A lot of happy talk. Take a listen.
The dominant mood is extreme optimism.
This Davos is all Trump, all AI. If you're looking to take advantage of the United States through tariffs, which many countries do, you're in for a new rude awakening.
I wouldn't quite say a recession's around the corner, but it's not as many miles away as it was.
I got a little rattled when we were about to start because you said big event. We're coming up to a big event, and I thought it was our interview.
Shall I restart?
Yeah, let's restart.
Go back to T-shirt. All right, you ready? Live from Davos, Switzerland at the World Economic Forum, the big event. Ted Pick, the Morgan Stanley chairman and CEO.
Fantastic.
Good to see you, sir.
I want to return to where we began, which is sports, and my sport, which is auctions. I'm looking at bond auctions, which I think is like a sport.
That's quite a term. Can I just say you looked the part when you walked in? You were so upbeat. I was said to you straight away, this is what the Gap CEO should be like.
Thank you.
What are you dressed in today?
The brand. Today, it's pretty much Banana Republic, top to toe. Underneath, we've got a little Gap and Old Navy.
Thank you, sir. Safe travels back to New York.
I'm an avid listener and watcher.
Well, we appreciate that.
You've got to come on again soon.
Lots of fun last week, lots of happy talk as well. Lots of happy talk from US executives, particularly from the bank executives. And the main standout, US dominance. And you compare and contrast last week with this morning, this is why you're seeing the moves we're seeing on the boards. We're questioning that US dominance.
Because it's been built on the backs of NVIDIA, on this sort of chip dominance and dominance in technological expertise. Is that being undermined by development, DeepSeek, that's been known for a long time over in China? It's just that the US market is now waking up to it. I think that Steve Chivrone was onto something when he said, actually, in these kinds of sell everything panic moments, that's when you want to start being a little bit more calm to understand exactly what's going on. Does that challenge disinflation? Does that challenge some of the efficiency that can come from other companies adapting AI more easily?
We'll take a deep breath around this table with the Nasdaq 100 down by more than 4%. If you are just joining us, welcome to the program. Under surveillance this morning, Chinese AI startup DeepSeek demonstrating it can do more with less, raising questions over the future of America's tech dominance. Its latest AI model is seen as cost-effective and runs on less advanced chips, posing a challenge to US industry leaders such as NVIDIA.
So if you take a look at what it actually does, first, it basically is less specific because it thinks it can get the same result by being less specific for some of the inputs. And then it also, rather than using all of its experts at once, it uses specific experts that it only has light up when needed. It basically reduces some of the energy intensiveness and some of the chip necessity. If this is true and can be replicated in a real way, it undermines the model of NVIDIA winning all the time, every time, and some of these big tech giants having to invest as much as they have been.
And they did it without having access to the most advanced U.S. chips, because we've seen the export controls put on by the Biden administration, obviously kept. Trump's been in office for 1 week, kept by the Trump administration. So my big question this morning is, when he wakes up, an individual that likes to check the markets and sees what's going on, what questions is he going to be asking the President of the United States, his policy advisors, on what they could do to make sure the U.S. stays dominant in this space? I feel like I have whiplash based off your conversations that you all had in Davos last week. U.S. exceptionalism, Stargate, all this money towards AI, deregulation, tax cuts, and then this morning you have DeepSeek, a lot of concern over the weekend. And how is the U.S. going to combat all of this?
It's a big week for these kind of developments. If we go through the earnings calendar again, Microsoft, Meta, and Tesla dropping on Wednesday, Thursday, Apple. Next week, you're going to hear from Alphabet and Amazon. End of the month, you'll hear from NVIDIA. Quite a time for them to come out and really try and justify where they're spending this much money at a time when we've just seen what's taken place over in China.
That's the exact right point. How much will they be penalized for some of their capital expenditures at a time where maybe it's not being viewed as necessary in the same way that a lot of people thought?
Check out the FX market last week. The euro just had its best week going back to 2023. The hopes and dreams of a lot of people in these markets is that the sitting president, Donald Trump, won't go forward with tariffs. Then the weekend happened. President Trump walking back tariff threats against Colombia. This coming after Trump announced an emergency 25% tariff on the country over a dispute about deported migrants. The White House saying Colombia had, quote, agreed to all of President Trump's terms without delay.
So the White House put out a statement yesterday and said, based on this agreement, because they are letting the migrants into the country, the fully drafted IEEPA tariffs and sanctions restrictions will be held in reserve. So they were never put on place. This was the threat. They draft them up. We didn't get any sort of signature from the president regarding sanctions or tariffs from the Treasury Department either. Unless Colombia fails to honor, the White House goes on, this agreement, then they will be put in place. The one thing that is put in place, though, is visa restrictions, which I think you can view this as a carrot and stick approach from this administration on how they're going to deal with a number of issues. But I was speaking to someone last night who said what you really need to take away from all of this is how concerned capitals around the world are just seeing this episode play out in the last 24 hours.
There isn't a lot of logic in terms of exactly where the tariffs will go or what they are for, because there are differences depending on the region in terms of why tariffs are being implemented. I just want to put this in the record. I don't get Canada. I mean, it's like our nice neighbor. Why beat up on them?
You and me both.
It seems like unnecessary. It's like the nice kind of nerdy kid who's always got your back, and you just kind of like beat up on them because it makes you look cool for the cool kids.
Well, Trump knows that he has to renegotiate USMCA by 2026. He's not just going to go at Mexico. He's going to get whatever he can out of both of them as he renegotiates this. And if you see, a lot of this also is the rhetoric. When he talks about Canada, one of the first things he talks about is fentanyl coming in from the northern border. And that was one of the biggest things he ran on, immigration and these concerns.
I think you can make the case, a much better case, that that's coming from the southern border than you can from the north. Also, the politics don't really make sense, the timing of this. There's a 20-point gap between the Liberal Party and the Conservative Party in the last polls that I looked at going into this election. Poilievre is going to take a very different approach to things like energy, perhaps in line of the energy needs of America over the next several years, assuming that Poilievre would win that election.
The only thing I can think of is that it's just posturing and that the blowback won't be that much because it's Canada and they'll understand if it's just a posturing figure. I otherwise cannot understand this, and I don't really get much insight from other people.
Yeah, you're not alone. I'm in the same bucket as well. Let's turn to this, the latest from the Middle East. Israel and Lebanon agreeing to extend their ceasefire until February 18th to give Israeli troops more time to withdraw. This coming as a dispute over a hostage held by Hamas was resolved with a deal to release another round of hostages on Thursday.
So it looks like this incoming administration wants to keep this deal in place that was done under the Biden administration. And I spoke to someone who said this really does feel like they're giving the new Lebanese president a chance to form a government without any fighting, something that we haven't seen in decades. The question is, after February 18th, does this hold? Israeli media is reporting that Steve Witkoff, the individual who got the Gaza deal over the finish line, will be going to Israel. Potentially we'll see updates about this through the end of the week.
If you are just joining us, welcome to the program. Big sell-off worldwide in global equity markets. US tech stocks leading the way after Chinese AI firm DeepSeek released an update to its chatbot demonstrating similar abilities to industry leaders like ChatGPT at a fraction of the cost, raising major questions over the future of US tech dominance. Tom McKenzie of Bloomberg joins us now for more. Tom, welcome to the program, sir. For people who weren't aware of the big unveiling through last week and the buzz over the weekend, and they wake up to this morning, just explain to them exactly what is DeepSeek.
Yeah, so this is a company that dropped this model on January the 20th. Look, they've been running since 2023 as a research lab funded and spun off from a hedge fund in Hangzhou, which is the innovative hub and one of the innovative hubs in China. They dropped the model, the R1, the most recent model, on January the 20th. If you take them at face value, they spent about $6 million trading it. It took about 2 months. And that goes to the point that you guys were discussing earlier, in that this raises a question about the cost, because it has the same capabilities, again, according to many metrics, as OpenAI, Meta, and Anthropic. The cost, the pricing, the energy, and the need for compute. And that is the question mark. Those are the question marks that are being raised by DeepSeek. And it is already being built on and tested by the tech community in Silicon Valley because they license this out. It can be deployed very quickly. It is open source, so they're able to see the data and the way that they've constructed this and able to tweak it as well. So there's question marks about what goes into building these models into the future and whether it becomes commoditized. But when Andreessen Horowitz turns around and says this is a Sputnik moment for AI, I think you have to take that very seriously. And clearly the markets are doing that today.
Tom, we've been talking all the morning. Is this real? Is there more money that's going behind this? Is there something about this that we cannot see that sort of undermines the premise that everything that some of the big tech giants have been doing, they could do with a lot less money and energy? Is there anything that you could see that really gives credence to some of those questions?
So we don't know what chips they are using. We don't know what types of AI accelerators or GPUs. We have to make the assumption they're not using the most sophisticated NVIDIA chips, the Blackwell chips, because of the restrictions that are in place. JP Morgan raises a point in one of their analyst notes. They have a 50,000 cluster, the hedge fund does, that is funding this research and lab of DeepSeek. Did they use some of that cluster? That's a question mark. What chips make up that cluster? What chips make up the cluster that underpins DeepSeek? These questions we still don't have answers to. So I think it's valid to scrutinize and question what DeepSeek is telling us. But at face value, you have to assume that this could change that equation in terms of the need and the spend that companies like Meta are committing to, $65 billion through this year, $80 billion for Microsoft, not to mention, of course, the partnering and spend and investment around the energy piece of this, because this is an efficient model, if you take them at face value, and the price points on some analysts' notes, about 5%, the pricing, about 5% of the OpenAI pricing. And that's why you could actually see very rapid deployment. It doesn't change the innovation story, it doesn't change the adoption story for AI, but it does, of course, pose a question for the builders of the models like Meta specifically and OpenAI, and the companies that feed into the supply chain, ASML here in Europe, and NVIDIA, of course. But if you're buying AI, this could be good news.
It also raises this question about the idea of trying to keep models proprietary when you're trying to develop large language models. This idea that maybe open sourced is a better, more efficient way to create the most advanced ecosystem. How much is that alone changing the conversation in tech communities and, frankly, even government communities?
And that specifically is a question for Meta as well, because, of course, they lent into that OpenAI open source proposition because they want to drive down the cost of open source, but raise the margin that they're able to get from the apps that are built on top of those models. They want to squeeze out OpenAI and squeeze out Anthropic. The fact that DeepSeek seems to have taken open source code and built on it, as well as taking hardware, presumably from NVIDIA, and use that to incorporate into the build around their models, that will raise a question mark. So will this Trump administration look to the playbook of the Biden administration when it responded to Huawei building a chip that exceeded expectations, certainly the expectations of those sitting in Washington? Will the Trump administration look to that playbook and look at additional restrictions? Restrictions, of course, already in place for hardware and software. How far do they go in terms of trying to carve out space where China is unable to get both the software and hardware that has driven this development?
I'm sure a lot of those policy proposals are being drawn up, Tom. When it comes to this idea, though, of China versus the U.S., when it comes to a tech Cold War, how much does this challenge the notion that China is years behind the United States?
Well, on the reading of Andreessen Horowitz and others who have looked at this model, who have stress tested it, I've downloaded it on my phone, I have a play around with it. You can see the reasoning go through each step, step by step. You can pose questions about Tiananmen Square and Xi Jinping, you get nothing. Not a big surprise there. But what it reminds us is that China is able to innovate and iterate on the back of Western technology. Whether they've done that with TikTok, we've had a reminder of that over recent months, haven't we? And the fact that that became a leading social media app, or electric vehicles here in Europe, and the challenge that poses to our industry, European industry. Now, when it comes to AI and the models, it's a reminder China has the skills, they have the engineers, particularly the systems engineers, they have the data, they have far more data than anyone else, and they're able to build and iterate and innovate on Western technology. And that is a catch-up that many had not predicted in the AI space, that had come to this point so quickly.
Certainly on display over the last week. Great work as always, Tom. Thank you, sir. Tom McKenzie there of Bloomberg. Out of the City of London, NVIDIA is down by more than 11% in the pre-market.
It also points to the fact that valuations got very elevated, and that a lot of people placed their bets on this story and imagined multiples that were incredibly high. That might be the biggest takeaway of all from this event.
It's a wake-up call at a time where things were very one-sided going into the last week. Let's give you an update on stories elsewhere this morning with your Bloomberg brief. Let's cross over to Danny Berger. Hey, Danny.
Hey, John. U.S. Steel is doubling down on its confidence in the Nippon Steel deal, saying that the interests of activist investor Ancora Holdings are not aligned with the company. Ancora Holdings is pushing the company to abandon the Nippon Steel deal and nominated 9 candidates for the board. People familiar with the matter tell Bloomberg that Ancora will push U.S. Steel to end litigation to rescue it and instead collect a $565 million breakup fee. Bloomberg has also learned that Elon Musk has initiated conversations about using blockchain tech at the new Department of Government Efficiency. According to sources, the Tesla CEO has mused about the idea of a digital ledger as a way to track federal spending, secure data, make payments, and even manage buildings. COVID-19 likely originated from a lab leak rather than a natural source, according to the CIA. The agency now aligns with the FBI and Department of Energy, which all said the virus probably leaked from a lab in Wuhan in central China. The announcement came after President Trump's new CIA director, John Ratcliffe, declassified existing information. And that's your brief. John.
Danny, thank you. More from Danny in about 30 minutes. Up next, a resilient labour market.
The U.S. labor market has been the most resilient labor market in the world. No question, hands down, most resilient. Growth is going to create demand, and demand is going to create demand for talent, and then we're going to be back to a tight labor market.
Lots of data through the week, and a Federal Reserve decision too, which we've hardly talked about. That conversation up next.
On a $100,000 US margin loan, Interactive Brokers charges just 5.83%. Do you know how much your broker charges? Fidelity and Schwab charge over 1.5 times as much. E-Trade is even higher. Move your account to Interactive Brokers and save at least $5,200, or much more if you're trading big bucks.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big. With $1 trillion of assets almost, we're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
Major moves worldwide. Let's check out the cross-asset board first. So equities decline. We're down across the board. Equity futures on the S&P off by 2.3%. Much bigger moves lower on the Nasdaq 100. That pushes a bit into the bond market. Yields down by 11 basis points on a 10-year in America. We're back down to about 451. As for the single names, Nvidia lower by 11.6%. Meta, some of the big spenders out there, down by close to 4%. And then Lisa, the utility providers. Keep going back to this. Utilities last year on the S&P up by 20%. Just one energy name out of Europe today over in Germany listed on the DAX, Siemens Energy, down by 20%.
Two things. Number one, this highlights just how far some of this narrative has gone about AI and all of the ways that it would be deployed, which I think is really interesting and I think is going to have lasting legs regardless of what happens in terms of exactly how much this can be replicated, the Chinese model that we've been talking about. And then two, it really focuses on maybe people getting a little over their skis with the idea that the Fed would be hiking rates indefinitely and inflation would never come down. And that's also shifted this morning.
A Federal Reserve decision just around the corner alongside some economic data through the week as well. Under surveillance elsewhere this morning, a resilient labour market.
The U.S. labor market has been the most resilient labor market in the world. No question, hands down, most resilient. We've held unemployment fairly steady, workforce participation fairly steady, and we haven't overheated at numbers that traditional economists would say would be overheating. Growth is going to create demand, and demand is going to create demand for talent, and then we're going to be back to a tight labor market. So I would say the tone is more optimistic.
So here's the latest. A strong U.S. labour market and sticky inflation raising bets the Federal Reserve will keep rates on hold this Wednesday. Fed Chair Jay Powell also set to give his first news conference since Trump's inauguration. Nita Richardson of ADP joins us around the table. Nita, it's good to see you back from Davos.
It's great to see you.
Welcome to the studio. Huge moves worldwide in financial markets, and I think a lot of people assuming that Wednesday could be a non-event for Chairman Powell. Do you share that view?
No, I don't. I think what the Fed is signaling on Wednesday is super important for the rest of the year. Borrowing costs, remember, for consumers are still quite high. They're still at record highs. So even though we've seen these Fed rate cuts take root and really influence Wall Street moves, it hasn't translated yet to Main Street. And that's what Main Street is waiting for. That'll keep the labor market lifted and relevant in 2025 as a key component of U.S. growth.
So what do we expect to hear from them, other than we don't get involved in politics and we're on hold for now?
Well, you're going to hear that.
Okay, but I'm just wondering, like, what are we actually going to learn from them?
I think there is going to be a nuance to those comments because they are going to try and signal future paths. So they're going to try to tip their hand because they want to engage with Wall Street, with the stakeholders and the American public of what's next for the Federal Reserve. So there's going to be some confidence on the future direction of the economy. Remember, economic growth is a huge part of their, overall context and objective. And then there's going to be some thoughts on the future direction of the labor market and inflation. Those are their two key mandates. So you'll get more than we're pausing for now. Come back after the commercial break. I think you'll get more than that, but you're not going to probably get a definitive rate path for 2025.
When I was caught up in the hysteria of DeepSeek this morning and this idea of the market move, it raised this question in my mind of the relevance of the Fed, of even government policies that seem so far removed from some of these sea changes that are happening in technology that could very much disrupt the labor market. Do you see a quicker adoption of AI completely changing the labor dynamic in a way that the Fed cannot extrapolate out based on current information?
Well, AI is just one of two mega trends I'm watching. I do think it has the potential to change how we work. Not necessarily the jobs themselves, but how the jobs are executed, with a lot of our tasks being automated. What does that leave room for in your day? But also there's this other mega trend no one's talking about, which is age. And the fact that the US workforce is rapidly aging, with 10,000 Americans, 10,000 US workers turning 65 every single day. That's 4 million hitting retirement age every year. And that means that employment growth is going to slow down significantly over the last decade, like a fraction of what it was the previous decade. So you take generative AI and AI advances and you match it with a rapidly aging workforce where skills and domain knowledge are walking out the door every single day. And what do you have left? Well, that's certainly structural change that the Fed will eventually have to confront. But right now, they're in the here and now trying to get to that 2% target.
It's not just the United States that's facing these demographic changes, though. There's a ton of countries that are dealing with much older generation, and actually they don't have population growth that they normally would see. So is AI and technology actually matching the moment then for what the labor force requires?
Well, you think about how an economy would change with more older workers. It would reorient to healthcare. And where we haven't seen these huge advances in is something simple like the care economy, what it takes to be a caregiver. I mean, that's a human occupation. But you've seen today, in the December jobs report, a huge increase in hiring in healthcare. So yeah, there is some disconnect between where the labor market is now and where the tech advances are coming, and I think over the next few years, you'll see them merge.
I'd love to get back to the Fed this week because this administration basically was brought into power for one major reason. That part of that was inflation. And at the same time, we see this idea of tariffs being whipsawed, something that the Fed maybe will be on wait and see to see what the policy is going to be. But inflation expectations are still high. So at some point, are they going to have to do more to combat those expectations everyday consumers have?
I think you make a really important point that is often missed. We're so focused on hitting that 2% target, and we're not as focused as anchoring to 2%. Those are, you know, that's a degree stronger than just hitting a 2% target. Now, what gives me comfort is the Fed has 400 PhD economists whose job it is to run these scenarios. And they do it with, you know, they've been doing it for decades. So I think this is not outside of the Fed's capacity to run scenario analysis about policy changes. But yeah, they're going to have to be watchful of where the consumer is and where policy is going, for sure.
Always love hearing from you. Appreciate it. Thank you. Nita Richardson there of ADP. Going into this week's Federal Reserve decision and the economic data as well, I have no doubt that if this move continues, Chairman Powell will be asked about it on Wednesday. Perceptions of wealth in America can hinge on many things. I'll give you two. House prices of one. The S&P 500 or the Dow is another.
Does it give him more room to actually express confidence that the Fed can cut again this year, which will actually remove some of the political pressure from him? That's my question. How much that edifies and leans into some of the rally that you've seen at the front end of the yield curve at a time where the likes of Mark Seidner over at PIMCO are saying, look, the Fed's going to cut anyway because inflation's coming down.
Last week, the President of the United States says he's got things to say on the Federal Reserve, and if he disagrees, he will come out and say so. So we're going to hear that on Wednesday after the press conference.
Yeah, I'm sure he will come out and say they should have cut by 50 basis points. This real estate market needs to get revived. And by the way, rates should be lower and inflation needs to come down. Oil prices.
He says he knows better. He says he knows better, he thinks, than him, but didn't actually say him, but it was Chair Powell.
If he can engineer the kind of energy prices he'd like to engineer, it could lead to lower interest rates. That kind of makes sense.
Sort of. That wasn't really where the inflation came from, though. I mean, over the past couple of years, it wasn't an oil shock. I mean, there's lots of questions.
Sure,
but,
not just that.
But yeah, sure, yeah. But, you know, if you engineer things.
Energy shock was certainly part of the story over in Europe.
Yes,
that's for sure.
Absolutely.
In the next hour on Bloomberg Surveillance, we'll catch up with Seema Shah of Principal Asset Management. We'll speak to Henrietta Trays of Veda Partners, Mandeep Singh of Bloomberg Intelligence, Jim Bianco of Bianco Research. The second hour of Bloomberg Surveillance, next.
In recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that started in 1977, when by then I had a little research station, and 4 of my students were kidnapped, and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, you know, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays at 3 p.m. Only on Bloomberg Television. Context changes everything.
Having Donald Trump come into office is a very welcome change and let market forces drive.
I'm optimistic on a lot of policies that are coming together.
When you have a messaging from the top in the United States around pro-business, that causes investment.
The pro-growth agenda is going to be something that's front and center.
I think we're going to ultimately have to see what the year brings because there's still more unknowns than knowns in the equation at this point.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Check out these moves to start Monday morning. Equity futures down across the board. We're down 2.35% on the S&P 500. Take a little look at the NASDAQ 100. If you're just tuning in, joining us, welcome to the program. About 90 minutes ago, that was down by 5%. We're now down by something like 4%. There's lots of whys. Here's a single name, NVIDIA, getting absolutely hammered in the pre-market and down by close to 12%. The buzz over DeepSeek over the weekend, Lisa, absolutely overwhelming.
This is a Chinese startup that really began in 2023, was using chips that ostensibly had less computing power than the most advanced one by NVIDIA, and came up with a model that rivals OpenAI while using a much less expensive infrastructure, a lot less energy, and frankly, just as much accuracy. This is shaking up the model that so many people were looking at, that NVIDIA would benefit as everybody poured cash and energy into the build-out of chips.
We've already talked about this a few times this morning, of course. Blanket coverage into the opening bow from now, but to see Microsoft lower, Meta lower by 4 to 6%. These are the companies that are going to spend $50–60 billion on capex this year. These are the companies that spent a lot of money over the previous 12 months. And here you are, a Chinese firm coming out and saying, we can do more or as much with a lot less.
And you made the great point earlier this morning where you were saying essentially how much does this raise the bar for some of these companies to show why they are spending as much as they are, with the likes of $65 billion from Meta expected to be announced this Wednesday. As we get these earnings announcements, will they be punished even more for their capital expenditures at a time where potentially it'll be proven not to be necessary?
These earnings calls, box office now, over the last week, in a big way. Everyone's tuning into that. This Wednesday, you'll hear from Microsoft, Meta, Tesla. Over the next week, you'll hear from Apple on Thursday. Then to next week, Google, Amazon, NVIDIA at the end of the month. These are going to be big, big earnings reports for these companies.
And what are they going to say? We're throwing more money at it? Does that matter? We have access to the better advanced chips. Does that matter? What you see from DeepSeek is that they were able to make something pretty incredible without this access to advanced U.S. semiconductors. The founder said in an interview last year, funding's not the problem, the access to this money is. I think it's interesting what this associate professor has to say at the University of Technology, Sydney. This younger generation also embodies a sense of patriotism, particularly as they navigate U.S. restrictions and choke points in critical hardware and software technologies. You have to think they did this with the walls being up. What can they do if they even had more access?
There's a large takeaway here, regardless of exactly how this shakes out. Right right now we're talking about sea change. The world is over. The world has changed. We're going to have a different narrative from here on out.
Your favorite subject, isn't it?
100%. You know, basically Armageddon. Let's like ring the bell. But you know, before you go there, I think that there is another takeaway, which is basically how much this market got lopsided in one narrative.
Yeah.
And this, to me, really is a gut check on how much that can really be quickly shifted at a time when we knew about DeepSeek, or people in China knew about DeepSeek months ago. So there is a larger takeaway here that I think is instructive for the market.
I agree with you, and just to build on that, just to reiterate it, I think that's really important. When you see moves like this, you have to talk about where you have been over the past few years. It's not just about the magnitude of the breakthrough in China, it's also about the magnitude of the move here stateside and how one-sided expectations had become. Our ability, our capacity to absorb negative news, this is something that Lori Carvacina raised over at RBC coming into the new year, greatly reduced by the fact that these valuations were so elevated into 25.
And it was led by the tech stocks. We saw that even last week with another record high for the S&P 500. Why? Because of the tech stocks led by NVIDIA could do no wrong. When you have technology that's moving so quickly, there were even people who study neural nets and some of the LLMs, large language models, talk about how we don't fully understand what the implications will be. To put all your chips in one basket, so to speak, and talk about elevated valuations into the future becomes a much dicier proposition, and I think that's the gut check.
Lisa, do we need to rethink the whole thesis now? The CapEx narrative, the story of last week. We're in Davos, Switzerland. Everyone's talking about data centers, energy needs. Utilities last year rallied by close to 20%. I keep talking about this one name over in Europe. Siemens Energy down by 21% over on the DAX.
Well, I don't know, but I do think that there is this large question, and there had been a large question about whether AI could be deployed with the infrastructure that we had, and the answer was no in its current form. The only way to get it to have the efficiency that people needed was to completely change this construct where they used a lot less energy. So ostensibly, you still need some of those energy sources, you still need some of those data centers, but you just get a much faster adoption, which actually is beneficial for a larger range of companies.
A lot of comments already this morning, prefaced with, if it's real. If it's real. Mizuho asking those questions themselves. Is it a synthetic scare? Were costs subsidized by the state? How much power was actually used, and did it come from elsewhere? All of these different things we need to work out.
I think there'll be a ton of questions in this gray area because it's coming out of China, and because they didn't have access to these advanced chips, how exactly did they do this? Also, I think it is very interesting, where did the funding come from? Is this something that the CCP is backing? And if so, what else are they backing that maybe we actually don't have all the details behind?
Coming up this hour, plenty of commentary on all of this. Seema Shah of Principal Asset Management as stocks retreat from all-time highs. Henry Trays of Vader Partners as President Donald Trump reiterates a key tax pledge. And Mandeep Singh of Bloomberg Intelligence as China's AI startup DeepSeek slams tech stocks. We begin this hour with global stocks very much under pressure. Investors rattled as China's AI startup DeepSeek threatens US tech dominance, leading to questions over Mag 7 valuations. Seema Shah of Principal Asset Management has been saying the following. While the secular trend upward of the Mag 7 should persist over the long run, their expensive valuations coupled with elevated bond yields imply that investors should pay increased attention to stocks trading at more attractive valuations. Seema joins us now for more. Seema, welcome to the programme. Of course, you wrote that before the news over the last week. How much does the news over the last week change your thesis for 2025?
Hi, John. Well, look, as you said before, there are a lot of question marks. Investors, I think everyone needs some time to digest exactly how real this is, what are the impacts, how it can be sustained. But you know, as we said, valuations are really extended. So coming into this year, there were already going to be vulnerabilities. Now, I don't think anyone quite saw this coming, but it really does accentuate that need for diversification, looking at things with lesser valuations. But, you know, we came into 2025, and I think across the board, outlooks, the theme was US exceptionalism. We're at the end of January, or not even at the end of January, and a lot of this has the potential of already being rewritten for 2025. So I think a lot of uncertainty, adding to all the tariff uncertainty, inflation uncertainty that investors were already dealing with, it certainly looks like a fairly tough year for investors.
Seema, just to follow up, this is a question that Lisa raised on the programme a little bit earlier. Given what we know, and we know a fair bit over the last week, not enough, but a fair bit, do you think it is sufficient to undermine US exceptionalism, US tech dominance?
Well, I think what it does is it does it does really put bigger question marks around those valuations, because it reminds investors that these companies are not completely immune. It's not like they're never going to have competitors. There will be competition. So there has to be question marks around how much is being spent on chips. Companies like NVIDIA, what is going on with their future? Can this really be sustained? And is demand going to be kept? So I think there has to be question marks. I think there's a longer term story where US exceptionalism can persist, probably not to such a significant degree, just because of innovation, the system. You have an administration coming in now who is very much focused on that growth, ensuring that the US keeps its stage. So I think you can't answer that today, but I think investors have to wake up today and say, well, look, maybe we just don't look at the US, and global diversification has to be even more prominent in portfolios than they were just a week ago.
I love how when the market is flying high, we have a million investors who come on and they say any dip will be a buying opportunity. And then there is a true bona fide dip, and people say, well, this makes us rethink everything. Seema, is this one of those moments where it's a buyable dip, or does it make you rethink everything?
But it's a good question, because I think, we've been, like everyone else, we've been looking at money market funds and wondering why are people not deploying? And the answer that keeps coming back is that they've been looking at valuations and they're just not sure. They want to get into the big tech, but they just don't like this price. Now today, or even in a few days' time, when tech maybe comes down even further, investors are going to get back in at that point. I think there's going to be question marks. I think they're not going to jump back into the market until they have real answers. And if anything, this week, what investors should be doing is looking at what are the other sectors, what are the things that can benefit from the overall gain in productivity that DeepSeek probably offers outside of those Mag 7. So I think a lot of question marks. I wouldn't say that this is a buying opportunity for these big tech companies today.
Seema, that is exactly where I wanted to go. How much does this actually point people toward the direction of where AI can actually be deployed? Are there particular areas that you're looking at that are the quickest and cleanest beneficiaries of this type of efficiency?
Yeah, I think like everyone else, we've been doing all the homework into the various sectors. The two that really have stood out to us are healthcare and agriculture, the clear benefits that they can gain. So I think that story is still very much in motion. If anything, it's probably been amplified by today's news or the last week's news. So I don't think there's question marks around those. It's really about those specific companies that have really benefited from this drive up, thinking about all the infrastructure that will be necessary to drive the kind of AI that we've been seeing. So I think that's where the question marks are, but I think it does mean some pretty good news for other sectors around the world.
Is this a moment that you would actually want to have more exposure to the Chinese equity market?
It's such a good question. I think everyone's going to be wondering that today. Did we make a mistake by not increasing exposure? I think there's too many question marks still. There's still a lot of concerns around the fundamental story. Are investors willing to go all in into one trade, just like they did with the US with the Mag 7, into a new company or one or two companies in China, so that one-sided bet just shifting? Or are you going to look at the whole ecosystem within China and say, look, there are still some deep-rooted fundamental problems that investors have to consider? So it's global diversification. I don't think it specifically means China. It's looking at what are the other companies, what are the other countries that may be a little bit less vulnerable potentially to what's emerging today.
Seema, you mentioned earlier that the U.S. is going to make sure they maintain their tech dominance. We have seen, just in the first week, so I don't know if it's a real barometer, but just in the first week, President Donald Trump has really taken aim on Canada, on Mexico, on Colombia, and he's held off on China. Do you think something like this will push the administration to ratchet up the pressure on Beijing?
I have to imagine that the administration is going to try and do their homework and try and figure out how much of a threat this really is before they jump headfirst into making some additional threats. But look, the news over the past week, just because they hadn't moved forward with China or Europe for that matter, doesn't mean that tariffs were never going to come. I think we were just thinking about what is the timing and how drastic could they be. If this really does prove to be something very meaningful, then yes, I'd expect that maybe tariffs on China could be greater. The US has even more of a reason to try and rein in their strength. I certainly don't think that it's something that they're going to jump into so that tomorrow you start to see headlines.
Just to wrap this all together, Seema, do you think that the Fed has ever been less relevant on a week where we're going to be hearing from Meta, Microsoft, and Tesla on the same day as the Fed rate decision?
I think that coming into this week, the Fed was already somewhat irrelevant because I think everyone knows that they're not going to cut rates this week. Having said that, yeah, look, this isn't going to be the headline news. No, even on the Bloomberg terminal, I struggled to see anything on the Fed for this morning. But look, this could be key, because I think, just want to say one thing on this. We have been very much, I think, reassured that US consumers' household balance sheets are very, very resilient because net worth has increased so significantly. But we can't ignore the fact that net worth in the US has been driven higher significantly because of equity market exposure. So any kind of concerns of equity markets does unfortunately feed through to the US economy. So I think that is something that we're not going to hear about from the Fed this week, but it's something that they have to be watching, tracking very, very carefully over the coming months.
Seema, appreciate your input as always. Seema Shah there of Principal Asset Management. Off the back of the sell-off this morning, so far this morning, equity futures down across the board. Nvidia getting hammered. Cantor Fitzgerald putting this out this morning. Cantor would buy Nvidia on weakness, saying the following, that despite concerns about what this could mean for demand, quote, the announcement is actually very bullish, with AGI seemingly closer to reality and Jevons paradox almost certainly leading to the AI industry wanting more compute and not less. I believe it's Jevons and not Jevons. Jevons paradox? Is it? Danny Berger writes in to explain what all that is. Efficiency increases demand, not decreases it. You saw that in the Industrial Revolution. You saw that when Japan made more energy-efficient cars.
Well, if you can basically expedite the adoption, you could increase demand across a wider swath of potential firms. So maybe it won't be the Metas and the Microsofts buying all the chips. It'll be, you know, United Health or some of these other companies that are deploying it in other ways. Again, a lot of unknown. We don't know necessarily how much actual investment went into this, what chips they actually were using. We don't know how applicable this will be. Nonetheless, it counteracts some of the the dominant narrative that we've had over the past couple of months that really has driven a lot of the concentration of returns in NVIDIA.
Let's get you an update on stories elsewhere this morning. Are there any stories elsewhere? Thank you, Danny Berger. Appreciate the explanation.
Well, funny you should say that. A big day for Jevons paradox. And I kind of want to start there, just giving you a roundup again of the deep sell-off we're seeing. DeepSeek driving a global tech sell-off. You can see just how off we are in those various names. NVIDIA down 11.3%. It's a new model demonstrating performance similar to the world's top chatbot without the high price tag. It's built with open source tech and challenges the notion that China's AI tech is behind the US. There are stories elsewhere. One of them, AT&T beating fourth quarter earnings expectations, only up about 1%, but that was thanks to an increased mobile customer and fiber-based internet subscribers. Seasonal promotions and bundled product offerings drove the results. Revenue jumped 1% year over year. The communications giant reported 482,000 new monthly mobile subscribers and 307,000 new fiber optic internet customers. Elsewhere, Israel and Lebanon agreed to extend their ceasefire until February 18th to give Israeli troops more time to withdraw. The ceasefire deal between Israel and Hamas still holds after a dispute over hostages was resolved. Talks on the return of Lebanese prisoners and the release of more hostages are set to begin. And that's your brief. John.
Hey, Danny, thank you. Thanks for this morning. More from Danny in about 30 minutes' time. Up next, Henrietta Trey's of Vader Partners breaking down these big moves and what it could mean for the US-China relationship. That conversation just around the corner. From New York City, this is Bloomberg.
At JP Morgan, we're taking ETFs to the next level with active equity and fixed income strategies designed for today's dynamic markets. Invest with a leader in active management. Search JP Morgan Active ETFs.
For the fourth consecutive year, Interactive Brokers is one of the fastest growing prime brokers and is now number 5 in Preqin's ranking of top prime brokers. Interactive Brokers serves both organizations and individual investors. To get better results, get a better platform. The best informed investors choose Interactive Brokers.
So a number of people, I think from Homeland Security and or the CIA or NSA, have gone to Capitol Hill and said that TikTok is a danger to our national security. But the public hasn't been given that much detailed information about what the threat is. How much of a threat to our national security is TikTok?
The People's Republic of China acts adversely to the interests of the United States in different ways. One of those ways is through the dissemination of disinformation the intentional communication of false statements. And TikTok is an extraordinary avenue through which to disseminate disinformation to millions and millions of people.
Bloomberg has the Fed decision under surveillance with the fastest coverage and exclusive analysis, including Powell's press conference. Nobody covers the Fed like Bloomberg.
Equity futures down across the board. On the S&P, negative by 2.3%. On the Nasdaq 100, off-session lows. Look at that number. Believe it or not, off-session lows. We were down by something like 5% a few hours ago. The Nasdaq 100 down by 3.9. Plenty of messy single names in the pre-market, including NVIDIA, down by double digits through most of this morning. NVIDIA right now is down by 12% at the moment. Dan Ives of Wedbush pushing back, as you might expect him to. The bears have missed the historical rally in tech stocks the last 2 years and will miss the next 2 years, constantly waiting for the Black Swan event to end the AI revolution trade. From Fed moments, rumors of NVIDIA Blackwell delays, Tokyo Black Monday. Today's no different. These are just the opportunities to own NVIDIA, Microsoft, Alphabet, Palantir, Salesforce, Amazon, and the broader tech ecosystem.
This is not necessarily a challenge, though, to the AI revolution. This is a challenge to the phase of where we are in that revolution, whether we're moving from the chips to the application.
Also, Dan Ives says this: no U.S. global company is going to use a Chinese startup, DeepSeek, to launch their AI infrastructure. There is something to be said about the questions about this. Is it even real, DeepSeek? And also, do you want to rely solely on this Chinese startup when there's a ton of questions about everything that's coming out of China and potential bans they may face in the United States, like TikTok?
If it's real, it's very impressive. Under surveillance this morning, Chinese AI startup DeepSeek roiling global tech stocks and raising questions over America's tech dominance. Henrietta Trace of Veda Partners joins us now for more. Henrietta, welcome to the program. Certainly not what we expected to be talking about. Looking back a week ago, looking out a week, but here we are. This one has really spooked equity markets worldwide. I imagine it might have spooked some people down in Washington, D.C. as well. Henrietta, what are you hearing?
Yeah, absolutely. I think all eyes are really on the attention to the Phase 1 trade agreement, which, as you know, was reached under Trump's first term in February of 2020 and had mostly an emphasis on agriculture purchases. All this tech stuff, forced tech transfer, intellectual property theft, all the components we're talking about now, including state subsidization, which is such a huge part of this story, is something that's not included in the Phase 1 deal. So I think the first issue when I think of D.C. and how they're prepared to respond here, especially since the Senate is dealing with nominations and the House is on recess, is what's going to happen from the administration's perspective. We know that they're re-engaging on the Phase 1 trade deal. I have no doubt in my mind that this is going to bolster their resolve to pull out of the Phase 1 trade deal as soon as USTR Greer is confirmed and completes his review of the deal that they reached in February 2020.
Last week, we had Trump come out and talk about $500 billion for this Stargate plan. What options do they have in the White House when they want to combat something like DeepSeek?
The White House is not where you see these kinds of investments in huge monetary inflows. Obviously, we have that one example that has been in the pipeline. But if you want massive subsidization on par with the Chips and Sciences Act or the Inflation Reduction Act in clean energy or these chips building Intel or Samsung manufacturing plants in the United States, you really need an act of Congress, and we are months away from that. So the best the administration can do continues to be on the restrictive side: tariffs, export control restrictions, and things that we've seen throughout the Biden administration, and I expect will continue under Trump 2.0.
But if this is real, isn't this just an example that export controls don't work?
Yeah, absolutely, especially the open source component of this and the fact that it's so much cheaper. I mean, this has got to be a core concern of not just the Trump administration, but all the tech universe that has moved into the West Wing. Those are definitely areas where you'd expect to see them really try to gin up ideas and probably come under pressure from President Trump to gin up further ideas to advance this.
It also raises a question about H-1B visas, when if you want sort of an open source, you also want to be importing talent who has expertise in specific fields related to large language models and artificial intelligence. Henrietta, as we hear about all of the deportations, the roundups, et cetera, by ICE, how much is there discussion about reform and potentially amending some of the H-1B visas and other aspects that affect the U.S. workforce?
This is the perfect question, and it's sort of an open wound now in Republican circles. You have one wing of the Republican conference who wants to raise visa fees, make it more expensive for migrants to come over to the United States, for corporations to hire H-1B visa applicants, to restrict the numbers of H-1B visas that are even doled out across the pharmaceutical sector or the banking sector, the technology sector. And then you have another group that very much wants to expand this access. And that immigration fight is one that we're seeing play out in this broader conversation about reconciliation instructions. Republicans only have a chance to pass legislation this year. Going into 2026, you're not going to see legislation pass because we're going to be deep in the primary season and the general election of 2026. They have to do that this year. They're meeting in Doral this week on the House side to come to any kind of consensus they can here. I think the number one takeaway I have is that they need money, and therefore increased costs of bringing in high-skilled workers is almost guaranteed to be part of either the first reconciliation bill or the only reconciliation bill Republicans pass this year.
Henrietta, there are different warring camps within the Trump administration. We've talked a lot about that. You've got some of the big tech oligarchs that some people talk about on one side, and then you have some of the more populist members on the other. Do we have a sense of who's winning out so far?
Honestly, the deficit hawks are the ones that are winning out. I think it's a mistake to think about this in terms of just who in the White House is winning. Your real problem is the House Republican Conference, where you have little pockets of opposition to almost everything that's being proposed. So this grand thinking about who's going to win in the White House, I think misses that we have 18 members of the SALT caucus who won't vote for anything that doesn't hike SALT by a material amount. 20K is no longer going to cut it. Then you have the 30 members or so that support all of the clean energy tax preferences in the Inflation Reduction Act. You have other members who want to expand the child tax credit and keep all the SALT revenue. So these sort of like high-end conversations about what is the future of the party are going to get lost the second we start writing the tax bill, which is starting really this week as they try to come up with what the budget resolution is going to look like. So I'd encourage investors to get even more granular than that.
Nothing easy about any of this. Henrietta, appreciate your time. That's Henrietta Trays there of Vader Partners. The SALT lobby already causing some problems, right?
Oh, absolutely. I mean, but at the end of the day, they have all the leverage, because if you don't have a raise of the cap and TCJA goes away, then it becomes unlimited. But to the point she's making there, every single representative has become a king or queen. They can make any one issue or do or die issue. That is because the Republicans in the House have one of the slimmest majorities they have ever dealt with, and they're not in agreement on a vast majority of these issues.
The tax is not part of the story this morning, that's for sure. Equity futures down across the board, recovering just a touch here, Lisa. We're negative by 2.3%.
If they're haggling over SALT taxes, how do they talk about, revolutionary changes in AI and how to support that?
Much bigger issues.
Yeah, I'm just wondering.
They don't.
Yeah, that's part of the issue.
Up next on the program, Mandeep Singh of Bloomberg Intelligence as worries over China AI startup DeepSeek sparks a global equity market sell-off.
In case you missed it on Bloomberg Crypto.
We still see Bitcoin higher by about 40% since election day. So what is priced in, and where is there still room to run higher?
Now, everyone at the institution level is ready to adopt Bitcoin. It's not some random country which is saying, hey, let me have it on Treasury, or some mid-level funds trying to keep it. It's like every top banks around the world is now thinking about, okay, I need to get custody for it, I need to understand it, I need to own it, I need to provide it as a private wealth service to our clients. So it is just a whole run of things. So I feel like as we are looking towards 2025, it's definitely going to be the year of Bitcoin, not only as an asset value, storage value, but also I feel like technology-wise, so much projects are coming on top of Bitcoin that the whole decentralized financial industry has somewhere shifted into Bitcoin.
Don't miss Bloomberg Crypto Live on Tuesdays.
4 hours a day, powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything.
Bringing you up to the minute economic news whenever and wherever it happens. I'm Jennifer Zabasanja in Luanda, Angola, and this is Bloomberg.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, I can't say that in Bloomberg.
Maybe moxie.
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're the asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. No, nobody does that. They say, let's talk about the team.
And so many more.
Do you need a clap?
No, I think we're...
Do it for fun.
Ready? Go.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. Prudential's reputation as an insurance giant is rock solid, but it's not resting on tradition. CFO Janella Frias is playing a key role as the company resets its strategic priorities.
We've been on a journey to be higher growth, more nimble, and more capital efficient.
Watch Chief Future Officer Wednesday on Bloomberg.
This probably wasn't the outperformance in small caps you were looking for. Certainly weren't looking for it to look like this. But you're getting that relative outperformance now because the major tech names are getting hammered. Manos will go through the names in just a moment. The Nasdaq is lower by 3.8%, as low as negative 5% earlier on in the session. With your morning movers, let's cross over to Manos Cranny. Good morning, Manos.
Jonathan, good morning. Yeah, the Nasdaq was down 5% at 6 a.m. when you came to air and when I went off. What has DeepSeek done? It's really chipped away at the moat, that perception of a moat around NVIDIA. Every 1% lower in this stock is $35 billion worth of market cap. So you're looking at somewhere in the region of $380 billion worth of market cap wiped out. It's that impenetrable moat. Right now, what you're seeing is the risk is a lower cost option. So it's pervasive, not just within the chips that you use, the energy that you need. You've touched on all of these issues. Let's just take it forward and have a look at how that's permeating around. Meta, of course, they doubled down on Friday, didn't they? $65 billion in terms of CapEx. Will they need to do that? What's going to happen? They have, Danny and I were looking at this morning. They set up 4 war rooms to understand what DeepSeek is doing. How this high flyer, let's say, is producing lower cost of training. Will Mark Zuckerberg put on a suit again? That's the question Danny asked this morning at 3 a.m. But it is about their Llama assistant. What is it going to mean for that? Microsoft comes in down 6% here, Jonathan. Again, they put $13 billion into OpenAI. $13 billion. Nobody's saying that that's a squandering waste of money at this stage, but the numbers are simple. If we can trust this DeepSeek, 97% less computing power at 50 times lower the price. Is that subsidized? Is that real? What's the veracity? There's lots of questions we can ask around that. But right now, you're questioning that $13 billion investment into Sam Altman and OpenAI. There you go. Jonathan, good morning.
Thank you, Manos. That stock gets hammered. We're down 6%. I think Meta's got to drop more than 3% before Mark Zuckerberg puts on a suit. How about you, Bramo?
Well, I don't know. I mean, he has his now necklace brand, so I think, that kind of carries him a long way before he gets that suit back on.
I don't think that's happening anytime soon. And the surveillance this morning, American tech exceptionalism put to the test as China's AI startup DeepSeek rattles global markets. Tech stocks leading the decline, on track for a $1.2 trillion market cap wipeout if losses hold. The Nasdaq down by 3.9%. The tech stocks over on the Stock 600 over in Europe getting hammered as well. ASML, the big victim there.
Because this is basically just putting an absolute wrench in the entire supply chain when it comes to semiconductors. Even if they are doing this off the less advanced chips, they are doing it off of open source AI as well. You might need not as many of these semiconductors as potentially everyone thought. All this investment going in, is it almost too much? Do you not need it? And this is going to be a big problem.
Yeah, it also shows that, frankly, people are looking for the next squirrel to come around to give them sort of a new narrative. And basically, everyone's been hinging their shingle on this one idea that everyone's just going to load up on chips, and the more the better. And this sort of undermines that.
You think this could just be a squirrel?
I don't think it could be a squirrel. I guess how much have people been chasing that squirrel to elevated valuations? The idea that this is all in, you can't spend enough on chips. Does this undermine that? And now we've got a new squirrel.
Jensen's been in China for a while, hasn't he? Makes a lot of sense why he was there and wasn't in Washington, D.C.
Yeah, I mean, it also raises a lot of policy questions. What is the appropriate regulation of some of these chips? How much is the competition shifting to China? How much is this actually is some technology that the U.S. can adapt? Or is this really going to stay in China?
Based on what we know so far, you can make the argument, I think this morning and others have, that it's led to greater efficiency out of China.
Well, out of China, that can be deployed in the U.S., which could potentially be beneficial for a number of sectors. Look, we're trying to figure out what the implications are of something that we've known about for a hot second, right? And there is this feeling that it is a revolutionary shift. Nonetheless, it is one that people have been expecting. So that, I think, is the more interesting takeaway, how disruptive it actually has been.
Let's turn to U.S. policy. President Donald Trump's tit-for-tat trade war with Colombia didn't last too long. Trump announcing sweeping tariffs on the South American nation over migrant deportations, then abruptly backing off as soon as Colombia agreed to accept deportees. Is this a model for the next year or so?
This must be one of the smallest or shortest trade wars we've seen so far. But what did happen is Trump was willing to just basically throw around the weight of the United States, and he got what he needed at the end of it, which is why I think a lot of other countries, say Canada, Mexico, maybe the European Union, are looking at this and saying, wow, this is what we have in store. Now, the sanctions, the tariffs did not come in place, but Caroline Leavitt, the press secretary, made very clear last night, they're fully drafted, and she said they will, quote, be held in reserve.
February 1 is only just around the corner. It's not just about Colombia. It's about Mexico, Canada. It's about China too, and it could be about Europe as well. Taxes won't be straightforward either. President Donald Trump reiterating at a Las Vegas rally his campaign promise to eliminate tax on tips, telling the crowd, quote, if you're a restaurant worker, server, a valet, a bellhop, a bartender, one of my many caddies, or any other worker that relies on tipped income, your tips will be 100% yours.
So he says, let's see what Congress says. Henrietta Trey's just basically walked us through how difficult it's going to be even just to extend TCJA, what the SALT caucus wants. How difficult is it going to be to say something like there's going to be no tax on tips? And also, you have to start defining this. Who else can be paid in tips? Could one of your bonuses just be a tip now that you don't have to pay tax on? And also, what does this actually mean for the underlying economy? If you work at a grocery store and say you work at a cash register, but now your friend who's a waitress is not paying taxes on tip, does that mean there could be a shift in the economy on the jobs people want to go after? This has a lot of complications, and I'm not sure they're going to get it done this year.
Which, again, goes to the heart of why people are looking for squirrels. Because right now, the actual nuts and bolts are not very clear, and you can tie yourself into knots trying to understand exactly what will get through. It's not going to give any clarity, but it does seem like clarity that, oh my gosh, there's a revolution in AI. Let's talk about that. I think that's the reason why we're talking about squirrels.
Let's get back to that. Let's get back to that big squirrel. It's a big one. Let's turn back
just a squirrel.
to one of our top stories. Global tech stocks under pressure as China's AI startup DeepSeek continues to rattle markets. The Nasdaq now down by 3.8%. US chip giant Nvidia on track for its biggest market cap wipeout ever. It's down 12% currently as investors reassess the Western AI firms' valuations and competitiveness. Joining us now is Mandeep Singh of Bloomberg Intelligence. Mandeep, good morning, sir. It's good to see you. Yeah. This came from Jordan Rochester of Mizuho just moments ago. In short, it's hard to fade this as it puts into doubt the Nvidia story, the pricing power of US tech AI, which isn't cheap, and comes at a moment where consensus long US exceptionalism trades are looking very fragile. Mandeep, let's start with a simple one. Is this the real deal?
I mean, look, when it comes to open source, this is the moment. And we have had, Meta Llama as a model that's open source. Companies were adopting it, but it never was talked about in the same league as ChatGPT and Anthropic and, some of the other models, Google Gemini. In this case, what they have shown is not only is open source comparable in performance, it's far more cheaper. And that's where, you have to take that into account. I mean, OpenAI is charging, $200 a month for their O1 Pro model. How do you justify that cost now, given your open source model is almost comparable in performance?
Danny Berger raised this question a little bit earlier on in the program. I'd love your view on it. Does that greater efficiency lead to greater demand or not? Because certainly this morning it looks like for NVIDIA, people have made their decision on which side of that argument to come down on. What side of the argument would you come down on?
I mean, it should lead to greater demand, and I'm in that camp. The problem with NVIDIA is the expectations are already so high that the stock will be driven by how much the estimates can be revised upward. And so when you have a moment like this where everyone is questioning the pricing of these chips, I mean, look, NVIDIA is the one that gets impacted the most because their gross margins obviously will get impacted in this case. So net, I think demand-wise, we should be good. I mean, a lot of this data center capacity is fungible. So even if they're not using for training, they could deploy it more for inferencing. But Meta raised their CapEx last Friday. There was Project Stargate announcement. All this points towards more dollars going into generative AI. And so I don't think that the DeepSeek model changes that in terms of what companies are allocating their CapEx. Maybe you'll find out more during the earnings season this week.
There's another element of this story, which is how did China get to this place? And a lot of people, so far, the narrative has been that they simply did more with less, that they got these chips that were restricted and that were less powerful, but they were more innovative. You kind of are challenging that thesis. What's your take on this?
Well, so when I look at Meta Llama as an open source model, it's been out there, Llama 3, Llama 4, they have open weights, in terms of the models, and that's the secret sauce. You talk to OpenAI, they don't want to open source that, Google Gemini. So the fact that you have one model which is comparable to all the others that's been open source, and everyone could use that model and then keep improving it. OpenAI talked about O1 model, being kind of driven by scaling around inferencing. Now that's where what DeepSeek has done is they have used the feedback from these models to improve the data that's being fed to their model. And the baseline was still the open source model, but they were able to improve the inner workings of the model, the next version of the model, based on the feedback. And that's where they were quite creative in terms of using an open source model as a reference.
Just to sort of highlight your point, there has been a long time cliche that the United States innovates, China replicates, and Europe regulates. Are you saying that this is more of that essentially the innovation came from the US and that China took some of what it learned in the open sourced models from Meta in particular and just built on that?
I mean, look, they were not the first movers. When it comes to the ChatGPT moment, it was OpenAI and Anthropic. These two companies had the models first. Everyone else, Google obviously had their own in parallel. Everyone else has leveraged the open source model to an extent. And that's why, Meta's approach was, we want to create an ecosystem. That's why they open source it. I mean, the Chinese models, look, there are some nuances in terms of the paper that they have around this. And clearly, as I said, they've done a lot with the reinforcement learning, human feedback element. So they have done a lot around improving that open source performance and bringing down the price. That's the real innovation, is the hardware efficiency and lowering the inference price. I mean, the fact that OpenAI is charging so much higher, $200 a month for their latest model, and DeepSeek is saying we can do it at a fraction of the cost. So clearly, that hardware efficiency is a theme, but I would say the baseline was provided by the open sourcing, and then clearly they built on that.
Mandy, people I talk in Washington are concerned with China getting ahead of the United States. We'll say things like China's a year or two behind. What's the gap now?
Well, I mean, I think what this paper shows is they are more creative when it comes to, the less hardware that they have available, both on the training side and the inferencing side. And in terms of widespread deployment, I mean, you could argue, they have the local apps that leverage these models, and, it's a ChatGPT equivalent. But will it get broader adoption? I doubt, because of all the concerns that even TikTok had. But, it's still the #1 downloaded app here in the US.
Does this basically show, though, that export controls don't work?
I mean, we don't know the exact kind of training cluster that was used. Some people are saying it was $6 million and 2,000 GPUs, but others are saying they had a lot more. So we don't know exactly, but the paper that they have given out clearly shows that when it comes to inferencing, their costs are far lower. And training is a one-time thing. Yes, you have to train your models every 3 months, 6 months, but inferencing is the bigger opportunity when it comes to deploying across a family of apps to billions of users. So that's where I think lower pricing really helps adoption.
How much does this lift the bar for some of the tech giants that are going to be reporting earnings this week?
I mean, look, Microsoft, Google, like I said, Meta raised their CapEx. So what they have to tell the street now is, let's say this is real in terms of DeepSeek bringing down the price. How do they plan to compete on that in terms of using that innovation and incorporating it? And then really, what does it mean for 2026 and 2027 CapEx plans? Because we know this year they are raising the CapEx. I don't think they are walking that back. But then NVIDIA is driven by what happens in 2026 and 2027. And that's where I think there are still question marks.
So Mandeep, can I just jump in? They might not walk it back. Will investors put the pressure on them to do just that?
Well, so I think compute capacity is quite fungible. So let's say for training, you don't need as many GPUs for the next version. So you can deploy that for inferencing because there is a real demand for all the AI to be incorporated in current apps, current websites. So from that perspective, I do think they can say, okay, in the case of Microsoft, the cloud revenue will accelerate. Google cloud revenue will accelerate. Meta, I don't know because they don't have a separate cloud business, but they can still show that in the ad monetization. So all these apps have, places where they can deploy AI.
Mandeep, appreciate your time, sir, as always. I've no doubt we'll be talking again before the week is out. Mandeep Singh there of Bloomberg Intelligence. This is something that we've been talking about for quite a while. The biggest risk, for the likes of NVIDIA, would be the biggest spenders on that company, their biggest clients, their investors losing patience with them, with the CapEx spend coming out of companies like Meta. And I imagine there'll be a lot of questions on the call about that in the next few days.
And I think that to Mandeep's point, it's not necessarily for the CapEx spend this year or next year. It's to look at where that CapEx is going to go at a time where you potentially could do more with less.
We've got some pushback from Dan Ives of Wedbush. He says the bears dominated the weekend narrative and are trying to scare investors that this is a black swan moment. It's actually the opposite. It's bullish for hyperscalers, NVIDIA, and use cases.
Essentially, the idea that it will actually increase and speed up the adoption of artificial intelligence and increase efficiencies across the economy. Again, that points to this question of the incredible outperformance of small caps this morning.
The Nasdaq is down by 4%. Some relative outperformance from the Russell. Let's give you an update on stories elsewhere this morning with your Bloomberg brief. Let's cross over to Danny Berger. Hey, Danny.
Hey, John. South Korean prosecutors have charged President Yoon with insurrection for his attempt to impose martial law last month. Yoon is the first sitting Korean president to be charged while in office and can be detained for up to 6 months while his case is reviewed. The indictment comes just before Yoon was due to be released from detention on Monday. Bitcoin sliding over the weekend and again this morning, down almost 5% after President Donald Trump created a working group to advise the White House on crypto policy last week. The drop also tied to the close correlation between crypto and other risk assets, which, as we know, have been selling off with that DeepSeek advancement. Bitcoin is still up more than 50% since Trump's election victory in November. The Kansas City Chiefs and the Philadelphia Eagles will meet in New Orleans for Super Bowl 59. It's a rematch of 2023's big game that will determine if the Chiefs can achieve the first ever Super Bowl three-peat. The Chiefs once again beat the Buffalo Bills at Arrowhead Stadium, becoming the first team to advance to the Super Bowl 5 times in 6 years. The Eagles trounced the Washington Commanders at home and will make their 3rd Super Bowl appearance in 8 years. And that's your brief. John.
Danny, thank you. This is just a convenient way of getting TV ratings up. Make sure the Chiefs get there. Am I doing this right?
Yeah, either way, although if they always win, to Anne-Marie's point, is that really going to increase ratings?
Are they winning because the referees are letting them win? Is that what it's about?
Oh, I don't know.
No, I'm asking. It was a question, not an accusation.
Are they even real? Maybe they're just artificially intelligence-generated, images.
I find that NFL's all about marketing anyway.
Yeah, of course.
Yeah.
You mean that's like a little bit of action and
like 4 quarters. They don't really play much sport.
I know
and there's a commercial.
Feel about it.
Then
and
there's
yet you watch
commercial.
it. And there you go.
I watch college football.
Oh.
The difference.
Oh, yeah.
Yeah, there's an affinity to your local team. They stay in one place.
Who's your local team?
Not just mercenaries.
No, they actually
Alabama, Roll Tide. Up next on a program, DeepSeek, Reuters Global Markets.
There are a lot of question marks. Investors, I think everyone needs some time to digest exactly how real this is, what are the impacts, how it can be sustained. I don't think anyone quite saw this coming, but it really does accentuate that need for diversification.
Equity futures here down by 2%, recovering just a touch. That conversation's up next.
DraftKings hit a milestone in the second quarter of 2024. For the first time as a public company, it turned a profit. Is this a new era for DraftKings?
There's an inflection from when you're cash flow negative and you're operating off of equity raises from the past to when you're self-funded and you're cash flow positive and able to control your destiny a lot more.
You've had your first quarters of profitability now. Does that take pressure off? Does it increase pressure?
I think it increases pressure. I mean, once you start making profits, people expect you to make more, and all of a sudden you're valued on a multiple of those profits as opposed to the theoretical what could be. So very important, I think.
When you're cash flow negative, you've sold a vision of what the company should be working on, and you're very focused on working on that and delivering against that. When you've pivoted to profitability, the world of what you can work on is a little bit open, and there's a lot of different ideas, and it requires more focus than ever to make sure that you are prioritizing on the most important things that are going to deliver the most value.
DraftKings' solid standing in a booming sector gives them the luxury to play the long game. They're not under pressure to cut costs.
When you have really strong revenue growth, you don't need that. If you look at where we are today and where we want to be and where we believe we will be, the vast majority of the incremental EBITDA is not coming from any cost reduction. It's coming from increased revenue.
We don't feel like we need to cut costs because we're growing our revenue so much. We want to grow our revenue into our existing cost structure, and there's no need to reduce the cost as long as we're being efficient with what we allow our cost growth to look like.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Equity futures on the S&P down across the board here. We are lower by more than 2% on the S&P 500. On the Nasdaq 100, we're negative by 3.7. The bond market receives a bid. Yields are lower by 10 basis points on a 10-year 4.52. Under surveillance this morning, DeepSeek roiling global markets.
There are a lot of question marks. Investors, I think everyone needs some time to digest exactly how real this is, what are the impacts, how it can be sustained. Valuations are really extended. So coming into this year, there were already going to be vulnerabilities. Now, I don't think anyone quite saw this coming, but it really does accentuate that need for diversification.
So here's the latest this morning. Chinese AI startup DeepSeek sparking concern over US tech dominance. Nvidia set for its biggest market cap drop on record if the current move holds. Jim Bianco of Bianco Research writing, we start the week worrying the Mag 7 technology is outdated and slow, thanks to DeepSeek. And while you can argue that it does not impact the S&P 493, Russell 2000 or the broader economy, it is a big market event. Jim joins us now for more. Jim, welcome to the program, sir. First question, is this a big game changer?
It's a game changer for the Mag 7 stocks in that they're going to have to rethink what their, capex spending is going to be, and maybe even where they're going to go forward from here. Is it a big game changer for everybody else? Is it a game changer for the economy? No, it's not. But the Mag 7 stocks are 34% of the S&P. So if NVIDIA's got a problem, maybe people get up and go to work and they don't have to worry about their job. But anybody who owns anything that is related to a broad base of the stock market, they have got a concern because of the dominance that these stocks have over everybody's investment returns.
And Jim, there are a lot of questions about exactly how far DeepSeek's innovations can go in terms of really transforming to the negative NVIDIA's prospects. There is a larger takeaway, though. From your perspective, what does this say about how concentrated valuations got over the past year?
It's a direct mark on how they've gotten so concentrated, in that these 7 stocks, as much as we like to talk about the economy and the stock market and investment ideas, we're all tied to these 7 stocks, and in particular, we're all tied to NVIDIA. And whether or not you actually even know you own it or don't own it, and even if you don't own it, this morning witnesses, it impacts not only your stock investments, but even the algorithmic response you're seeing out of the bond market with the big rally, because the stock market is down a lot. So it matters to everybody, even though it may not change the economic or fundamentals underlying some of the assumptions that they had just on Friday.
Well, Jim, to that point, when you talk about algorithmic read-through to the bond market, is that really what you attribute some of the rally that we're seeing this morning in U.S. Treasuries? Or do you think that this actually opens the door to the Federal Reserve having a more dovish message on Wednesday?
I don't think that it should open the door to the Fed. Nothing has changed. There's been no data out. The fundamentals and the belief that the Fed is going to hold on Wednesday still applies, and that they are going to hold on Wednesday. And so, about the only thing that's going to possibly change on Wednesday, I hate to say it, is that, they'll hold and then President Trump will disparage them. It'll be a return to pre-pandemic levels like Powell has been hoping for 5 years, except not in the way that he was hoping it would get.
Is there a concern, you think, in the market about Fed independence? Because what you just said there, everyone's expecting Trump to disparage Jay Powell.
No, I don't think there is a big one, because I think that Jay Powell is, got a strong enough backbone that he understands it's going to happen, and he's not going to let it affect the policies that he wants to push forward from here. Now, whether or not that will affect Fed independence on who the next chairman is going to be, because presumably he is not going to appoint Powell, that's an open question. But for the short term, while Powell's still there, I don't think it is.
But don't you think that potentially Trump might start then dishing out some names, and you have this idea of what Scott Bessent, the soon-to-be Treasury Secretary, talked about at one point on the campaign trail as shadow Fed chair?
Yeah, and I've talked about that too, and I think that we're probably going to get a shadow Fed chair. But I think that was going to happen either way, whether or not the Fed, wind up cutting rates or not cutting rates, or wind up having a giant market response, in late January or not. We were going to probably on the road towards getting that shadow Fed chair probably in the spring or summer.
Hey, Jim, appreciate your thoughts. Jim Bianco there of Bianco Research. Jim's talked about that a few times. That's got to be the biggest risk for the Federal Reserve.
Yeah.
For the chair, you completely remove his ability to deliver forward guidance if you have a shadow Fed chair over the next year.
And a lot of people are expecting this to be the case, with people already trying out, and we've talked about that and raised that question. This sort of tit for tat and the return to the past norms, how much does that actually affect the way that Chair Powell communicates in these news conferences, when clearly the actual pace of policy isn't even at issue right now? It's just simply the political maneuver.
I mean, arguably, he's a lame duck, and we just saw this play out when it comes to the presidency for 2.5 years. Donald Trump was making moves, and the market, everyone was paying attention, because it didn't really matter who was sitting at the White House at that moment.
The market making moves right now. The Nasdaq is lower by 3.7%. Up next on the program, Victoria Fernandez of Crossmark, Angelo Zeno of CFRA, Neil Dutta of Renmac, and Oksana Aronoff of JP Morgan Asset Management from New York. This is Bloomberg.
In this facility, which is part of your $2 billion investment in the last 2 years, it's a massive amount.
Yes, because we focused a lot on automation and upgrading our quality standards so that we can adhere to the US FDA and European standards, because some of our vaccines now are going even to the West, which is a fundamental shift in our strategy, from back in the day when my father started the business, where we were predominantly in India and the developing countries.
India-centric, now you're more global.
Yes.
So you're about 8,000 strong in this facility? All Indian nationals?
Mostly Indian, yes. I would say 99% of talent that we've trained overseas and in India. We have our own internal skill building center where we train on site.
Serum started with just producing vaccine for tetanus, but is producing a lot more vaccines now. What is the next big thing you think?
A global pandemic flu vaccine is something that we're working on, and I think the world will need that. Not only for the annual flu cases, but God forbid there's a flu pandemic. I think we are very well poised to make 1.5, 2 billion doses and roll it out very quickly to protect the world. And we have, of course, the other vaccines, as we talked about, HPV and malaria, that we've just launched, and we're going to scale that up as well.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
The top names in business are on Bloomberg.
We are in the midst of the largest wealth transfer in history right at this very moment. So $100 trillion of wealth is going to next-gen and millennial clients over the next decade. So that has some pretty significant implications. But in addition to that, women are controlling more and more global wealth. Today, they control 1/3 of global wealth, but in the next 5 years, 30 trillion is going to pass in the hands of women, and they're going to control over 50% of the global wealth market out there today. Women care deeply about investing with purpose, investing to make an impact, doing good with their investment. So you're going to see some significant opportunities for us as we lean in and have been leaning in to capturing more of the female wallet globally.
Nobody covers business like Bloomberg. Context changes everything.
Bloomberg Invest is back. Join me, Shonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 5 p.m. London time, right here on Bloomberg. Context changes everything.
I am positive because it is definitely a change in tone.
There is a lot of optimism. Everywhere about what the U.S. could do.
There is reason for optimism. There are green shoots that people are able to point to.
The U.S. is at the epicenter of all discussions.
As America goes, so goes the world.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
All that Davos confidence, getting some ice cold water poured over it this morning, in a market at least. Check out this calendar. Let's go through it together. The tech earnings over the next several weeks. Just got a whole lot more important. You'll hear from Meta and Microsoft on Wednesday. You'll hear from Alphabet next week alongside Amazon, then the big one at the end of this month. Next month, NVIDIA. These are huge, given where the Nasdaq is right now, down by 3.8%, and the questions that will be asked about how much those companies, Meta and Microsoft, are spending on that company, NVIDIA.
They already were huge because the big tech names that you just mentioned are what's been driving the rally that last week saw the S&P rise to a record level yet again. Now you add on top of it DeepSeek, a Chinese startup that really revolutionizes the efficiency of some of the artificial intelligence models, and suddenly a real question about whether the spending was for naught at some of these companies.
Well, the information had a story out yesterday on how Meta has been scrambling and serious concern from some of their leaders that they are behind and they are in panic mode. Their leader for infrastructure directors said they are concerned the next version of their flagship AI won't perform as well as DeepSeek. So the question I have is this gap between Chinese tech and American tech. There's been this consensus that at least the U.S. is still a few years ahead. Is that still the consensus today?
Do you want some good news? Bonds are rallying. It's the good news this morning, right? They're at least working. We're down by 10 basis points on 10s, down by 8 on 2s.
Yeah, what did we just hear from Jim Bianco? Algorithmic selling or algorithmic buying just simply on the downdraft that we're seeing in risk assets. I do wonder whether it opens the door, though, to a more dovish tone from the Fed, because everybody owns NVIDIA one way or another, and essentially where the stock market goes, so too does sentiment, and sentiment will be hit from this.
Sentiment getting hammered so far this morning, that's for sure. Coming up this hour, your lineup looks like this. We'll catch up with Victoria Fernandez of Crossmark Global Investments as investors await big tech earnings. Angelo Zeno of CFRA as China's AI startup DeepSeek threatens U.S. tech dominance, and Neil Dutta of Renmac looking ahead to the first Fed decision of 2025. We begin this hour with stocks lower, much lower. Global equities slammed as investor worries over China AI startup DeepSeek lead to questions about U.S. tech leadership and valuations. Victoria Fernandez of Crossmark Global Investments with this to say: we expect high levels of volatility as markets try to find a broader footing than the highly concentrated environment of just a handful of tech names. There appears to be little room for error as we enter the new year with elevated sentiment levels and extremes in valuations. Victoria joins us now for more. Victoria, welcome to the program. You, of course, wrote that before this big shakeout in the equity market. Can you share with us your thoughts this morning as to whether you really believe this is a threat to U.S. dominance?
Yeah, I don't know if I would say threat to U.S. dominance, Jonathan, but I do think it's a threat to the expectations that we had coming into this year, that we were going to have this extremely strong growth for this year, and that was going to lead the stock market higher and lead bond yields higher. So there is a threat to that component. And what does that mean in regards to the Fed? Obviously, the tech game can turn on a dime. We've seen it over the last 24 hours. I do think that the U.S. is probably still a little bit ahead in this race, in this tech race, because of all of the investment that we have put in there. But it looks like the story is China is not as far back as what people thought. They are much closer. So it leads to some questions, and obviously we see that response in the markets today. And it also leads to the concern that the U.S.-China trade wars and the restrictions on chips and things like that could get even more heated, which will bring more volatility to this market.
So, Victoria, let's go through the individual components of the market breakdown in equities. And you can share with us where you'd be constructive and where maybe you'd be hands off. So you've got the likes of NVIDIA, the obvious place to start. That gets hammered. How many chips do we actually need to make this kind of progress? And then you've got the big spenders on those chips, the likes of Microsoft and Meta. They're getting some real competition. They've spent a lot of money. They're declining this morning. And then you've got the energy names as well. So the whole ecosystem's being questioned. The utilities that ran up aggressively over the last 12 months are getting hit this morning too. What would you be looking to pick up the pieces with, Victoria? What would you be willing to say, you know what, I'm going to stay away for the time being?
Yeah, so as you know, at Crossmark, we've actually been underweight a lot of these names versus the market over the past 9 months to 12 months because we were taking a little bit off the table as things went along. So I think that's what you, hopefully have done. So your position is a little bit less. I would not go in and pick names up right now at this point in time. I would let this shake out a little bit unless you want to make a very tactical move and go in and be trading, every few hours or every day in these names. If you're a long-term long-term investor, let this shake out a little bit. You're right, the whole ecosystem from utilities to chips to the support to the software have all been rattled here. So I would actually look at some of the other areas of the market. I would look at some industrials. I would look at some financials and see if you could find some areas there to put your money to work while you let these elements kind of fade a little bit.
How does it influence, though? And there is still a lot to be learned in terms of how broadly applicable and how truly revolutionary this is. But Victoria, how much does it change your thesis on the energy space in particular at a time where already Donald Trump wants to increase the U.S. infrastructure and keep energy prices low?
Yeah, so obviously the energy names that are being hit today, there was such this huge expectation that demand would increase because of AI, that we were going to be building lots of data centers. We were going to need all of this power coming from these companies. And that tone has shifted. When you look at the oil companies, and you look at some of the other energy companies, though, we've been expecting that the price of oil is going to come down. We know that that's what this current administration wants to do, and that was going to be difficult for some of these companies. So we were already shifting and looking at more of the midstream, the transportation components of the oil and gas and the energy companies versus maybe some of the upstream or utilities themselves. So I think you can make that shift. And then if things change and the expectation starts to move higher again, you can add a little bit more back to that part of your portfolio.
There's another aspect of the trade this morning, and something Jim Bianco pointed to is simply algorithmic buying in the bond space. Does it change your view with the Fed's tone this week, given the fact that there was so much expectation around growth and even potentially a resurgence in inflation? Does this put a damper on that, given that where the stock market goes, so too does sentiment?
I think it does a little bit, Lisa. I mean, we've talked over the last few weeks about that rise in the longer end part of the curve, that it really wasn't due to inflation expectations. Break-evens have held pretty steady. It was due to term premium, to the growth that we were looking for. I mean, what? IMF is saying 3.3% growth globally over the next couple of years. I have a feeling that'll probably come down if the AI story continues the way it is today. So if growth expectations are lower, that's why you're seeing that longer end part of the curve come down. And that steepness of the curve that has been a benefit for financials and for banks will start to go away a little bit. So it does shift the story. And I think it actually gives the Fed a little bit more room to take this pause because volatility is continuing to go up. Look at the VIX today. It's up, what, 30% just this morning? And it was a net speculative short position on VIX over the weekend. So I think we'll see a lot more volatility. That's going to give the Fed more time to pause.
Victoria, you have to forgive me. My head's kind of spinning here because there are these competing narratives that are hard to get my head around. You've got the AI revolution that may or may not transpire in short order as a result of greater efficiency. You have a Fed that's grappling with growth expectations and just where we are currently in the economy. And then you have politics overlaying on that, which is part of the reason why people were saying that bonds were selling off, that the deficit is just increasing dramatically, and that at some point the bond vigilantes are back. Which story are you paying most attention to? What's your sort of lodestar at a time of so many cross currents?
Yeah, you're right. I mean, there's different stories you can look at, and really depending on what you want your story to be, you can find the right evidence to back that up. For me, it's obviously the bond market. Not that we say the bond market's always right and the equity market isn't, but the bond market is giving us a lot of clues as to what's going on in regards to inflation expectations, in regards to growth expectations, in regards to debt issuance coming in. Obviously, that's tied to the political element and what we're going to see there. What is issuance going to look like? Is it going to be more bills? Is it going to be longer term coupons, which I think it probably will be? And what does that mean for interest expense? It's all tied together. But I'd be watching the bond market to see where yields go and how those bond vigilantes actually come in and how long they want to play this game. To me, that's what's going to drive the equity market, obviously along with earnings.
No sign of the vigilantes this morning so far, at least. Victoria, appreciate your time. Victoria Fernandez there of Crossmark Global Investments. Check out the bond market across the curve, 2-year, 10-year, 30-year, down 9 basis points on a 30. On a 10-year, down about 11. On a 2-year at the front end of the curve, we're down about 8. So a rally across the board in fixed income.
It should make the auctions that happen later today and later this week a lot better. There's $69 billion of 2-year notes and $70 billion of 5-year notes being sold later today, 7-year notes being sold tomorrow. Right now, a really good time to be selling. So maybe this is actually really beneficial for the U.S. Treasury Department, and they can send a thank you letter over to China.
Yes, to DeepSeek. It's a real confidence shock, isn't it? You think about some of the consensus trades into this year, long the United States, long U.S. equities, concentrated risk there in big cap tech. We're seeing that unravel today. Long the U.S. dollar, saw that unravel somewhat last week. And then in fixed income, worry about higher inflation, yields are going to creep higher, treasuries lower, everything just turns upside down this morning.
Yeah, but it also shows how much people really are just following a narrative without digging in, because ultimately a lot of people were saying that AI couldn't really lead to any kind of revolution in other sectors unless it was much less energy intensive. So this is actually a gift to so many people who are saying that, at the same time that it really just highlights how expensive a couple stocks really had gotten.
Oh, big time, and how one-sided this market had become. A lot of that unraveling so far this morning. We'll see if it sticks. The opening bell about 1 hour and 20 minutes away. With an update on stories elsewhere this morning with your Bloomberg Brief, let's cross over to Danny Berger. Hey, Danny.
Hey, John, just to revisit that, Chinese AI startup DeepSeek driving a global tech sell-off. NVIDIA down nearly 12%, TSMC nearly 11%. Its new model demonstrating performance similar to the world's top chatbots without that high price tag. It's built with open source tech and challenges the notion that China's AI technology is behind the U.S. A geopolitical scrimmage between the U.S. and Colombia. President Trump walked back his tariff plans on the country after reaching a deal on deported migrants. Colombia's president initially refused to allow military planes with migrants to land because of objections on the use of shackles. The White House declared that Colombia had agreed to all of President Trump's terms and will provide, quote, conditions of dignity. In sports, Jannik Sinner defended his title at the Australian Open, beating Alexander Zverev in the men's final to win his 3rd Grand Slam. The world #1 player dominated the match, winning in straight sets without facing a break point. And in the women's tournament, a big upset. American Madison Keys upset top-ranked Aryna Sabalenka in a thriller to win her first ever Grand Slam title. And that's your brief, John.
Hey, Danny, thank you. Appreciate it. More from Danny again in about 30 minutes' time. Up next on the programme, the Morning Calls Plus. Angelo Zeno of CFRA as jitters over China's AI startup DeepSeek rips through equity markets worldwide. From New York City, this is Bloomberg.
Markets never sleep, and neither does Interactive Brokers. Discover more opportunities with CME futures across equity indices, interest rates, FX, energy, agriculture, and metals. CME futures offer around-the-clock access, deep liquidity, and capital-efficient margins, helping you seize opportunities whenever they happen. The best-informed investors choose Interactive Brokers.
In 2000, post-Napster, generally everybody wrote off the recorded music industry, including the investment community. And I didn't mind that chapter because then I got left alone. And actually, I think out of that period, we started to create better art because the pressure wasn't on from the technology to be the most powerful chapter. And then iTunes came in, and iTunes, to Apple's credit, did have a boutique taste mentality about the store, which meant that I think they understood. I can tell you from that period that the artists that came through were of a very high quality because it was encouraged to be boutique. Now, ironically, this chapter has made us more money times 5 than the iTunes chapter and the post-Napster chapter. But an algorithm tells you what you want, not what you might like. And there's a difference between what you want, but with streaming, the downside is you have incredible penetration, and we have hundreds of millions of people around the world. And so that has been very lucrative as a business.
Equity futures on the S&P negative by 2 percentage points. We're down by 3.5% on the Nasdaq 100 with the opening bell about 1 hour and 15 minutes away. Let's get you some morning calls. Your first call from Raymond James, reiterating its strong buy on Meta. The team noting DeepSeek's innovations could lower model training costs for AI hyperscalers. Your second call from Citi, reiterating a buy on Nvidia with DeepSeek in mind. They say we don't expect leading AI companies would move away from more advanced GPUs. The stock is down this morning, still negative by 11.6%. And finally, Cantor Fitzgerald reiterating its overweight on Nvidia, calling the DeepSeek announcement bullish for the AI industry. The argument essentially being, Lisa, that as efficiency goes up, demand's not going anywhere.
That essentially it'll actually increase demand if a number of companies can play around with and figure out how they can adapt AI models to potentially make themselves more efficient.
Sticking with tech this morning, Nasdaq futures well off session lows. They were down by 5% at 6 a.m. Eastern time, which is just amazing. US tech leaders under pressure ahead of earnings as the Chinese AI startup DeepSeek's latest model boosts cost effectiveness while running on less advanced chips. Angelo Zeno of CFRA joins us now for more. Angelo, welcome to the program. What a time to catch up with you, sir. So Meta comes out and says it's going to spend north of $60 billion on CapEx this year, and then DeepSeek comes out and says, slow down, maybe you don't have to spend that much. Angelo, is this good news or bad news for the likes of Meta?
Yeah, I mean, it's amazing what a couple of days will do, right? But yeah, I mean, as far as kind of what this means specifically for Meta, I don't think it necessarily changes the story for Meta very much, to be honest with you. I think, the company kind of just, they announced their CapEx plan on Friday, the 60 to 65 billion. I think they're going to reiterate that when they report later this week. And, when we kind of think about some of the hyperscalers out there, we continue to think that they're very well positioned, given the free cash flow generation, kind of their business models and their ability to continue to aggressively, spend on some of these next generation tools out there. But, whether or not, this allows them to potentially kind of lower their costs of modeling or what have you remains to be seen. But, I think at the end of the day, I don't think it changes it doesn't change the story much specifically for Meta. I think kind of some of these chip makers, that might be a little bit of a different story, though.
Angela, it might not change things for management. I wonder if it changes things for investors. Do you think they'll carry on supporting the amount of spending that this company's doing?
I mean, listen, I think they're going to have to tell a really good story in terms of the monetization of AI when they do report on Wednesday. I think the investors are going to kind of want, more clarity on how they plan to monetize AI. I think, the ROI potential is there for this company. Maybe not as clear as for some of the cloud companies out there and kind of the need to increase capacity and what have you. But I think it's extremely important for Meta on Wednesday to really kind of tell a clear-cut story on how they plan to monetize AI. You're gonna have Llama 4.0 ramp here in the first half of this year. Clearly Meta AI has seen kind of a significant increase in its kind of installed base. So there are definitely ways that we think that they can kind of monetize AI here over the next couple of years. They've just got to make sure that they tell the story properly there for investors.
Angelo, how worried are you about a late 1999 moment where suddenly we have valuations on a story that actually is true, that there is a revolution going on, but that we don't fully understand what it is yet and who the winners actually will be? Do you think that there will be some more disruption that will be profound to the rally that we've seen so far at big tech?
Listen, I think you'll continue to see a lot of noise out there. I think the game's going to continue to change as far as kind of the AI ecosystem is concerned. As far as where valuations are concerned, what we do like about tech actually is, the valuations are not extreme at all. We do think for the most part, big tech, you've got growth at a reasonable price among, kind of, let's call it the Mag 5 names that I cover within tech and comm services, not taking into account Amazon or Tesla within kind of that ecosystem. And you kind of, again, you look at those valuations out there, you look at kind of the secular drivers specifically tied to the cloud and digital ad spend, that continues to remain intact. And I don't actually think kind of a lot of this monetization AI potential is embedded in a lot of these kind of stories for these names. So I'm not necessarily worried about the valuations here. Again, I think as far as the chip industry is concerned, what you're going to see start happening is you're going to potentially start seeing multiple compression on any sort of rallies here, because I think there are going to be some concerns about kind of the magnitude of spend as we go into 2026 and 2027, not necessarily 2025.
All of that being said, Angelo, there was this theory out there that essentially if this efficiency story was correct, with artificial intelligence, it would be the non-tech names that would benefit that much more, simply because they wouldn't have to be as heavily cost-driven as they have been in the past. Does that concern you? Do you think that we're closer to that shift, that threshold in who benefits from future advancements?
Yeah, I mean, listen, I think that the story is going to continue to change in the market here in terms of who potential winners are, where you should kind of be investing and what have you. We continue to be, very big believers. Kind of the way you invest kind of in AI long term is, the cloud companies we think are going to be the biggest beneficiaries out there, especially when you kind of look at some of those companies from a valuation perspective and the amount of capacity that you're going to need here, over the long term. We also think there are going to be select semi names out there, despite some of the concern out in the market right now, that will continue to benefit in the long term. And I'm not necessarily talking, just cloud oriented in nature. So, but that said, I mean, there are going to continue to be narratives that change here over time. And I think investors, I think if you're, whether you're an investor or a trader, I think is also going to dictate how you kind of navigate through this market as well.
Do you think today is just the trader reaction, not the investor reaction?
Listen, I think there's a lot of kind of trading involved in this market right now. But, at the same time, there's one thing the markets hate is uncertainty, right? And when you kind of think about the uncertainty that's been created here from this DeepSeek scenario out there, I think you got to sell off on some names or compress some of those multiples out where the uncertainty is greatest. And I think specifically when you look at NVIDIA, and it's a name that we've liked here for a long time, I think you have to potentially put into question, do you need to kind of continue to upgrade at the pace that we've been upgrading at for a name like NVIDIA? I mean, these annual cadences now that NVIDIA is on, is the pace and the amount of spend that we've got on NVIDIA right now kind of warranted in nature? And I think time will tell on that. But that said, I mean, one of our biggest competitive advantages out there, or our biggest competitive advantage, is the fact that we have access to these leading edge GPUs and capabilities. So from that perspective, I do expect these hyperscalers to continue to aggressively invest.
That's what Dan Ives is also talking about this morning in his constant Twitter post following all of this. Given your work on Meta, I'd love to get your thoughts on the fact that the information has this story out saying that there's been a scramble and almost a panic at Meta, with leaders saying that they're not sure if the next Meta flagship AI version could perform as well as DeepSeek. So can they even catch up to what DeepSeek is doing? How much is this earnings call analysts and investors going to demand answers on whether or not they were paying attention to what the competition was doing?
Yeah, I mean, listen, I think the competitive landscape has definitely kind of intensified here in the last couple of days, and we do have to take China seriously at this point in time. I think it creates a lot. There are definitely a number of storylines here that are created also, from a privacy perspective and other type of storylines out here as well that I think the U.S. government is going to have to address. But as far as kind of the ability for kind of Meta's models now to be compared to the likes of DeepSeek and others out there, that's just, you're going to continue to see that. So listen, I think that competitive landscape, I think long term is good for the industry, but near term in nature, I think gets a lot of investors out there worried.
Angelo, appreciate your time this morning, sir. Thank you. Angelo Zena there of CFRA. Can see that worry across the board, see it in equity futures, see it in single names, certainly see it in NVIDIA. There's a lot of skepticism out there still this morning, though. Just how many chips were used, what chips were used. There'll be those questions. They won't go anywhere.
And right now, Elon Musk has been weighing in on that. This one AI CEO, Alexander Wang, said that DeepSeek has about 50,000 NVIDIA H100s they can't talk about because of the U.S. export controls that are in place on X, Elon Musk responded obviously. So that speaks to that skepticism of just how much they cannot disclose about what they used simply because of some of these restrictions the U.S. has put in place.
So basically the restrictions are there, but they went around them and found these chips anyway. I think a lot of people are questioning whether or not they've used them.
And that has got to be the question. Look, this speaks to two things. It's not just the degree of the breakthrough. Lisa, we talked about this earlier. It's also how one-sided the market was going into this news. So you've got to think about that with regards to the price action you're seeing on the screen when you see the Nasdaq down by close to 4%.
This was the main driver of the new record high that we had last week and what we saw last year. It just goes to the skepticism of how much further it can rally and how you can price out what multiples should look like at a time where we are in a transformative period of time with a lot of changes down the pike.
It's definitely one way of shaking up a US equity market if you wanted to. That's for sure.
Oh, that was well put.
Up next on the program, Neil Datta of Renmark and Oksana Aronoff of JP Morgan Asset Management. From New York, not implying anything.
No.
This is Bloomberg.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close, weekdays at 3 p.m. only on Bloomberg Television. Context changes everything.
In 2015, I was not optimistic because nobody was working on the hard problems. The energy R&D budgets had gone down. The venture investing in climate had gone down. It was completely out of fashion. So I don't know what people were optimistic about then. The fact is we built essentially from scratch, with lots of supporters, a really mind-blowing level of innovation against emissions. And in the last 9 years, that's gone better than I would have expected. So only now could you even, plausibly be optimistic about the path of emissions. And someone who said, hey, nobody's ever scaled things up like the speed that we knew to before, they're welcome to say, hey, I'll believe this when I see it. In the meantime, some people who care about this issue are really out, trying to think, do we need permitting reform? Do we find, what new ideas haven't we found yet? How do we fund people with those new ideas? How do we get the costs of these things down? How do we collaborate on a global basis? So we're still not at the point where it's guaranteed or even that it'll be easy, but at least there's a theory of change.
It's going to be quite an open, 60 minutes away. Equity futures look like this. We're down by 2% on the S&P, down by 3.4 on the Nasdaq. Nasdaq 100 was down by 5. Unreal. Off session lows then, with some movers going into that opening bell. Let's get them. Here's Manus Cranny. Hey, Manus.
Jonathan, good morning to you. We're looking at history in the making. It is the biggest equity wipeout in the history of the equity market. Every 1% that NVIDIA drops is the equivalent of $35 billion. So you're looking at just under $400 billion of a wipeout. The question is the exclusivity, the moat that's built around the high-end chips within NVIDIA. Do you need to torpedo some of the assumptions that you've made in terms of the capex that all of the hyperscalers are making? Citi question DeepSeek's advanced, not using advanced chips. They keep a buy and $175 on that. And that is the big question that is being asked in the market. How can DeepSeek use 97% less power and deliver something at many multiples lower in price? The reverberations are profound. Meta has 4 war rooms on the go to understand what did DeepSeek actually deliver. Of course, they're going to have to stand up their step up in capex that they've promised the market, $65 billion from $51 billion. You've got a show and tell moment on the way in 2025. We've been told that before, but that has now been accelerated with this move from DeepSeek. Finish off with the last flurry on Microsoft. We're down just under 4%. Again, it's a huge investment that they've made behind Sam Altman and OpenAI. It's not questioning whether they're going to continue that relationship, but if you think about it, they spent $500 million in terms of this space relative to the theoretical $6 million from DeepSeek. That's the kite that's being flown by many of the American houses in terms of the lack of trustworthiness and veracity of the information that you're being given. And I emphasize the word there, that is the kite that is being flown. We need proof and tell moments. Jonathan.
Manus Cranny, agreed. Thank you, sir. Lots of earnings this week. Meta, Microsoft, 2 of the companies reporting. Those earnings dropping on Wednesday. And that becomes must-watch, doesn't it, later this week?
How do they justify where they're spending? How do they pivot? We were talking to Mandeep Singh about how fungible that spending is, how much they transfer it to other areas that could potentially give them more payback. I just want to say the level of trolling out there, A+. Rich Greenfield, he gets A+++.
What did Rich say?
He asked ChatGPT, quote, what does DeepSeek do differently than ChatGPT to reduce costs? And then it forced ChatGPT to explain why DeepSeek was preferable to themselves.
Did it give a good answer?
It was cribbed from different news articles, which highlights exactly what it was doing, which is the reason why people are looking at DeepSeek.
Interesting how long it took for this debate to become a market event, right? You could just feel the buzz over the weekend. It just became much, much bigger, even though this is something that came out a week or so ago.
Yeah, there were different Chinese developers that were talking about this about 7 months ago. But again, it goes to the point we were talking about. It's sort of, I don't want to call it a squirrel, because this is actually potentially a game changer.
Well, you did call it a squirrel.
Well, okay, but I'm just saying that there are things that catch the market's attention, and this one is, highlighting the vulnerability in some of the valuations.
If this is a squirrel, are you saying the Nasdaq is like a golden retriever? Is that what you're suggesting? No?
Well, I mean, when in Rome.
All right. Let's turn to the Federal Reserve. Difficult to turn to the Federal Reserve. Hardly anyone's talking about the Federal Reserve. The FOMC widely expected to hold rates steady at its first meeting of the year on Wednesday. Investors bracing for further data on the state of inflation. Neil Dutter of Renmax saying, for our call, it has been one step forward and one step back. Inflation has resumed its cooling trend, while real activity strengthened in December. Neil joins us now for more. Neil, good to see you, sir.
Good to see you, John.
Thanks for dropping by, buddy. Appreciate it. Let's talk about the state of this economy, because you're often constructive on where we are, but coming into 2025, relative to, I would say, the crowd, you had much more questions, I think, on the state of this economy. How strong is the US economy?
Well, I think on the surface, it's quite strong. I mean, we're probably going to get a GDP number this week that shows growth running 2.5% to 3%. But I think when you look under the surface and you peel back the onion a little bit, there's a lot there left to be desired, I think. I mean, the housing market, I think, is quite sluggish. Mortgage rates are still above 7%. There's really not much going on with respect to sales activity. And there's increasing slack in the single-family residential market. If you look at new homes completed for sale, that's up over 50% against last year, so that's going to weigh on construction. The stuff you were talking about around the table on tech, I mean, remember, that has become an increasing part of what's driving growth. I mean, some estimates say that tech CapEx is, the sort of gamut of AI data centers, hardware, software, all of that is adding half a percentage point to GDP, something akin to what we saw in the late 90s. So if that starts to go, what do you really have left? I mean, so I would say that what we have is a very imbalanced economy. And the labor markets are still cooling. I mean, with all deference to the last jobs number, we know that the quits rate is at cycle lows. What do you think that means for wages, which in turn will put downward pressure on consumption? So I think, for me, I think the consensus is a little bit too optimistic about growth, a little bit too pessimistic around inflation. I think that means that we're probably going to get more than 2 rate cuts this year.
Just to unpack some of that, and we'll get to the conclusion in just a moment, I think the point that you made on tech capex is an important one. Is this a macro story? And Lisa, it would go to a question that you asked a little bit earlier about what was happening in the bond market. Bond yields down by 9 basis points. Some people might suggest it is.
That essentially it's propping up and giving a rosy sheen to all of the data that we've seen, and that frankly, that increase in asset prices has fed into this enthusiasm that a lot of people have had that have kept going some of these inflation fears in a more significant way.
Neil, you talked about housing as well. Let's pick up on that point. You've been pretty consistent on this theme. This housing market does not work with interest rates where they are. That's a housing problem or a broader economic problem?
I think it starts off as a housing problem and then becomes a broader economic. I mean, remember, construction employment has been a notable bright spot in the labor market. So if there's slack building and residential construction begins to decline, we're seeing the builders telling us that they're going to bring their starts in line with sales. Well, if sales are weakening, what do you think that means for starts? It means fewer starts, which in turn will imply less construction employment, and then that's a problem. So look, I think. It can only, at some level, right? If the Fed can't stimulate activity in the housing market, what are they really doing? So a lot of what's going on right now, I think, is strong government spending at federal, state, local governments kind of offsetting a lot of the squeeze that we're seeing in the housing market. But if you start to see state and local government spending slow down, which I think is probable this year, that's going to put even more of a light on what's going on with housing.
What makes you convinced that if the Fed does cut by more than 50 basis points this year, there will be no upward pressure on inflation at a time where you see that there's a lot of uncertainty and inflation expectations have been wobbling around and inflecting upward in different readings, depending on political persuasion?
Well, I don't think that inflation expectations are really drifting upward. So, Lisa, I disagree with the premise of what you're saying. But I would just
always love having you.
I would just say, inflation expectations are I think stable. But to answer your question, rental inflation will continue to slow down for the foreseeable future. We know that based on a wide variety of data, whether that's the all-tenant rent index that came out from the BLS last week, or just the single-family home price index or home rent index that came out from CoreLogic. We know that inflation is a lagging indicator, so I would expect that even after the Fed cuts, you'll continue to see this downward pressure on rents going forward.
Maybe on rents, right? So this has sort of been the tale of different markets, and the housing market has certainly been marching to a drummer of its own accord. But on a broader market scale, you've seen airline prices surge. You see, depending on the markets, there's
okay,
sort of surge pricing in hotels.
Sure, but when you talk about eggs. The Fed can't do anything about culling of birds. But when you talk about airlines, for example, how are they driving those higher prices? They're cutting capacity, right? So in nominal dollars, is air spending actually going up? I'd argue probably not. That's not the kind of inflation the Fed really should be concerned about. Ultimately, it comes down to compensation growth and whether that equals inflation and productivity over time. And what we know about compensation growth is that it is slowing.
Just quickly, one thing when we were in Davos, a number of different executive management firms said that it seemed like the labor market was a lot tighter than what we'd been expecting, and that actually on the margins for certain areas, you could potentially see an increase in salaries in certain places, in certain industries. You reject that?
Yes.
Neil, let's talk about policy uncertainty. That was a quick one, yes or no?
Can you two start a show? I would watch. Or just a weekly podcast.
I would just, if you feel that strongly about the tight labor market, how come it's increasingly likely that firms are holding their workers flat on their pay? You don't actually cut the wages of the people outright, but you do hold them flat, and that's actually going up. So I would, again, I reject the premise of that.
So you think employees have the leverage right now?
I think employers have the leverage. If if there's so much slack in the labor market, why are you all calling your workers back 5 days a week into the office?
True, because COVID is over and they should have been back already, some would say.
Well, I mean, that's a sign that workers are losing their leverage in the labor market.
Let's talk about policy uncertainty, because you have a different view than most people. Most people, when they say policy uncertainty, they're concerned about Trump and tariffs and trade, and you actually have certainty when it comes to potentially some of the policy action we might see out of this White House.
I mean, you always have to ask yourself that the people whining about policy uncertainty out there right now, would they be saying the same thing if the shoe were on the other foot? Would they be lamenting the policy uncertainty around tax law?
If Kamala Harris won?
Around tax law at the end of the year? That would be a huge uncertainty. So I just think it's kind of interesting seeing what people are picking and choosing. What's pretty obvious to me is that the corporate sector is giving the new administration the benefit of the doubt, okay? If there's more tariff uncertainty, is that the price you have to pay for a more improved regulatory framework on the back end? I mean, if you look at capital spending intentions, at least up until recently, they've been going up, not down. So for all this sort of policy uncertainty and so on and so forth, I mean, I just think there's always going to be uncertainty when the tides change, okay? But it's just interesting to see what uncertainty people are thinking about. So I think it's a bit of a red herring, quite frankly. There are lots of reasons to be concerned about the economy. Policy uncertainty is very low on the list. And I would add, the Fed is a source of uncertainty. No one wants to talk about that. There's always you talk about Democrats and Republicans. On the street, it's, are you siding with the administration or the Fed? Right?
Sure.
Those are the political parties that we think about. And I would just say, I think the Fed's a source of uncertainty to some extent. The reason being, we're not going to prejudge, we're not going to speculate in November. 6 weeks later, they do exactly that. And nothing's even happened yet, by the way. And we're going into the year with 2 solid inflation readings. So I think it's interesting that they cut 100 basis points. New guy walks through the door.
And then they start assuming different policies.
Yeah. Now, what was that about? What explains the difference between the Fed's approach under Biden and the Fed's approach once they knew that Donald Trump was elected? Former Vice Chair Rich Crowder sat in your seat a few weeks ago and asked that question. He basically said it was an analytical error that led us to wait when we allowed inflation to get away from us. That was just an analytical mistake. And this isn't about bias, this is about policy. How do you explain things?
Well, I don't think the Fed is just innocently responding to the data. I mean, if you look at the magnitude of the forecast revisions, frankly, they were bigger at the time of the June FOMC meeting when the Fed was backing off. I mean, if you remember, we went into 24, people were betting on the March cut, and then we kind of backed off. I don't think the Fed is just innocently responding to the data, if you know what I'm saying, right? I mean, so I think that they're basically taking out an insurance policy against tariffs. And so, you're kind of getting into a game of chicken with the administration. So if we get to February 1st and President Trump doesn't decide to do tariffs, or, most of the tariff action so far hasn't really been about reorienting the global trading system. It's really been about trying to extract concessions on things unrelated to economics. So what if you go to February 1st, there's no tariffs put on, then you're back to focusing on the data and inflation, and then what do you have? The Fed may look pretty foolish by March because you may have an abrupt about face.
No, I appreciate your time. As always, thank you, sir. No data there of Renmark. It feels like those two are on a collision course this year.
What, the Fed and Donald Trump?
Or Lisa and Neil?
No, the Fed and Donald Trump. They were on a collision course a long time ago.
Yeah, it's fun. It's always, it sharpens the tools. I think that, look, there is a question of what's noise and what's signal. And I think that, to Neil's point, there is a lot that has been noise, and people will focus on that. The signal, where does it actually come from? The housing market certainly has been a place where basically you've seen the lowest number of sales since 1984 in the past year, or 1994, I believe. There is a larger question, though. There are some policies that will have economic ramifications.
Yeah.
And how do we focus on those rather than the others?
Let's focus on that now. Let's get you some signal. Mike McKee, our Bloomberg economics and policy correspondent. Mike, a big week for the Federal Reserve.
It is a big week for the Fed, but I'm wondering how much impact it will actually have on the markets. Neil and I were talking before he went on with you, and there's so much going on down in Washington that it's hard to know whether the Fed is going to make a huge difference to the markets, since at this point, nobody's expecting expecting them to do anything. It's really going to come down to what Jay Powell has to say. We also have jobless claims, PCE data on Thursday and Friday, and GDP on Thursday, which is going to be important because it's going to show some strength in the economy, and we'll have to look at the underlying areas and see where that strength is and what it portends for the future. Certainly not going to be looking for any strength in residential investment, but we'll also see where the Fed is in terms of its own inflation indicator. And then we'll see. Right now, what you're looking at is a market that has almost come full circle since the last time the Fed met. Just before the Fed met, they were pricing in more than 2 rate cuts, almost all the way to 3. The red lines there, the yellow lines are now where we are. We're back to 2 rate cuts by the end of the year, but just barely. We'll see how that moves next week once we get through this data. And of course, as Neil points out, February 1st.
Mike McKee, appreciate it. February 1st, the big one for trade. Lisa, there's only one analyst note that I'm going to read on Wednesday after the news conference. Just one, from Donald J. Trump. That's the only note I want to read. The only strategist note I want to read, his take on Chairman Powell's news conference.
I can tell you right now, completely out of touch, not understanding. Interest rates needs to be lower interest rates now. I know what I'm talking about.
You won't need to wait till after the press conference. Once we get the decision, there'll be a truth ready to go on demand.
A live blog at the White House. Yeah. I'm all for it. I can't wait for it. A flight to safety in the bond market driving yields lower this morning, following the massive tech sell-off we've seen all morning so far. Oksana Aronoff of JP Morgan Asset Management joins us now, not just to talk about that, but more broadly, how this market's priced. Oksana, it's good to see you.
Good to see you. Thanks for having me.
Thanks for being here. We had this conversation with Neil Dutta just before you about inflation. Neil didn't buy the premise of Lisa's question, doesn't think inflation's going to be a problem. Maybe we continue to see that disinflationary trend. I imagine you take the other side of things from your perspective. Do you think this bond market is well priced for the inflation that you expect?
Definitely not. And I actually want to take a step back because, of course, everyone is an AI expert this morning. And without being one, I do want to point out that it is fascinating how, the narrative that the stock market is getting kind of euphoric has been out there for a long time. And I always say you couldn't know how much farther the stock market can run, right? It kept posting record highs and record highs dozens of times. And then a catalyst comes in, no one anticipated it, and suddenly you're tumbling. And I think it's a very appropriate analogy to the credit market, and we'll talk about interest rates in a second, but I think in a credit market, you always know exactly if you are wildly overpriced. And when we look at credit spreads today in the 200s for junk bonds, for example, is that a top? Yeah, I mean, could it go a little bit lower than this, tighter than this? Possibly, but if you want actually, a pretty sure indicator of richness, here's a market that is screaming rich.
Well, just to build on that, one theory out there has been that all-in yields are fairly high and they're compensating you for risks that seem to have been minimized because people have pushed out their maturity walls and you are seeing that credit conditions look pretty good. What about conditions makes you think this is a top?
So all-in yields are higher because the risk-free rate is higher. And the risk-free rate, I do agree, going back to your original question, John, that we are probably in for continued pressure at the long end of the curve because, fiscal spending is continuing unabated. That is an enormous amount of spending for this economy. And even in light of the news this morning, are we going to continue to see tremendous spending in the AI space, in the data center space? Absolutely. And that's also a huge driver. We're seeing a majority of companies planning to raise prices. We're seeing ISM service prices moving up. We're seeing the labor market continuing to be resilient, right? There's lots of really constructive things. In fact, you have to really look to find what is not constructive. And I think it's very possible that the Fed is going to have to take some of their cuts back this year because inflation is at best stuck at these levels right now, which means the 10-year is not priced for a higher for longer, structurally higher for longer inflation. It's still very much priced for kind of a 2% world. So all-in yields are higher because the risk-free rate is somewhat higher, but the actual compensation you're getting for the risk associated with each sector, such as lower-rated credit, is definitely at all-time tights.
We're speaking as the bond market has a huge rally because of the sell-off in big tech, and you just said something that I want to develop. You said there is a good chance the Fed takes back some of its cuts. Are you talking about hiking rates?
Yes.
This year?
It's a possibility. It's not a 0% possibility. And I bring it up because I think everyone has sort of dismissed it as a possibility. Certainly the bar for that is not low. But if we continue to see inflation stuck here or moving up, which is not outside the realm of possibility, I mean, we'll see how this technology story develops. It's certainly very meaningful and cannot be discarded. But the reason for higher rates at the long end has been, yes, growth to some extent, and the growth continues to be, expectations around there continue to be robust in the realm of 3%, but also this fiscal spending. And if you think about this administration, and again, we don't know what they're going to do, but everything they're saying around tariffs, around immigration, right, every policy out there is inflationary at the end of the day, and the Fed can only kind of control the front end. And if they feel like they're losing control of the front end, which is not a zero probability event, you're going to see them have to kind of try to take back the day.
Based off that thinking, then do you think it was a mistake that the Fed cut last year?
Absolutely.
Yeah, so they weren't restrictive.
They, the level of rates when we got to 5.5%, I think it was very clear that nothing in this economy was tremendously restricted. And when we looked at financial conditions, they were actually quite loose. And by lowering rates, they made those financial conditions even looser. And therefore, we're seeing inflation expectations creep up, and we're seeing animal spirits return. And some of that is due to the expectations around, again, this administration. But I do absolutely think it was a mistake. There was nothing causing them to do anything. Nothing was breaking. They could have just been sitting there and observing the data.
Two very different views in the last 20 minutes or so. That's what makes a market. Oksana, it's good to see you. Thanks for dropping by. Oksana Aronoff there of JP Morgan Asset Management. Equity futures still lower going into the opening bell. Up next on the programme, we'll set you up for a big week ahead. Not so much about the Federal Reserve, but lots on tech results. A conversation up next.
To build the electric vehicle of the future, you need partners, mining partners, technology partners, education, supply chain, energy. What if one partner could do it all? That partner is Ontario, Canada. With all the critical minerals to make electric vehicle batteries, 65,000 STEM graduates per year, industry-leading IT clusters, a fully integrated supply chain powered mostly by cutting-edge low-carbon energy sources. Ontario, your innovation partner.
That's all being driven by the media content increasing and these becoming entertainment businesses and not local event businesses. And I don't really, I would expect that to continue. When you see, if the rumors about the NBA are true and it's going to double over the next, 8, 9, 10 years, obviously you can do the math. That's 10 to 15% growth rate TV. There's a little bit of leverage there. So you kind of you can pencil out. When we put together this group and the commanders, we had to make our case, and you kind of pencil out low to mid-teens, right? And it's not a private equity return, but I really like it as part of my own portfolio because it's correlated. It doesn't really go up and down with the economy. A lot of it's driven by the growth in the streaming content and technology. It's a growth equity business almost. And then it goes, it's generally trending up. There's a scarcity value. Sports teams are obviously operating businesses and they generate cash flow. Some of them don't, a lot of them do, but then it's also kind of a piece of art, right? There's only 30 or 20, depending on the league, or 32 of these franchises, and people want them, right? So at the end of the day, it's like, it's worth whatever someone will pay for it, right? So there's an element of a little bit of a Basquiat there or beachfront real estate. So you got to kind of think about all that, but all of it really says to me that it's going to go up.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution We think that there's a lot of opportunity with those businesses.
"36 minutes away from the opening bell. Let's see if these moves stick. We're down by 2% on the S&P, negative 3.5 on the NASDAQ 100, and Nvidia is down by double digits. This week gets a lot more interesting than it could have been. Coming up a little bit later, we'll hear from the president addressing House Republicans at a conference in Miami tomorrow. Durable goods, Wednesday, a Fed rate decision, and Fed Chair Jay Powell news conference, plus earnings. And these are the big ones: Microsoft, Meta, Tesla, Thursday, Apple, and Intel report. We'll round it out with some PCE data on Friday. But Lisa, it's got to be about big tech this week and nothing else.
Yeah, how much they respond to this DeepSeek development and where exactly they're putting their money, how they expect to really expand their capital expenditures or not in the coming years.
Already we see Meta responding. They have these war rooms. They're concerned that China is advanced. The question I have is, what's this gap now between China advanced tech and AI versus the United States? And is it real? Is it DeepSeek or is it deep fake?
Exactly. Was this achieved with or without some of the leading cutting-edge technology coming out of NVIDIA?
What some people are suggesting is they had that cutting-edge technology. It still increases efficiency, but they wouldn't have been able to do this without the open model that Meta had been using. I expect to hear some questions on that with Meta's
I imagine
earnings.
we'll get tons of questions later this week, particularly for Mark Zuckerberg and the team over at Meta on Wednesday. Coming up tomorrow, lots of questions for Jeff Yu of BNY. We'll catch up with Tom Kennedy of JP Morgan, Sheila Coyote of Jefferies, Lauren Goodwin of New York Life, and many, many more. From New York City this morning, good morning to you all. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
In case you missed it on Bloomberg Crypto.
We still see Bitcoin higher by about 40% since election day. So what is priced in, and where is there still room to run higher?
Now, everyone at the institution level is ready to adopt Bitcoin. It's not some random country which is saying, hey, let me have it on Treasury, or some mid-level funds trying to keep it. It's like every top banks around the world is now thinking about, okay, I need to get custody for it, I need to understand it, I need to own it, I need to provide it as a private wealth service to our clients. So it is just a whole run of things. So I feel like as we are looking towards 2025, it's definitely going to be the year of Bitcoin, not only as an asset value, storage value, but also I feel like technology-wise, so much projects are coming on top of Bitcoin that the whole decentralized financial industry has somewhere shifted into Bitcoin.
Don't miss Bloomberg Crypto live on Tuesdays.
.900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Behind the bright lights and adrenaline of pro sports is an equally exciting world of negotiations and deal-making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, but I can't say that in Bloomberg.
Maybe moxie?
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're an asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. No, nobody does that. They say, let's talk about the team.
And so many more.
Do you need a clap?
No, I never heard it. Ready? Go.
Bringing you up to the minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Luanda, Angola, and this is Bloomberg.
A black swan moment for big tech. 30 minutes until the official start of trading. I'm Katie Greifeld.
And I'm David Gura. Matt Miller and Shelly Bosick are off today. Bloomberg Open Interest starts right now.
Coming up, risk-off sentiment sweeps across market stocks, plunging this morning as that buzz around Chinese AI startup DeepSeek shakes up Silicon Valley. And as such, the stakes are high for the Magnificent Seven. DeepSeek's lower-cost AI model casting doubt on those sky-high valuations ahead of a heavy earnings week. But beyond tech, investors are also contending with Trump's latest trade moves and that next Fed decision due out on Wednesday. All of that and more coming up. But let's see just how ugly it is in our markets this morning, because right now you have the NASDAQ 100. We're taking a look at futures here, down about 3.5%. We had been down by more than 4% earlier. You do have NVIDIA down by about double digits right now, so that is weighing in a big way on the benchmark. What I'm excited to get to, though, is why this is showing up in the bond market. You have 10-year Treasury yields currently down by about 9 basis points. Investors clearly is seeking a haven here and finding it in the U.S. Treasury market, all as volatility comes back into the equity market. You take a look at the VIX right now, trading with a 21 handle. David Gura, we haven't seen that in a while.
Haven't seen it in a while, and I'm looking here at individual stocks. Chip-related stocks, NVIDIA and ASML, are leading today's plunge as DeepSeek's lower-cost AI model, which you mentioned, casts doubt on those sky-high tech valuations. Today's sell-off comes ahead of a spate of big tech earnings this week. Several members of the Magnificent Seven are reporting, including Microsoft, Meta, Apple, and Tesla. You're eagerly awaiting those results, of course, but earnings week is underway in earnest already. SoFi reporting guidance that fell short of expectations. Meanwhile, one bright spot this morning is AT&T. That stock is up on an earnings beat.
Yeah, managing to fight into the green. You also saw Apple briefly turn positive. Of course, we know Apple reports later this week, but all of the attention right now, all of the mind share is on what's going on in the AI supply chain. Of course, DeepSeek really rattling, it feels like, every part of that supply chain, from Meta and sort of the users of AI with their own chatbots, and also the likes of NVIDIA. The question being, are we massively overspending here? So two things, David Gura.
Yes.
One, it's nice to see you.
Great to see you as well, Katie.
Number two is I learned what a Sputnik moment is this morning.
Wikipedia.
Wikipedia, after a text from my father that fear about the perceived tech gap between the Soviet Union and the U.S. in the 1950s. You have to wonder if we're entering into a modern-day Sputnik moment right now.
Yeah, I think that the psychology of this is so interesting and was so manifest over the course of the weekend, into this morning as well. This fear that maybe we weren't paying close enough attention to what China was doing, what was happening halfway around the world.
Did you know what DeepSeek was?
I did read Joe Weisenthal's newsletter last week and had an inkling of it, but kind of saw it as something, that Joe was interested in. Maybe I should pay attention to in a few weeks' time.
All right,
I was caught unawares.
Check out Odd Lots, because apparently they had the scoop. Let's talk about it, though. The DeepSeek drop, rattling tech stocks this morning. Let's get right to Mandeep Singh of Bloomberg Intelligence. Mandeep, I know that you knew what DeepSeek is, but sort of just set the scene for us here. What exactly is this new chatbot that we're talking about, and what does this mean for the current AI supply chain?
I mean, it's very similar to your ChatGPT. Really, ditto. You could go on ChatGPT or you could go on DeepSeek DeepSeek start asking questions. So really, I think the reason why people are talking about it is really because of the cost. But I go back to when Meta open sourced their Llama model. That, to me, was the pivotal moment where everyone could build a foundational model because Meta had open sourced the weights. And in this case, DeepSeek showed a nuanced approach in terms of bringing down the price when it comes to, per query pricing, which is what everyone has been talking about around scaling laws and how do you scale this. Well, they showed it can be scaled at a much more efficient way. And I think that's why there is so much kind of focus right now. But that inflection moment had to come sometime. It came from their paper because the paper is very detailed.
Get back to the psychology we were talking about here a moment ago. I think the fear is that this thesis or this narrative that so many people had bought into might have some holes in it or some problems with it. How rational is that fear as you think about the way that the market is reacting so far?
Well, so look at the biggest spenders of CapEx. It's your hyperscale guys who are both training as well as using the same compute for inferencing. Now, if the training can be done at a much lower price, well, guess what? They can deploy that same compute for inferencing. And that should show up in Microsoft's inferencing revenue when they report this week, as well as Google and Amazon. So to me, the things are still done on GPU. It's not as if we have found a new architecture and you move away from a GPU to an ASIC or a CPU. It's still GPUs. It's how do you make the most efficient use of those GPUs? And guess what? The hyperscalers will leverage, some of the advancements that are shown in this paper. So to me, that's a positive sign for the cloud revenue that'll be reported by the hyperscalers this week.
Well, it is funny and probably lucky that this does come, this little moment of panic before a big tech earnings week. And that's where I want to go, because one of the fears that's percolating through the markets right now is, has the U.S. just been massively overspending on AI? Can we answer that question right now?
Yeah, I mean, we have never seen, companies like Microsoft spending $80 billion on CapEx in a year.
Meta.
They raised their CapEx last Friday, and Project Stargate coming to the scene, additional buyer of $100 billion in chips. So clearly we are talking big numbers here, and there is a pull forward component in the sense there will be a digestion phase. Now, whether this is the moment where digestion happens in 2026, I don't think these companies are going to change their CapEx plans for this year, but clearly we are at a risk where companies may say, oh, we have enough capacity. But when I look at TSMC, they keep saying we're still short on capacity. So I don't think when you tie, all the data points that we are getting from these companies, TSMC is still supply constrained. So that means we don't have enough GPUs in the world, even if DeepSeek is quite efficient. And that's where I think we still have some runway, but clearly we will have a digestion phase at some point.
All right, Mandeep, so appreciate you. I know you're a very busy, very popular man this morning, so we'll let you go. That, of course, is Mandeep Singh of Bloomberg Intelligence. And let's broaden out this conversation now, because joining us at the desk, we have Jack Manley. He is JP Morgan Investment Management Global Market Strategist. Jack, I won't ask you if you knew what DeepSeek was before this morning, but let's go back to tech earnings. Again, really convenient that we're going to hear from a lot of these companies. How do you think this changes the conversation on this week's earnings calls?
Well, I think it's all about, how do we justify all of this money that we've been throwing at this problem that evidently you can solve for a whole lot less. I mean, we don't necessarily have full proof of that statement, but at least for where we are right now, clearly markets are a little bit jittery. So I would say that's the big story, right? I mean, but it's also a great reminder, I think, for investors right now, how vulnerable the stock market is in total because of its reliance on the Magnificent Seven, who are in turn extraordinarily vulnerable, not just because of the valuation environment. I know that's something that we're talking about a lot, but also because of what's going on with interest rates, right? And good time to talk about that, given the Fed. The other kind of complicating factor in here, and I think this is sort of interesting, is that one of the few areas in Congress, and this is maybe opening up Pandora's box here, talking about politics, but one of the few areas in Congress where there actually is bipartisan cooperation is this idea of being tough on China. And that toughness on China has been reflected in export bans of key technology, including some of the technology that we use here in the States to develop AI supremacy. Evidently, that's not working so well, right? If China is still able to develop these chips using or develop this technology using what may be considered inferior chips. So it's not just earnings, right? It's the valuation story, it's rates, it's a reminder that policy is going to be front and center this year. It's all this stuff kind of swirling around while the S&P 500 is notching all-time highs.
What does it tell you about where we are in this story? I think we're all familiar with kind of the genesis of ChatGPT. That took many years to get to a point at which it could be deployed to the public. Here we have this coming together in a year's time. Where are we in kind of the broader narrative about AI and wider adoption, which I assume you would say would lead to kind of a broadening of the market rally that we've seen thus far?
So I would say right now where we are is probably a wait-and-see moment. I think we're probably going to take a breath and acknowledge valuations, acknowledge that the trajectory of interest rates may be a little bit different than we would have otherwise expected a few months ago. Acknowledge, again, that policy is going to be very important. But I'm a glass-half-full kind of guy, and this, to me, is actually a very interesting opportunity because the big story for 2025, as we move into 2026, was this idea of a broadening out of earnings, which in turn would lead to a broadening out of participation, right? Where it's not just the Mag 7, it's the S&P 500 as an index. Now, some of that story hinges on this idea that the S&P 493, I like to call them, can actually start to pull their own weight, can actually start to do something. But part of it also hinges on this idea that the luster kind of wears off on the Magnificent Seven, that investors have a reason to start looking somewhere else. And maybe this headline this morning is that catalyst that jumpstarts this broadening out of performance that everybody's so excited about.
Well, where investors are looking right now is the bond market. And this is a circle I'm hoping you can help square. Why are 10-year yields down 9 basis points right now? What is the line that you can draw between what's going on, of course, with DeepSeek into the U.S. Treasury market?
I mean, now I'm guessing right now.
We could put it into DeepSeek.
Yeah, we should type it in and see what it has to say.
Test it out, yeah.
I mean, it's interest in purchasing treasuries, right? And why would you be buying treasuries? Because you're worried about what's going on at a geopolitical level, perhaps. And maybe we're back to having a policy discussion. You know, I didn't know what DeepSeek was. I could have guessed what a Sputnik moment was. And, you know, if we are indeed in this kind of Cold War, at least from a technology perspective with China, and we have a new administration in Washington, there is a lot of attention being paid to policy volatility. So I think that's another thing in here that we have to
Jack,
consider.
since you brought up Washington twice, by my count, let me ask you what you've learned over the course of this last week with Donald Trump back in office, just about the interplay between policy pronouncements and proposals and the way that investors, markets are reacting to what this second-term president is saying.
What I've learned is that markets are desperate for clarity on what policy is going to look like, and they're leaping to conclusions which translate into outsized volatility in capital markets. I would much rather understand what's going on and then plan for it as opposed to speculate. So I'm almost sitting a lot of this policy conversation out on the sidelines, despite the fact that I brought up Washington twice in the last 5 minutes.
All right, Jack, we got to leave it there. Great to have you with us on a very busy morning. That, of course, is Jack Manley of JP Morgan Investment Management. Meanwhile, quick look on these markets. We still have 20 minutes until the bells ring, but you can see investors getting a start early, selling down big tech stocks. The S&P 500 down about 2% right now. As I said, a lot of that pain is concentrated in the NASDAQ 100, off by about 3.6%. You do have yields lower on the day. That is relative good news for the small caps, and you can see that in the relative performance right now. The Russell 2000 still down, but only by about 1%. Now, coming up, we'll continue that conversation on DeepSeek with C.J. Muse. He is Cantor Fitzgerald, semiconductor analyst. He joins us next. This is Bloomberg.
In a world of seismic change, will your business shape the future or be shaped by it? How will we capture the imagination of tomorrow's consumers? And overcome operational constraints to focus on future growth. How will we harness technology and AI to shape the way we live our lives? And how will we balance environmental responsibility with economic prosperity? With EY's full spectrum of services across sectors, we're all in to shape the future with confidence.
So you want to trade, Okay, listen. What can we offer you? Well, not much. Only our ultra-fast execution, user-friendly trading app, access to global markets of over 2,100 instruments, via a range of platforms with exclusive market tools and a super reliable reputation. Not much, huh? So now you found your new broker. The rest is up to you. FX Pro. Trade like a pro.
Markets never sleep, and neither does Interactive Brokers. Discover more opportunities with CME futures across equity indices, interest rates, FX, energy, agriculture, and metals. CME futures offer around-the-clock access, deep liquidity, and capital-efficient margins, helping you seize opportunities whenever they happen. The best-informed investors choose Interactive Brokers.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
In case you missed it, from Bloomberg's coverage at Davos.
Could it spell disaster if there's fear in the markets? Or again, are there catalysts that you're watching out for?
It doesn't have to spell disaster, but what it probably will mean is that you have important trade-offs on the policy side, uncertainty and volatility in financial markets. But rates have gone up. We have $10 trillion in money market funds waiting to be deployed. So I think these things, create opportunities as well.
Nobody covers Davos like Bloomberg.
Now to high interest, a look at what's making headlines around the world. We'll start with the latest on the wildfires in Los Angeles. The region is getting its first rainfall in months. That's posing a new risk of landslides. Right now, a flood watch is in effect for Los Angeles County, and several roads are closed due to mud flows. The Palisades fire is now about 90% contained, while the Eaton fire that destroyed much of Altadena is 98% under control. U.S. Steel is facing a proxy fight. Activist investor Ancora wants to replace the company's current CEO and has nominated 9 candidates for the company's board in a push to abandon the attempted takeover by Nippon Steel. Bloomberg sources reveal that Ancora will push for an end to the litigation attempting to rescue the deal and instead collect a $565 million breakup fee. And Donald Trump caused a whipsaw in markets over the weekend after threatening a tariff on Colombia. The Colombian peso slumped on the news that extensive tariffs would be imposed due to a dispute over deportees. Colombia played ball with Trump and agreed to a deal, narrowly avoiding the economic penalty Trump had threatened. Katie.
Well, let's get back to those markets right now and the sell-off that is underway. NVIDIA leading the charge right now, down about 12% before the opening bell. Here with more on what DeepSeek means for the U.S. AI industry is Cantor Fitzgerald semiconductor analyst CJ Muse. He has a 200 price target on NVIDIA, and I'm so glad you could join us on such short notice because I'm taking a look at the first line of your notes. You write that DeepSeek V3 is actually very bullish for compute and for NVIDIA. Feels like this market needs some silver linings here. So what is that silver lining?
Yeah, good morning. So, I think one of the important takeaways from DeepSeek, given their constraints in terms of GPU availability, though clearly I think what they've announced doesn't include, really the full portfolio of GPUs that they had access to, given how, if they were to publicly announce it, it would go against kind of the embargo. But, they came with some very interesting training techniques, greater optimization that, has enabled a very robust model. And I think all the other large language model providers will be adopting these techniques. And really, if you take a step back, their announcement basically tells us we're closer to AGI, artificial general intelligence, not further away. And in that sense, that's very bullish for Jevons paradox, the ubiquity of AI, and therefore, the true demand for compute to support that.
I'm curious, the refrain that we keep hearing is this company was able to basically replicate OpenAI on just a handful of $1 million in a very short period of time. And I would love for you to sort of correct that if it needs to be corrected. Sort of what are we looking at here in comparison to what Meta's devised and what OpenAI has made?
From their comments, they're essentially spent 1/100th of Meta Llama 3.1. It is rumored that they have 50,000 Hopper GPUs, and if that's the case, then they've spent significantly more than that kind of discussed 5 million plus. So I'm not sure I believe those numbers. I think they've spent many more dollars. I also don't think that they've included some of the R&D spend in that figure. But to be clear, the model is very interesting, and I think that it really speaks to, again, taking a step back. We need to improve the cost of compute a millionfold to get to AGI, and this is one more step in that kind of path that we're on, and so I view it as incredibly bullish. If you think about what they've done, how will OpenAI, Meta, others kind of respond? Well, they're going to take these optimization techniques, they're going to apply to them to their large clusters. They're not going to slow down spending, they're going to accelerate spending because it's existential and they all want to win. And so I view this, as no change to CapEx announcements. We're going to hear from Meta, Microsoft, Tesla this week, and in fact, I think it will only speed up their desire to invest and try to win, this AI kind of battle that we're in.
Well, you mentioned, of course, the earnings calls we have up, and I hear what you're saying, the bullish case that you're painting for NVIDIA and some of the other names in the supply chain. But even still, what do you think that these executives, what do these companies need to say this week to reassure investors? Because right now, it looks like a sell everything moment, CJ.
Yeah, no, to be fair, specific to NVIDIA, this is one of the most widely owned names in the market. We're going to get a small beat and raise when they report a month from now. And so obviously there's a lot of nervousness. And I think the truth behind the nervousness is that, CapEx budgets will not change in 25. It's going to be robust. But the worry is that 26 will not be a growth year. And if, in fact, we look at DeepSeek and say, we're going to focus more on efficiencies and ROI in 26, then you could argue that maybe the level of CapEx spend growth in 26, all else equal, will be less. And that's what's driving the skittishness. And so, taking a pause here and pulling back is very understandable because there is greater uncertainty today, and AI is the most heavily owned part of my world in semiconductors. So I get the skittishness. I would just advise taking a step back, thinking through what we actually heard. And I would argue a month ago we were worried about NVIDIA that scaling laws were slowing, and that's negative for NVIDIA. Now the market's saying scaling is accelerating. Well, that's negative for NVIDIA. You can't have it both ways. So I think as the market truly digests the news, we'll realize this is not a truly negative event. But I think to the earlier comment from your prior speaker around uncertainty, DeepSeek adds uncertainty to the market. And obviously, given the heightened valuations, it's a negative today for sure.
CJ, let me ask you lastly just about this kind of geographic binary. And I think when you look at investor skittishness, some of that is attributed to the fact that people were caught blindsided by what advancements a Chinese company had made here. And I wonder how you think about that, our kind of ability to understand or stay abreast of the advances that have been happening in China in this environment where there is clearly such a kind of competitive layer to AI in particular.
Well, I think that China understands how important AI is to their economy, just like the United States, and so it is going to be a fierce battle, and it's one that I think we in the United States can win. But let's not lose sight of the fact that China has very talented engineers. They can put significant dollars behind it, and so it's not going to be easy. But I would never bet against the engineers we have in the United States as well.
On short notice and with great insight, CJ Muse of Cantor Fitzgerald. CJ, thank you very much for the time. And coming up here later this hour, we speak to Manish Kabra of Societe Generale, who weighs in on the potential threat from DeepSeek. That's coming up. This is Bloomberg.
To succeed in Wall Street, what skills do you need? You need to be somebody that claws people on the back, people that you have to be tough, you have to be fighting people all the time. What are the skills that really take to succeed in Wall Street?
Great question. Of course, you have to work hard. So I can tell you what I found for me, and it's probably counterintuitive. I had to stick out, which is interesting because I made the decision earlier. Being really the only woman, I already stuck out, and I thought I might as well double down on that. I can't hide. So how did I do that? It was by being a contrarian. And I refused as a research analyst to ever publish research reports that said me too. That said, oh, IBM reported earnings. They came in 2 cents ahead. One of the pennies was currency, the other penny was lower G&A, blah, blah, blah. Forget it. Big calls on big stocks. My very first piece of research I published was very negative at a time nobody did it. I stood the heck out. And when I was right, that elevated me. And David, I've done that as a research analyst, but I did it in business as well. Here's a business strategy. If everything's fine, just keep your head down and execute. Every once in a while, you have a big insight, and you can build an entire business, in fact, an entire industry around it.
The top names in business are on Bloomberg.
We are in the midst of the largest wealth transfer in history right at this very moment. So $100 trillion of wealth is going to next-gen and millennial clients over the next decade. So that has some pretty significant implications. But in addition to that, women are controlling more and more global wealth. Today, they control a third of global wealth, but in the next 5 years, $30 trillion is going to pass in the hands of women, and they're going to control over 50% of the global wealth market out there today. Women care deeply about investing with purpose, investing to make an impact, doing good with their investments. So you're going to see some significant opportunities for us as we lean in and have been leaning in to capturing more of the female wallet globally.
Nobody covers business like Bloomberg. Context changes everything.
All right, welcome back to Open Interest. After a really powerful week last week, you're now looking at a big sell-off, and it's all about DeepSeek and this AI supply chain. The S&P 500 off by about 2.2% right now. A lot of that pain is in the big tech space. The NASDAQ 100 down about 3.6%. And we should show NVIDIA because that is where all the action is this morning. NVIDIA shares currently off by about 12% right now. Of course, this is sort of the black swan moment that people who are worried about valuations have probably been looking for as an excuse to sell.
Absolutely, and I think about kind of the juxtaposition between the news that we got over this weekend into this morning with what we saw unfolding in Washington last week, all of the enthusiasm for more compute and more data centers and more infrastructure spending when it comes to AI in Texas. So a stark contrast, I think.
Yeah, of course, all the fanfare over that big JV they announced with that $100 billion spend coming up. That powered tech stocks last week, but now the question is, are we massively overspending here? What are we actually getting for our investment? But we'll try to answer those questions coming up. Less than 4 minutes until the opening bell. Caterina Simonetti joins us of Morgan Stanley Private Wealth Management. That conversation up next. This is Bloomberg.
The world has seen spectacular progress over the last century. And the pace of change is getting faster and faster. That's why, as long-term investors, we focus on the companies that are not only changing the world today, but are also shaping the future. The Scottish Mortgage Investment Trust. Invest in progress.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build, so it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
All right, we are moments away from the start of trading on what's pointing to be a pretty brutal start to the week. Welcome back to Bloomberg Open Interest. I'm Katie Greifeld. There was so much euphoria last week. Of course, the best starting week for the S&P 500 for a new president since 1985. For this morning, that feels like a distant memory. We're talking about AI. We're talking specifically about Chinese startup DeepSeek and those lower-cost AI models sending a bunch of panic through the AI supply chain and the broader markets right now. You could absolutely see that in the pre-market. You're going to see that in just a couple seconds. But in any case, you do have those opening companies ringing the bell. There's still some enthusiasm to be found, but not on this board to my left right here. The S&P 500 down by about 2.3% right now. And as we've been saying, the pain concentrated in big tech, that is. The NASDAQ 100 off by about 3.5%. Think chips, of course, but also think a lot of those big tech companies that are going to report this week, such as Meta, such as Microsoft. Your relative safe haven on the day is, of course, those small caps. The Russell 2000 only off by about 1% right now. You do have the bond market coming in, investors seeking safety in longer duration treasuries. That's good news for the Russell 2000, but couldn't even escape the pain today. Meanwhile, let's get back to those chip stocks, though, because NVIDIA ASML plunging as DeepSeek's lower cost AI model casts doubt on those sky-high valuations. Traders clearly looking for an excuse to sell right now. NVIDIA down about 13%. ASML currently off by about 7.5%. David Gura, it's ugly.
It's ugly. You mentioned those big stocks, Magnificent Seven. I thought we were going to come in here today just talking a bit about earnings in a kind of
surprise,
not bland, but regular way. Let's take a look at those Mag 7 stocks. Microsoft, Meta, Apple, and Tesla all set to report results later this week. The stakes are high, as we heard. There's going to be an eagerness to hear sort of them respond to the news that we've seen here over the weekend. We're eagerly awaiting the results of those companies, of course, but earnings week underway already in earnest. SoFi reporting guidance that fell short of expectations. Meanwhile, one bright spot this morning is AT&T. That stock is up on an earnings beat. I want to get back to that top story now. DeepSeek shaking up global tech. Bloomberg Technology co-host Caroline Hyde joins us now for a closer look. And Caroline, I will not ask you the litmus question we've been asking every guest. That is, had you heard of this company before? But I am curious sort of how you see this fitting into this broader narrative about kind of the nascent evolution here of AI.
It puts to question, do you need ever more compute? Do you need ever more $500 billion announcements coming from SoftBank and Oracle and OpenAI for that amount of compute power if you can start to make large language models far more efficiently, far more cost effectively? But there is a big but. This is open source versus closed source. We've been having this argument since the beginning of Meta announcing Llama versus OpenAI trying to still say it's only really with its own ChatGPTs and its own large language models that the future can be clear. And actually, Bloomberg Intelligence already saying, yes, this is going to make it clear that you can do more with less. And that expression that, of course, openly we're going to see innovation being the side effect of the fact that we've had China being put against, being limited in terms of its ability to be getting these chips from NVIDIA and the like. But Bloomberg Intelligence saying Microsoft, AWS, Oracle, unlikely to be cutting back their capital expenditure because, look, private enterprise need closed models. They need to be able to iterate privately. They're going to still need access to cloud. What's interesting, though, the #1 downloaded app on Apple today is that of DeepSeek. Can you get on it? No. They need more cloud compute. They need more overall access to data centers right now.
DeepSeek, RedNote, all the Chinese apps that are popular right now among U.S. consumers. I want to talk about the lower cost portion of this, though. Do you get the sense that this is going to spur a race to the bottom when it comes to cost? Because that seems to be what's really rattling a lot of the big names that we've been speaking about.
And I think already you've been getting there to a large extent. You've already been seeing that OpenAI have been trying to make clear that this is a cheaper and cheaper offering. Whether or not they're subsidizing it, whether or not they're able to be thinking about more energy efficiency and beginning to get, therefore, more cost-effective and cost-efficient use of their own compute power. But this ultimately does show that you have to innovate to be able to make things more and more accessible. Look, this is free to use, the model. It is open to use, and indeed the APIs, which you can put within your own offerings, your own chatbots, is really, really cheap in comparison to that of OpenAI. So yes, you are going to have this innovation that suddenly means that you're going to be quicker, cheaper, more cost-effective for many. But I think ultimately we're going to be questioning whether or not we should be seeing a $65 billion announcement coming from Meta into data centers. What we loved on Friday, we hate on Monday.
Yes.
But it is also, though, that Llama is an open source offering.
Yeah.
Already Meta has been trying to make the argument that when you bring developers together in an open source manner, you're able to innovate that much faster. Bloomberg Intelligence has said for ages that this DeepSeek is a critical large language model provider. It is the 7th best, they thought, in the world, and that was June of last year. They already think China is only about 4 months behind the United States in terms of large language model innovation. That's how they really compared, perhaps, text to image generation. They thought that China was about 4 months behind when it came to competing against Sora, for example. This shouldn't be as big a black swan as it currently is, but it seems as though suddenly we've all woken up overnight and thought, goodness, China's really rather good at this, even if we do limit our NVIDIA chips to it.
Well, my takeaway here is that we all need to be reading more Bloomberg Intelligence, apparently collectively on Wall Street as well. Caroline, I know you have a huge Bloomberg Technology show prep for today. That, of course, is Caroline Hyde. She is co-host of Bloomberg Technology. And coming up on that program, former White House Chief Information Officer Teresa Payton will join the program. But stay with us now. Let's bring this back to the markets because joining us is Caterina Simonetti. She is Morgan Stanley Private Wealth Management Advisor and Senior Portfolio Manager. Great to have you with us on a very big day in markets, heading into really the heart of earnings season, Caterina. If you think about the last couple quarters, there's been a real scrutiny on how much big tech is spending on AI, on CapEx, how much they're devoting to these technologies. I have to imagine that question just became more urgent.
Absolutely, Katie. Thank you for having me on the show today, out of all days, because decline in tech stocks today can be really attributed to two main factors. One is high valuations, and two is high portfolio concentrations. As investors are so driven by this fear of missing out and missing the wave and missing this technological revolution that is definitely upon us, we keep emphasizing that this change takes time. Technology is not perfect. It's not going to inevitably, immediately lead to the efficiency, productivity, and lower costs. These things are going to take time, to develop, and therefore we need to be patient. And there is ever if there has ever been an argument for maximum portfolio diversification, this argument is now. Technology is extremely important within the portfolio. It's going to be important going forward, and all these things are going to, eventually play out. But costs are major, and not just the costs of operation and cost of energy and data centers and operating AI, but also we are in the high interest rate environment, and the Fed action is going to play a big role here.
Katerina, we've heard so much about the need for this market to broaden, this hunger for more breadth, and I guess this could be kind of an unexpected, perhaps unwanted catalyst for that to happen. But I wonder if we could kind of look at the catalyst such that it is. I'm curious what it